Bond. Keeping things Scandinavian for a while, let's talk about the wind stocks as well. We've had numbers out from Ørsted and also Focus. Ørsted keeping its profit guidance as it seeks to reassure investors, and Vestas trying to turn the page as they are looking to buy back stock. Chrissy.
Well, we are a couple seconds away from the open here in Europe. Let's see how it goes. Risk sentiment, of course, is quite sour across the board. Does it show up in these indices the way that we saw it show up in the futures picture? Or is it, as Anna, you point out, ultimately a micro kind of day? The FTSE 100 down about 0.1%. I'm not seeing the same kind of pain right off the bat that maybe we saw earlier. We're going to give it a second. I should also just point out, well, there you go. There's the pain. The IBEX down about 0.9%. The Stoxx 600 down about 0.5% as well. The CAC and the DAX taking a minute. You are starting to see some of the individual movers, especially in the pharmaceutical space, take a little bit of a hit. I should mention that the Swiss index is one that we have our eye on. We're talking about drug pricing in the States. We're talking about a potential tariff law between the States and Switzerland as well. We're going to give it a few minutes for the SMI to open up, but that's going to be one you want to watch, Anna.
Yeah, absolutely. We'll keep an eye on the Swiss market. We'll wait for the German market to open. But as you say, Chrissy, things looking pretty negative so far, down by 0.6% on the Stoxx 600. If we dive into the sector picture, a reminder that yesterday we saw 2/3 of sectors in negative territory, and basic resources was the worst performer. Today, technology is definitely where the story lies here in Europe in the very first moments of trade. So technology, that sector is the weakest performing here in Europe. And the heavyweight ASML is certainly one of the players there. ASML then down by 3.7%. Is this on the back of the numbers out of AMD? We saw TSMC over in Taiwan responding negatively. So there's some of the negative trading around tech stocks, all the concerns around the valuations within the tech sector. That seems to be something that is really weighing. So that sector is in focus. Technology is weaker. Consumer products and services also weaker. And we have some of the luxury names trading a little bit weaker here in Europe, adding a European dimension to the negativity around stocks right now, Chrissy.
Yeah, it's really fascinating here to see, it's the mega caps that are it's Guy's core six. I blame Guy that are actually dragging this market down. I think it's really fascinating here, but there are a couple of positivity or pieces of positivity as well. I'm seeing some of the insurers higher as well, and I think this might be interesting. I think there's some conversations happening between the insurers and Rachel Reeves as well, so I wonder how much of that is actually showing up in maybe the price, given that that is a trend this morning. You are seeing some of the consumer staples higher as well, but overall, this does look like a defensive tilt, and of course, we are waiting for some of these other numbers to show up. Ørsted, for example, higher by 2.5%. I think it's really interesting. Chloe Mellier earlier had the one-year chart of Ørsted versus Vestas, and Ørsted has really taken quite the beating. Perhaps this private capital infusion will help it.
Yeah, absolutely, and certainly putting the focus on the European wind industry, saying that German, UK, Dutch, Danish wind turbine tenders are going to lead. They've been pulling back from the United States for reasons we've long understood, certainly getting a sense of trying to turn the page, and the share price is reflecting that. Vestas is not yet open, so sticking with the wind space, we've had numbers from Vestas, and we are still halted on that one, so we're waiting to see where that one opens. We spoke earlier on in the program, Chrissy, we spoke to Ahold Delhaize, the CEO there, and the share price for Ahold Delhaize is up by 3.9%. So the buyback perhaps going down well with investors.
I mean, he gave us a nice little scolding about just how good those numbers are. We didn't give it enough love, but it's worth saying because they not only are there having good numbers, they're also talking about a €1 billion buyback as well. So those buybacks are certainly one that certainly permeate throughout this trading day. Let's get a little bit more analysis this morning. Marina Zavalok, Chief European Equity Strategist over at Morgan Stanley, joins us around the stable. Marina, pleasure to have you, as always. We're doing a little bit of detective work, as you just heard me and Anna kind of do, about what is driving the market sentiment. I mean, when you see a sell-off like we did yesterday, there tends to be some sort of rebound. We are not seeing that this morning. What gives? What do you think's going on?
I think there's a lot of concerns about the AI trade. I mean, if you look at our kind of global view on AI, we think that we're going to pass this storm, and there's more to go in the AI trade. But this isn't the first time that you've had weakness and kind of bubble concerns. And in Europe, if I bring it back to Europe, what we've seen in recent kind of last couple of months is a catch-up trade among the pockets of AI exposure, very strong. I would even call it a melt-up in some of those pockets of exposure. And those are the ones that you guys were mentioning as some of the ones that are weakest today.
Well, talk to us then about, we're having a conversation about breadth this morning, that some of these pockets where you are seeing perhaps a melt-up or you are seeing that momentum, it does feel like it is a AI, it's a tech story. But if there are valuation concerns that are associated with the NVIDIA, Alphabet, you name your tech company kind of story, does those valuation concerns then expand to the Novo Nordisks, the LVMHs, the Rheinmetalls, given that those valuations are also looking frothy, or is this tech specific?
Yeah, I mean, it really varies across those stocks that you mentioned, but let me keep it on AI. And if you look at pockets of AI exposure, so within semis, even utilities has gotten an AI bid in Europe recently because the view is as data centers are built, power prices are going to go up ultimately in Europe. If you look at some of those heavyweight stocks in those sectors, their valuations looking 2027, let's say, multiples, are in line with U.S. peers, but U.S. peers are growing much faster. So you have this kind of scarcity valuation premium in Europe. So I think those pockets are vulnerable when you get these kinds of sell-offs in Europe as well.
And thinking about the European earnings story then, Marina, you've told us two-thirds of companies have reported now, I think, and we've seen quite a substantial number of beats, particularly in the banking sector, also energy. Now, perhaps that just means some oil and gas names, or we're quite drawn today to some of the wind businesses. Vestas, for example, up 7% on the back of its numbers. Orsted was up more, just up 1% right now. But how are you seeing, I mean, there's been a lot of conversation about, with the rush for energy that AI brings, that these kind of wind businesses or all kinds of renewables, even if they're out of favor with the US administration, there are still reasons to think about them.
Yeah, no, I mean, the interest is coming back, and it's very recent. It's basically since we've been getting these big CapEx announcements, you'll notice utilities in Europe have gotten a big bid higher. It's a lot of the kind of less popular, what became less popular renewables are now starting to see a bid. But the story, I mean, there's idiosyncratic pockets in there, but the story thematically for the whole sector, for many stocks in the sector, is that if this CapEx comes through, if these data centers are built as has been guided, there's not a lot of room to maneuver in Europe on power prices, so you could get a squeeze ultimately in power prices, although that will take time. But markets and a lot of these names are looking ahead, 2-3 years.
Okay, that's interesting. So some of that interest is returning then. Let me ask you about the messaging we've been getting from European CEOs during the earnings reporting season. You, like many others, run these large, you use large language models to try and analyze the language that we get from some of the CEOs, or at least you have tools that do that. So what are the messages and what do they tell us about the future? Because do the messages we get from CEOs indicate where their shares are going to go in the future?
Yeah, it's a good question. I mean, we look at mentions of certain terms over time. So to me, some of the things that stand out are, in regards to AI, mentions of efficiency, productivity in relation to AI are really shooting up. That is led by the US, but Europe is also rising. Mentions of headcount in relation to AI.
So it's just mentions of, not necessarily delivery of.
I think companies, from what I'm seeing, companies are trying very hard to quantify AI benefits. And we're going from vague mentions, in prior quarters to more concrete examples, use cases, anywhere companies can give you quantification, they're giving it. And we are seeing ROI starting to come through for adopters as well. So I think it's a little bit more than just mentions.
Well, that connects nicely to the valuation concerns that you're seeing around the technology space as well. But I guess my question here is that if there's so much CapEx now that's associated with these tech names, to be fair, they are deploying trillions on their balance sheets that they hadn't deployed before. But does that just mean that if they now have more exposure to CapEx and physical industrial build-outs, that they should be trading closer to the BPs, Exxons, Chevrons of the world that are a little bit more capital intensive? Or does the other kind of more value-esque parts of the market, do those need to be kind of catching up a little bit? How does that work?
You mean that they should catch up to the valuations for you?
Right.
So
valuations traditionally, they're richer if you're less capital intensive on the growth of your names, right?
Yeah.
So if you introduce CapEx, shouldn't that show up in the valuations?
Oh, it's showing up. I mean, any kind of stocks exposed to the CapEx cycle are benefiting from the CapEx cycle. But I guess the type of exposure we're talking about to the CapEx cycle in Europe is more on the revenue side. So even when we're discussing utilities, they are some of the most CapEx intensive stocks in the market, but that's not directly linked to AI CapEx. It's more that they benefit from the byproduct of that AI CapEx. So the CapEx in utilities is rising more because of the energy transition, and the companies previously were not getting any benefit from that.
Yeah. What's your favorite topic in Europe right now then, Marina? What is it that draws your attention? We've talked a bit about AI and the things that are linked to AI here in Europe, and maybe that's it. But are there other things that we should dedicate more time to discussing?
Great question. My favorite sector, I would say at the moment, is defense. And I think, we've liked it for a long time. There's been a bit of fatigue because the sector worked so well last year, early this year, and investors have been looking for other things to buy now. And we are going into a catalyst-rich period at the moment. So in the next few weeks, we're going to have capital markets days from several of the German defense companies that are seeing, more of the orders compared to others. And then we're going to have the 2026 German budget being approved probably by early December. And that is very bullish for defense as well, the way the draft is looking so far. So I think you're going to get a major upgrade cycle in a forgotten sector, I think, relative defense.
How much of that is priced in, though? All the fiscal spend, all the budget, how much of that is showing up in the momentum that's already in the defense sector?
Yeah, that's the big debate. I don't think it's priced in, because if you look at the multiples for the defense sector relative to the earnings growth, it's where it should be trading relative to other sectors. But the earnings growth does not yet reflect the move from 2% of GDP spend to 3%, because analysts are waiting for clarity, details like the 2026 defense budget from Germany.
And where do we look next as we go towards the end of the year then, Marina? We've talked about big tech, we've talked about defense. It's consumer products that seem to be doing well this morning, or grocery stores are doing well this morning. Is that an area that you're watching?
Well, we've noticed it. We run a lot of factors. We have a quant component to our model, and we've noticed, to your point, food retailers, particularly in the UK, they have some of the most positive price target revision breadth in the market. So you see the highest skew of analysts upgrading their numbers. They're also increasingly being talked about as beneficiaries of AI adoption through their supply chains. They're really adopting and showing those benefits. So yeah, they are actually screening up for us.
Okay, Marina, thank you so much. Thank you for joining us. Marina Zavalok, Chief European Equity Strategist at Morgan Stanley. Let's talk about the Core 6 and where they are trading. We've talked about some of the names attached to the AI story in the United States. That takes us to Siemens Electric. That's up just 0.1% this morning. Rheinmetall in the defense space, actually a little bit weaker today. Some of the luxury names also weaker, with LVMH down by 1.5%. ASML then, the poster child for the European side of the tech sell-off, and that is down by 2.9% this morning. Novo Nordisk, lots more to say about Novo Nordisk this morning, as Guy Johnson is on the ground over in Denmark, waiting to speak to the CEO in the next hour of programming. Let's check in on some of the individual stocks on the move. Chloe Nelly has a breakdown. Chloe.
Good morning, Anna. We have got red across the screen for those semiconductor stocks. This is part of that broader tech sell-off that you were just mentioning in those semiconductor stocks, because of those growing concerns around the lofty valuations of those companies that are benefiting from the AI boom. So we have got weakness across the screen there. B Semiconductor being the one that is the worst affected, but also downward moves for ASML and ST Micro this morning. Moving on to Siemens Healthineers, which is also way down down this morning. The shares have really taken a beating after the medical technology company expects tariff impact to double in fiscal 2026. This echoes what we heard from its peer Philips yesterday, mentioning that tariff impact as well on that medical technology sector. And we are down 8% for Siemens Healthineers this morning. Moving on to an upward move, we've got Glanbia up quite a lot this morning, almost 4%. This is an Irish maker of nutrition products. It upgraded its guidance, and it's really benefiting from this protein craze. So it makes protein shakes, protein powders, and it's really benefiting from that. And that performance nutrition division is doing particularly well, and is being rewarded by the market this morning on the back of that. Moving on to Ahold Delhaize, which is a Dutch operator of supermarkets and gas stations, retail stores in general. It reported margin that came ahead of expectations and also announced a €1 billion buyback. So it's really benefiting from that this morning. And finally, Vestas is also up this morning after reporting quite resilient third quarter numbers and also announcing a share buyback. And that is really reassuring investors that things are getting better for that wind industry after what has been a very turbulent year for that sector.
All right, Chloe Melly from our equities team walking us through some of those early movers. We thank you so much. As Chloe mentioned, as Anna mentioned, we're going to go back to Novo Nordisk next. Novo shares, of course, are under pressure. The company paring its forecast for a fourth time this year. Our very own Guy Johnson joins us next from the company's headquarters near Copenhagen. Stick with us. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Welcome back to the opening trade. About 18 minutes into today's session, seeing red on the screen across the board. Some extra weakness when it comes to the DAX, but I think we should focus in on one of our heavy hitters this morning. Novo Nordisk, very much in focus. It slimmed its outlook once more on lower GLP-1 drug sales. Those shares higher by 1.5%. So what's going on here? They've got earnings, they've got news. There's some drug pricing in there as well. Plus, of course, a bid for Metsera. Our colleague, Guy Johnson, is out in the field near Danish pharma giant's headquarters in Copenhagen. He joins us now. Guy, just walk us through your take on these results. It feels like a little bit of a mixed bag.
Okay, look at the share price reaction, Chrissy, and that tells you everything you need to know. The market is looking at these numbers, which, remember, have missed quite handily, so we've got a downside there. Plus, we've also got a cut to the outlook in terms of the sales, yet the shares are higher. What is the market telling you this morning? Well, look at that. We're up by, what is it, circa 0.8%, and the market is basically signaling that it thinks that maybe this is the bottom, that things improve from here. We've got a new CEO coming in, got a new chair, got a new board, all of these things coming together. You've got a bid that's taking place over in the United States. You've got a potential deal coming with the White House, so they're coy on that. The market is saying maybe actually things start to improve from here. The objective here at Novo Nordisk, inside this building, at Novo's headquarters here in Copenhagen, is to catch up with Eli Lilly. Is today the bottom of the start of that run towards that peak? And if they can achieve that going through the next few years, then the huge share price derating we've seen this year maybe starts to turn around. But there is a long, long way to go.
Yeah, a long way to go. And the battle with Lilly has certainly dominated the conversation so far this year. But it's a different battle. It's a battle with Pfizer over who gets to control or gets to own Metsera that seems to be making the news right now. What's the latest there, Guy?
So the latest is basically the court blocked last night Pfizer's bid to effectively halt the Novo bid for Metsera. Now, let's just talk about Metsera for just a second. Metsera is a small company in the United States. Some of the technology actually came from the UK, that's worth noting as well, that has similar products in terms of the future lineup to the ones that they have here at Novo. So you could argue that in some ways the Metsera bid that is being delivered by Novo, and they've gate-crashed effectively the deal that was put together between Metsera and Pfizer, signals that actually there isn't a great deal of faith in the future product pipeline here at Novo. But let's kind of park that one at the moment. We'll come back to that with the CEO a little bit later on. The question really is what happens next? How much higher could this bidding get? Are we in a bidding war? Are we going to see a situation where we overpay? And that is the question I think analysts are asking themselves this morning. Pfizer's got, I think, another 24 hours, basically by the end of play today, to come back and maybe deliver a higher bid. Will Novo go higher if it does? That's the question. And that's what we're really watching here to see what happens with this and what it signals about the future of the products that are being developed here at Novo right now.
All right, Guy, give us a little bit of a teaser, if you will, of your interview. What's your first question to the CEO? What are you dying to know?
Well, the question is, what do you think of the share price reaction this morning? The market is signaling that maybe we're at the bottom. Mike, do you think we're at the bottom? That's the question. Do things get better from here? Are these results good enough? What do they signal about that fight with Lilly? Are you going backwards or are you going to go forwards from here? It's that kind of where are we in the momentum? Remember, this is a guy that's come in. He's only been here for a quarter. This, in some ways, you can argue this is a bit of a kitchen sink in terms of the numbers. But where do we go from here? He's already started to cut costs. Is this a new, more aggressive Novo Nordisk that we're going to see here in terms of cost cutting, in terms of doing deals? Are there more deals still to come? What's happening on the cost cutting front? Are we going to see more of that next year? So I think the real question, the point at which we need to start is this the low point? And if so, where do we go? How easy is the climb going to be here from here? And what is that climb going to look like out of the hole that Novo currently finds itself in this quarter with these results?
Okay, Guy Johnson at the Novo Nordisk headquarters over in Denmark. We, of course, look ahead to Guy's interview with the new Novo Nordisk CEO. That's at 9:15 UK time. A little under an hour from now, so certainly stay with us for that. Another company in focus because of its numbers and maybe where they came in a little bit light. BMW has reported a third quarter earnings before interest and tax margin below analyst estimates. The stock is down 0.4%. The German car maker squeezed by tariffs and also competition in the Chinese market. Joining us now for more, Bloomberg's Europe correspondent Oliver Crook with an eye on some of these large corporate earnings stories. And Ollie, what caught your eye then on these BMW numbers this morning?
I think for BMW, it's a similar story as Guy was just pointing out for Novo Nordisk. I think for the auto sector in Europe, the question is really, where are we? Are we at the bottom yet for this sector? There's some that say that, maybe we are starting to be at that turnaround point, and we go through the BMW numbers to get some indication of that. If you look year to date, the number of sales that they did, they were up about 2.4% across the globe for BMW. You break that down a little bit more regionally, you saw some real strength out of the United States, up almost 10%, Europe up almost 9%. Conspicuously absent, though, Anna, is the China number. So if you did 10% in the U.S. and you did about 9% in Europe, and your year-to-date sales are only 2.4%, that means you have a very ugly picture in China, and that is the enduring story for BMW. Their margins came in a little bit light from what they originally guided, but it's within their range between 5 and 6%. Now, we should say that the tariffs cost them about 1.8 percentage points on those margins. And we should say that back in 2023, when they had that recovery, their margins were close to 10%. So we are some distance away from that. When we look ahead at the outlook and what we can expect in the sort of months and years to come for BMW, one thing, obviously there's questions about chip connectivity with the rare earths. There's questions about tariff policies, questions about demand in China. But one thing that is really a tailwind for BMW in specific is they're rolling out their Neue Klasse next year. They're getting these new cars, this whole new series of cars that are hitting the road in 2026. And they have said in this earning release that in terms of demand in Europe, they're seeing much more than they had anticipated. So a little bit of a tailwind there. And you can see the shares are basically flat because they also did pre-release some of these numbers a little bit earlier last month.
Well, Ollie, you mentioned BMW. Just take us a kind of giant step back if you can. Where does this leave the auto sector going into the new year?
Yeah, Kriti, I think it's a big question mark for the auto sector, but I've decided to focus a little bit on some of the optimism we're seeing from some of the analysts across the board, including from Bloomberg Intelligence writing most recently that basically they see that 2025 is likely to be the trough for the European auto earnings. You look at the new EV subsidies that are going into Germany to the tune of 3 billion euros. There's also been massive cost cutting we've seen across Volkswagen and many other places. That being said, all of those things will support the recovery, but it's still intensely fragile. When you look at the share price from all of these car companies, really from across the world, what we saw from China to the United States and Europe, it has been a very challenging year. You look at the sort of year-to-date for BYD, that was even down 3%, BMW up about 2%, Volkswagen basically flat, and then, of course, Stellantis with its massive exposure in the United States, down 30% this year. What is interesting is you look at the market cap of these companies and how these companies have evolved over the last couple of years. Stellantis and Volkswagen, who sell many more cars than a lot of these sort of boutique things like BMW and Mercedes, they are now smaller companies than those. And of course, BYD is now a $120 billion company, versus Volkswagen, which is about $45 billion. So this is sort of setting out some of the big issues for these car companies going forward. And I'll just end on this sort of outlook here from BMW saying that they're, despite the fact that their earnings are more or less stable, the risks remain, and they are, among other things, changes to tariff policy, Chinese export restrictions on rare earths, battery cell production, and of course, semiconductors more broadly. So a lot of ambiguity on the horizon still for the auto sector.
Ollie, thank you very much. Bloomberg's Ollie Crook on a day where we got numbers from BMW, and he's been through all those numbers there. Toyota shares, incidentally, sliding after their profit guidance missed estimates. So in terms of the auto story, tariffs certainly getting a mention from some players within the auto sector, and we continue to monitor that story very carefully. Coming up on the programme, we check in on markets and currency moves with Eric Nelson, head of G10 FX strategy at Wells Fargo. Plenty of analyst reports around the dollar. The strength of the dollar, the weakness of the dollar, is it over? Have we drawn a line under that narrative post-President Trump's election, or does it return? Lots to discuss when it comes to the dollar. That's next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back. This is the opening trade, 30 minutes into today's session. Let's check out how we're doing across these European equity markets. Tech selling in the United States into the Asia session. Earnings. We've had some headlines around what it's possible to do with trade tariffs with the United States. We'll watch that. Those moves over in Switzerland, kind of in line with what we're seeing on the FTSE 100. So less negativity in those two markets. The Dutch market taking a hit from ASML as tech negativity seems to dominate, Chrissy.
Well, underneath the hood, it's a similar story, and it feels like when you look at what is actually driving this move, it's not that much of a surprise. The volume is down by about 19%. You are seeing I'm going to get these numbers right. 353 of the 600 members lower, 222 higher. So kind of a split market, but of course tilting to the downside with that volume as well. Let's go underneath the hood. What are the leaders? Because there are some here. It's not all a negative story. I think what's really interesting, though, is that although you are seeing a little bit of a turnaround here, Novartis, for example, you do have Roche as well. This is really interesting. The pharmaceutical story is one that we certainly need to watch when it comes to the Swiss conversation, specifically when it comes to the conversations that are being had with the United States and in the White House as well. I want to go to some of the other movers as well, because there are plenty to the downside, some that use the T word, the tariff word, and I think that one's really interesting. Siemens Healthineers is really taking a hit. Siemens Energy, Siemens also dragging the German index lower. But Anna, that tech story, that's showing up at the ASML numbers, down by about 2.3%.
Pretty, let's get an update on some of the other stories that we need to watch this morning. The UK Chancellor Rachel Reeves is expected to meet top insurance chiefs in Downing Street today as she seeks to encourage more investment into the city ahead of her budget later this month. The talks with leaders from Lloyd's of London, Swiss Re, Aviva and others will focus on unlocking capital and boosting growth. The meeting comes ahead of the November 26th budget, when she's expected to deliver a package of tax hikes and spending cuts. Bitcoin briefly slipped below $100,000 earlier, erasing its gains from the summer as a risk-off mood weighs on cryptocurrencies. Analysts suggest that the current drawdown is driven by big holders known as mega whales selling off $45 billion worth of crypto to take profits. And the U.S. government shutdown has broken the standing record to become the longest ever U.S. federal funding lapse at 36 days. Congressional Democrats and Republicans remain deadlocked in negotiations over a stopgap spending measure. Hundreds of thousands of federal workers remain on furlough, many without pay. Donald Trump has refused calls to meet Democrats to strike a deal to end the impasse. So US politics certainly in focus, Chrissy, when it comes to the shutdown, the duration of that shutdown. Interesting that that's having an impact on certain European corporates, but it's also something that we keep in focus as we think about what's been happening with voting in the United States.
The shutdown certainly a key piece of the swaying of public opinion in the United States, as you mentioned, Anna. Big gains for the Democrats in the New Jersey, Virginia, and of course New York City at the end of the day. Democratic candidate Zohran Mamdani winning the New York mayoral election, beating independent candidate and former governor Andrew Cuomo and Republican Curtis Sliwa. Take a listen to what Mamdani had to say after his historic win.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. This is not only how we stop Trump, it's how we stop the next one. So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Zohran Mamdani there, the New York City mayor as of January 1st, 2026. And Anna, he's really making this point, I think is fascinating, that the pendulum is indeed shifting. Or ultimately, you had the endorsement of Donald Trump on Andrew Cuomo as the independent candidate because he was so worried about what a Mamdani win might actually look like. A year ago, that Trump endorsement might have added votes. Didn't seem to have the same effect this time around.
Yeah, really interesting that the way that plays out. Also interesting to see how Wall Street is responding here. There was concern going into this about some of the policy platforms that Mamdani stands on for some in Wall Street. Others have said, well, look, differences or no differences, this is a person we can work with. We've certainly heard that kind of message from some of the big Wall Street bank bosses.
Yeah, it's fascinating. I mean, some of the things that Mamdani has campaigned on is this question of affordability and higher taxation, really closing the wealth gap between the richest people in America, largely that are concentrated in New York City, and of course some of the poorest people in America also concentrated in New York City. And he's doing that by putting things forward like, of course, a tax on people who make over $1 million a year. In the financial community, there are a lot of people who fall under that bracket who, of course, work on Wall Street. He's talking about things like universal health care, freezing rent on rent-stabilized apartments, talking about free groceries. Now, a lot of this is going to hit a lot of hurdles in the legislative process with the state of New York, but it is still bringing up the point that he is leading perhaps a change in sentiment that you're seeing in New Jersey, in Virginia, as well as some of the other states that could perhaps be a litmus test for what we're going to see in 1 year's time from today at the 2026 midterm elections.
Yeah, you just wonder how translatable some of the messages that he has run on and been successful on around affordability, how translatable they are into other parts of the United States. And we've seen some examples of that then. Interesting to put that in at that context. Let's talk about what's happening in the US in a more financial context. Let's talk about the dollar, shall we? The dollar and wider markets after all of that politics and all of the other things that we're watching for in markets right now. Eric Nelson joins us, G10 FX strategy head over at Wells Fargo. Eric, very nice to have you with us. I won't try and join dots between what's been going on in the mayoral race specifically and the dollar, but I just want to get your sense of where we are in the dollar conversation, because since Trump's election, we have seen quite a lot of dollar negativity in markets, a whole conversation about whether global investors were going to shun, to some degree, US assets, and that was weighing on the dollar, Fed independence in question. And then I see lots of research reports over the last few weeks suggesting maybe we've seen the end of that, or we're drawing a line in the sand, or things are looking different. What's your take?
Yeah, so there's a lot of these sort of unusual factors or idiosyncratic factors that have been talked about this year, like you mentioned, a lot of the dollar hedging and things like that. Let's focus on the cyclical, right? So where is the U.S. in its cycle? The labor market, from our perspective, is, maybe it's not quite as weak as some of the most dovish members of the FOMC are discussing. Maybe recession risks are relatively low, but I think it's a little bit too early to call the bottom in the labor market. And I think what's really driven some of this dollar strength in the past few weeks is we've got no data. Right? We don't know where the unemployment rate is. We have maybe some Chicago Fed nowcasts and some sense, but without the data, the dollar carry has dominated, right? So the dollar's done well against the yen, it's done well against the euro. It's a high interest rate currency, and no one's had a great theme to trade off of, so they buy the dollar. There's probably a little bit of unwind to some of the positions that were taken earlier in the year. I do think we're still in a dollar downtrend. I think this is a corrective dollar strength phase. I think we're getting closer to the end of it, not quite there yet, but European data are looking better. The U.S. is still, looking soft-ish. Obviously, a lot comes from the December Fed meeting, so we'll see that. And I think the key from the Fed is they're not decided on December. And I think if nothing changes, they actually may take a pause.
Yeah.
We might have 2 jobs reports between now and then, so the jury's still out.
Okay, so a lot riding on the Fed decision in December, some of the European data. You've referenced that as well as to how the dollar performs against the euro. What is the risk around the Supreme Court and what they have to say on tariffs? We're not going to get an answer on this, it seems, until the beginning of next year. We might get a few clues today as some arguments are heard. But how should markets, how should risk assets, how should the dollar think about what is happening at the Supreme Court?
Sure. So there's the actual decision itself, and then there's how does Trump respond, right? So the decision itself, if IEEPA is struck down, clearly IEEPA and the tariffs that are being used are a big part of the fiscal revenue story, right? So there is some risk of maybe some more steepening in U.S. curves, maybe a little bit of a dollar sell-off if people think, you know what, maybe the fiscal situation is even worse than we thought in the U.S. We haven't talked about that for a while. I think if it's struck down, though, we have to ask the question of how is Trump going to respond? And I think there's a lot of statutes he wants to use, 338, this kind of number soup. What's pretty clear is Trump wants to continue to use tariffs. So I think we almost have to go back and think about the playbook from earlier in the year. Is this going to be another episode of risk off, an uncertainty shock for businesses globally, including the U.S.? That could be a mixed picture for the dollar.
But you don't think the dollar is a haven then? If we did see the risk assets selling off as a result, or concern around the longer end of the U.S. Treasury curve, you don't think that the dollar might benefit some kind of haven? I know that's weird because the source of the issue might be in the States, but we've seen that in the past.
Well, what we saw earlier in the year was the dollar sold off against the low beta other haven currencies like euro, yen, and Swiss. And it gained versus the high beta emerging market currencies, the Australian dollar, and so on. I think that's more of a playbook, so it's kind of idiosyncratic. If you look at the last 2, I mean, we'll take the recent couple days and also a couple weeks ago when we had some carry unwinds. Recently, we've seen the dollar actually do better with risk off, and I think that's a function of deleveraging, so selling the winning positions, and euro dollar has been one of them. Earlier in this month, we saw carry unwind, so people are long dollars versus euro versus yen. That was dollar negative, right? So I think we're more in the the second camp, where you could see more carry unwinds on another risk off.
Okay. Is the dollar trading at all in line with what the bond market is suggesting?
Not necessarily, especially in the euro dollar case, right? I mean, look at 2-year rate spreads, U.S., Europe. They've done very little since early September, and euro's off a couple of big figures. So I think that, again, comes back to the carry argument, comes back to the deleveraging argument. And I do think at some point fundamental investors, whether that's reserve managers, asset managers, are going to start to look closer to maybe the middle or the end of this month and say, you know, there's an opportunity here. Probably we're still in a dollar downtrend. The U.S. cyclical picture is still a little bit unsteady. So, you know, I do think euro is going to end up higher into year end.
There's an argument by people who are pro-tariff policy, some in the White House especially, but of course on Wall Street as well, that are saying that when you talk about the potential overturning of these tariffs via the Supreme Court, that potentially you could see some of the revenues that have already come into the U.S. Treasury have to be refunded. I think we had a chart that one of our colleagues made up that said that was about 4% at the moment, which is a pretty decent figure. Tariff policy has been associated as a kind of yield steepener for a while. It's been a risk-off question for a very long time. But if we do see the Supreme Court, this is a very long question, bear with me. If we do see the Supreme Court kind of verdict on that these tariffs are illegal, that these refunds do need to be issued, does that show up in the fiscal debt conversation, or is 4% still too small of a figure?
Well, I think one key question is who has to be refunded, right? Is it just the claimants or is it everyone? And also, how difficult is that refund process going to be, right? The administration can make that as difficult as they want it to. I do think, excuse me, that the Treasury has already likely pre-funded some of this by boosting bill issuance. So there maybe is a little bit that's already been funded. But I think if you look out the curve, 10 years, $2 trillion in revenue from tariffs, you have to start to think longer term. Section 338 is legally questionable. 122 is only 150 days. The longevity of that tariff revenue is imminently changed and not for the better as a result of IEEPA being struck down. So I think it absolutely has some fiscal impact, and that's going to feed through to markets.
Eric, you think then that the dollar has further to fall from here? I see some arguments that productivity driven by AI is going to play out really well for the United States, such a big tech-exposed economy generally, and typically maybe earlier adopters of some of these technologies. Is that an argument that you see some validity to?
I see it. I think the adoption of AI in the broader economy is still not as big as people probably would tend to think. The other argument is, let's talk about trade for a second, right? I mean, trade openness is a huge driver of productivity. The U.S. is clearly going the opposite direction on this. I know this is a global trend to some extent, but the U.S. is leading the way. And so I think there's a productivity offset on the downside for next year. And we also have to think about trend growth with immigration being zeroed out in the U.S. Like there's some offsets as well. So I think maybe the dollar can run for a little bit further here in the short term. I don't think it's necessarily hit the top yet, but as we look into 2026 and closer to year end, I do think we're heading weaker.
Okay, I'm just looking at year-to-date performance on the G10 currencies, and some of the Scandinavian currencies are doing pretty well. What's your pick then? Where do we head for the end of the year? There's not long to go, is there? We're already November the 5th.
In terms of winners?
Who does best, yes.
Who does best, yeah. I think Euro actually is going to be one of the leaders. I mean, the European growth surprises have started to turn higher. I think the ECB is on hold, and the market just really loves to be negative on Europe. It's a consistent theme. And the bar, in my opinion, on fiscal next year for Germany is not that high. Consensus for German GDP next year, unchanged since February. So I think the bar is relatively low.
All right, Eric Nelson, G10 FX strategy head at Wells Fargo. We'll check in with you again after maybe the UK budget. We appreciate that. Coming up on the program, we're going to get a little bit more insight on that tariff policy, on the trades around it. The U.S. Supreme Court, as we had discussed, is considering the fate of President Trump's global tariffs policy. That hearing starts today. We will get a verdict for a little bit, but let me get some clues from the hearing itself. We're going to dive into the details and what you should watch for next. Stick with us. This is Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Welcome back to the opening trade. 47 minutes into our European session, and things are negative across European stocks, but not by as much as they were. We are down by 0.1% only on the European stocks, which, given the sell-off in tech over in the United States and then into Asia, maybe isn't bad. The DAX taking the worst of the losses of the major markets. Let's talk about that tech theme that has driven a bit of a sell-off. Advanced Micro Devices, AMD, the main contender to NVIDIA in the AI chip market, has failed to impress investors with its latest revenue forecast. AMD joining the global sell-off of semiconductor stocks on concern over lofty valuations. We're joined now by Matt Bloxham, Senior Tech Analyst for Bloomberg Intelligence. Wow, the bar is high, isn't it, Matt, when it comes to this earnings story? Let's talk about AMD. The market underwhelmed by the latest figures.
Yeah, and obviously AMD's had a big ramp up recently, not least on the back of that big OpenAI deal that they announced a few weeks back. I think in another context, the market would have been pleased with these results. The quarter they reported, pretty much everything was ahead of expectations, and they delivered forward guidance for the next quarter, which beat analysts' average expectations on revenue and was in line on margin. So I don't think they did anything particularly wrong. It's just there wasn't any incremental kind of wow factor onto the upside, and given where valuations are in general, that was enough just to kind of see the shares kind of pair some of the recent gains.
Is that a isolated story, or is that a front runner to what we might hear from Qualcomm, for example, later today?
I think we're going to hear similar things from Qualcomm too. You know, I think that the market's already expecting really robust midterm growth from the market. I think guidance has been fairly clear. I think analysts are in kind of the right kind of territory for these numbers. So yeah, I'd be surprised if Qualcomm come out with anything really amazing to the upside. So you may well see a kind of similar reaction.
Yeah, whilst we're looking through all the detail on the tech sector, because it does seem to be the theme that matters right now, we had also numbers out of Supermicro Computer, not a business we mention here in Europe as often, but it does have a global footprint. What did that tell us?
I honestly think that some of the Supermicro issues are quite Supermicro specific.
Okay.
I mean,
well done, Matt.
It's had quite a checkered history over the last couple of years in terms of kind of delaying their annual report. Even recently, the kind of guidance has been a little bit all over the place. You know, they kind of gave an optimistic outlook, then pared it back. We saw the results yesterday. They missed, you know, they delivered $5 billion of revenue against a $6 billion expectation, so a big miss. The gross margin, it's a low margin business, and the margin was a bit underwhelming too. They're saying that, you know, all of that revenue missed in Q1 or this quarter and more is going to come back in Q2 and beyond. But I think there's a bit of a sense of, you know, this company is a bit unpredictable. And actually, even if the revenue does come through, the margin that's coming with it is pretty weak. So, you know, I think just generally people reflecting, you know, the specifics of that story rather than anything broader about the chip sector.
Well, let's go broader then, because there's so many other questions that we're starting to see in the valuation front that seem tech specific at the moment. We've asked, well, I've asked every single guest we've had on today about whether it broadens out to the other frothier pieces of the market. How can you tell if this is a tech specific story or if this is a market macro valuation specific story?
Whew, what a question.
I know. I'm making sure you're like awake and had your coffee.
Exactly. I mean, look, you know, tech is, you know, the underpinnings of the broader macro. So I think that they're clearly interrelated. I think it's going to have to play out a bit more, you know, and I think a lot of the kind of tech-specific stuff is really not about the here and now. It's about the 20, maybe even the 27 outlook. You know, if you look at, you know, OpenAI has been writing big checks, which is about the capacity it needs to deliver on services that don't really yet exist or aren't really being used that aggressively by corporates. They've got the equity and credit funding for that cost base they're building out essentially for the next 12 months or so. But if in the next 12 months or so they don't deliver much more tangible evidence on the revenue so that their investors can feel comfortable they're not just going to have to keep writing checks to OpenAI to fund this, then that's, I think, where you potentially see this shift in dynamic. So I think for now it's just kind of, you know, people still believing about that kind of mid to long-term story or not. But obviously, you know, depending on what happens with interest rates, you know, there's a huge amount of midterm expectation in these stocks. If interest rates come down, then the kind of natural kind of valuation uplift for equities start to come into play again. But if they stay where they are, then I think you see some of these multiple premiums start to kind of drift off a bit.
All right, Matt Bloxham from Bloomberg Intelligence. Answer the question well there. I like to put Matt on the spot. This is the only reason we have him. We thank you so much. Of course, I'm sure we'll have him, of course, to cover the rest of the tech earnings that we're going to get throughout the rest of the day. Speaking of what's going on through the rest of the day, of course, Qualcomm earnings, which is something that we had discussed with Matt there, is going to be coming out after the bell. Robinhood as well. We also have McDonald's before the bell, so there's a little bit of a currency question there as well. And then we have some data, ISM services, UK PMI. But I think the big hitter here is going to be the U.S. Supreme Court tariff ruling, Anna.
Yeah, absolutely. We'll get back to that Supreme Court then. But that certainly is in focus. But let's go first to some other trade-related stories we've had. Some better mood music coming out of China. China says it will continue to suspend its 24% tariff on some U.S. goods for a year. All of these little bits of mood music maybe sound positive to Bloomberg's trade czar, Brendan Murray. Let's find out. Brendan, good morning. What do you make of the latest news out of China?
Well, this is obviously a positive sign that the two sides, after reaching this agreement in Asia between Presidents Xi and Trump, are actually implementing what they've agreed to. It can get kind of tricky when you start getting into the details. The leaders look at a piece of paper and they say, this looks like a good deal to me, and they announce it, and then the bureaucrats have to get to work to figure it out. I think what we're seeing now with China's ag tariffs and then the U.S.'s fentanyl tariffs, those are kind of the easy things that they can just kind of change the numbers, put it in executive order. Where it gets trickier is in the export controls, the rare earth minerals that the U.S. and the Europeans want to see flow on a regular basis, and the U.S.'s own export controls on high-tech equipment and chips and things like that. So that's where we're likely to see the implementation phase get a little trickier. It gets complicated, and the details really matter.
Let's talk very quickly about Switzerland. Are we friends with Switzerland now? What's going on here?
It sounds like President Trump, sort of made nice with Switzerland over the past 24 hours. Switzerland, of course, got hit with that really high 39% reciprocal tariff. Their watchmakers, their candy makers, their pharmaceutical companies are really getting hit hard by this. But it sounds like President Trump's, the tone of his comments were positive, and that they're moving in the right direction. Of course, what he wants to see is the big pharma companies produce more drugs in the U.S. So whether we get there or not, it remains to be seen. But it sounds like the tone has turned the corner.
Yes, and that's helping perhaps some Swiss stocks. Let's briefly mention the Supreme Court. We're not going to get any answers today on what they think about President Trump's tariff policies and the emergency measures he's put in place, are we, Brendan? But we are going to possibly get some clues as to the Supreme Court's views.
Yeah, exactly. So the Supreme Court has its conservative wing and its liberal wing, and they're going to probably vote for the Trump tariffs and vote against the Trump tariffs. It all depends on that middle, which will decide whether the president has overreached in using these tariffs. About 2/3 of the tariffs that President Trump has imposed are these IEEPA tariffs, these reciprocal tariffs that are subject to the case today. So there'll be a lot of eyes, analysts looking at this, going, how are the judges, the justices that could go either way? How are they participating in the debate? It's going to be a couple hours long, and like you said, we're not going to get a ruling, but we could come away with a sense that the court is leaning toward one way or the other. Companies are then going to have to respond in kind.
All right, Brendan Murray, it feels like we're using our Fed lens to look at the Supreme Court. We thank you so much. We should mention Guy Johnson will be speaking with Novo Nordisk's new CEO this morning. That interview coming up at about 9:15 UK time. In the meantime, we are seeing futures. And remember, risk sentiment is up. But futures over in the States, at least when pre-market trading, virtually unchanged. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Zohran Mamdani makes history as he becomes the youngest person in 100 years to be elected mayor of New York.
New York, tonight you have delivered a mandate for change.
Global stocks extend their losses on continuing concerns over high-tech valuations. AMD and Supermicro are the latest earnings to underwhelm. Plus, Novo Nordisk trims its forecast for the fourth time this year after disappointing sales of its blockbuster weight loss drugs. We're going to speak to the new CEO this hour. Let's get to the markets then. We've had the earnings story coming through from Novo. We've had the earnings story coming through from BMW, Siemens Healthcare as well. All of those coming through in the last couple of hours. Interestingly, European investors not punishing some of the adjusted outlooks for the likes of Novo and BMW. In fact, the auto sector is the best performing sector so far this morning. US futures, though, pointing a little softer after the S&P 500 closed low by 1.2% by the end of the close yesterday, currently pointing low by just 0.1%. The futures picture had looked a lot uglier. Some of that has paired. The US 10-year was bid yesterday on that risk haven move that we saw. 407 right now on the benchmark 10-year, largely unchanged. Bitcoin, which crossed below 100,000 per coin yesterday, back above that now, but selling pressure remains, of course, and this major cryptocurrency has taken a big hit in recent weeks. Currently, though, up 1.4%. Gold back below $4,000 per troy ounce, also benefiting in the session today from that risk-off mood, up 1.2%. Let's check in on the European map then. The UK, the FTSE 100 remains just about in positive territory, but as I said, on a sector-by-sector basis, top of the list, autos, bottom of the list is tech, with the read across, of course, from the valuation concern story over in the US. The NASDAQ 100 dropping the most by the end of the close in about a month, closing low by 2%. NASDAQ 100 futures also pointing low again today. But again, the more aggressive sell-off that we had seen flagged by the futures has been readdressed to some extent. The FTSE 100 is currently flat. The CAC current over in France also looking for direction, it seems. The DAX over in Germany off by 0.4%. The FTSE MIB also not going anywhere. A little bit of softness over in Spain, down 0.4%. We'll get the analysis and we'll get the latest on US politics and the redrawing of some of those electoral maps. The show starts right now.
makers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. In the US then, there have been big gains for the Democrats after Zoran Mamdani won New York's mayoral election, beating former Governor Andrew Cuomo and Republican Curtis Sliwa, I should say. During his victory speech, Mamdani challenged President Donald Trump, saying the city is helping dismantle the very conditions that gave him power, while Andrew Cuomo addressed a booing crowd, calling the Democratic win their night.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. This is not only how we stop Trump, it's how we stop the next one. So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Well, Bloomberg's Mark Prero has been watching all of this for us and joins us with the details, with the context. Mark, it is an historic win, certainly from Mamdani, but also victories for the Democrats in New Jersey, Virginia as well, and some down-ballot races, as well as the redistricting effort over in California. So significant for the Democrats finding and refinding their footing. On New York, on Mamdani, how idiosyncratic is this? What led to this historic victory in terms of the center of global capitalism?
What a shift for New York, and also a shift potentially for the country as well, for the Democrats, their messaging. He lured in a younger electorate, hungry for change. His whole platform was about the affordability of the city. It's expensive to live in New York. Not everyone is a banker, and that had a massive impact on the electorate.
What are the challenges ahead from him? I mean, the promises that Mamdani made are significant in terms of lower food prices, government or at least state-controlled or at least New York City-controlled groceries, free prices or no cost on using the bus system, caps on rent. I mean, that is an expensive menu that Mamdani has drawn up. Can he realistically deliver?
Policy strategy is one thing, delivering is another. The challenges are huge. Also, this idea of taxing the wealthy, that won't go down very well with New Yorkers. He's got to coalition build. He's got to build bridges with the right people, with Wall Street. Bill Ackman last night tweeted, "I'm there for you. I will offer you help." So the potential is there to achieve some kind of working, relationship between all parties.
How much champagne popping do you think there is going on amongst the Democrats today on the back of the victories, not just in New York, but as I mentioned, in New Jersey, in Virginia, the California story as well, and down ballot? Or does it demonstrate that there are real splits amongst the Democratic Party that they need to resolve before the midterms?
I would imagine quietly maybe there are some bubbles, but I think they are taking this as a re-energizing moment for the party, and they need to move forward with this in the next year with the midterms coming up. And I believe, I think the messaging here will be the cost of living crisis, which is gripping the country and the general population, and they'll definitely work that into their own strategy.
Okay, Mark Prero, thank you very much indeed on a significant 24 hours in terms of the elections and the voting in the US. Now to the tech story as well, because from a markets perspective, that's where all the focus was yesterday and largely continues today as well. AMD, the main contender to NVIDIA in the AI chip market, of course, failing to impress investors with its latest revenue forecast. AMD joining the global sell-off in semiconductor stocks, called lower right now by a little over 3%. Concerns over lofty valuations. We're joined now by Matt Bloxham, senior tech analyst for Bloomberg Intelligence, who's been passing the numbers for AMD and the broader read across. On AMD then, Matt, underwhelming despite the fact that they beat, nominally at least, on their most recent earnings.
Yeah, I think in isolation, the results they reported were a bit ahead of expectations. I think the themes were pretty familiar as expected, so most of the momentum being driven by their kind of core PC and server business, but seeing some growth also in the kind of more data center AI accelerator area, which is obviously the kind of big growth opportunity for them. Can they take share from NVIDIA over the midterm? And if you look at the kind of forward guide, again, it was a bit ahead of consensus expectations on the revenue growth, margin in line. So I think this is kind of really, about those kind of lofty valuations seen across the market. And if you think about the issue that's really getting people excited about AMD, and certainly recently in terms of the share price, it is this midterm opportunity to take share from NVIDIA in AI accelerators. And I don't think that's going to really start to kick in properly, maybe until the back end of next year, when, for example, things like the OpenAI contract starts to kind of really build momentum. And if you look at the midterm on consensus, it has a very significant increase in revenue baked into the numbers already. So, the expectations are already pretty high.
Matt, how much of a knock do you think yesterday's moves have been to that theme around the AI momentum trade, around the tech trade, given the market cap moves that we saw, particularly for the semiconductor makers, the chip makers? Is this a kind of a one-off, or does it foretell maybe increased investor scrutiny of some of these names, given the spending that's come through and the valuations?
Yeah, I think there's inevitably going to be more scrutiny now, given where valuations are, and I think in the near term, at least, we're going to maybe lack some kind of real kind of hard, tangible fundamentals to kind of really justify where things have got to right now. It's all kind of baked on this midterm opportunity. So until we see more tangible signs of that really coming through, then I think the sector's going to be a little bit more open to the kind of vagaries of some of the more macro trends, things like interest rates and everything else. So, we're in a bit of a pause, I think, right now, waiting for those kind of the next steps of that kind of midterm story to kind of play out in black and white in numbers.
Okay, Matt Bloxham, Senior Tech Analyst for Bloomberg Intelligence. Matt, thank you very much indeed for breaking those numbers down for us and framing them as well in terms of the broader context. Third quarter earnings then have been beating analyst estimates more broadly. EPS beats have been above average in both the US and Europe, while sales beats remain elevated in the US. Emmanuel Kopp, Head of European Equity Strategy at Barclays, joins me now. Emmanuel, always great to get your insights on these markets, particularly on a day that we saw, of course, at least shortly after a significant sell-off stateside. How do you frame what we saw yesterday in terms of the market moves? Is this a kind of a rational and a healthy pullback that we saw, or the start of a more pronounced sell-off?
Morning, Tom. We think it's very healthy and almost a welcome development to have finally a little bit of raising room for this market. There was no more than 3% correction since Liberation Day, so the market has gone up in a straight line, and there is a lot of frothiness in the market. Valuation in tech, positioning, some retail exuberance as well, and I think we are starting to scratch our head to find more upside into next year. So a bit of a pullback at this time of the year, I think, is a welcome development. I think this is going to be short-lived. I think a lot of people have been missing the train in the last few months and will use any dip to buy and to add to equities. We are trying to keep it simple. There is a lot of things going on in this market around the world, but we are trying to keep it simple. We have, three key drivers of the market. The big one is the Fed. The Fed is still a support to the market. We think they're going to cut rate in December again. The QT is coming to an end, so the Fed put is underpinning this bull market to some extent. Number two, earnings, which is what you said earlier. Earnings have been very strong in Q3. Earnings revisions are basically moving higher, and that's a key backstop to the equity market. Thirdly, we think growth globally is getting better. We just got European PMI this morning, much better across the board. The point is that if you have fiscal and monetary stimulus coming together, that should provide some support to the economy and help the economy to rebound into next year. Ex-AI, a lot of things are quite depressed. CapEx, consumer spending, and all these things should get some support for monetary and fiscal stimulus into next year.
Can I just put a pin in the monetary policy piece? Because you made that statement that you do think they cut in December. Jay Powell causing some concern among some in his language, suggesting that December is not a foregone conclusion. First of all, what gives you the confidence they go in December? Is it the labour market? Secondly, if they don't go in December, how much of a risk is that to the markets?
Look, I think Jay Powell had to manage expectations, but we think the labor market is softening. And look, we don't have too many data to prove it because, with the shutdown now being the longest in history, the data is very scarce. But we think the labor market is softening. We got a pretty decent inflation report 2 weeks ago. CPI is coming down. And, the Fed is still in restrictive policy, level, right? So we have a pretty high conviction that they will cut. And the market, by the way, is still pricing a 70% chance of a cut in December. Obviously, the wording will be quite important because, there's a question about how much they will cut next year. Yeah. If ultimately growth is recovering and the labor market is, holding up, are we going to see 3 or 4 more cuts next year? We don't think so. We have 2 more cuts for next year. But look, we still believe there is a path ahead for the Fed to be easing. And bear in mind that there's a lot of, talks about the new Fed leadership as well and the Fed independence, so they will probably lean to the side of caution.
Emmanuel, we're going to ask for your patience. You talked about earnings, and we have the CEO of Novo Nordisk standing by for a conversation with Guy Johnson. We want to go there first, and then we'll come back to you. So we'll wait for your analysis as well on that. Emmanuel, stand by for a conversation on the earnings. But let's cross over right now to Guy Johnson. Novo Nordisk then cutting its forecast for the 4th time this year after disappointing sales of its blockbuster drugs, Wegovy and Ozempic. The stock is actually up 1.3% in the session. It underscores the challenges, of course, facing its new chief executive, Bloomberg's Guy Johnson, is at the Novo Nordisk headquarters near Copenhagen. Guy.
Tom, thanks very much indeed. Thanks for coming to us early. We really appreciate it. It is one of the big stories of the morning. What is happening with Novo is fascinating, as you say. Company coming out this morning, cutting revenue, missing on a number of metrics, but look at the share price. Last time I checked, and it was just up on the screen just a moment ago, up by, what, 1 and a bit %. Does that signal maybe that the market believes that this quarter, this Q3, is the bottom? Let's ask Mike Dustar. He is the CEO of this business now. Great to see you, Mike. Thanks for spending some time with us this morning. Is that the right interpretation? Is this the kind of the bottom? Is the glass half full from here after being half empty for so long? Do things get better from here?
Well, what I can tell you is that the first 9 months of the year, 15% sales growth and 10% profit growth is not so bad at all compared to our peers. But I think that when you look at it quarter by quarter, there has been a headwind and bringing the quarterly growth rates lower. Okay. If you project our numbers for the full year, actually you see that Q4 should be in negative territory. So that you see mathematically.
So this isn't the low point. The low point is still to come, but things get better from there?
There's for sure a headwind against us.
Yeah.
Having said this, we are in a business of marathons and not sprints.
Okay.
So there is huge amount of unmet need with many patients still not on our medications or not on any medications. And I look incredibly forward, of course, as we go forward, taking over this new job, making sure that we expand the market and get to those people.
You've been in the job for 91 days. You haven't let the grass grow under your feet. You're already talking about cost cuts. We'll talk about it in a minute. You've launched a big M&A deal. Is this the new Novo? Is this a more dynamic, aggressive Novo Nordisk under your tenure?
The success we have had with obesity has meant that a lot of companies, pretty much all pharma companies out there, has gotten excited about what we do. So that is good from a patient's perspective.
Okay.
More players will come in.
From a shareholder perspective.
But at the same time, we have to make sure we can outperform the competition from a shareholder perspective. So my job is to really make sure that we are ready for the headwind that we clearly are seeing coming towards us.
When are you going to match Eli Lilly in terms of performance? They had results a few days ago. They were knockout. When are you going to be able to match that kind of performance? You talk about a kind of a performance culture here.
Again, my job is to put the patient in the center of what I do and not necessarily just my competitor. We watch them. We take all of our competitors seriously. But there are hundreds of millions of people out there that are suffering from diabetes and obesity that no one is right now addressing. My job is to sustainably lead ourselves towards that aim.
How does Metsera help you do that?
Metsera has some of the best complementary assets to our own phenomenal pipeline. So when the ambition is in billions and not millions, you need basically all the great assets to get.
Great assets, but complementary. So, so why do you need complementary assets? Because you've got all these products. Why do you need to go and buy this business?
Because obesity and diabetes is not a single disease. It's an individual disease. You basically have different preferences. Take a look at the great Wegovy pill we're about to launch in US. Well, that's for people that don't like injection.
Sure.
They would like to lose weight, but they don't have a viable offering from us or the competitors.
You've got very similar products. And the question that I've just listened to a lot of analysts, talked to a lot of analysts, and the question they keep coming up with is, does this seem to signal maybe that you don't believe in the current Novo portfolio?
Absolutely not. Absolutely not. We are in a situation where every single patient has a different preference.
Right.
And we need to have the product offering that matches that.
They've got a monthly, you've got a weekly. Is that really the big difference?
Well, we saw that the weekly was a big difference to the daily one.
Okay.
So I would say
so
for
monthly
some,
does make a difference?
For some, probably yes. For some, probably yes. Others will prefer to have a weekly product.
Is it more important that Pfizer doesn't buy it than Novo does buy it? Because that's another thing I hear as well.
My focus is on Novo Nordisk. The way I see this is there's a company for sale, there's a buyer and a seller.
Yep.
And basically, one of the buyers doesn't like the price, and the other one does.
Okay.
My job is to make sure I look at what we need, and we would very much benefit from Metsera's assets, and we put the right price up there for our price.
What's the right price? Could you go higher?
The current price in the market has been, addressed by Metsera's shareholders, and then we'll see where this goes.
Do you think Pfizer comes back?
I have no idea.
You have no idea. But if they do, will you go higher? How important is this asset?
I'm not going to make an announcement today on how I'm going to treat this.
How do you make sure you don't overpay for this asset?
By having actually looked very deeply into the data. As I mentioned, we know this company very well. We have seen this company for a long time, and we like what we have seen.
Okay. You're going to London, I think, tomorrow, right?
Possibly.
Okay. Are you going to the States after that?
I'm looking at the whole world, so I'm going to go everywhere.
So the rumor is that basically you're going to be in the White House on Thursday, and you're going to tell me that the deal's not done with the Trump administration on pricing, and I'm going to ask you, how close are you, therefore, to a deal?
I'm going to say that we are very much aligned with the purpose of the negotiations and the discussions we're having with the administration. We both would like to provide access to many more patients out there, affordable access.
Are you close?
So we are discussing very closely.
Okay. Okay, closely. One of the parts of the discussion, I'm assuming, has to be about what is happening with copycats, about the companies that are producing drugs that were allowed when there were shortages, but now are using loopholes to maybe continue to produce products. And I'm wondering whether or not a deal with the White House would include maybe closing some of those loopholes. What are the compounders doing in terms of your business right now?
What I can tell you is that we have been quite surprised on how the compounding has gotten started.
Right.
Taking an API, the raw ingredient of a medication that has not been approved by FDA, and injecting that into human beings is something very far from what we have been educated in this industry. So we will continue to lobby for the administration
with the White
and
House?
what have you, that this is simply not right.
Yeah,
I will not get into the details of the deal, as you could imagine.
We will wait and see what the deal looks like later this week. Mike, great to see you. Thank you very much indeed for stopping by to see us. We really appreciate it. And thank you for inviting us to the headquarters. We really appreciate that as well. Mike Dustar, the CEO of Novo Nordisk. Lots to discuss, lots of things happening at this company. It's going to be really interesting to see what the fourth quarter looks like and then into the first, second quarters of next year. Where does this journey take this company? Are we going to see more cost cuts? Are we going to see more M&A? Key questions that I think still need to be answered. Tom, thank you for the time. Back to you in London.
Guy, great conversation. Thank you very much indeed. The stock currently up 1.6% on Novo Nordisk. Guy Johnson on the ground, of course, with the CEO of Novo Nordisk. We're going to get more, by the way, on a broader sense in terms of how the earnings story is timing in to the market moves that we're seeing into the future as well. With Emmanuel Court from Barclays, more insights from Emmanuel coming up in the next couple of minutes. Stay with us. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to the Pulse. Third quarter earnings then have been beating analyst estimates. We just heard, of course, from the Novo Nordisk CEO warning of headwinds for that company. Let's bring back Emmanuel Core, head of European equity strategy at Barclays, still with us. What have you taken from the earnings season so far with that lens on Europe and the ability of European corporates to navigate that challenged global environment, whether it's tariffs or the slowdown in China?
Look, I think corporate resilience is our main takeaway. You have a lot of policy uncertainty, macro uncertainty, and yet earnings are delivering much better than expected. So definitely we had significant cut in estimate helping these beats. But I think that the tone of the company's transcript is quite positive. We are doing this quarterly analysis of all the transcripts. Companies are still pretty positive into next year. Some of the tariff uncertainty is fading. Now we know what to expect, we know what the tariff rate will be, so that's helping the investment, the planning ahead. We're also starting to see the kind of fading headwind from the currency. The strong euro has been a big headwind for a lot of exporters in Europe, which has the bulk of these downgrades, and now more flattish or stable currencies helping as well. But I think we are starting to see some green shot, like consumer, for example. A lot of consumer-exposed companies told us, the consumer was a bit better in Q3. So that's
And yet the discount between European stocks versus their US counterparts remains. How is that tying into fund flows or flows into European markets? How do you see that story evolving?
I mean, there was a big, buy Europe mantra at the start of the year, sell America, which has completely reversed in the last couple of months. I think the bar to clear was much lower for Europe. And we are seeing that in the last couple of days, where the kind of selling pressure is quite significant in the US and the very crowded AI space. Europe is less hot, less speculative, and, maybe the valuation give a bit more cushion to the market. So we've seen stocks reacting pretty well to the good earnings in Europe, which was not the case in the US.
Before we let you go, the Bank of England decision tomorrow, and you have a counter-consensus view that the BOE actually cuts on Thursday.
Yeah, look, our economists have a very good track record on that. So we'll, stick to the view. We are looking for a cut tomorrow. We think there's enough evidence of disinflation in the UK, softening labour market for the BOE to cut even before the budget. Obviously, the key for UK market, UK assets will be on the 26th of November. Do we see fiscal credibility coming back? Do we see a well-behaved bond market, which could be a silver lining for the UK market, and the FTSE 250 is a more domestic part of the UK market as well.
Okay, so the FTSE 250 arguably is the space to watch on the equities story when it comes to November the 26th. You expect that cut from the BOE, and we'll see, of course, how that filters across to a gilt market that, of course, has performed pretty well in recent weeks, the rally in the gilt market. Emmanuel Core, Head of European Equity Strategy at Barclays, thank you very much indeed. Coming up on the UK then, the Chancellor is told she will need to run a primary surplus to keep the country's debt under control. We're going to look ahead to what will be, of course, a difficult budget. That is coming up. This is Bloomberg.
said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning, welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. Zoran Mamdani makes history as he becomes the youngest person in 100 years to be elected mayor of New York. Global stocks extend their losses on continuing concerns over high-tech valuations. AMD and Supermicro are the latest earnings to underwhelm. Plus, Novo Nordisk trims its forecast for the 4th time this year. The new CEO telling Bloomberg the firm is in very close discussions with the White House on drug pricing. Let's return to the US elections then and the bigger implications following Zoran Mamdani's historic win in the New York mayoral race. Bloomberg's analyst Marty Schenker joins me now. Marty, what is your take, given your rich experience, of course, in covering US politics, in terms of the significance, the historic significance of Mamdani's victory and sizable victory in New York, and what it means for President Trump and the Republicans?
Yeah, well, I do think for the Democrats, it certainly points up the significant separation between the very liberal part of the party, example, Mamdani, who was backed by Bernie Sanders, among others, and the 2 governors who won in Virginia and in New Jersey, who are much more moderate. And yet, together, they certainly did provide a lot of momentum to the Democrats and not a great result for Donald Trump.
What is the challenge for Mamdani now that he's won power? He's not in office quite yet. There's a bit of time before he takes the reins of power. But the promises that he's made on the campaign trail, that there are question marks as to his ability to actually implement them and the work he's going to have to do with the governor of the state.
You know, true. He does have Governor Hochul's support, and she has already said she would love to see if she can figure out a way to pay for free child care. But really, when you get down to it, Mamdani's, the cliche is, now comes the hard part. And while these proposals are very popular, and he was able to take advantage of that, paying for them is really another question. And he doesn't have the ability to do that on his own. He has to enlist Albany, the state legislature, and the governor to get that done.
Okay, so we'll be watching that. So you know, broadly, success for the Democrats, and they've got the kind of wind in their sails right now.
They do.
But at a time, of course, when we mark today the longest shutdown in U.S. history, 36 straight days, are we seeing any signs that shutdown is going to be ending? And is there more pressure on the Republicans to find a solution?
Yeah, there's been a lot of speculation and chatter that the Democrats were holding back on having any kind of serious negotiation on reopening the government until after the election. Well, the election is over, and we'll see if there's any movement. There have been discussions in the background. The question really is, will Donald Trump give the Democrats any kind of assurance that they can trust to get discussions going and get the government back open?
Marta Schenker, thank you very much indeed. Bloomberg's editor-at-large, with the implications of the voting that's come through, of course, out of the United States. Not just New York, but New Jersey, Virginia, the changes around California, and some down-ballot races as well, victories for the Democrats. What it means for the Republicans as we look at the first day where we've had a historic shutdown in terms of the length, record length of a shutdown in the US, 36 straight days. Now, to the UK, a think tank here has said the UK Chancellor will need to run a primary budget surplus to get a grip on what they describe as the unsustainable debt trajectory. The National Institute of Economic and Social Research says Rachel Reeves will need an extra £50 billion to guard against future fiscal shocks. The Chancellor will deliver her budget, of course, in 3 weeks' time, November 26th, with us for a view on the budget, but also the BOE, which makes its decision tomorrow. Is Modupe Agedebembo, economist at Jefferies. Modupe, always great to get your insights. Let's start. I want to get your views, of course, on the budget, but let's start with the BOE. We were just hearing from Emmanuel Court at Barclays. Him and the team at Barclays, they expect actually the BOE to go with a cut tomorrow. Where do you stand on that?
So I think the Bank of England is likely to remain on hold tomorrow, but I do think it's quite a finely balanced decision. You can see quite clearly that we've seen some easing in important areas like food prices, wages continue to come down, and I do think that the Bank of England doves will have a lot to go in with in this meeting. But at the same time, we still have the uncertainty around the budget, and I think that's a big thing there. And we can't forget that inflation is running at double the Bank of England's target. So I think it's hard for them to be in a rush to cut rates at this meeting, but I do agree it will be quite finely balanced.
So given those factors and the armoury for the doves and the dry powder they bring to this discussion, you don't think they go tomorrow. But if they don't go tomorrow, given some of those factors that you've addressed, are we looking at a more aggressive rate cutting cycle from the BOE than maybe some are factoring into 2026?
I think we are. So I would say after the meeting in November, I do think the Bank of England are likely to lower rates in December. So I do think they'll lower rates this year. And I think going into 2026, when you take the factors that I talked about, so food price inflation, wages, the cooling labour market, but you also have to think about the fiscal outlook as well. I think that's one thing markets aren't necessarily considering in their overall rate path, that when we talk about the potential fiscal tightening that Rachel Reeves is likely to announce on the 26th of November, that is going to weigh on the UK economy, and that is going to make growth slower than markets are currently anticipating. And so I think the Bank of England can lower rates to around 3%. I think markets are close to 3.4%, 3.5%, so I think they can come a lot lower than that.
They can come down to 3%, so there's further to go for the gilt rally then?
Absolutely.
At the front end, is that where you'd be focused, on the 2-year?
So I think on the front end, especially because when you look towards the longer end of the gilt curve, I still see some of these uncertainties around fiscal. I'm not confident around the fiscal trajectory, so I think there are risks there, but the front end, kind of around the 5-year point in particular, is where we prefer on the gilt side.
The Chancellor has obviously been warming us up for tax increases November 26th. Where do you think those tax increases land? What are you starting to factor in? She has a menu of choices, unenviable choices, many would say. What for you is top of mind?
Yeah, so I think top of mind, especially following the speech we saw yesterday, you have to be considering those broad tax increases. So people were talking about income tax increases, maybe they were saying higher or additional, but I think you have to really look at the basic rate of income tax after what she said yesterday and what she was kind of leading the public towards. I think it's quite interesting. The Resolution Foundation talked a few weeks ago about the potential of increasing income tax, but also reducing national insurance. I think that's something that the Chancellor may be looking at, especially when she's talked about her pledges around, I guess, not increasing taxes on working people. So it's still difficult for the Chancellor because you will be increasing taxes, but there might be a bit more leeway for her to say, OK, we've tried to reduce the amount that working people are under pressure here. So that's something I think is interesting. But there'll be a lot of tax rises on the menu. There's a lot for the Chancellor to do.
And we know that the fiscal headroom that she's given herself in this Parliament so far has been minimal, £9 billion or so. She's going to have to, and she suggested she will go further on that. What are the markets looking for? What would be a comfort level in terms of that fiscal headroom?
So I think if you look historically, since 2010, Chancellors have left themselves on average around £26 billion of headroom. I think markets may allow her to do something slightly less, but I think she really needs to increase the headroom to around 20 billion. I think that will be where the comfort point is, because
a minimum of 20 billion.
I think a minimum of 20 billion. And I think when you look historically, around 25 billion has been what other chancellors have done. So she may even want to target that. I think that would be a sensible place to start.
The productivity is back in focus with the OBR adjustments expected. Frame for us where the UK sits in terms of our productivity challenges and whether or not AI can solve that for us.
I think it's interesting because when you look at the UK and you look at other Western European countries, I think we are having a similar issue in terms of the fact that productivity in the UK has lagged, and that has impacted public finances in a very, very important way. I would say in some senses the UK has done slightly worse. When you look at public sector productivity in particular, that has been negative literally since the pandemic, and that means that public sector workers are producing less. Including the kind of the NHS and other really, really important areas for the economy. So that means that a lot needs to be done to improve the productivity in those areas. And I agree that AI and technology could be very, very important. They could be a boon for productivity. But the issue is it's uncertain. And for the OBR, we faced years of higher productivity forecasts. So, of course, AI could mean that actually productivity is in line with their historic forecast, but I don't think that they can really lean on that.
Okay, Modupe, thank you very much indeed on views on the BOE, which of course makes that decision tomorrow, and looking ahead to the budget, of course, that crucial event for the Chancellor and the UK government. Modupe Adebembo, economist at Jefferies, with that analysis. To the corporate story and the earnings story around BMW now, the auto sector, one of the best performing sectors across Europe so far. BMW's quarterly profit margin landing near the low end of guidance, hit by tariffs and fierce competition from China. Let's bring in Bloomberg's chief Europe economist correspondent now, Oliver Crook. Ollie, what caught your eye? You follow this company very closely. What caught your eye from BMW?
Yeah, I think for everybody in the auto market, we're trying to figure out where the bottom is here for the sector, more broadly speaking, certainly for these European companies. And we look to BMW's earnings to try to get a little bit of hint as to whether or not we have arrived there. So you look at their sort of year-to-date sales overall, they increased about 2.5% a year-to-date through the month of September. That's what we saw from BMW into their numbers. When you dig into the regions, and this is obviously, as you know, Tom, very, very key. The United States, they've done extremely well, up about 10%. Europe, up about 9%. So the question is, how do you get to a 2.5% increase with those really, really strong markets? It's in the conspicuous absence from the China number, which they don't build out there, which you have to imagine was extremely, extremely poor in order to drag down the year-to-date sales down to that 2.5% figure. And that is the story that we have continued to hear from BMW and these European auto markets more broadly, is that China market is just not recovering in the way that they anticipate, in part because of demand, in part because of competition. The margin also getting squeezed for BMW between 5 and 6%. That is partially a tariff story. It lost about 1.8 percentage points of its margins due to the tariffs. But looking ahead into the things that really are going to drive this story for BMW in the months to come, there are all these questions about obviously tariff policy, about semiconductor access, demand in China, all those sorts of things. But I do want to focus on one of the tailwinds for BMW, which is their new series of cars. You will know this, Tom, you actually one of the first people who probably saw one of these cars, the Neue Klasse, the iX3, which will be on roads beginning of next year. And they're saying in this earnings release that, in fact, the demand, particularly in Europe, has far exceeded expectation. So a little tailwind there for BMW with these new cars hitting the road in the beginning of next year.
The Neue Klasse, yeah, we're seeing pictures of that. I didn't see, it was covered in one of those, you know, kind of protective tape coverings, so I was there with the vehicle, but they wouldn't take that off for intellectual property reasons and concerns about snooping. Hopefully not from me, but maybe from others. Ollie, what does this tell us? Where does this leave then the auto sector? You've been following this story for at least the last couple of years. As you look in with your lens to 2026, where does Europe's auto sector stand?
I think that the road for the auto sector is really shaped right now in a very sort of, question mark, basically. But I've taken a little bit of time here to try to find a more positive and optimistic view with some of the analysts that we're hearing. And we're hearing more and more positivity, namely from Bloomberg Intelligence, that's come out and said that basically 2025 for the auto sector was really the trough. What they are pointing to is new EV subsidies, particularly in Germany. That'll be to the tune of about 3 billion euros. That is going to be meaningful. But there's been all these ongoing cost-cutting programs, All this stuff should support the recovery, but it is a very fragile recovery. And I think that everyone who observes the auto sector is very aware of that fact. When you look at the stock moves for many of these car companies this year, basically nobody had a very good year in 2025. Everyone is either flat or down aggressively in the case of Stellantis, which lost about 30% of its market value this year. And I think it's interesting to really look up and sort of tally up these market values for all of these companies. You know, BYD is now worth $120 billion. You look at Stellantis, it's worth $25 billion. You've seen a massive reversal over the last couple of years. But again, a lot sort of sits on the outlook, a lot sits on these semiconductors, all of these debates that are going on with China, and of course that critical demand in China, which we still not heard the final word on.
Okay, Bloomberg's Chief Europe Correspondent Oliver Crook. Ollie, thank you very much indeed on the auto sector, BMW, and looking ahead to 2026. Switching focus to healthcare, and particularly some of the components that go into healthcare, like MRI scanners and such. Siemens Healthineers recovering some of its losses after its steepest intraday fall since it began trading in 2018. As you can see, the stock is still down 8.7%. Speaking earlier to me on Daybreak Europe, the company's CFO told me he expects the impact from tariffs to roughly double to 400 million euros in fiscal 2026.
We had a headwind of about 200 million euros in fiscal year 2025, and that is primarily affecting two businesses which have a lot of value add in Europe and sell a lot of good stuff in the United States. And we expect for this fiscal year, or fiscal year 2026, roughly double the amount, 400 million.
Meanwhile, shares in Vestas have surged after it announced a new share buyback program worth up to 150 million euros. Look at that pop, more than 13%. The Danish wind turbine maker reported a more than 60% rise in onshore orders compared with a year ago. But the chief executive has issued a word of caution, saying the current environment is creating unprecedented challenges. Now, a broader look on the shift around energy. EU member states have clinched a preliminary deal to reduce emissions by 90% through 2040, compared with 1990 levels. The breakthrough comes ahead of the Leaders Summit at COP30 in Brazil later this week. Let's cross over to Vonnie Quinn, who is in Sao Paulo. Vonnie, how significant is this, or is it just frankly too little too late, given that target around 1.5% that we seem almost inevitably close to missing?
Exactly, Tom. No, it is pretty significant. The delegates that we spoke to yesterday, particularly those from Europe, were waiting all day for some news. And as we know, that did come after 15 hours of negotiations. And ministers are meeting now to conclude the deal. So it does give some momentum going into this COP30. It also shows that perseverance and negotiation can work. And that was one of the messages that the president of COP30, Andre Correa de Lago, told me when we chatted the other day. It is obviously the details matter. You said the 90% emissions from 1990 levels by 2035, but also the carbon markets, that the ETS2 getting underway by 2031. That's a very important component of this. And it also paves the way for the EU to submit an NDC, a nationally determined contribution, which it hadn't done. It had missed all the deadlines. So I think there are a lot of lessons in here for perhaps the rest of the world, and maybe in particular the United States, which, as we know, has been retreating. There are no senior US officials coming this year, and it is casting a little bit of a pall over the proceedings. I did ask the president about that as well, and here's what he had to say.
It's obviously very unfortunate that the U.S. is not in. But as many actors in the U.S., very important people in the U.S. say, it's the American government that is not present. It's not the American economy. And so if you take, for instance, the governors that continue to follow the Paris Accord, these governors represent around 60% of the American GDP. So U.S. will be present through local politicians, governors, but also through business, science, universities, etc. So the U.S. is at the COP, but we would have preferred if the American government was also there.
So as you can see, really trying to put a positive spin on things there, Tom, and there is more positive news. So for the first time ever, the UN is projecting that we will see an emissions decline of 10%, and that is good, but that decline would have to be 46% by 2035 in order to keep on some kind of track by the end of the century.
Meanwhile, flows of capital continue into renewable energy, Bonnie, which is interesting. I mean, particularly given what you've been framing for us in terms of the lack of participation of the US government, the Trump administration, of course, the gutting of the IRA, and yet the fund flows continue.
Yeah, absolutely. And you know this, Tom, from talking to tech companies. The primary argument now is that it's continuing because the economics work, right? It's a good investment for the most part. We spoke to many multilateral development banks that say, look, that is our argument when we're bringing on insurers, when we're bringing on pension funds and so on. Many of these innovations actually go on to be able to get scaled and to actually make money. Now, in terms of dollar amounts, we're up to $10 trillion. It sounds like a fortune. $2.1 trillion of that was last year alone. So we're ramping up very quickly. But bear in mind, we spent $1.4 trillion last year just cleaning up from energy damage, energy disasters, extreme weather and so on, floods, droughts, deforestation. So a lot of money goes into it, and that money could be saved potentially by some of this investment. Now, Bloomberg New Energy Finance is predicting that that investment would have to ramp up significantly if we were to try to get to net zero by 2050 or even by the end of the century. In fact, it would have to reach something like $6 trillion a year in the next 10 to 15 years in order for that to happen. But from those that I spoke to, the delegates and the investors and the pension fund managers that are here and that will be in Rio and potentially Belém for a day or two at least, that money is out there and it can be tapped as long as the economies work.
Bonnie Quinn, thank you very much indeed. On the ground for us in Sao Paulo at COP30, of course. Bonnie, thank you. Coming up, I'm going to switch focus. I'm going to be joined by Alistair King as he prepares to step down as the Lord Mayor of London at the end of the week. We'll reflect on his year in the post and maybe get his views as well on the upcoming budget, what the City of London needs. Stay with us. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Welcome back to The Pulse. Now, Alistair King finishes his year-long term as Lord Mayor of London this week. The end of his tenure comes less than 3 weeks, of course, before the UK's autumn budget, November the 26th, which could have significant implications for the City of London. Alistair King is with me now for his last interview on Bloomberg TV as Lord Mayor, but hopefully not your last interview on Bloomberg TV indefinitely. Alistair, thank you for your time. As you look back then on your year of service, what stands out to you in terms of what you would notch up as achievements to support this great City of London?
I'm very
obviously sad to be leaving this remarkable post. It's a great honour to do it. And I think, though, that we've managed to get a few things done. I'm particularly pleased with the Mansion House Accord, which is where we managed to get 17 of the largest pension funds, responsible for about 90% of the defined contribution default universe, together in a room, and to make a commitment to invest 10% of their default funds into alternative assets over the course of the next 4 years. Decent size. That's about £100 billion over the course of the next 4 years, investing into areas such as infrastructure, private equity, private debt, plus also early stage companies. 50% of that will go into the United Kingdom and 50% into the rest of the world. I think that's a significant achievement of which I'm very proud.
What is top of your list? What should be top of the list on the in-tray of Susan Langley, who's taking over as the next mayor in City of London? What is the key priority?
Well, yeah, I still think the priority that I had when I started still pertains, and that is we in the City of London, we've become a little bit too risk averse. We are effectively, we had a wonderful reputation for many centuries for going around the world, banging on doors and doing remarkable things. And I just think we're still playing within ourselves, and therefore I think we've got to get back into that concept of jumping on planes, banging on doors.
Where does the UK Chancellor sit in that as we look ahead to the budget and question marks about tax increases? Calls from some for a wealth tax. She suggested that's not going to happen, but broad-based tax increases do seem to be on the agenda. How much concern is there within the City of London about tax increases?
I think that there is concern, absolutely. I've spent a lot of time speaking with my colleagues in the city, and there is a concern that we've got to maintain a competitive nature for our taxation environment to allow wealth creation to take place here in the city. We do that really well when we're given the opportunity, given the platform. And I just think we've got to make sure that we preserve that remarkable creativity, and I think that taxation plays a key part in that.
How much of a hit would a bank surcharge be?
Well, we're absolutely against a bank surcharge. I think that's a retrograde step. So we've got to remember the fact if you free up the banks, and allow them to finance businesses, businesses will do the government's job for them. They will create the growth. They're extremely good at doing that. That's exactly what they're there to do. And so therefore it's absolutely part of it. Banks investing into businesses, and businesses then creating jobs and creating growth. That's what we should be concentrating to do.
Are the non-dom tax changes still a drag, still a concern, or have most executives and high net worth individuals adjusted to that?
It's still a concern, something I've been advising government on. We have to get a change there. Particularly I'm looking at can we decouple the inheritance tax element away from the non-dom configuration, because effectively that's the bit that's really upsetting some of the investors.
Do you think they're taking that on board? The Treasury?
I know we've said it to them, and also I know that they've listened. Let's see what happens on 26th of November.
Exit taxes as well. And Nick Stronsky of Revolut has moved, has relocated to the UAE.
I think you're mentioning some very apposite points. I think we've certainly, it comes under the heading of competitiveness. We've got to have a competitive tax system to make sure that we have wealth creation here in London. Without that, there are problems ahead.
I asked you when you were last around the desk of us with us about Reform UK and in terms of their efforts in trying to win over the city. How has that changed since I last spoke to you? Have they made more progress, Reform, in winning over city executives?
They have not been in touch with me since you and I last spoke. I don't really see enormous around the city. I don't see many sort of much evidence of Reform sort of paying attention to the city. So that might just be me. Perhaps I'm not on their list.
OK, Alistair King, thank you very much indeed. City of London Lord Mayor, of course, at least for the next couple of days after serving his one-year term. We wish you all the best in your next ventures, of course. Up next, we're coming up with Bloomberg Brief, checking in the markets for you, of course, after some of the nosebleed losses that we saw yesterday, particularly pronounced on the Nasdaq 100. US futures currently lower by 0.1%. European stocks a little softer in the session, down 0.3%. The UK FTSE 100 is back in negative territory, down 10 points at 9,704. Stay with us for the brief. This is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
NYK sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide
compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the pargelating fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Bonnie Quinn on assignment this week. Here's what you need to know. A global chip sell-off. Stocks extend losses as semis erase $500 billion in value over concerns of lofty valuations. And it was winner's night for the Democrats. The party sweeps major party elections, with Zohran Mamdani taking the mayoral victory in New York City. And the legality of President Trump's tariffs face a Supreme Court hearing later this morning. The president says that he will not be attending. It was a serious pain trade in the markets yesterday. The S&P ended down more than 1% for its worst day in nearly 1 month. We add a little bit of weight to the losses this morning, down 0.1 and down 0.2% for the NASDAQ 100. AMD earnings not helping us this morning. It does seem like the valuation concerns have shifted into a new tone for this market. Does it continue? We're looking at a Russell that is gaining. Now, with those concerns, for example, we also saw IG spreads widen. Bitcoin dropped below 100,000 for the first time since the summer. And you've seen bonds rally. That continues, at least on the front end, ever so slightly this morning. Your 2-year yield stands at 3.56. Your 10-year yield at 4.0832. Let's get some stocks on the move in the pre-market this morning. With that is Chloe Melly. Good morning, Chloe.
Good morning, Danny. Let's start with AMD today. So AMD actually reported third quarter sales that beat estimates, but the reason why it's down in pre-market trading is because the fourth quarter outlook really disappointed investors. The problem here for AMD is that expectations were so sky high that anything less than massively impressive would have been seen as underwhelming. Moving on, but staying within the AI theme, the providers of AI equipment, AI infrastructure, Arista and Supermicro are also down this morning after providing quite lackluster forecasts. It puts into question perhaps the ability of those companies to continue to capitalize on the AI boom going forward. And finally, Pinterest is also down in pre-market this morning after projecting quite weak sales for the fourth quarter, which includes this upcoming holiday season. Of course, it's a company that's dealing with growing competition from AI and also slowdown in advertising spend. So it doesn't look too rosy for Pinterest at the moment.
Ooh, yeah, that's a painful drop, 19%. Chloe, thank you very much. We'll catch up with you later in the hour. Also, in just moments, we'll speak with Katrina Dudley of Franklin Templeton as tech valuation fears drag markets down for a second day. But first, here in New York City, a historic victory for Zohran Mamdani.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. This is not only how we stop Trump, it's how we stop the next one. So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Joining us now from Washington, D.C. is Mika Solner of Bloomberg Government. Mika, thanks for getting up early for us after a late night. What did the results show?
Yes, thank you for having me. I think the results showed that there is an extreme call by the Democratic Party to really mobilize their voters, and that showed last night. We saw a huge sweep for Democrats last night. In New York City specifically, I think that Zohran Mamdani really was the product of a lot of Democratic pushback in terms of them saying the party has not done enough, and I know that he has big sweeping promises that he's made on the campaign trail, and we'll have to see how those come to fruition.
And as he was speaking, Zohran Mamdani, that is, Trump tweeted or put on Truth Social this, ... and so it begins. This is a president who has threatened to pull funding from New York City if Mamdani wins. We have that win. What now, Mika?
Yeah, as we've seen before, President Trump is not afraid to go into cities that he disagrees with the leadership of. We saw the federal takeover of Los Angeles, of Washington, D.C., and I think that he's unafraid to go into his former hometown of New York City as well. But I do think Mamdani is going to really be aggressive in his fight against the Trump administration. I think that was one of his main criticisms of the Democratic Party and why he was elected with such a progressive base.
So you have Mamdani maybe being a referendum on something very specific in New York City. But as you pointed to, Mika, it was also in New Jersey and Virginia that the Democrats had sweeping wins too. How much can we infer from that for next year's off-season elections too? Is there something wider happening here, a pushback against the Republican Party incumbents?
I think it's a little bit too early to tell, but I do think that the Democratic base specifically is extremely mobilized right now. They're very motivated against Trump. I think in New Jersey and Virginia, we have seen more moderate candidates pull through. So there's always also going to be a push-pull in the Democratic Party in terms of what the correct vision is going to be for the playbook. And that's also going to vary by state and by district next year.
So, okay, you have those elections, but the other thing that was on the ballot, at least for California, was redistricting. Mika, this is a battle that's been ongoing, whether it be Texas really being the first to put that through on the Republican side, California responding by passing Prop 50 to get 5 more seats in the representatives. How is this all shaking out?
The redistricting fight is something that's been unprecedented, and this was started by President Trump that wanted red states to try and draw new maps to get more red seats. So I think that this is, another sign of Democrats pushing back against Trump. And I think that they're going to be looking, if California was successful, they're going to be continue to be aggressive in other states as well. So we're going to see a lot of election shakeup here, and we're going to see what can get done in the next year before 2026.
Just to be clear, Mika, with these added seats from California, does it essentially negate what's happening in Texas or what happened in Texas? Are we back to where we were before?
That's the pitch that was sold by proponents of Prop 50 and Democrats that have pushed for it, is saying that it evens the playing field. And how that's going to shake up, we're going to have to see. I think that a lot of the candidates in these seats that are going to be affected are going to be running independent races, and we're just going to have to see what they do with the odds stacked against them.
Hey, Mika, appreciate your time this morning. That's Bloomberg Government's Mika Solner in D.C. Meanwhile, in Washington, the Supreme Court will hear challenges on the legality of some of President Trump's tariffs today after the lower court ruled them illegal under an emergency law. Joining us now is Bloomberg's Suzanne Lynch. Suzanne, what are we likely to hear today as we go through the court process on IEEPA and President Trump's tariffs?
Well, these oral arguments are scheduled to begin at 10 a.m. Eastern Time, and it's going to be a fascinating insight into the nation's highest court and its views on Trump's tariff power. At issue is the 1977 7 federal act that Trump used to impose some of those sweeping tariffs that we have seen since he returned to office. Now, lower courts have ruled against this. This is the Supreme Court now stepping in. Interestingly, we believe that the Treasury Secretary, Scott Bessent, will attend. Donald Trump had indicated he might attend, but he will not. But we will see Bessent there at the court.
Meanwhile, Suzanne, at midnight, officially, it became the longest shutdown in history, reaching day 36. For those of us who have flights, me, myself included today, it really has made an impact. But the markets, it hasn't made an impact. Hasn't made an impact in Washington, D.C. Do we seem any closer to resolving the government shutdown?
I think at the moment the answer to that is no. We are not seeing any obvious off-ramps now for either Republicans or Democrats on this. Donald Trump has managed in one way to distance himself from this issue, although we do expect him to meet Republican senators today. But there is no sense that this impasse is getting any closer to being resolved. Democrats are digging in. But you mentioned flights there. I think that may well be the issue that spurs some kind of action here. That indeed was the issue that eventually ended the previous longest shutdown, which also took place under Trump's watch. But we are seeing indications now of various workers not calling into work because they're being unpaid. This is having an impact on some flights. Obviously, we are coming into a very busy period as we approach Thanksgiving. So I think this is weighing on lawmakers' minds. Democrats may feel emboldened after those victories we were just speaking about last night. But the question is, who is going to get the political blame for this? At the moment, polls suggest the more people blame Republicans, but the longer this goes on, we're probably going to see some calls, even from unions, those traditional Democrat-leaning voters calling for something to be done to stop this shutdown now, as it breaks a record for the longest shutdown in American history.
And you've certainly seen some of the polls moving away from the Republicans and from Donald Trump himself. So opinion does seem to be placing the blame on the Republicans. Suzanne, thank you very much. Bloomberg's Suzanne Lynch. Back to markets this morning. A global sell-off in chip stocks accelerated on concerns over lofty valuations for some of the AI boom's biggest winners. Bloomberg Tech Europe anchor Tom McKenzie joins us with the latest. Tom, let's just take stock of what happened yesterday. Has gravity finally hit some of the AI-related names?
Well, it did, at least for 24 hours. And you're right, it has been global. You've seen that in terms of the Asian session. You saw the likes of SK Hynix. You saw the likes of Samsung, TSMC over in Taiwan taking a big hit as well. And in fact, here in Europe right now, in terms of the biggest losses coming through, it's the sector around tech that is seeing some of the biggest losses. So it is global in nature. Are there some changes? You know, we know, we've been discussing the valuation story and the nosebleed valuations for some of these companies for a long time. That is not new. Maybe some factors that are new this time round are, of course, just where we are on the spend story and some of the circular financing, as some would characterize it, around the hyperscalers. Then the expectation that maybe the Fed doesn't cut again in December, so maybe an environment of higher rates and how that could play out. And then, of course, key executives on Wall Street, the likes of David Solomon of Goldman Sachs, warning about a potential pullback in stocks, and Michael Burry putting those short positions on Nvidia and Palantir. So all of that seeming to come together to be a factor that dragged on those semiconductor and tech names yesterday, particularly on semiconductors. You look at the Philadelphia Semiconductor Index, about $500 billion worth of market cap being wiped out just in the session on Wall Street yesterday. It had been trading at a premium, about 28 times forward earnings, which is well above its 5-year average. It's more like 22. So for those looking at that disconnect between valuations and the ability to push through with earnings, that is another metric that would cause concern. And AMD as well. Look, beating on profits, beating on sales, beating on the forward look around revenues, but not meeting the highest expectations. So again, Danny, I know something you scrutinized a lot is that gap between expectations and what they're actually able to deliver.
Yeah, I mean, it's two of these big lofty names in a row, from AMD to Palantir, that couldn't live up to expectations. But Tom, what does it say about the broader story of AMD and their ability to really rival NVIDIA as a producer of these AI-related equipments and chips?
Yeah, and they've had success on that front. They've had significant partnerships announced in the last few weeks with OpenAI to supply them with chips, of course. So that is a vote, an endorsement, of course, coming through with OpenAI for AMD and their AI accelerators. They had a vote of confidence from Oracle as well. So they are making progress, but the catch-up is still significant in terms of the gap between NVIDIA, which still has close to a 90% market share when it comes to those cutting-edge AI accelerators. Again, AMD making progress, significant partnerships. Interestingly, when it comes to the data center part of the business, which is the AI part of the business for AMD, they saw a 22% increase in growth, but for their more legacy computer CPU part of the business, they actually saw a more than 70% pickup in growth. So that's interesting in terms of the dynamic between the legacy business performing much better, in fact, than the AI business. In the context, of course, that growth of 22% is still very strong, but many investors, or at least some, looking for even stronger growth and pushing the CEO, Lisa Su, on that. She still says by 2027, this is going to be generating tens of billions of dollars of additional revenue for this business.
Tom, we are also going to get Qualcomm reporting after the market close. What are you watching out for there?
They are also inevitably trying to push into the AI space, trying to develop and design chips that will fit into data centers. They still get the vast majority of revenues from chips that go into smartphones, both Android and Apple, with the modems as well. Interestingly, Apple's come through obviously with some pretty strong numbers in terms of growth, particularly around the iPhone 17, but Apple is now less dependent on Qualcomm modems because they've got their own in-house modem. So it's really the Android story that is going to align with Qualcomm. So you're looking for that, looking for anything they have to say on how much progress they're making in developing their own AI chips as well. They've also been pushing into the auto space, so that's crucial. They're trying to diversify away from smartphones. So any updates in terms of the progress they're making on those fronts, I think will be front and center for investors exposed to Qualcomm.
Tom, we appreciate it. That is Bloomberg Tech Europe anchor Tom McKenzie. Now let's get you some other top stories that are trending on the terminal this morning. And China ends retaliatory tariffs on U.S. agricultural products. That list includes soybeans, corns, wheat, sorghum, and chicken. This comes after the U.S. halved its fentanyl-related levies on Chinese goods. It will take effect on November 10th. And a UPS freight jet crashed and exploded shortly after takeoff from Louisville, Kentucky on Tuesday, killing 3 crew members and at least 4 people on the ground. The cause of the crash has not yet been identified. Boeing said it has offered to work with the NTSB on investigation. And BMW says demand for its new EVs is exceeding expectations. It's seeing particularly strong demand in Europe, but facing fierce competition in China. It warned that earnings could be hit by changes in tariff policy or Chinese export curbs on key materials. Coming up, Novo cuts outlook once again, highlighting obesity struggles. We'll bring our interview with the new CEO, Mike Dowstar. That's coming up next. This is Bloomberg.
Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Novo Nordisk has trimmed its forecast for the fourth time this year after disappointing sales of its blockbuster weight loss drug. Bloomberg's Guy Johnson spoke to the company's new CEO. Take a listen.
The first 9 months of the year, 15% profit sales growth and 10% profit growth is not so bad at all compared to our peers. But I think that when you look at it quarter by quarter, there has been a headwind and bringing the quarterly growth rates lower. If you project our numbers for the full year, actually you see that quarter four should be in negative territory. So that you see mathematically.
So this isn't the low point. The low point is still to come, but things get better from there?
There's for sure a headwind against us.
Yeah.
Having said this, we are in a business of marathons and not sprints. So there is huge amount of unmet need with many patients still not on our medications or not on any medications. And I look incredibly forward, of course, as we go forward, taking over this new job, making sure that we expand the market and get to those people.
You've been in the job for 91 days. You haven't let the grass grow under your feet. You're already talking about cost cuts. We'll talk about it in a minute. You've launched a big M&A deal. Is this the new Novo? Is this a more dynamic, aggressive Novo Nordisk under your tenure?
The success we have had with obesity has meant that a lot of companies, pretty much all pharma companies out there, has gotten excited about what we do. So that is good from a patient's perspective. More players will come in.
From a shareholder perspective.
But at the same time, we have to make sure we can outperform the competition from a shareholder perspective. So my job is to really make sure that we are ready for the headwind that we clearly are seeing coming towards us.
When are you going to match Eli Lilly in terms of performance? They had results a few days ago. They were knockout. When are you going to be able to match that kind of performance? You talk about a kind of a performance culture here.
Again, my job is to put the patient in the center of what I do and not necessarily just my competitor. We watch them. We take all of our competitors seriously, but there are hundreds of millions of people out there that are suffering from diabetes and obesity that no one is right now addressing. My job is to sustainably lead ourselves towards that aim.
How does Metsera help you do that?
Metsera has some of the best complementary assets to our own phenomenal pipeline. So when the ambition is in billions and not millions, you need basically all the great assets to get.
Great assets, but complementary. So so why do you need complementary assets? Because you've got all these products. Why do you need to go and buy this business?
Because obesity and diabetes is not a single disease. It's an individual disease. You basically have different preferences. Take a look at the great Wegovy pill we're about to launch in US. Well, that's for people that don't like injection.
Sure.
They would like to lose weight, but they don't have a viable offering from us or the competitors.
You've got very similar products. And the question that I've just listened to a lot of analysts, talked to a lot of analysts, and the question they keep coming up with is, does this seem to signal maybe that you don't believe in the current Novo portfolio?
Absolutely not. Absolutely not. We are in a situation where every single patient has a different preference. And we need to have the product offering that matches that.
Bloomberg's Guy Johnson with the new CEO of Novo Nordisk. Coming up, the Democrats sweep the local elections. That covered in the major news outlets. We'll have your front pages for you next. You're watching Bloomberg Brief.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today, election 2025 is here. Trust Bloomberg for continuing coverage of the races for mayor of New York City, governors of New Jersey and Virginia, and the redistricting map in California. Tune in at noon Eastern for a special edition of Balance of Power, including full analysis of the results. It's election 2025 on Bloomberg Television and Radio. Context changes everything.
Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Time for the story that's making headlines across various front pages. Everywhere you look, it's about the one big win for Democrats. The party registered victory in contests across states. That means that they're now building momentum into the 2026 midterms. In a series of historic firsts, so Ron Mamdani will be the New York City's first Muslim mayor and first South Asian to hold the office. He'll be sworn in on January 1st. Abigail Spanberger will become Virginia's first female governor, and Mickey Sherrill will become New Jersey's first female Democratic governor. Coming up, more on the sell-off. How much further can it go, or will a rebound be on its way as we continue to dip in today's future session? We're going to have more on stocks and valuations with Katrina Judley of Franklin Templeton. That's coming up next. You're watching Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. A global chip sell-off. Stocks extend losses as semis erase $500 billion in value on concerns over lofty valuations. Winner's night for the Democrats. The party sweeps major local elections, with Zohran Mamdani taking the mayoral victory in New York City. And the legality of President Trump's tariffs face a Supreme Court hearing later this morning. The president has said that he will not be attending. It was 24 hours and continues of a clear risk-off move. Maybe not as bad as it was yesterday, falling by more than 1%, but it is the concerns over high valuations that seem to be hitting equities after Palantir earnings 2 days ago. Yesterday, it was AMD earnings that has the NASDAQ 100 underperforming, down 0.3. For your bond market, it was a flight to safety. That old chestnut came back. It takes a breather this morning with across the curve. We are little changed. Your 10-year yield standing at 4.0871. Let's get you some stocks moving underneath the surface. Here with that is Chloe Melly. Hey, Chloe.
Good morning, Danny. Let's start with AMD, which is down this morning after providing a fourth quarter sales forecast that disappointed investors, despite third quarter sales actually coming in ahead of expectations. This is part of that broader tech sell-off, all of those concerns around the really lofty valuations as well in those AI-related stocks. So we are down this morning for AMD. Staying within a similar theme, the providers of AI infrastructure, Arista and Supermicro, are also down after providing quite lackluster guidance, which raises those questions around whether or not they're able to capitalize on this growing AI spend. And finally, Pinterest is down also a very impressive 19%, 18.4% after projecting quite weak sales for the fourth quarter, which includes this holiday season that's very important for them. It's a company that's facing a lot of challenges, including slowing down in advertising, and that is reflected in those shares today.
I'm sure the executives at Pinterest would not call that drop impressive, Chloe. Chloe, thank you so much for joining us this morning. Now, as Chloe mentioned, there does seem to be pockets where valuation fears have been gripping investors. It's a second day, potentially, of a sell-off. We'll see how things change as we get closer to the market open. But it does feel like a reassessment of an AI-driven bull market. But there's been a lot of bullishness. Of the 92 major global equity gauges tracked by Bloomberg, more than a third were within 1% of their respective records last week. That is the highest since the global financial crisis, when the metric peaked around 40%. Joining us now, I'm pleased to say, is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Katrina, wonderful to see you this morning. Thank you for joining us.
Great, thank you.
Is there a degree where just the gains that we've seen across different indexes just make us more vulnerable at this part to days like yesterday?
I
think you're exactly right. Look, the market is not heading in a straight line up and to the right. There are going to be times where you have pockets of correction, and those pockets and those opportunities are really what we're seeing as an opportunity to add to equity exposure. So to take advantage of the fact that the market may sell off on what we see as a very positive earnings trajectory. And going back to the valuation question, I think that's really what's on everyone's mind at the moment. Look, valuations versus history are above where they've been historically. But if you look at on a forward-looking basis, that gap starts to narrow between the average multiple and where we're trading. And I think what that really is a reflection of is earnings power. So if we look at the companies that have missed, if you look at AMD that we just spoke about, it was an earnings miss. It was a miss versus expectations, and it's earnings that drive markets. It's not valuation.
It feels like it's been very volatile when it comes to earnings. Is that just a factor of rallying up to this point? Or have we kind of mismatched on where fundamentals actually stand versus what the companies are reporting, even though, to your point, the earnings have been strong, but the reactions kind of have been negative?
That's interestingly, because 80% of companies have beat earnings expectations. So companies are actually beating what people are expecting, and the stocks are still not reacting as you would expect. So that is what is driving that volatility, is that expectations have got ahead of themselves. So companies are beating expectations. And if you're a CEO and you're sitting in that CEO suite, you deliver more than people were expecting and your stock still sells off. It's very difficult to explain it where people are delivering. And I think that there's two factors that make us very positive. First, that a rate of earnings beats, which I think is driving an acceleration in earnings. And the second is this AI and what we think it's going to happen, and in terms of the breadth of all of the companies impacted by AI. It's not just 7 stocks that are driving this market.
So when you say you're looking at some of the declines as opportunities to add, are you specifically looking at opportunities to add in those AI names, or are you taking sort of any broad market decline to add more broadly to equity exposure?
I think what we are looking at is a combination of the two, is adding to your equity exposure and then really assessing on a stock-by-stock basis. I think as the market has broadened out, there's just so many more opportunities available to people who are willing to do the work and to pick those stocks. We do continue to see opportunities in the technology sector. That is where you're seeing a lot of growth. But I think what the market is also ignoring is the fact that across many different industries, we're seeing positive earnings growth, and that is good for the market. That breadth gives you a kind of solid foundation on which to be
earnings
optimistic.
Breadth, but not breadth for the overall market. One of the remarkable things, and our producer Dan Curtis pointed this out, that in yesterday's decline of 1%, more stocks were rallying than Monday's rally of 0.2%. The breadth on rally days has been extremely bad. It's just those few lofty stocks that are carrying us there. Is that a concern to you?
I think, though, on the other side of things, that the rest of the market is much more stable. So the volatility is happening in those larger parts of the market. So I think as you look at where a stable foundation is, I think that what we're seeing is the average company is doing better than average, and that's a really good thing for this market.
Katrina, just turning to policy from the Fed, we've had speakers in recent days say that they're not sure whether December will be a lock or not. And we just witnessed, yes, very localized elections, only a few states, but it felt like inflation, or at least the cost of living, was very much so on the docket. And you had voters who voted against the incumbent party on that. Are we going to face an issue if this is a Fed, especially next year with a new composition, that is cutting and a populace that still seems concerned with high prices?
Look, I do think inflation, cost of living, cost of housing as some of the key things that are really driven, what the election results. Just look here in New York City, where the need for that housing, though, is really a question about the supply of housing, and the supply of housing that is affordable affordable. I happen to sit on the board of a nonprofit that does make available housing that is affordable to the general population, and it's releasing the brakes that have made those projects very difficult to get through. And so I'm actually quite optimistic with the new administration that you may actually see more of these projects get permissioned, and that will increase the supply of housing. And increasing the supply will actually make it more affordable and make it easier for New Yorkers to get into a housing and have that stability in areas where they want to live. So that's the first thing in terms of that Democratic sweep. I also think that a lot of those votes were anti-votes versus necessarily a positive vote.
When it comes to housing, because it's a problem across major cities, right? And it's something that other cities haven't been able to solve, from Chicago to New York to San Francisco. If your hope plays out, that you do get some of the red tape removed and supply comes back on the market, could it serve as an example nationally? Does positive developments in New York pretend well for the entirety of the United States that is struggling with higher housing prices?
Isn't this such interesting? In the last 2 decades, we've gone from having an overabundance of housing and people were sending back their keys in the mail.
It's the financial crisis, right, that really discouraged a lot of the home builders from diving in and building more supply.
Exactly. And so what we're seeing now is, the return of multifamily housing in particular, which is a more affordable, form of housing. We're also seeing people wanting to get housing that's closer to transportation versus being really on the outskirts. And I do think that if you have a model where we can convert, sites that maybe weren't intended to be housing but actually have all of the right attributes, that is a good sign. And it is just finding a model that works. I think that each of the cities is probably going to have a slight derivative because there's just so many unique characteristics. And I think that's the one tough thing about housing. It is probably the one asset class that is just really unique.
Yeah, and it also speaks to the moment where Fed cuts aren't necessarily helping the housing market. You have to have the supply reforms that you're talking about.
Exactly, and that supply reform is what's going to give people hope, because they're going to see the fact that there's more availability, and availability is going to drive that optimism. But you also raised the question, and we talked about it a little bit, about the Fed and the rate cut expectations. And it's interesting because as we went into October, we got the rate cut, but some of that commentary coming out of that meeting, people actually readjusted their expectations for December. It was, as you say, it was a slam dunk in basketball, and now that probability is down to about 60%. People are thinking that the Fed is going to continue to be cautious, and that caution, I think, has a reflection on the fact that they are cautious about inflation.
Katrina, this has been so fascinating. It is always such a pleasure to speak with you. Thank you for coming on this morning. Katrina Dudley of Franklin Templeton. Coming up, as we were just speaking about a historic election in New York City, Mamdani is elected mayor in a big night for the Democrats. We'll give you the results coming up next on your Bloomberg Brief.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. This is not only how we stop Trump, it's how... So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
For what it's worth, it does seem Trump was watching in the middle of that speech he put out on Truth Social, and so it begins. That was Zohran Mamdani making history after winning the New York City mayoral election in one of the most competitive races the city had seen in decades. Mika Solner of Bloomberg Government joins us now from Washington, D.C. Mika, just how big of a victory was this for Mamdani? Was it similar to what we saw in the early polling?
Yes, this was an extremely well-run campaign and well-funded campaign, and one that was a very huge success for the progressive wing of the Democratic Party. And we saw, that Zohran Mamdani has become not only a threat to Republicans, but a threat to some Democrats in his own party as well, if you look at the money that was spent against him and his rise. But this should send a sure sign to Republicans in Washington that, they should be afraid ahead of the midterms next year.
And as we've been speaking about, President Trump has been threatening to pull funding to New York City if Mamdani wins. Mika, just how much could the president do? How difficult could he make Zohran Mamdani's life as mayor of New York City?
I think that we're going to see a huge struggle between New York City and Zohran Mamdani's New York City in particular, and President Donald Trump. I mean, Donald Trump has been proven that he is not afraid to go into cities and use the federal power that he has to go into places run by Democrats and make sure that they know that he's the one that's in charge. And I think that he has a unique aspect in doing that. So I think that we'll see no shortage of that here.
It wasn't just New York City. There were also races for the governor in New Jersey and Virginia. Mika, what did those results show?
I think the New Jersey and Virginia results are particularly interesting because those Democratic candidates ran a more moderate campaign. So I think that we will see a push-pull between the progressive wing of the party and the more centrist wing of the Democratic Party in terms of how they want to message next year. And again, I will add that I think this is going to vary district by district and state by state, but we are going to continue to see this messaging fight in the party itself.
And how do they message California passing Prop 50, giving them more seats in a redistricting drawing for the House of Representatives?
Yeah, Prop 50 was largely successful last night, and Democrats and proponents of Prop 50 billed it as a way to level the playing field in the redistricting fight that was started by Trump, who went into pushed red state legislatures to try and draw new maps ahead of next year. And I think that is a sign that Republicans are fearful of holding on and losing their small majority, but also Democrats are wanting to make sure that they can win in a playing field that is leveled.
Mika, thank you very much for joining us this morning. Mika Solner of Bloomberg Government. Now, elsewhere in Washington, D.C., President Trump's tariffs are facing their biggest test yet as the Supreme Court is scheduled to hear arguments on their legality starting at 10 a.m. Eastern Time. The lower courts did rule them illegal under an emergency law. Joining us from Washington, D.C., as well as Bloomberg's Tyler Kendall. Tyler, what are we expecting in today's arguments?
Yeah, hey, Danny, good morning. Well, these tariffs have to do with the ones invoked under IEEPA, the International Emergency Economic Powers Act, and it extends to about 60% of the tariffs currently in place by the Trump administration. And there's two big legal questions at the heart of this case. One is, does President Trump have the authority under IEEPA to impose tariffs? This law has never been used before in such a way, and there are questions here on whether or not he bypassed Congress. The second big question is that in order to invoke IEEPA, President Trump had to declare national emergencies. He did so twice, one citing the border and fentanyl, to impose those tariffs on China, Mexico, and Canada, and then again for his so-called reciprocal tariffs, where he cited persistent trade imbalances as a national emergency. Now, if the court rules that President Trump does have this legal authority, then the questions become whether or not these national emergencies reach the legal standard of being unusual and extraordinary threats that he would have to take this step and invoke the emergency powers. There's a lot of things that we're looking for here, Danny, but importantly, it could have some pretty sweeping implications. Our own analysts at Bloomberg Economics say that if the ruling goes against the Trump administration, it could drop the average U.S. effective tariff rate from 14.5% down to 6.5%.
Elsewhere, Tyler, we've also, as of midnight, entered day 36 of the government shutdown, a new milestone on the dysfunction of Washington, D.C., with the longest shutdown on record. Has there been any movement to reopen the government?
Well, we have gotten perhaps a glimmer of hope. We heard from Senate Majority Leader John Thune, who said that a potential off-ramp seems to be coming together. But importantly, this is very fragile, and it doesn't seem like the conversations have extended to the leadership level yet. But our understanding is there is a bipartisan group of rank-and-file senators that are discussing some potential solutions that would likely include a promised vote on extending the Affordable Care Act premium tax subsidies that are set to expire at the end of this year. That has really been at the core of Democrats' demands. They want to see some changes made, some promises before the government reopens, but Republicans have been holding the line that the government needs to reopen in order for any of those talks to take place. So perhaps the compromise can be that they will set a firm date on the calendar for a vote on the extension. We're going to have to wait and see because, Danny, as you all know, pressure is mounting, everything from delays at airports due to a shortage of unpaid air traffic controllers to now open enrollment starting and Americans seeing their premiums go up to the future of SNAP benefits, which have really been at the center of this fight, as there are questions still about how much money Americans that receive these food aid benefits are going to get.
Tyler, thank you so much for your coverage this morning. Looking forward to your coverage throughout programming today. That is Bloomberg's Tyler Kendall. Now back to markets, where a global chip sell-off wiped out $500 billion in combined market capitalization. Bloomberg Tech Europe anchor Tom McKenzie is back with us. And Tom, that comes as earnings for the most part have been beating for the overall equity index, an 82% beat rate for these S&P 500 companies. Why then has tech and semiconductors performed so poorly so far this week?
Yeah, Danny, I mean, part of it seems to be that expectations piece again. And as you say, AMD, as one example, beating when it comes to profits, beating when it comes to sales, and beating when it comes to the forecast for revenues from the current quarter. But that was on average estimates in terms of what the analysts had been looking for at the punchier end of some of those takes and some of those estimates from the analysts. AMD did not meet the punchier ends. It met the average estimate, but not some of the really, really kind of far-flung expectations. And so it's that mismatch, again, that seems to be one of the factors that's feeding into this. But you know, the people we're speaking to today suggest that it's not just one aspect that's feeding into the downside that we saw yesterday when it comes to tech, that rippled across to Asia and now to Europe as well. It is also maybe concern that rates will be kept higher for longer if the Fed doesn't go with another cut in December. Of course, that remains a big question mark. We know that meeting is going to be live. And also some of the short positions we saw from Mike Burry and some of the warnings that came through from some of those key executives on Wall Street, all of that coming together. Of course, the government shutdown maybe is the broader negativity as well as we get into that 36th day. Maybe all of that coming together, leading some to question the valuation story, even as the earnings beat from most of these companies. It was a beat, of course, from Palantir. It was a beat from AMD, but not doing enough, really, to meet investor expectations, given the significant run-up. AMD up about 100% year to date. And on the valuation story, you talked about the Philadelphia Semiconductor Index trading, before that drawdown, trading at about a multiple of about 28 forward earnings, well above the 5-year average of 22. So that just illustrates, for some at least, how far valuations have run away from some of the fundamentals, even as these companies beat on earnings.
Hey, Tom, can we just sit on AMD for just a minute? Because this is a company that has been trying to rival that of NVIDIA. Did it seem to make any progress in its latest earnings?
You have to look at the numbers and say, yes, they have made progress. Again, given the beat and given the guidance on the current quarter, they have, of course, inked pretty significant deals with OpenAI and others in the space. And I think what that tells you is that they're making progress not just on the chipsets, but on the whole package that comes with their AI accelerators. They are still absolutely playing catch-up with the likes of NVIDIA. Lisa Su, though, saying when pushed on this, by 2027, they should be adding tens of billions of additional annual revenue from their AI accelerator sales.
Tom, thank you very much. That is Bloomberg Tech Europe anchor Tom McKenzie. Coming up on the show as we head closer to the market open, we're going to get you set up for your trading day with not official government data, but private jobs data on deck. That's coming up next.
The world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Let's get you set up for your trading day. First up, earnings from McDonald's before the bell. Then we'll hear from Qualcomm after the market close. And ADP employment data that comes at 8:15 a.m. Eastern might take on more importance given the absence of government data. Plus, the Supreme Court will be hearing challenges to President Trump's tariffs That kicks off at 10 a.m. It is a market that is continuing to sag. Some of the losses pre-market in the future session are picking up after yesterday's more than 1% decline. We're down just over 1/3 of 1%, but it is a ever so flight to havens. Both the dollar is stronger, as are 10 years. The yield drops by not even 1 basis point. All right, that is it for Bloomberg Brief. Surveillance takes things from here. You're watching Bloomberg TV.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
At the end of the day, you're not going to hit all-time highs day after day after day.
Investors should still expect that there can be some volatility.
Conditions have become increasingly fragile.
We have nice earnings growth, but it's being pushed by Mag 7.
We are going to see a broadening out of the market. I think we're heading into Goldilocks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, looking for stability. A tech-fueled equity market rally morphing into a tech-fueled sell-off as Democrats are posting big wins in key races across the country. The next test for White House policy is in the Supreme Court. A hearing on tariffs later on today.
We're not going to learn necessarily anything definitive today, but make no mistake, this hearing and this potential Supreme Court ruling has the potential to be transformative, both for Donald Trump's policies, but also for the market. There is an expectation that the revenue coming from tariffs can offset some of the expenditures that will really come to the fore early next year that's been supporting the bond market. If that is overturned, a big question of how the market will respond.
And a big question is if the Commerce Department, the Treasury can refund all of this money in terms of the tariff revenue, but the administration will go about collecting tariff revenue, and other ways, 232s, 301s. The big issue here is for our day and age, this is the most critical Supreme Court moment in terms of presidential economic power. And this administration is trying to say, actually, it's not economic power. This is about national security.
In many ways, it plays into the debate at the moment, affordability. The mayoral candidate, Zohran Mamdani, now mayor-elect, has been so on message over the last several months in this campaign. He takes everything back to affordability, and a cost of living. And that's the blueprint for electoral politics in this country for the next 18 months and beyond.
A lot of people can say a lot of things, but what he did was promise something, and a lot of other Democrats hadn't been. Previously, they had just been the anti-Trump. He came back to the same themes that President Trump ran on, which is affordability, cost of living, cost of housing. So here's the question. How does that get manufactured, and how does President Trump message that today in a call that he's planning with congressional Republicans, where he goes back to them? Does he say, look, we need to double down on this? Or does he say, you need to fight harder, we're going to keep the government shut, it's the longest shutdown on record, and you know what, let's keep going because we don't want to make concessions?
He's identified the right problems. Has he got the solutions?
Well, this is the problem right now, and it's not just affordability in New York. Affordability is how you have Mikey Sherrill winning in New Jersey. She talked about the fact that electricity prices in New Jersey are now in the double digits. And she said, I'm going to be the anti-Trump, where her counterpart, Jack Ciattarelli, was talking about how Trump at the moment deserved an A grade. Same thing in Virginia. These are two governors where likely they were going to win. There are more Democrats in these states than there are Republicans. The margin by plus 10-point margins. And how can we not talk about California this morning? Prop 50 passing. This is a springboard for Gavin Newsom for 2028.
You've got to get into the market moves as well. Equity futures pulling back again this morning by 0.4%. Big sell-off yesterday for big tech. High yield spreads wider over the past 5 sessions as well, Bramo. Look, the moves are notable. The levels are still okay for high yield, but it gets your attention.
Especially given the fact that you're starting to see an increasing number of potential downgrades from investment grade to speculative grade. There is a sense that there are cracks forming. How deep those cracks are, whether that is a huge red flag, remains to be seen. Nonetheless, what did we see underperform the most yesterday? Non-profitable tech. There is a real question where people need to show me, not necessarily just say AI 5 times. And right now, people are seeing the ones that are out there that are not able to make those bills or are not able to grow their revenues as fast as expected, punished roundly.
Big hour coming up on this program. We'll catch up with Cameron Dawson of New Edge Wealth as the stock sell-off takes another leg lower. Jessica Taylor of the Cook Political Report as Democrats sweep key races. And Nazak Nikakta of Wiley with the fate of global trade heading to the Supreme Court. We begin this hour with our top story. The capital of finance electing a socialist.
You have dared to reach for something greater. Tonight, against all odds, we have grasped it. The future is in our hands.
Zohran Mamdani winning more than 50% of the vote after vowing to bring major changes to the global capital of finance. Bloomberg's Miles Miller joins us now outside City Hall. Miles Miller, good morning to you, sir. A big win for Mamdani.
Yeah, that's right. It wasn't just a win. It was very much a statement and what he calls a mandate. This is a person who campaigned on a message of affordability, right? Free buses, freezing the rent, and of course, universal childcare. How those things get pushed through or work in City Hall will be one thing, but it is very clear that there was a big contingent of New Yorkers who decided that he was the right person for the job. You know, getting almost 1 million votes and reaching 50% of the vote is no easy task here. It is the highest voter turnout in more than 4 decades here in this city. What we know is that he pulled this off with a truly grassroots coalition. We're hearing people who said that he went all the way out to the Rockaways, he was on Staten Island, really trying to get his message across. And what we know is that he's going to have to work with the business community, right? As you said, the really capital of capitalism here, big banks based here, a burgeoning AI and tech sector here. And so he knows that his transition team really has to focus on what makes New York City tick. And we heard from Wall Street leaders last night about how they plan to work with him on these issues. But of course, this was a grueling campaign. Andrew Cuomo was looking to make a splash after losing in the primary, going after him on the message of public safety, going after him and saying that he's only 34 and had no experience. But New Yorkers seem not to care about that, the affordability message winning true. And something we spoke about yesterday, that was a message that Donald Trump won on just last year. And what is very interesting, Mamdani has said, is that he's willing to work with Trump on affordability, but he's also willing to be a fighter against Trump if he does what he said he would do just 2 days ago, which is pull money from New York City because he says that Mamdani is a socialist.
Miles, appreciate the update. Miles Miller there, tracking the story for us on Bloomberg TV and on Bloomberg Radio throughout this morning. What's the first move for Mamdani in the next few weeks, the next several months? What's the first move for the President of the United States?
Well, for Mamdani, it has to be to keep Jessica Tisch. He has said he plans on keeping her as the New York Police Department commissioner. Does she accept? How long does she stay on? That will assuage the concerns of the business community because public safety for them is #1 to make sure they continue to retain and attract the best talent.
We've got a market story to stay on top of as well. Equity futures down by about 1/3 of 1% on the S&P 500. Here's the view on Wall Street. Cameron Dawson of New Edge Wealth writing, we see potential for the mount up to barrel on into year end, but see cracks under the surface that could make the market more fragile to start 26. Cameron joins us now for more. Good morning, Cameron.
Good morning.
Are you long real estate in Florida? That's a joke, don't answer. Let's get to the cracks under the surface. What are the cracks under the surface?
The first one is no, and the second one is we've certainly seen a deterioration in breadth over the course of the last month or so. You've seen this market get ever more narrow. You have 60% of the names within the S&P 500 not trading above their 50-day moving average, and that was brewing even as we were hitting all-time highs last week. We also saw a big surge in very speculative parts of the market over the course of the last 2 months that was simply unsustainable. Even the SOX was up 30% over the course of September and October. So we should not be surprised that we are seeing volatility. That is the nature of equity markets. We're only 2% off of all-time highs. You're still very much in an uptrend, but you have to appreciate the fact that we've had this melt up, and it just increases the probability that you have some chop and churn as you digest these massive moves.
Is there any broader lesson, though, from what we saw yesterday? And you might just say no, but there is a sense that you did see the rest of the universe actually outperform, and you saw more gainers than you did losers, even with the overall index falling. A reversal of that very narrow breadth that we had been seeing. Is this the beginning of something broader?
Finally, we can celebrate diversification, right? Because over the last couple of months, we've been in a world where you could only own just a small handful of names in order to be able to outperform. But days like yesterday are a great reminder of why diversification works and why valuation discipline works. Valuations are a tough one because they're not a great timing tool. However, they do matter when you get a catalyst, and they amplify moves to the downside. So when you look at things like non-profitable tech having rallied 37% this year, non-revenue NASDAQ companies up 67% this year. These are just areas that you've seen big, huge parabolic moves higher, and what you typically see is after a straight line up, you often do see in those areas a straight line down.
The only issue is it doesn't seem like this is fundamentally driven. We saw earnings from Palantir that blew out expectations. AMD came out, they beat. I saw the write-ups trying to find a reason for why the shares sold off. It was tepid at best. I mean, they did a good job. Congratulations on trying to make an effort to make a narrative here. But they did a great quarter. So I don't understand exactly what the fundamental concern is that could drive these shares lower.
Heavy is the head that wears the high bar. At the end of the day, you can have beats and raises, but if the buy side numbers are higher, positioning is already very crowded. Who's the incremental buyer? And so that's why we have to pay very close attention when stock or asset prices in general don't move in the direction that the news would suggest. That usually is a sign that positioning is very crowded and people have already priced in most of the good news. You look at something like the SOX, it's trading at 28 times forward earnings. Remember, semiconductors are very, very cyclical companies. If you start putting peak on peak earnings, so peak valuations on peak earnings, that usually is a recipe for underperformance because you are putting such a high valuation on earnings that are unlikely to be extrapolated further into the future.
We've seen some pushback. Meta last week. We've seen it as well this week with Palantir, again with AMD. It's one of those markets, Bramo. You talked about AMD. It's not about beating the average estimate. It's about beating the top estimate. And I think that speaks to the AMD story this morning.
The idea that they beat revenues by 9.6%. People are expecting 9.9% at the very highest end. Even the average was 9.2%. Speaks exactly to what you're talking about. I just wonder if there is this bigger story here about a rotation away from big tech to the rest of the universe, how predicated that is on some sort of rate cut, or whether this really is a re-acceleration in the economy that we can't really track because we don't get data.
The airlines had a dreadful day yesterday as well. It's not just big tech. I'm seeing pockets of weakness elsewhere. The guidance I'm getting from the restaurant business as well, Chipotle, and others too, are pointing to an economy that's maybe not so great. What do you see?
Cardboard boxes. Cardboard boxes are having one of the worst volumes since 2015 for this time of year. And that is raising concerns about the strength going into holiday season. And there's a fair point that you have seen this market diverge from the real economy. If you look at over the course of the long term, usually freight expenditures are very closely tracked by the S&P 500, but they've diverged since the pandemic, which speaks to the intangible nature of this market. However, at the end of the day, we still do all breathe the same economic air. All of the Mag 7 are still cyclical businesses that rely on the U.S. economy remaining strong, whether we're thinking about advertising or high-end consumer goods. So if the U.S. economy really is weakening, we should not expect that all of these companies will remain immune.
This is the point of tension that's persisted all year. We'll get the ADP jobs report later. It's all we've got. We don't have the payrolls report anymore. I don't know when we're going to get that. But the point of tension is we've opened up a gap between equity market performance and employment this year. And a question we keep going back to is how much longer can that persist?
And is it a feature, not a bug? Is it the idea that the acceleration of AI comes without this sort of commensurate employment? Or is this something that eventually will lead to that employment picture? I think that the fast casual retailers, to me, the fast casual restaurants, those are a key tell. How much is that a universe of its own? How much of this really is an indication of consumers pushing back?
Carver, another one, cutting its full-year sales growth targets in the last 24 hours. I thought you were permanently long Florida real estate, being from Florida. You know?
My family's still there, but
there you go. All right, you know, it doesn't have to be about politics. Cam, it's good to see you. Thank you. Cameron Dawson of New Edge Wealth. Of course, it is about politics. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Voters in California passed Proposition 50 to redraw the state's congressional map before the midterms. With 71% of the votes counted, nearly 64% of voters approved the ballot measure that could flip up to 5 Republican-held House seats to Democrats next year. Meanwhile, the government shutdown has reached a new milestone. It is now the longest in U.S. history at day 36. Senate Majority Leader John Thune says he hopes this will be the week they can negotiate an end to the impasse. But even if they do, they'll face another funding fight. The stopgap spending bill the House passed in September expires in a little more than 2 weeks. And Amazon has sent a cease and desist letter to Perplexity demanding that the search startup stop allowing its AI browser agent Comet to make purchases online for users. Amazon accuses Perplexity of committing computer fraud by failing to disclose when its AI agent is shopping on a user's behalf. Perplexity says Amazon is bullying a smaller competitor. That's your Bloomberg brief. John?
Yahara, thank you. Thank you very much. More from Yahara later this hour. Up next on the program, a Democratic sweep.
New York, tonight you have delivered a mandate for change.
In 2025, Virginia chose pragmatism over partisanship. So New Jersey, the future is now.
That conversation up next with Jessica Taylor of the Cook Political Report from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Two days of gains on the S&P 500 running into a day of losses. The losses carry on this morning. We're down 1/3% on the S&P. On the Nasdaq 100 down by 0.5. Under surveillance this morning, looking at the politics, a Democratic sweep.
New York, tonight you have delivered a mandate for change. A mandate for a new kind of politics. A mandate for a city we can afford.
In 2025, Virginia chose pragmatism over partisanship. So New Jersey, the future is now. Roll up your sleeves, let your passion flow.
So here's the latest this morning. Democrats sweeping 3 major local elections from New York City to New Jersey and Virginia by a wider than expected margin. Joining us now is Bloomberg's Tyler Kendall. Good morning, Tyler.
Hey, John, good morning. Well, the Democratic wins last night will no doubt bolster a party that's been grappling with a way to counter Republicans' grip here in Washington. And while New York elected a progressive Mamdani, we did say 2 moderate Democrats clinched the gubernatorial elections in Virginia and New Jersey. But the common theme among all of these elections was a focus on pocketbook issues and the economy, really the same issues that helped propel President Trump to the White House. But with consumer sentiment now at a 5-month low, early exit polls from the Associated Press showed that 6 in 10 voters in Virginia and New Jersey say that they are either angry or dissatisfied with the current state of the country. Importantly, President Trump lost both of these states in 2024, but he had made significant inroads compared to the numbers he polled in 2020. That's leading some strategists to say that this perhaps could show the future limitations of having President Trump not on the ballot, despite him weighing in on all of these races. One thing's for sure, last night's results will no doubt inform how both parties are going to comb through the results to inform their midterm election strategy, not just on issue, but also on where they're going to pour their resources into. Because, John, we'd be remiss if we didn't mention that Democratic Governor Gavin Newsom won his effort when it comes to the redistricting fight, which could give Democrats 5 new seats in that state. But it's all in a bid to counter Republicans' own efforts that are happening across the country.
Tyler Kendall with the latest. Tyler, thank you. We'll catch up with Tyler later on this morning. To build on this story, Jessica Taylor of the Cook Political Report writing the following: the losses for Republicans across the board and surging Democratic enthusiasm were the most concrete signs yet that a backlash to Trump akin to 2018 is brewing. Jessica joins us now for more. Jessica, welcome back to the program. Let's just take stock of what we saw in the last 24 hours. How does that stack up with what we saw 12 months ago?
I mean, it's just a complete reversal and a complete rebuke of Trump in his first term. I mean, we expected Democrats to have a good night. They were favored in, I mean, certainly I kind of put the New York City result aside because New York City is one of the bluest states in the bluest cities in the country. So I think that doesn't tell us as much. To me, it's Virginia and New Jersey. These are states that Trump made gains in. He won both by about 6 points, and that was a massive improvement from his 2020 results. But the fact that, you know, that we expected, you know, a double-digit victory in both of these contests. Abigail Spanberger right now is winning by 15 points. You know, polls showed somewhere around like 8 to 12. New Jersey, especially, this was a race that was in single digits in polling, even low single digits at some point. And Mikey Sherrill is winning by 13 points. You know, one of the biggest trends that we saw this time last year was that Trump made gains in heavily Hispanic areas. when I'm looking at, one of the most Hispanic precincts, for instance, in Virginia, Spanberger saw a 22-point swing in her direction. So this new coalition that Trump felt like he had built on, on more diverse voters, that was completely obliterated last night.
Jessica, I'm glad you brought that up, because Passaic County, I'm looking at a plus 15 margin for Mikey Sherrill, and this is a county that Trump won last year. What do Republicans need to do ahead of the midterms, seeing these kind of results and these type of margins?
Well, I think it's two issues. Overall, I mean, the Republicans' numbers in both of these were pretty much in line with Trump's approval ratings, which were in the low 40s. And typically in midterm elections, we see that Republican candidates get about that. So if that presages what we see in 2026, this could be a blowout. And then, of course, we look at the House of Representatives and some of this mid-decade redistricting that's been going on in Texas, for instance. They were banking on better Hispanic turnout in places like South Texas. So some of those districts that they redrew to be favorable to them, that might not be the case. They might have just doomed themselves in some of those. It's a little too early to tell, but I think it tells us two things. We saw in exit polling that people are not happy with the way that Trump is going about enforcement immigration with ICE. And then it's the economy. It just goes down to that people are very unhappy with the direction of the country. And when you do not have Trump on the ballot, if you want to send a message that you are upset at his policies and the direction he's taking the country, the only way you have to voice that is to vote for the opposing party.
It feels like the individuals that won did focus on affordability, something Trump did a year ago, and they didn't focus on making this about Donald Trump. So is that the blueprint? Actually speak to voters where they are in terms of their economic concerns?
I think you're absolutely right. We saw in Virginia, for instance, where I am, Abigail Spanberger, she did not run an anti-Trump campaign. She talked about jobs and the economy. And listen, this race was particularly roiled by, it has one of the highest concentration of federal workers. So it wasn't just, the government shutdown overly affected people here, but just the continued assault on federal workers and trying to cut the DOGE and trying to cut workers in different things. In New Jersey, Mikey Sherrill focused on high utility bills and different things. So again, but in both races, the Republican candidates did not do anything to distance themselves from Trump. Trump wouldn't allow that, really. He demands such fealty. So that's really the quandary he's putting some of these Republican candidates in come 2026.
Jessica, did these elections that we saw yesterday throughout the Northeast and California make it that we'll get a sooner resolution to the government shutdown, or do you think that it's just going to harden the lines?
It does seem like we're seeing movement. I think that there is talk now of obviously the CR that's on the table would be just through the 21st of this month. So I think they're looking at something through either the end of the year or January. We were already seeing movement with some more moderate Democrats. I think that Democrats now can say, look, not just that we want to move on affordability and different things, but when they're talking about the Obamacare subsidies and things, it just comes down to cost. And I think all of that folds into that. So I do think we will see some movement, but the next few days here are in how both parties react to the results and maybe don't overread into them or overreact could be really critical.
Jessica Taylor of the Cook Political Report. Jessica, thanks for your time to break down these numbers. Big changes in the last 24 hours compared to what we saw 12 months ago. Lisa, we talked a lot about what this could mean for the midterms. I think we need to talk more about what it could mean for the Democratic Party and the leadership into the next general election, and which ideas are winning out at the moment in that party.
Right now you have both spectrums. That's the interesting thing. You had the New Jersey and the Virginia races, and the governors that won there, who were Democrats, were very much centrists. And then you have Zoran Mamdani, who is a socialist Democrat. How does this shake out in terms of what happens in the midterms remains to be seen. Nonetheless, that's the reason why Proposition 50 might be most interesting, because it definitely gives California an upper hand in that race.
For the party writ large, Gavin Newsom is now going to be seen as someone who delivered for the entire party nationally. He's going to use Prop 50 to launch pad himself for 2028. The question I have is, how are you a governor of a state with the highest unemployment rate and the highest gas prices? How do you take that story nationally? Not sure it works.
With great difficulty. And if you don't have great hair, it would have been even harder, right? You know, that's the thing with Kevin Newsom. Such a good-looking man.
I think even Trump agrees.
I know. Seriously. Coming up on the program, former Commerce Department official Nizak Nakakta with the fate of U.S. tariff policy heading to the Supreme Court from New York City. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This price action has been so one way. A 1% move feels like a bear market to many of you, I know. Got to go all the way back to April for the last time we had a 3% drawdown on a closing basis, according to Jonathan Krinsky of BTIG. That's a long time. Equity futures this morning down by 1/3 on the S&P. On the Nasdaq, we're down by 0.5. In the bond market, 2s, 10s, and 30s, demonstrating some risk mitigation characteristics in the last 24 hours. Bond yields are lower, down again this morning by almost a basis point on 2s, Lisa, at 356.76.
Yeah, and ISM services might give further fuel to this. ISM manufacturing came in below expected. I also think that this Kava headline coming out, following in the footsteps of what we saw from Chipotle, really hammers home the point that there is is a host of the economy that's lagging behind, and you're seeing it in some of the earnings. So how much does that feed into the idea that the Fed can cut interest rates more and it can fuel a more aggressive bet into treasuries?
A very defensive price action in the last 24 hours. You see that in credit as well. High yield spreads have been wider over the previous 5 sessions. Let's finish on FX and turn to foreign exchange. Switch on the board and get to euro dollar. Euro dollar coming into today negative for 5 consecutive sessions. Euro dollar this morning 114.87. Dollar strength kicking back in, Lisa. You noted this yesterday. It's been a theme over the last week.
Yeah, what, sell America, huh? Because right now we're seeing a reversal of that, and you wonder whether the flight to safety includes, once again, the flight to treasuries. Watch this space, especially as the likes of Bitcoin sell off. The idea that the momentum trade is fading, and that maybe into goes the sell America trade, that actually is reverting back as the place of a haven.
DXY around the highest since May of this year, just about unchanged on the session so far. As we count you down to the opening bell, about 3 hours away to get the equity story with your morning movers. Here's Yahara with more. Hey, Yahara.
Hi, John. AMD beat on pretty much every metric, sales, profit, you name it, yet shares are still down more than 5% now in the pre-market for failing to live up to high expectations after shares more than doubled this year, and it was the company's fourth quarter revenue forecast that was the issue. While it did beat there, it failed to hit the highest mark set by analysts. And moving on to Pinterest, those shares are also falling, plunging nearly 18% now in the pre-market after offering a disappointing holiday outlook. The company, which makes almost all of its money from advertising and is leaning heavily into AI, just isn't seeing those ad dollars coming in as quickly as investors had hoped. And another warning sign from the fast casual space, we are seeing Kava shares down 8.5% after the company cut its full year sales outlook, saying that foot traffic pretty much stalled last quarter, and it's the latest company warning of a pullback specifically among younger consumers. We heard that from Chipotle, Wingstop, and Shake Shack. So this is looking more like a trend rather than a one-off warning. John?
McDonald's up next. That's the stock to watch. That earnings report later on this morning. Yahara, thank you. More from Yahara later this hour. On our radar this morning, Democrats sweeping all 3 major elections, giving the party a much-needed boost. New York City electing Zohran Mamdani for mayor, with Abigail Spanberger and Mikey Sherrill winning their gubernatorial races in Virginia and New Jersey. Elsewhere, the U.S. government shutdown entering its 36th day, officially making it the longest in American history. Economists warning the stalemate could cut fourth quarter growth by as much as 2% if it drags on for another month. And finally, the U.S. Supreme Court hearing arguments today challenging the legality of some of President Donald Trump's tariffs. If overturned, the government may face refunding billions of dollars in a blow to the nation's finances. Lisa, this in many ways is about the bond market more than anything else.
If you don't get the $400 billion of annual revenues that we seem to be on track for from the tariffs, what does that mean for the deficit picture for some of the bond vigilantes that have gone into hiding and are covering their heads? There is this feeling that they might reassert themselves and push back against some of the recent price action. Again, it's not going to be until the end of this year that we get a ruling, maybe the beginning of next year, and by then we might have a sense of what the cocktail of additional tariff measures might be to replace this income.
This is going to be tough for the Supreme Court. They're going to look at the U.S. Court of International Trade, and they said the U.S. Constitution makes it clear that this authority of commerce is up to Congress. And they go on to say it's not that we are not passing judgment on the wisdom or likely effectiveness of the president's policy, but just that it's not constitutional, which is why the administration is trying to make out that these are 3 big emergencies when it comes to fentanyl, the trade deficit, and having that ability to say, have a threat against China when it comes to rare earths, that they need this authority to be within the executive branch.
On the president's list of priorities this week, including what's happened in Virginia, New Jersey, and here in New York City, was this number one, this hearing at the Supreme Court?
He's called it life or death for the U.S. economy, and he said in that CBS 60 Minutes interview that the economy will go to hell, his words, if IEEPA does not withstand the Supreme Court. So for him, this is paramount. But you talk to people in the administration, there are other ways they can enact tariff policy. It's just not going to be as clean. It's not going to be as blunt of an instrument, but they could still use other orders like they are using right now. They're using 232s. They're 301s. There are other instruments they can use, but it's not as easy.
Let's stay on this story. Regardless of the Supreme Court ruling, the former Commerce Department official, Nezak Nakakhtar, expecting Trump's tariffs to live on, writing the administration has several other tools that they can implement to execute their trade agenda. Nezak joins us now for more. Welcome to the program. Let's just talk about that. What is actually at stake today if the president could just make other moves elsewhere to achieve the same means?
Well, I think and it's good to be with you. The big question is this International Emergency Economic Powers Act of 1977 that allows the president to regulate imports during peacetime and take measures to address unusual and extraordinary threats. The core question is really the limitations of the president's power. Does the president have vast, sweeping authority to impose tariffs, in a way, regulate sort of financial aspects of the United States? Or is it Congress that holds the cards there and can only delegate financial revenue-raising authority to the president when it expressly says so? Those are the main questions. The Supreme Court has never heard an IEEPA case before. It's never interpreted the language. So the main question is, does this law give the president sweeping authority to regulate imports through taxes, through tariffs, which are deemed to be taxes by the judges, or is the president's authority much more restrained?
Going into this, what is your base case for how the Supreme Court will rule?
You know, it's really difficult to say. This is a very, very difficult question. You've got the major questions doctrine, which is going to be at the heart of this issue, which the Supreme Court has to decide. Look, constitutional interpretation. If Congress intended to give the president vast political authority over political and economic questions, does it need to expressly state so? Think about the impact of all the other statutes. How much can the executive branch read into this, right? And right now we have three pillars of the U.S. government that are at odds with one another. The president has moved in a very unusual way to read the statute very broadly. Congress, in large part, has remained silent, even though with respect to the tariffs on Brazil, Congress has spoken up and has used its lawmaking powers to restrain the president's authority there. And now you've got the judicial branch who has to make sense of it all. And again, implications are going to be significant with this much revenue at stake.
The administration has talked about why they're using IEEPA, emergency responses to the trade deficit, to what's going on in terms of China trying to enact export controls on rare earths, and then on fentanyl. Do you think one out of any of those others have more of a case in terms of an emergency authority needed to combat those issues?
Yeah, that's a great question. And this really goes back to the sort of the history of IEEPA. IEEPA has traditionally been used over the decades as really sanctions authority, right? Maximum economic pressure campaign on countries to do and not do things. So it really depends on how the U.S. government argues it. The tariffs on India, these IEEPA tariffs on India, is a maximum pressure campaign because they're buying Russian energy. We have sanctions on Russia. The IEEPA tariffs used against India feel like sanctions. They might, for the fentanyl crisis, also feel like a maximum pressure sanctions type legal authority. But if the president just doesn't like a trade deficit with a country, can he use IEEPA? I think that the courts may very likely say there's different legal authority for that. If Congress gave the president distinct legal authority to address a specific fact pattern, then can he use other legal authorities that are a little bit vague to address that same fact pattern?
Now, Zach, from a market's perspective, it's important to ask how much has actually changed since pre-Liberation Day. You're looking at an overall tariff rate that's gone from 2.5% to about 12.5% versus the headline figure that's somewhere closer to 20%. And a lot of some of the measures with respect to China in particular have been walked back. How much have the walls truly been put up in a way that do indicate some sort of separation of the world's two biggest economies?
This is the economic impact, at least first to the United States, right? I think partially what the president is thinking he's doing is really balancing fair trade, but then getting trade deals to bring countries closer into the United States orbit, right? And maybe this relationship with China is still up in the air. But I really want to underscore the massive economic impact. We have about $90 billion collected in the IEEPA tariffs alone. Think about the economic impact of either way that the court rules. If the court invalidates IEEPA, you've got importers, U.S. importers in large part who are paying the tariffs, but they pass through those tariffs. in some significant respects to their customers. So if the court invalidates IEEPA, you've got the importers getting this massive sudden windfall of money, but then their customers aren't getting anything. Will present one major shock to the economy. And if the courts uphold IEEPA, then these importers are not going to get the money that they were expecting, yet another major shock to the economy. And going back, if the court does invalidate IEEPA, now you've got importers in line to not only recover the tariffs that they paid, plus interest, because that's how this works. If you actually paid tariffs that the courts have invalidated, you're not only entitled to get the tariff revenue back, you have to get the tariff revenue back plus interest. Think about the sudden shock to the economy, depending on either way, based on how the Supreme Court rules.
What are you advising clients? Are they lining up and figuring out how exactly to request their money back from the government?
Yes and no. There's a lot of importers who are thinking about watching this very closely and figuring out how they're going to line up and what the process is, because you can't have a stampede all at once for all these importers, right? $90 billion trying to get the money back at the same time. So the courts are going to look for a process. We're looking very much into what kind of process is going to be set up for importers to get their revenue. But also we represent a lot of the businesses in the United States who've already paid those tariffs. And even if the importers of record get that revenue back, a lot of our clients, a lot of the businesses aren't going to get that revenue back because those go to the importers. And then that's a private transaction issue, whether the businesses are going to demand from their importers to get some of that back. Very unlikely, because then that becomes an accounting issue. But there's going to be a stampede, and hopefully the government figures out an orderly process, only if the Supreme Court invalidates the tariff. But look, for the Supreme Court, is this a textual issue? Is this a constitutional issue? Is it a foreign policy issue? All of this is going to really weigh how the Supreme Court looks at this.
This could get messy, that's for sure. Nazak, appreciate your time, as always. Nazak Nakaktar there, the former Commerce Department official, could get very messy. Policy, we wanted to move on from this. This just introduces more volatility potentially.
Yeah, and volatility we can't even really begin to imagine because we don't understand the process. We don't imagine exactly what the other measures are going to be that are going to be put on retroactively, how many companies are going to line up. I mean, the race for money and interest, who's going to oversee that? Is it going to also be Treasury Secretary Scott Bessent, who's doing everything else?
Yeah, good luck to him. Equity futures this morning, negative by 0.2%, struggling to bounce back from yesterday's losses. Let's get you an update on stories worldwide with your Bloomberg brief. With more, here's Yahara. Hey, Yahara.
Hi, John. A UPS freight jet crashed and exploded shortly after takeoff from Louisville, Kentucky. Video shows the Honolulu-bound jet struggling to get airborne with one of its engines on fire before exploding in a fireball beyond the end of the runway. 3 crew members were killed, as well as 4 people on the ground. 11 others were injured. Meanwhile, Novo Nordisk is cutting its outlook for a 4th time this year on lagging sales of its blockbuster weight loss drugs, Wegovy and Ozempic. Once the leader in the space, Novo is struggling to compete with Eli Lilly in the growing market for obesity medicines. Shares of Novo Nordisk are down nearly 60% year to date. And the global sell-off in semiconductor stocks wiped out roughly $500 billion in combined market cap on Tuesday. The pullback reflects the growing investor unease over the sector's earnings potential, plus elevated stock valuations. It comes after chip makers have added trillions of dollars in market value since a low in April. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, Bank of America in the hot seat.
I think Bank of America under Brian Moynihan have been great risk managers, but this decade they've not been great risk takers. I expect them to have more of an opportunistic risk mindset going forward.
Up next, we'll catch up with Erica Najarian of UBS from New York City this morning. Good morning. You're watching Bloomberg TV.
key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
Later on today, the first Investor Day for Bank of America in more than a decade. Ahead of that, we're getting some headlines for you, some new targets. Bank of America seeing a return on tangible common equity in a range of 16 to 18% in 3 to 5 years. It's running at about 15% at the moment, so that's a lift. This is what the market's looking for. From speaking to sources familiar with the matter, Lisa, we're not moving on from Brian Moynihan's responsible growth. I think we're just putting a ton of emphasis this morning and later on today on the growth part of that. And I would call it growth with intense efficiency.
Yeah, and with some new leadership. So not only did we see Jim DeMare come over as co-president, but you did see today Bank of America announcing some new picks to lead the trading unit. So new leadership that might be more risk forward, I guess is the way to say it, as they try to seek out opportunities, not just avoid the cockroaches.
This stock has had a massive move, a move of more than 50% off the lows of April. That's quite a stunning rally into this, and a change of emphasis for a lot of people in this market as well. Looking forward to the communication for the bank a little bit later, but from speaking to Brian Moynihan, Lisa, you and I over the last year or so, repeatedly talking about the potential to get a lot more out of less, to get a lot more revenue out of every single dollar. I think this is really, really important. For each additional dollar of revenue, you're going to have to spend less and less because of the staff story. That's the key part of this.
The idea that the overall business can expand, the footprint can remain the same in large part because of, guess what, AI and some of the algorithmic learning, the machine learning programs that they've put in place. They've been investing heavily in it. How can they do that in a way where they're also taking risk, extending their balance sheet in a way to compete with some of their main competitors that are doing just that?
It's something that the CFO, Alistair Borthwick, said earlier this year. We feel like we've got an opportunity to close a relative value gap, and that's what today is all about. Under surveillance this morning, Bank of America in the hot seat.
I think Bank of America under Brian Moynihan have been great risk managers, but this decade they've not been great risk takers. How they put some meat on the bones for those growth strategies will be very important. This has been a risk-off company in a risk-on year to explain the stock price, so I expect them to have more of an opportunistic risk mindset going forward.
Here's the latest this morning. Bank of America's Brian Moynihan gearing up to host its first Investor Day in more than a decade. Erica Najarian of UBS has a $60 price target and a buy rating on Bank of America shares. Erica joins us now for more. Erica, good morning. It's always good to catch up with you. You've got a buy rating on the stock. What are you looking to hear from Brian Moynihan and the team later on today?
So, like Mike was saying, now we have these 16 to 18% tangible ROE targets. but we really need to hear more of the meat on the bones. Now, a lot of these segments had focused on, oh, Bank of America hasn't been taking enough risk, and that's true. But also, we want to hear about how, its thundering herd, Merrill, for example, has fallen behind Morgan Stanley. So what does it do enable to catch up? That's a naturally higher ROE business. And so really fixing that and really moving that forward is a big difference. But more than that, to be quite frank with you, Jonathan, it's more than just what they say today. What the stock has to do to continue to now lift from here and outperform peers, right? Not just catch up, but outperform peers, is to string together the kind of quarter that they just reported, right? It's going to be not just about, the show story of today, but it's about, the show and tell story of today, but it's about the execution of earnings.
Erica, you talked about this in your recent note, and I think this is a key point. From 30,000 feet, is there a credible case here to grow expenses slower than revenues? Do you see the right recipe emerging at Bank of America?
Yes, but I think that's going to require significant discipline from the top. In any large bank like Bank of America, there is always inefficient expenses. Are we keeping, senior talent too long, and are we not, pushing forward younger talent? Are we spending too much money on, offsites for ourselves rather than on clients? So I think that there is a credible case for revenues to grow faster than expenses, but management, more than it has over the past 5 years, has to be extraordinarily disciplined in terms of how, how it chooses, what expenses it chooses to grow.
How much is this, the first Investor Day since 2011, a way of de-emphasizing Brian Moynihan and really pushing forward some new leadership?
Honestly, I don't think that's the case at all, Lisa. After all, the company had emphasized a few months ago that when they made that announcement, of those new leaders, that Brian was going to stay on through the decade. I think really the intention of this is perhaps turning a leaf over and saying, look, we're going to tell you about what comes next, what comes after responsible growth. And by the way, the investor base gets to meet JP Morgan's bench every single year. And to your point, Lisa, we haven't really met them, since 2011, and I'm sure a lot has changed since then. I think this is an opportunity for B of A to showcase the bench talent and the bench strength.
How much is some of the ambition that they have and the expanded targets predicated on the idea of a different regulatory regime where they can take more risk without getting penalized on some of the capital withholdings?
Yeah, that's a really great question. And practically speaking, the regulatory environment is going to be a tailwind in that 3 to 5 year, medium term time period that they note. However, Lisa, this is going to be about the numerator or earnings power, not the denominator. For example, the street has something like $23 billion in buybacks already for 2026. And yet the consensus return on tangible common equity for 2026 is 15% or lower than their 16 to 18% target. That means that for Bank of America to really achieve those targets, particularly at the high end, where Wells and JP Morgan essentially sit or exceed, they really need to power revenue growth faster than expenses. And that versus just optimizing the denominator or capital is really the key to share price outperformance.
Erica, you mentioned one business line and you went to Merrill. Can we talk about the credit card business as well? What are you expecting to see from that business?
That's a lot tougher. Look, Bank of America has materially underperformed its peers in card from both a growth and a spend perspective. And now you have the 3 card juggernauts, JP Morgan, American Express, Capital One, with big fat ROEs, which means that they can invest significantly back in those businesses, building a significant moat around their market share. And so I think that the card business, in terms of turning it around, that's going to be a tough climb because that is actually going to require a lot of expense investment up front.
Erica, this was great. It's always good to hear from you. Erica Najarian there of UBS with a buy rating on the stock. Looking ahead to that Investor Day with Bank of America. The headlines crossing just moments ago. The key one for a lot of investors, seeing a return on tangible common equity of 16 to 18% in 3 to 5 years.
Yeah, that was a significant increase. They're also talking about seeing a 30% dividend payout ratio, so really jacking that up too as they try to attract investors. Very curious about the details. How do they bring back some of the competition given what a push Morgan Stanley has made, what a push we've seen from some of the biggest competitors and the inroads that they have made?
Stock is slightly softer so far this morning, down by 0.7%, but we've seen one heck of a rally off the lows of the year so far for that name and others too. Coming up on the program, we'll catch up with Jim Zelter of Apollo, the KeyCorp CEO, Chris Gorman, and Catherine Wild of the Partnership for New York City. From New York City this morning, good morning. You're watching Bloomberg TV.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The economic picture looks okay. Things haven't fallen apart yet.
There is some weakness under the surface. The consumer seems bifurcated.
It's not only a K-shaped economy for the consumer, it's actually also a K-shaped economy for the corporate sector.
If things get worse, the Fed will respond and cut aggressively.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. The pullback continues, building on yesterday's losses. We're down by 0.2% on the S&P 500, negative by 0.4 on the NASDAQ 100. If you switch at the board and turn to the bond market, attracting some capital yesterday, those risk mitigation characteristics of treasuries flexed yesterday. Yields down again this morning by a basis point at the front end, 356.76. Later on this morning, a focus on the data, ISM services, and the big one. I never thought I'd call it the big one, but we got nothing else, so it's the biggest. ADP, a little bit later this morning.
A read on the labor market, and does it start showing the weakness that we're seeing in some of the earnings that we saw from ISM manufacturing? And the weakness that I'm talking about is consumer aversion to both eating out as well as just absorbing some of the price increases that you've seen more broadly. There is a bifurcation right now with the AI story, which is gunning ahead despite yesterday's hiccup, and the rest of the economy that we have seen in some of these earnings and some of the small caps that do indicate there is still an issue of affordability out there, and we've seen that in the political scene as well.
A few hits, Bramo, in the last week. It was Carver in the last 24 hours. It was Chipotle last week. There's a difficulty here. Costs are up, and they're struggling to pass them on, and the revenue's just not there in the same way.
And there's a bifurcation between older people, older consumers, and younger ones. The Kava CEO, this quote stood out to me. When you look at the data, whether it's consumer sentiment, Gen Z unemployment twice the national average, or headwinds facing younger consumers, there is a challenging environment. That is what we heard from Chipotle, also catering to younger consumers, where the unemployment rate is close to 10%.
Earnings just crossing for McDonald's just moments ago. Third quarter comp sales coming in at plus 3.6%, the estimate plus 3.59. An inline report from McDonald's on my first look. The stock is down by about 1.4%, but affordability in this sector is absolutely paramount, and it's paramount also at the epicenter of the politics. Lisa mentioned it, and you saw that playing out overnight.
And in the exit polls, when you look at what people were concerned about, they said they were dissatisfied with the state of the economy and the affordability. This is what Mikey Sherrill ran on in New Jersey, and this is what Abigail Spanberger ran on in Virginia. I'm not surprised that these candidates won. I'm not surprised that Prop 50 passed. What is a little bit more unexpected is the margins that these individuals won by. We're talking about plus 10 in each of these races, and this paints a difficult path for Republicans next year if the margins are this wide right now in this off-year election.
More on the politics later this hour. Coming up, we'll catch up with Jim Zelter of Apollo as valuations jitters shake up Wall Street. Chris Gorman of KeyCorp with a new wave of regional bank M&A, and Catherine Wild of the Partnership for New York City as NYC elects Zohran Mamdani as its new mayor. We begin this hour focused on private markets. Apollo Global Management just posted third quarter earnings that surpassed Wall Street estimates as the firm edges closer to reaching $1 trillion of assets. The Apollo president, Jim Zelter, joins us now for more. Jim, good morning.
Good morning. Always good to be here.
Congratulations. We joked when you walked in, what happens when you hit $1 trillion? Does Mark run around popping champagne? How does this work?
Well, listen, as we've said yesterday and we've said before, assets under management are just a great vote of confidence for great performance. And if you deliver for investors over time, we find ourselves the flywheel of our business is really in place, whether it was capital formation, whether it was origination. We just find that our business model is really hitting the mark right now and accelerating. And we're very happy with the quarter, but feel very good about the trajectory of the business in front of us.
There's a phrase that you and the team use, we are what we originate. Can we talk about that a little bit more?
Sure.
Your capacity to scale, can you just flesh that out, how things are tracking at the moment?
Well, they're tracking very well, but I think, if you go back to our Investor Day 6 years ago and a year ago, we really put a pin in the key attribute of success in our business. As we see the financing markets evolve, when we see the evolution of banking system, when we see the evolution of private capital, many in our industry, and we're guilty of it quite a bit. In fact, your first question, we're guilty of it. It's all about AUM. It's not about AUM. It's about your ability to really generate very strong, proprietary, scalable origination across the spectrum, whether it's investment-grade private credit or private equity transactions and everything in between. And we have taken that to heart. We've invested a tremendous amount of money in terms of our origination platforms. And I think that's what when investors come to us today on the institutional side, when sovereign funds come to us to partner, when insurance companies come to partner, yes, it's because of our investor returns, but it's because of our origination. And I just think that's the bigger story here. People want to talk about this company, that company, First Brands, Tricolor. It's been 16 years since the great GFC. The real story is the evolution of modern finance and the role that we all play. And so I think that's the thread and the theme that investors are really engaging in today. I just got back from 9 countries in 2.5 weeks, which I'm happy to talk about, and the impact around the globe of this model evolving is really the story.
We'll spend some time on that. Just for the record, you brought up First Brands and Tricolor before we did. We'll get to that in just a moment too. You want to talk about origination? Let's talk about it. Of the debt that you originated, you talked about this a bit yesterday. What was the average rating? And are you able to maintain excess spread as you scale up?
Yeah, so if you look at our, we think about the world investment grade and non-investment grade, not private and public. And when you think about the spreads that we garnered in terms of our investment grade business, you know, it's in the mid 300s, and we've been able to really create that spread over the last 24 months with a little degradation of 15 to 20 basis points year over year. On the non-investment grade side, it's in the mid 400s, and again, we've been able to generate that spread over the last 24 months. And again, it's not just the direct private lending, but it's all the things you do to a sponsor. So our origination footprint is about 80% investment grade, 20% non-investment grade. But really, it's the change of the model in the last 20, 30 years as a credit investor or a fixed income investor. You were an agent in the market. Whatever the origination machine wanted to deliver you, it was only price that you actually had to negotiate. And so you were an agent with really not a lot of the ability to really conduct and have the outcome. In our model, where we're the origination principal, where we actually have an impact, it allows you really to have a much greater degree of control of documentation and return and yield, and that's going to suit us well over time. So it's this principal agent issue, and we find ourselves really in the leading pack of the origination principal model versus the old model of an agent or vendor model.
And Jim, what this does is it allows you to look at a lot of documents. It allows you to look at a lot of companies. It allows you to see a broad swath of the economy, to understand exactly where the pitfalls may be. Do you find some of these arguments about cockroaches and in growing weakness in the economy credible, or are you just not seeing it in what you're reviewing, even among the things that you're rejecting?
You're 15, 16 years in a credit cycle right now in terms of the expansion since the GFC. You're going to find issues and challenges. In the last 5 to 7 years, you've had companies like SVB and First Republic Bank. And so, yes, these are clearly idiosyncratic. We're seeing a much larger theme of a strong economy. Torsten talked about it yesterday in terms of a K-shaped economy. We're seeing an administration that's very pro-business, not very regulatory friendly, want to push rates lower. And so all of those things, you will see challenges in certain companies late in a cycle, but we are not seeing any kind of credit cycle on the horizon that's waning anytime soon. We are not seeing it.
Are you seeing a scary allocation of resources? And I say this given the fact that it has been very top-heavy to AI-related endeavors. Deutsche Bank this morning, a story in the Financial Times, looking for ways to hedge against some of their data center loans because they're worried about the overall concentration, the risk that you're seeing overnight. Yeah. Are you staying away from that?
Well, I think what you're talking about is whenever you see a massive infusion of capital into a sector, dark fiber, E&P shale in the U.S., software enterprises, and now AI in the broad ecosystem, you have to think about debt and equity returns on invested capital. And there's been a tremendous rise in valuations on the debt side, on the equity side in the last 24 months. And certainly the assumptions that you're making on the debt side as an investor and a lender to those companies, you're taking more residual risks than you did 6, 12, 18 months ago. So valuations are high. You have to be a bit more cautious. You want to be a lot more senior. You want to be secured. And so I think there's going to be a dispersion between returns between the investment grade and non-investment grade market. But that's just late cycle behavior. And when you look around the globe, as we talked about yesterday, their valuations are high. Geopolitical risks are a bit greater. And we don't see rates dramatically lower in the next 24 months. So that tells us take the risk down on subordinated credit, lean into senior investment grade opportunities.
Jim, we've seen these CapEx cycles throughout economic history. You've lived a few of them over a long career as well. But there's something different about this one. And you're well versed in this in a way that I'm not. Some of these assets depreciate rapidly. For you and the team, does that change how you put together some of these deals that you make?
It does. I mean, I think you're raising a really interesting point. Are we thinking, is the right way to think about a data center, utility lines and electrical lines 70, 80, 90 years ago, when day one, all you were doing is wiring the house for lights, and then you wired the house for a dishwasher, a TV, and everything else that goes with it? And how do you think about that technology, and what really is the advantage of that data center in 5, 10, 15 years with the power supply? I differentiate that with how you might finance a portfolio of chips, GPUs, that rapidly depreciate over 3 to 5 years. And they might both be in technology, but how you fund and structure both of those is very, very different. And I think that's the subtlety behind the headlines, which is going to differentiate the winners and losers, because in every industry, even the last 20 years that I just mentioned, those are all sectors that drew in a tremendous amount of capital, and you really don't know who the winner is from the debt and equity side for a few years. And so certainly with valuations as high as they are in this cycle right now, you have to take a step back and pause and say, okay, do I want to be a lender? Do I want to be an equity owner? What's the residual value assumptions that I'm making? That's really what will differentiate the winners and losers.
I'm not sure how many people are taking a step back, Lisa, at the moment.
Right now, it seems like absolutely nobody. Those debt offerings are absolutely flooding. And frankly, there is a real question about whether there's behavior that potentially isn't as prudent as what you're doing that could potentially pose some sort of risk to the rest of the market.
Well, if you think about the Mag 7, in the last 5 to 7 years, they have been a very, very small participant of the IG new issue market. In the last 2 months, there's been a handful of these companies that have been issued very, very large benchmark transactions. And again, that's not a zip code we play in and day out, but you have to wonder, as a CFO, are they being very strategic about accessing that financing, and what's the long-term return of those opportunities?
Jim, you're going to stick with us, I'm happy
Sure.
to say. We've got a lot to talk about. Jim's out there of Apollo. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Self-proclaimed Democratic Socialist Zohran Mamdani was elected as the 111th mayor of New York City. Mamdani energized young voters with a campaign for a more affordable New York City. When he is sworn in on January 1st, the 34-year-old from Queens will be the youngest person to hold the office in a century. He'll also be New York's first Muslim mayor and the first person of South Asian descent. Meanwhile, the Supreme Court will hear arguments on the legality of some of President Trump's tariffs today. The court will determine whether the president can use IEEPA to impose import taxes after lower courts ruled he exceeded his authority. If the court rules against Trump, the administration won't be able to collect tariffs and may have to refund those already paid. And McDonald's reporting better than expected third quarter U.S. sales growth. The fast food chain attributing the rise mostly to higher spending per visit by customers. It's also reporting growth in its international divisions, with its CEO saying the chain is delivering sustainable growth even in a challenging environment. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, Mamdani's New York City.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him.
Conversation continues with Jim Zelter of Apollo up next, live from New York City this morning. Good morning.
Astonishing day for US technology. reshaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's a pretty risk-off market in the last 24 hours. Continues this morning. We're down by 0.25% on the S&P 500, down by 0.4 on the Nasdaq 100. Under surveillance this morning, Mamdani's New York City.
New York, tonight you have delivered a mandate for change, a mandate for a new kind of politics. A mandate for a city we can afford. If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him.
So here's the latest this morning. Democratic Socialist Zohran Mamdani set to become the 111th mayor of New York City, soaring to victory on the promise of affordability. Bloomberg's Miles Miller joins us now for more. Miles, first action, first job for the new mayor. What is it?
It's really to try to figure out a way to get these progressive proposals through in Albany, right? He's got to come up with that coalition and then also has to pick his team. Right now, he's on another morning show, but when he huddles with his team, he's got to come up with a transition that includes all of his coalition. It has to have people from Wall Street. It has to have people from tech, and then people from those labor centers that were critical to getting him to the office. Now, what we know is that this was one of the biggest turnouts since 1969. If you look back to that mayor's race, John Lindsay, you know what happened to him the first time he went to office on Inauguration Day? There was a transit strike. Here's hoping that that doesn't happen, but he's really got to work with these groups that got him elected in order to get this stuff done. We're talking about his very big proposals. He has a mandate for change in this city, freezing the rent, making buses free and universal childcare. All of those things need to be paid for. How that's going to happen isn't clear, but he'll have to work with business leaders, including Wall Street.
Miles, looking forward to your coverage. Thank you, sir. Miles Miller today from City Hall. With us around the table, Apollo Global Management President Jim Zelter. Jim, let's continue this. Jamie Dimon at JP Morgan has said, we survived Bill de Blasio, we'll survive this. How do you and the team think about this development?
You know, we're committed. I've been in New York 40 years. I'm a committed New Yorker. The campaign is over. Now it's about the action plan. And he needs to bring people together. He needs to get a leadership team that can take on the challenges of the most complicated city in America. And if you're a New Yorker, you want to see success in this administration. The campaign's over. All the great promises, now it's about delivering. It's like when you buy a company. It's not, you don't celebrate the day you buy it, you celebrate the day you sell it in 3 to 5 years. So I think there needs to be a change in tone, and he needs to bring the city together. That's the big objective. Bring the city together and bring the best and the brightest to City Hall to work with him.
Bill Ackman said, this is an individual who spent a lot of money trying to defeat him, said, let me know what I can do. So that's the approach it sounds like Apollo is taking. What would you advise him?
Well, I think, number one, you've heard it. People think, you know, public safety is the number one fiscal stimulus. And there's a lot of concerns about the campaign and what was said about public safety and the focus on that. So I would focus on bringing leadership together. I would focus on really making sure that the city is safe for all citizens, and then try to create a very logical engagement with all the constituents. That's day one.
That's day one. Let's talk about what's happening right now in this economy, which is what got Mamdani elected, affordability. You want to talk about the transmission of monetary policy as well. I think this is an important point. What can we do to support this economy and not exacerbate existing problems?
Torsten laid it out well yesterday. If he is right, which I believe he is, about the K economy in terms of the differentiation between those at the highest 20% and the bottom 20%, for the last 15, really since the GFC around the globe, and especially in the U.S., politicians have sort of stood back and wanted the monetary policy to solve all the problems. There is only so much that monetary policy can do. The fiscal impact of leadership, not only in the U.S., but in Western Europe, I was there last week, they really need to step up and have a plan about technology investment, employment, education, and a variety of attributes that are not really monetary policy impacts. So again, I think I'm not suggesting that we're not really focused on what the next move of the Fed are. They are critically important, but we are skeptical that even a lower impact and any kind of lower rates, it's really just going to fuel what's going on right now in the asset price frenzy, rather than having real impact on affordability and housing. Taking the Fed funds down 25, 50 basis points, it doesn't solve your housing crisis. You have a national housing crisis with affordability. So I think there needs to be a massive pivot away from what monetary policy can do and how really executive leadership and fiscal policy will have a bigger impact.
Should and will are two different things. And right now it seems like the Fed is probably going to cut rates once more this year and then again several times next year, especially potentially with new leadership. Are you saying that you don't buy the argument that that's going to help the shoppers at Chipotle and the shoppers at Cava be able to afford their burritos and the Mediterranean salad bowls more efficiently, and that instead it's going to exacerbate the K and cause asset price inflation that leads to a potential threat to financial stability?
Yeah, I don't see. I got a couple of 24 and a 29-year-old. Not suggesting that their consumer attributes are going to change by what the Fed does, but I just don't see how the Fed policy of this quarter or the next 2 quarters is going to have a real impact on the accentuation of the K economy. I just don't see it. I see it much, much broader. And again, I do think, getting back to New York City, we have a portion of the economy and a portion of the demographics that is very focused on, education, jobs, employment, affordability, and I just think we got to think a much longer perspective here.
As an investor, if the Fed does cut, do you lean into the bubble? Do you say, all right, well, if you can't beat it, join it, and the idea is you've got to take more risk and get more returns?
That's not what we do. That's, there's folks who spend their day spending time about where the equity market's going this hour, this day, this week. That's just not what we do. We're much more focused on financing the global industrial renaissance, transactions we announced with Ørsted last week, or earlier this week, what we did in Europe with RWE. I was in Germany in the last 10 days. Massive global industrial capital needs. That's where we're focusing our time today. And that's what our investors want too. They want safe, robust, long duration yield. Whether the return on invested capital of XYZ data center in 15 years works, that's not what we do.
There was a headline yesterday on what you didn't do, and that was take Papa John's private. You probably don't want to talk about that directly, but can we talk about that broader business? Because Lisa mentioned Cava and what's happened with Chipotle. How tough is that business right now? How difficult are things?
I think as a principal investor in equity, in private equity and private capital, you need to think about long-term consumer trends and what's going to have an impact on various business models. And for us, we've had a real value discipline. Purchase price matters for the last 35 years. It's served us extremely well. And so, I think that you have to think about the evolution of consumer sentiments, consumer behavior, and what your impact is on different business models.
We've got about a minute left. Can we finish on what I believe is a PR battle between you and the banks at the moment? Not you directly. It just feels like everyone's trying to say the cockroaches are somewhere else. And I was listening to you yesterday. There was something that you said about it doesn't matter where the debt originates, in the asset manager or the bank. Why is that such an important point?
Because I think we've collectively lost our way. We sit on top of this amazing economy, and what we have just found is the litmus test of quality is not public or private. We've sort of have collectively lost our way. The litmus test was how good the company is and how they will perform in their business model. And again, you've got great investors in credit, you've got great banks, you've got great insurance companies. There will be a dispersion of returns over a more challenging cycle. So we're committed to open architecture. We have amazing relationships and partnerships with many, many banks. some of which are public, many of which are private, and we're going to continue that, and it really helps us our origination. But I think the longer story that gets written will really be about credit quality and the sustainability of your business, rather than something as public, private. That's not the litmus test.
Jim, it's good to see you.
Always good to be here.
Thanks for being here. Thank you, sir. Jim's down to there of Apollo. That PR battle's been pretty clear, hasn't it, over the past few weeks?
Well, I'm smiling because, I'm sorry, with all due respect, Jim, it sounds like someone who's on top who can be conciliatory. Hey, guys, let's all get along. And the other people are like, look, this is the Jets and the Sharks. You're eating our lunch. And there is a little bit of this sort of feeling right now.
The cockroaches are over there.
Yeah, the cockroaches, they're doing something bad because they're accumulating a lot of assets.
Bank profits have been incredibly strong, and the greatest financial institutions in the world are based in the U.S.
Well said, Jim. There you go. All right. Coming up on the program, more on those financial institutions. KeyCorp Chairman and CEO Chris Gorman. As regional bank mergers gain momentum, he joins us next from New York. You're watching Bloomberg TV.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The opening about 2 hours away. Your scores look like this. Equity futures on the S&P slightly negative. We're down by 0.2% on the S&P 500. Adding to yesterday's losses, likewise on the Nasdaq, the epicenter for this move in big tech, we're down by about 0.3%. That's the stock story. In the bond market, switch on the board, we look like this: 2s, 10s, and 30s. The whole curve shifting lower in the last 24 hours. The move continues. 2s at 356, 10s at 4.1%. Later on this morning, some important data points. ADP for the jobs report. Look out for that. No payrolls, of course, this week. No non-farm payrolls. And then ISM services. You want a snapshot of the broader economy right now? That's an important data point later this morning.
Especially because ISM manufacturing came in and you saw real weakness in the employment factor as well as in prices. You did not see that inflationary read-through. I'll also add to that, at 1:30 today, we do get the Treasury refunding announcement too, so we get to understand how much this is not just a question of the overall economic backdrop, but also Treasury supply and how much they're moving to T-bills.
The good news I've got for you this morning is that the bond market is working. You know, it's working.
Totally.
Bonds are doing what bonds are meant to do. Equities aren't doing well, and people are buying fixed income.
And guess what? It's not Bitcoin. And guess what? It's not some of these.
It's been tough, hasn't it?
It has been. And at one point, it actually, Bitcoin returns dropped below the returns of U.S. Treasury so far this year. So, you know, the whole sort of boost of the momentum trade definitely fading back, and you are seeing things respond in a more traditional manner.
To state the obvious, November isn't April. November isn't April in the price section either. Bonds were getting sold off. The dollar was getting sold off. The dollar has been bid over the previous 5 sessions. 5 days of dollar strength against the euro this morning, pulling back just a little bit on the dollar side of things. The euro positive. Euro dollar at the moment around 114.90. As we count you down to that opening bout, let's get you some morning movers, some single names. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. McDonald's is proving its value pitch still works. Shares are now higher, up 1%. The fast food chain posting better than expected sales growth thanks to customers spending more per visit. It's a different story from what we've heard from Chipotle and Cava, which of course serve higher income diners. So it appears McDonald's efforts as restoring its reputation as an affordable option are working at a time when customers are seeking value. Meanwhile, AMD shares in the red, down nearly 4.5% now. That's despite AMD beating on pretty much everything, sales, profit, you name it, but failing to live up to the high expectations after shares more than doubled this year. And the problem was its fourth quarter revenue forecast specifically. It did beat, but failed to hit the highest mark set by analysts. And we end on the AI server maker, Super Microcomputers. Those shares are down more than 7% now after issuing another weak forecast projecting lower than expected profit and sales for the current quarter, even after trimming estimates heading into the report. John?
Yahara, thank you. Thanks for the update. More from Yahara in just a moment. On our radar this morning, Democrats sweeping the 3 major local elections by wider than expected margins. New York City electing Zohran Mamdani for mayor. New Jersey selecting Mikey Sherrill as governor. And Abigail Spanberger winning the Virginia governor's race. Elsewhere, at least 7 people are dead after a fiery UPS cargo jet crash in Louisville, Kentucky. Shocking video overnight. At least 11 people suffering injuries. The cause of the crash is under investigation. And finally, Bank of America CEO Brian Moynihan gearing up to host the bank's first investor day in more than a decade. Bank of America laying out new financial targets to raise earnings over the next several years.
Yeah, and coming out with a target tangible common equity to 16 to 18% versus the 15% currently. Also talking about ways to expand their profitability in areas like the cards, like some of the wealth management, where they haven't been able to have that Merrill Bull compete with some of the others, in particular Morgan Stanley, that have gained. Real question here, how much does this actually include AI, increasing the efficiency and some of the efficiency targets? How much does this have to do with the idea they can take more risk, given some of the regulatory regime right now?
I think you nailed it on the AI theme. On tech, absolutely. They've made some massive investments, and from the sources I've spoken to that are familiar with this conversation, that's the story. Efficiency, Lisa. And going back to the conversations we've had repeatedly with Brian Moynihan over the last couple of years, efficiency, being able to generate additional dollars of revenue without needing to have the same level of staff to achieve it. That's an improving story.
It's not layoffs, it's lack of hiring. It's the idea that you can do more with a footprint that stays the same. And so how do they expand out? How are they deploying that? Right now, AI has been a bit of spaghetti thrown at the wall. Exactly how it's going to create profitability has been a bit of a question. How they're going to lay that out in this Investor Day that starts, I believe, at 9 a.m. Eastern is going to be really compelling.
Looking forward to hearing from Brian Moynihan a little bit later on that. The stock's had a great run recently. We're down just a little bit this morning by about 1%. Let's stick with the banks. Regional bank M&A activity gaining momentum with a slew of recent deals as the Trump administration eases regulation. I'm pleased to say that joining us now for a deeper conversation is the KeyCorp chairman and CEO, Chris Gorman. Chris, good morning. It's good to see you.
Good morning. Thanks
for being here. What is it with Ohio banking right now? Everyone seems to be focused on that in the regional bank space. What's it all about?
Well, it's interesting. You know, there's been a dearth of transactions for many years, and then all of a sudden there's been several. And I think there's a few reasons for that. I think, one, it used to take so long to get these deals approved that I think people were hesitant to do it. And now what we're seeing is these deals are getting approved in like 4 months, which I think after being a dearth of activity, I think you're gonna see probably more consolidation in our industry. After all, there's 4,400 market participants.
Lisa, we saw this in the previous administration. There would be deals that would cross, and you and I would both turn to Anne-Marie, even if the deal made sense, never mind how long is this going to take. Is it even going to happen?
What is even Michael Kors? What was it? Michael Kors? Not even
entry-level luxury.
Yeah. Like,
affordable luxury.
Whatever that means. I mean, there was a real question of what's going to get across. So there's a question now of whether these are deals that have been pent up or whether these are deals that need to happen for efficiencies of scale and to compete with the big dogs, right? Do you need to actually have this consolidation?
Chris, do you feel like you need to make this happen? You need to participate?
No, we really don't. We have a great path for organic growth, which creates a ton of value. And so we're not really focused on acquisitions. We're not really focused on growing scale that way. You know, the scale question's an interesting one. I said there were 4,400 market participants. There's only, you know, those that are over $100 billion, there's only 30 of us. And so you have this strange market structure where you have all these market participants, but you do have a lot of consolidation at the top. The 4 biggest lenders have probably 25% of the assets if you look, or 50% of the assets if you look on the top 25 banks. So we feel like, you know, our strategy is to go out there and we always talk about targeted scale, knowing where we want to grow our business, where we win, how we win, why we win. And so our strategy is really one of organic growth.
So where are you winning, how are you winning, and why are you winning right now?
Sure. So we're focused on a couple things. We have 7 industry verticals, and where we're focused is middle market. We have this integrated corporate and investment bank focused on the middle market. So where we win is in those 7 industry verticals where we spend all of our time and where we frankly deploy all of our capital. We research these companies. That's where we win, and we win consistently.
We're talking about M&A in the banking sector, but there's
Sure.
been a huge wave of M&A more broadly throughout the sector, in particular middle market. And I wonder, what do you see as behind that? Is this an endorsement of credit markets, capital markets being wide open and saying, please go for it and we'll finance it? Or is this out of necessity, that in order to grapple with tariffs, in order to grapple with policy uncertainty, in order to grapple with inflation, they need to be bigger, they need to have efficiencies of scale?
I think it's all those things. And I think you know, you've seen a lot of large deals announced just recently. The middle market is just picking up steam. And the private equity firms are sitting on about $1 trillion of dry powder. There haven't been a lot of exits. There's about 3 or 4 trillion of those probably in the backlog. And so all of a sudden, based on tariffs, based on the need to get larger, based on the need for liquidity of many of the holders of these middle market companies, we see our backlogs are at record levels right now. So I think the middle market is really going to start you'll see a lot of announcements.
How much of that is predicated on the idea that the Fed's going to be cutting rates further and that the Fed already has been reducing those benchmark interest expenses?
Yeah, I don't think, Lisa, I don't think that's what drives it. I think when the forward showed that there'd be 4 cuts or 6 cuts or 7 cuts, I think that stymied people because why not wait? But I think most everyone, it's kind of settled in, kind of a 4% 10-year. I think that you can transact, you know, consistently there. I don't think the Fed cutting another once or twice is going to make any difference.
When it comes to bank consolidation, we're sitting here on the morning after a massive election where the margins for Democratic winners were very big. Are you concerned that all of this consolidation, deregulation, is just going to change hands in 3 years' time?
I hope not. I think from a regulatory perspective, it's not a healthy environment to have the pendulum swinging back and forth. You know, when you're running these businesses, what you want is, you don't want the politicization of regulation. What you want is consistent regulation, particularly in banking around safety and soundness. And safety and soundness really consists of 3 things. It's liquidity, capital, and earnings. And I think that's where the regulators are. So I think it'll be consistent going forward.
Is it fair to say that hope is not a strategy, and there's a 3-year window now to get it done if you need to?
I don't look at it that there's a narrow window. I think, we're playing the long game. I think you have to think way ahead. You have to think 5 and 10 years ahead. And I don't think trying to jam something in some kind of window that may or may not exist, I don't think that's a good strategy.
We wanted to spend some time with you as well, tracking credit quality.
Sure.
We spent the last 40 minutes or so talking about it. What are you seeing with loans at the moment? Non-performing loans, net charge-offs, how are things developing?
Our credit book is in really good shape. If you look at any metrics, delinquencies, criticized, classified, if you look at our consumers have more money in their accounts today than they did pre-pandemic. Hard to believe. And we have a super prime book, but we're not seeing any cracks in the credit cycle.
Well, that's what I wanted to get to, Chris. Does that tell me more about the discipline of KeyCorp, or does it tell me something about the broader economy?
Well, I'd like to think that we are a very disciplined lender. I mean, we've always thought, we don't go out and look for assets per se. We go out and we target certain customers. We bring them into the bank, and to the extent we can help them with our balance sheet, we do. But we're not out there just trying to grow assets. I think we're very disciplined, but I also think the economy is in good shape. My personal view is that the growth of the economy is probably accelerating.
Does that include acceleration in hiring early next year? We've talked about how a lot of companies have put on hold some of their investment plans and their hiring plans to try to get more policy certainty. Do you see that coming to the fore in the first quarter, and then we'll see that reacceleration that you're talking about?
I think it depends on the industry. We, for example, have been very public. We think we've got these unique platforms. We're trying to grow our frontline folks by 10% this year. We'll continue to be in the market recruiting next year. And I do think, people do find efficiencies, though. I think one of the things that you really learned during the pandemic is that people can get pretty efficient pretty quickly. And so I'm not sure I think the labor market, my view of the labor market is, I don't think it's completely rolling over, but Lisa, I think it's going to be relatively flat. The Fed's going to have a decision to make, I think, at some point. Do they focus on the labor market, or do they focus on an economy that might be accelerating?
I'm so pleased you've gone there, and Lisa's right to bring it up. We hope we see the employment alongside the growth, but there is a question mark over that. We're trying to work out what's holding it back. So you talk about re-acceleration, but you're not leaning into hiring aggressively, and we've heard that from others too. Is it technology and technological advancements that give you pause at the moment to wait to see how things develop? What is it?
Well, I think people just get more and more and more efficient. And I think people realize they can do more with less. We actually are hiring, particularly, as I mentioned, our frontline folks. But I think it's possible to have a growing economy and a relatively flat labor market. And, if you think about technology, if you think about people getting just better at really processing their business, if you think about businesses getting more focused, doing fewer things better, so I think there's a lot at play.
Chris, this was great. Super insightful. It's good to see you, sir. Thank you. The KeyCorp CEO, Chris Gorman there, really speaking to their moment in this market right now, anticipating that growth next year and the confusion at the Federal Reserve as they look at this steep drop-off in employment.
How do you deal with a dual mandate that's directly in conflict? And that is the increasing question. Of course, we don't know whether that increasing acceleration of growth is going to come with inflation. But right now, you talk to banking executives, and they say things are okay. You talk to people who are in the employment market, it feels very different.
Should say steep drop-off in employment growth.
Right.
That's been the story so far this year. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Back with us. Here's Yahara. Hey, Yahara.
Hi, John. Kava shares are lower 6% in the pre-market. The fast casual chain cut its full-year sales growth targets after seeing foot traffic stall in the third quarter. Its results mirror those of Chipotle, which shared it saw consumers pull back across all income groups. Meanwhile, BMW says demand for its new EVs is exceeding expectations. The car maker is seeing particularly strong demand in Europe while facing fierce competition in China. It warned that earnings could be hit by changes in tariff policy or Chinese export curbs on key materials. And a programming note, tune in to Bloomberg TV at 4:30 p.m. this afternoon for a live interview with the directors of Can't Look Away, the case against social media. The documentary, based on Bloomberg investigative reporting, exposes the real-world consequences of harmful algorithms. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate it. Up next on the program, a big win for the Democratic Socialist.
The working people of New York have been told by the wealthy and the well-connected that power does not belong in their hands. Tonight, against all odds, we have grasped it.
Up next, Catherine Wild of the Partnership for New York City. From New York City this morning, you're watching Bloomberg TV.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
Live from New York, welcome to the program. Here are the scores this morning, pulling back by just 0.1% on the S&P 500, erasing losses from earlier on this morning, but adding to what we saw in yesterday's price action. We're down by about 0.25% on the Nasdaq 100. Under surveillance this morning, a big win for the Democratic Socialist.
For as long as we can remember, the working people of New York have been told by the wealthy and the well-connected that power does not belong in their hands. Tonight, against all odds, we have grasped it. The future is in our hands.
So here's the latest this morning. Democratic Socialist Zohran Mamdani winning the New York City mayoral race with 50.4% of the vote. Catherine Wild, CEO of the Partnership for New York City, writing the following. Ultimately, the impact of the election on business will depend on the extent to which Mamdani appoints competent deputies and commissioners to run city agencies. Catherine joins us now for more. Catherine, good morning.
Good morning.
Thank you for being here with us in New York City. Let's talk about some of this. What did New York just vote for?
Well, I think, number one, we have to look at the fact that more voters came out to vote for mayor than we've seen in the 56 years, since 1969, which was my first election in New York when John Lindsay was elected on the liberal line, actually. So, so this was a big turnout, and I think it reflects the frustration of the New York City voters with a couple of things. Number one, the high cost of living and doing business in New York City, and which Zohran Mamdani spoke very effectively to. And it reflects a frustration with a series of politicians who have disappointed New Yorkers.
Those high marks in terms of how many people came out to vote was fueled by support of Mamdani, but also those that were against him. There's a lot in the business community that have a lot of concerns. Has he assuaged those concerns yet?
I cannot say that he has assuaged those concerns completely. After the primary election, when everybody was shocked that he beat Andrew Cuomo by 13 points in that primary in June, he reached out, actually called me right away and said, tell me which business leaders I should meet with to learn from them and to show them that I'm not going to socialize their businesses.
Who did you advise he meet with?
I gave him a long list of people. I mean, our co-chairs of the partnership, Rob Spire and Albert Bourla, and Jamie Dimon, obviously, Larry Fink, leaders from across the industry, as well as the small business representatives, the Borough Chambers of Commerce, the Restaurant Hospitality Association, so a mix.
We have a lot of reporting that what business leaders wanted to see was him to tap Jessica Tisch to continue to lead the NYPD, be the commissioner there. Is it your understanding that she's going to stay?
Well, I think she's going to stay, and I will say that that was the #1 priority. It was an important signal both to the business community about the public safety. As employers, they want the city to be safe, and Jessie has done a great job. They just announced this week that crime is down again this month, another 6.5% on her watch, so that was a big ask. And the fact that her family is iconic in the city's Jewish community, I think, was also another important piece of that. Mamdani did say that he would retain her. I know they have spoken, and she was not going during the campaign, she was not going to make a commitment one way or the other because she doesn't think it's professional for her, in her job as police commissioner, to participate in campaigns. But I'm hopeful and optimistic that she will stay. She loves her job. She says her mission is not finished, so I'm very hopeful.
You've been in the city a long time, tracked its politics, and been a nexus between business and the political sphere. And I'm just wondering if you've seen real evidence of people leaving the city in fear of higher taxes or some sort of regime that makes it less desirable for them.
Well, people are leaving the city because of high costs in general, and taxes are part of that. And for those who think, and a big concern about our incoming mayor is that he may think that somehow spending more government money is going to make the city more affordable, when in fact it's exactly the opposite. City and state budget spending has gone up over 50% in the past decade, and that's driving our affordability crisis. So hopefully we will be successful in finding other ways to fund some of the new mayor's priorities.
Is there any evidence that that's on his docket? Because he talked about raising taxes on the wealthiest individuals. He talked about paying for it that way. Is there any sense that there is some sort of awareness of the debt and sort of the debt cycle that cities can get into that can make things less affordable?
Well, New York City has a legal debt limit. And we also, since the financial crisis of the 1970s, if the mayor gets too aggressive about his spending, a financial control board comes into place and the state takes over the city finances. So we don't have to worry about New York City going bankrupt again. So that's a check on that. In the conversations with him about the danger of raising taxes in terms of New York's competitiveness, I mean, right now, those of us professionals in New York are paying 55% of their income in taxes to federal, state, and city government. If you move to Florida or Texas, you're paying 38%. So that's a pretty big number that we have to take into consideration. So I think that he's going to become more practical as he sees the implications. He has said, I have my goals, I want to achieve them. but I'm wide open on how to do that. And that's an opening, I think, for business expertise to help him figure this out.
Well, to achieve them, he says he's going to raise taxes, but Governor Hochul says, I can't lose any more people to Palm Beach. To your point, looking at the tax differentials. So can he even attempt to raise taxes without the governor on board?
He cannot raise corporate or personal income taxes without, well, that's not a city prerogative. That is a state prerogative. He can raise real estate taxes, but he has said, as he's thought about the implications of freezing the rent, he has said he will actually do property tax reform and try and reduce taxes on rent-regulated commercial buildings, multifamily buildings. So I think that as we see who his appointments are, and how he takes input on his appointments. Last night, I was very pleased that the tax word was not mentioned in his acceptance speech as mayor, so that was a good sign. And he also started out how he's going to achieve his goals is we're going to reduce the cost of government and reduce bureaucracy. So he's sounding more and more like Mike Bloomberg.
We can only hope, Catherine. It's good to see you. Thank you.
Thank you. Thanks for
Catherine
having
Ward
me.
of the Partnership for New York City. This is a pretty low bar, isn't it? The city won't go bankrupt.
I love
That's
that.
my takeaway from this conversation.
Woo, yay. I mean, it's sort of a long, big gap between where we are and bankruptcy and shades of potential pain. But look, this is the question. A lot of Zoran Mamdani's goals really are a question mark, because there are a lot of aspirations that are not achievable without getting some sort of consensus. So now the question is, to Kathy's point, who are the commissioners going to be? Who actually stays there? How much are they empowered to do what they want to do?
That's the first comparison that I've heard from anyone, Zoran and Mike Bloomberg.
Maybe it'll catch on.
Yeah, we'll see. I think a lot of New York City voters might be wanting something else, but okay. Coming up on the programme, Matt Stuckey of Northwestern Mutual, plus Morgan Stanley's Michael Gapin and Matt Hornback. Looking forward to the conversation. The third hour of Bloomberg Surveillance up next.
Nobusan, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times, It's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At the end of the day, you're not going to hit all-time highs day after day after day.
Investors should still expect that there can be some volatility.
Conditions have become increasingly fragile.
We have nice earnings growth, but it's being pushed by Mag 7.
We are going to see a broadening out of the market. I think we're heading into Goldilocks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It's Payrolls Wednesday. Can't get used to that. It's ridiculous.
You shouldn't get used to it.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. The losses yesterday, a little bit of follow-through this morning. We're down by 1/10% on the S&P 500. On the NASDAQ, we're down by 0.2. In the bond market, a rally yesterday, this morning. 2s, 10s, 30s, pretty stable. 10s at 4.08%. 2s at 3.57. 14 minutes from now, this right here, the ADP employment report. A major focus for Wall Street, given there's not much else to focus on the jobs front.
So right now, the estimate, we don't have a whisper number because there isn't a whisper ADP number yet, but the estimate is 30,000 jobs created compared to a 32,000 decline that we saw in the prior month of the ADP employment numbers. People might be saying, are you kidding me? What are these numbers you're giving me? At the same time, as John said, this is all we have to give a read on the U.S. employment market at a time where there is a fissure. And I think that Chris Gorman of KeyBank really put it well. Right now, we could see a reacceleration of the economy without commensurate job growth. What does that do for the Fed, and how does that signal people's ability to keep on spending to fuel this, given the fact that employment isn't picking up pace?
I admire the 7 economists that put together some estimates for Friday anyway. Did you notice that?
I did not notice that.
In our survey, 7 of them, actually, yeah. The median is -20. We're not going to get a number on Friday, but they've put together an estimate for us anyway.
What do you think people do without the data? I mean, think about how many people spend their day, all day, parsing through data that they no longer have. I mean, they got to find something to do, so you come up with estimates for something that's not going to come out.
Mark Apen of Morgan Stanley joins us in a moment. You can ask him.
Great. I'm looking forward to it.
I'm pleased you brought up that point, though. We caught up with KeyBank in a previous hour, and he's talking about an economy that's reaccelerating. So there's a regional bank. We're not talking about one of the big players on Wall Street. A regional bank saying, look, at what we see, our loan book's pretty solid right now, don't see the credit stress. And, by the way, I also expect a pickup in growth in the new year. And that's what this equity market, away from the big tech story, that's what the bulls have been looking for into 26.
Yeah, Jim Zelter kind of also talked about this real pickup in activity. Yes, we're late cycle when it comes to the credit markets, but at the same time, it doesn't seem like this economy is falling off a cliff. So it raises a question. Does the Fed need to cut? And if the Fed cuts rates, will that only exacerbate the K-shaped economy that much more? Or will it give fuel to the shoppers at Chipotle and Cava to be able to go out and spend a little bit more?
Hey, that's been a struggle. Look, it's been a problem. Cava this morning, in the last 24 hours after the bell yesterday, saw it with Chipotle last week. You are seeing a warning from these fast casual restaurants who are saying, look, this is the situation right now. Yes, of course, we've got our own problems. They never admit them. But of course, they've got them. Okay, we know that with Chipotle. But if you're looking at the consumer, costs are up and we can't pass on those costs. That's a big difference. That's a major distinction between where we are now and where we were coming out of the pandemic, and why the likes of Governor Myron and Governor Waller aren't worried about the inflation story at the moment.
McDonald's, for example, came out also today, this morning. They reported earnings that were pretty much in line, and yet their shares selling off. They were saying, what was the leadership? The sales, any kind of deals, something that makes people feel like they are getting value. If you take a look at Black Box Intelligence, fast food traffic is down 2.3% compared with a 1.6% drop for restaurants overall. You are seeing it among the younger cohorts and among the lower income cohorts, and that, I think, is what a lot of people are focusing on.
Carver Group this morning down by close to 7% in the pre-market. Coming up on the program, Matt Stuckey of Northwestern Mutual as the tech sell-off continues, and Morgan Stanley's Michael Gapin joins us alongside Matt Hornberg as we break down the latest jobs data in just a moment. That data drops in about 11 minutes' time. We begin this hour with stocks lower following a sell-off in chips raising $500 billion in value as fears of an AI bubble continue to grow. Matt Stuckey of Northwestern Mutual writing the hyperscaler capex party isn't slowing down. Bond offerings were materially oversubscribed, which suggests that the market is comfortable underwriting some of this circular revenue. Matt joins us now for more. Matt, welcome to the program. I want to pick up on that point because we have seen spreads, high yield spreads, widen just a little bit. But to your point, we haven't seen mass pushback in the credit market to this theme. Is it difficult to put together a sustainable bear case, given how much the credit market seems to love what's on offer over the last week?
Look, I think it's difficult to put any kind of credible bear case in place when earnings revisions are up and to the right and they're leading the market higher, specifically in some of these hyperscalers, and the benefits are accruing to some of the providers of those CapEx build-out areas. And so, that's the NVIDIAs of the world, the AMDs of the world. Just year to date, you're looking at just a material move higher in 2026 CapEx estimates to the tunes of hundreds of billions of dollars. And if you're trying to be a bear in this situation, it just day after day, those numbers keep grinding higher and higher. And so if you're an analyst looking at kind of what drives equities, earnings revisions is a major input to that, and it's continuing to move in the right direction if you're in the bullish camp there.
A couple of data points building though, Matt. 3, let's pick them out. So we had Meta last week, Palantir earlier this week, AMD overnight. What does that tell you, their performance and how the stock has reacted to it?
I think specifically if you're looking at those companies, they all have one thing in common. It's just performance that's off the charts. And so kind of with that elevated performance profile comes elevated expectations. And so despite what I think anyone would agree or strong numbers, it just wasn't quite enough to meet that elevated expectations bar. But I think if you listen to the message during the earnings calls, the executives on those companies weren't talking about the business slowing down. In fact, they're talking about it continuing to expand at an accelerated rate. And so to me, I think this is just more of a positioning, kind of working through some of that excess performance churn as you think through about how these are likely to perform in the future.
I'm struggling to understand exactly what's driving these stocks. Is it vibes? Because ultimately the financials don't seem to be relevant when you're talking about ultimately a faith-based index. I mean, you're talking about companies that have future growth off the charts with a technological revolution that's hard to imagine and that we don't understand fully how to monetize yet. So how do you know how to get involved, when to get involved for your investors?
For our clients, what we are saying is that, while it's exciting to see some of the performance in some of these names that, you can call it vibes, you can call it some of, maybe even memes, throwback to 2021. One thing that you always want to make sure of as an investor is that the fundamentals that are being reported are commensurate with the price action that you're seeing on your screen. In some cases, that's true. In other cases, it's not. Quantum computing, nuclear stocks would be probably more of, the more speculative area. But, in terms of, hyperscaler activity, order books for semiconductor companies and the results that they're generating, yeah, we would say that the fundamentals are backing up what we're seeing in terms of performance. And so that's an important delineation. And in markets, however, we are seeing some of that kind of more speculative activity being the driving force post-Liberation Day of moving markets higher. That's not to say that you aren't seeing good performance from areas where you do have that fundamental backstop in terms of stronger revenues, stronger than expected earnings, and those kind of being growth rates that are in excess of what you're seeing in the overall market.
Matt, one thing that John was pointing to earlier this morning is that it should feel pretty good to see that bonds are acting normally over the past couple of days, that as we have seen a sell-off in some some of these riskier areas, you have seen the normal knee-jerk risk-off flight to safety in treasuries that you didn't see after the April 2nd Liberation Day announcement. How much does that make you feel good about the idea of bonds as a ballast and not necessarily a risk to portfolios?
I think that should give investors a lot of comfort. And we were just talking about that at a conference that we're hosting here at our headquarters this last few days, is that, you know, we're unlikely to see a repeat of what we saw in 2022, where every major asset class went down, whether it was bonds, whether it was equities. You know, you're at a starting point in yields where the return skew is much more in your favor, just in terms of shocking rates up or down 100 basis points. And so portfolio construction does has its use again in terms of, you know, bonds providing a nice balance to portfolios. And in fact, over the last year, you know, the total return for the Barclays Agg has actually exceeded that of Bitcoin. And so it's performing well in portfolios, being a diversifier, and also, you know, generating, you know, upper single digit returns. And so that's a welcome sight for investors.
Matt, is there a towel on the back of the recent developments in crypto and Bitcoin? You mentioned Bitcoin. Is there a towel there for the broader market?
That's a really good question. You know, I'm not the crypto guy in the office, but I would say that, you know, if there is some speculation leaving the market that we've seen kind of burn off the last few trading sessions, areas like cryptocurrency, which, you know, to a certain extent are somewhat of a levered NASDAQ play, are one of those areas that could come under pressure. So maybe that's a little bit of a tell that some of the speculation needs to leave the market. But, you know, so far, it's not something that we're really focused on in terms of portfolio construction, but it is maybe a little bit of a tell in terms of what type of environment, you know, investors are navigating today.
I'm not the crypto guy in the newsroom either. That's Matt Miller. I wish I was, based on some of the price action over the last few years. Matt, thank you, sir. Matt Stuckey there of Northwestern Mutual Wealth Management. The good news is in the bond market, look, I know silver linings and all of that, some very dark grey clouds based on the price action of the last 24 hours. Let's just take stock of things. I saw these headlines about the Philadelphia Semi Index losing $400 and something billion in a session. We added 500 in 5 days. In just the last week, we've had a massive run-up in that index.
This is what actually stands out to me, and I'm really glad you mentioned this, because $200 billion of that was NVIDIA, losing $200 billion of market cap in a day. And you're right, it's not that significant when you think it's a $5 trillion stock that's gone up and down to $200 billion in any given day, but it highlights the potential risk given how much valuation, how much these stocks have risen if this value just gets excised from the market like that. And that, I think, is a really interesting sort of systemic question.
Once you get to 5 trillion, you should stop counting in market cap. It's like doing down points. Like, what did they lose percentage-wise? Yeah. You know, I know these numbers sound super flashy, but they're $5 trillion names now.
Right, but I'm just wondering from an overall index perspective, it shows the disproportionate effect that they have, because that's a Disney that got erased in one day, and then everyone's saying, you know, look, who cares, right? Because ultimately, they are the behemoths, they are the whales in the market, so if something happens to them, how much does that undermine a broader sense of safety and growth in the market?
Stocks are just massive. NVIDIA right now down by 0.6%. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Voters in California passed Proposition 50 to redraw the state's congressional map before the midterms. With 71% of the votes counted, nearly 64% of voters approved the ballot measure that could flip up to 5 Republican-held House seats to Democrats next year. Meanwhile, bad news for the kids this holiday season. Toys for Netflix's mega hit K-pop Demon Hunters will not hit shelves in time for Christmas. Retailers and toy makers were unprepared for the level of success the movie saw and will not have enough time to produce and ship the merchandise. The products are expected to hit shelves next year. And Lyft and United Airlines combining to launch a program that allows users to earn air miles on rides. Starting today, new Lyft users can receive 1,000 bonus miles just for linking their United Mileage Plus account and taking 2 rides. And if you're holding on to those airline miles, you'll be able to redeem them for Lyft rides starting in early 2026. That's your Bloomberg Brief. John?
Yahira, thank you. Thank you very much. Up next on the program, the latest ADP employment data is just around the corner. Mike McKee's going to break that down in just a moment. From New York City, you're watching Bloomberg TV.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We're seeing a much larger theme of a strong economy. I'm not suggesting that we're not really focused on what the next move of the Fed are. I just don't see how the Fed policy of this quarter or the next 2 quarters is going to have a real impact on the accentuation of the K economy.
That was Apollo President Jim Zelter weighing in on the so-called K-shaped economy. Right now, equity futures just a little bit softer. We're down by 0.1%. That's your price action going into the opening bell. Let's get you some morning calls. First up, Morgan Stanley raising its price target on AMD to 260, citing gaming strength and data center upside. Second up, Bernstein cutting its price target on Carver to 80, saying the firm is not immune to macro pressures. Third and finally, Barclays cutting its price target on Uber to 107, saying its autonomous transition will take time. The stock is doing just about okay, positive by 0.1%. Moments ago, data dropping from ADP, the employment data crossing just a second ago. Bloomberg's Mike McKee has the latest. Good morning, Mike.
Good morning, John. The song remains the same. It looks like hiring has significantly slowed, according to ADP, and pretty much all of the data that we have watched from the alternative world. 42,000 jobs created during the month of October, according to the folks at Automated Data Processing. Most of the jobs are in the service-providing area as usual, although many service-providing areas did lose employment. We see a decline of 17,000 for information services, a decline of 15,000 for professional and business services, and a decline of 6,000 for leisure and hospitality. The only one really gaining, as usual, is education and healthcare services, up 26,000. And the size of businesses, small businesses, the big job generators, lose 10,000 jobs, while medium establishments lose 21,000. Large establishments with over 500 employees gained 73,000 jobs, but we've had a lot of large establishments announcing layoffs over the past week. So it is not a particularly good number. We have only 7 so far forecasts for the jobs report we're not going to get on Friday, and the consensus there was 38,000. So we're all sort of in the same range to the extent that people are even guessing, but it is still a very slow hiring environment.
Mike, I love that they're putting together estimates for data we won't get. Let's talk about the data we just got. Mike, are we just seeing just subtle signs that things have either stabilized or they're picking up? Because we heard from a bank executive about 40 minutes ago who suggested things are picking up and they're going to reaccelerate.
It doesn't look like the labor market is picking up yet. It's still kind of in a no replacement cycle at this point. We aren't seeing them necessarily falling apart, although the layoff announcements have started to come. The question is, do they continue? And is there something that's going to cause companies to hire again, or are they just still hunkered down waiting for the effects of tariffs to work their way through the economy?
Mike McKee, thank you, sir. Appreciate the update. The ADP report out just moments ago. It's an upside surprise, 42K. The median estimate in our survey was about 30K. Equity futures off the back of that, not much movement. We're still down by about 0.1% on the S&P 500. This equity market really hasn't been linked to what happens with payrolls. If it has, it's been to whether the Federal Reserve is going to cut interest rates or not, and that's kind of it. And I'm not sure this plays into the next Fed decision anyway in December.
People don't really understand the labor market and how it coheres with an economy that could be reaccelerating at the beginning of this next year, potentially on the backs of AI, but potentially also from efficiencies by companies that aren't going to lead to more employment. It's kind of a mystery. Do we need employment to really reaccelerate in order to have that strength, particularly in the consumer sectors, in places like fast casual restaurants, or are we looking at something that is sustainable, that is just the new normal, that is more European in style than maybe the classic United States job growth?
Let's define we. Do we? Does the market need it? I mean, maybe not. Does the economy and do the politicians need it? Absolutely. And that's playing into the story of the last 24 hours, without a doubt.
The affordability, the cost of living, and how it's become completely unsustainable for a whole swath of the society. And you start thinking, if someone has assets and they can get compound interest in the market right now, they're doing great. If they don't, they cannot catch up, and the cost of living is going up really rapidly. So how do you solve this? Does a rate cut help that? Or frankly, does that hurt it more?
A year ago, President Trump came back into power because he ran on the fact that groceries are too high, gasoline is too high, and there's an inflation crisis and affordability crisis. Now what you've seen from these Democrats that have rose last night, that have swept, and I'm talking about the margins you need to look like, so I'm not really surprised that any of these people won. I am a little bit surprised about how big the margins were, plus 13 points in Virginia. They ran on affordability, electricity prices, gasoline prices, rent prices, and now this is going to be something huge the Republicans need to deal with by the midterm elections. They have 1 year to get it down.
That's their challenge for the Democrats. Can they park the woke stuff, leave behind the identity politics? Can the Green Lobby take a back seat? And can they focus almost exclusively on affordability? That's going to take massive discipline over the next few years.
It will take massive discipline, but that is what Zohran Mamdani did in this city. He talked about the rent being too high. He talked about the idea of we can have free buses. He didn't really talk about social politics. It was all about economic politics and economic policy, whether he can deliver them or not, because he has really no jurisdiction on a lot of taxes that has to do with the governor. The fact of the matter is he ran an entire campaign on affordability, not even about how Trump is someone that he can, stand up to. He didn't really talk about Trump until last night.
Let's get to the state of the economy. Bloomberg's Enda Karen joins us now from Washington, D.C. Enda, welcome. Piece it together. ADP, ISM manufacturing. For the data we have got, what kind of picture do you have?
Well, look, there's a real tension in the economy right now, John. You're either in the camp that the jobs market is weakening rapidly and the economy needs lower borrowing costs, lower interest rates, or you're in the camp of that story is being exaggerated. We need to be more concerned about inflation, and especially inflation that remains, around that 3% area above the Fed's target. And that's really where the debate is at right now, John, on the economy. And we're in this data vacuum where it's very difficult to make that call. Plenty of economists can say to you, in truth, they're not sure. I mean, you listen to the speech by Fed Governor Cook this week. She made the point in the labour market that some of it could be down to the immigration crackdown story, not necessarily a weakening jobs market. I think that's my point about both the tension and the confusion right now is, what are we facing here? Is it a slowing economy with a weakening jobs market, or is that being exaggerated, and should the focus be on inflation? And there's no clear answer on it right now.
And is there a historical corollary to this moment where we've seen an economy really expand dramatically at the same time the labor market just doesn't add that many jobs?
Well, the problem with the labour market is there are so many different factors at play. We're not sure what is going on there, and the immigration crackdown part of it is one of the main confusing points. How has the supply side impacted the monthly number? That's number one, immigration. And of course, number two, as I just mentioned earlier, we're not getting the numbers on the jobs market at the moment, so it's very hard to get a picture of what is going on there in the first instance. So it is a confusing picture. It is unprecedented in ways, and as Fed Chair Jerome Powell has made clear, by the way, it's not a good space for any central bank to be in when you have this story of persistent inflation, not runaway, but persistent, happening at the same time. There's clearly been softening in the jobs market, but no one's quite sure how weak it is. Is it stabilization or is it something worse? And I think that part of it is quite unprecedented.
How much do these ADP numbers really shine a spotlight on ISM services that come out at 10 a.m. Eastern? The idea that we didn't see the employment component of ISM manufacturing really represent any kind of growth. Do we need to see ISM services show employment growth for people to remain optimistic that this slow churn is not unhealthy, at least?
Yeah, and you're absolutely right. There is this argument that people would say, hold on a second, we're coming from what was a very tight, by historical standards, labour market, that there was overhiring, for want of a better term, that companies are now retreating from that level. We're still not in the mass broad-scale layoff picture that some have warned about. So that argument does exist. But I think when you step back, there's no doubt when you talk about the manufacturing ISM data, that there clearly are pockets of unambiguous weakness in the economy. And manufacturing clearly has been weak for much of this year and isn't showing much signs of turning a corner, barring the whole AI CapEx side of things. And that's despite all of the political focus on regenerating manufacturing, still very much in the doldrums. So I think when people do look at what's happening across the economy, obviously pockets of clear strength, but there's clearly areas of weakness too.
Soft production, tepid demand. Seen it all year. Andy Curran, thank you, sir. Manufacturing's been a problem, shrinking for an 8th consecutive month. Looking at the ISM, the employment component that Lisa's talking about, 9 consecutive months of a contracting employment component in that particular reading. Not good.
I don't understand. This is supposed to be the economy that's transferring back to manufacturing to a larger degree. This is the time when we should see manufacturing picking up and taking the mantle a little bit from the services sector, given the rejiggering of the U.S. economy. We didn't see that. Do we see at least the services side of the economy firing on all cylinders?
Well, it takes months, though, even years, to bring some of these plans that some of the auto companies are talking about and other big manufacturing industries are talking about back into the United States. What struck me about ADP is the estimate range. It feels like everyone is flying by, negative 20K to plus 70K.
Just hearing from the president, weighing in on the recent elections. Let's take a listen.
But we did a great job over in China, and we've done a great job in turning off wars. We stopped 8 wars. And we have 1 to go, as you probably know, and that'll get stopped also. But we've done a great job, so it's really been an honor to do it, and I did it with many of the people in this room. Every one of you I know, and every one of you I like our leaders, I like everybody. But I thought we'd have a discussion after the press leaves about what last night represented and what we should do about it, and also about the shutdown, and how that relates to last night. I think if you read the pollsters, the shutdown was a big factor, negative for the Republicans. And that was a big factor, and they say that I wasn't on the ballot was the biggest factor. But I don't know about that, but I was honored that they said that. And I just want to thank everybody for being here, and a very special thanks to Vice President J.D. Vance, who's doing a terrific job. J.D., thank you. As well as the Senate leadership team that has been working very hard, working really, I will tell you, nobody's working any harder representing the American people, including Senator John Thune. John, thank you. Great job. Senator John Barrasso. John, thank you very much. Senator Tom Cotton, wherever you may be. Tom, thank you. Thank you, Tom. Thank you. So Senator Shelley Moore Capito, who's been very involved. Thank you, Senator James Langford from one of my favorite states, 77 out of 77. I always say 77 out of 77. Reagan was 56. That was the record. We got every one of them. Thank you, James. And a fantastic friend of mine and an incredible advocate during the election a year ago, Tim Scott. Thank you, Tim. So as you know, we are in the midst of a disastrous Democrat-created government shutdown, and it is Democrat-created, but I don't think they're getting really the blame that they should. That's now officially the longest shutdown in American history. The Democrat radicals in the Senate have shown zero interest in reopening the government, and I don't think they'll act so soon. A lot of people disagree. I've been saying for the last 30 days, we've had 4 or 5 different points. Yes, sir, they're going to get it right now. We should have it done in a day. I've heard that about 4 times. I heard it after Kings. You know, they said I was a king. And I heard it after Kings. I heard it after a couple of other moments in time. And I said, no, I don't believe so. And now I heard it's after the election. I don't believe so. I think they will. I think they're kamikaze pilots. I just got back from Japan. I talked about the kamikaze pilots. I think these guys are kamikaze. They'll take down the country if they have to. So I don't think so. Millions of Americans are going to be without SNAP benefits. And I will say about SNAP benefits, so when I was president, we had $7 billion worth, and now they have many times that, because these benefits were given to anybody that asked, and they're up to, I hear, just many times, $47 billion. So it wasn't the purpose of SNAP. That was for people that really had problems, down and out, people that really had problems. But during Biden, they gave it to anybody that wanted it. I think it's something you have to talk about because the numbers are incredible. But countless public servants are now not being paid, and the air traffic control system is under increasing strain. We must get the government back open soon, and really immediately. We have to get it up. We have the hottest economy we've ever had, and it's affecting the stock market now a little bit. But the stock market, as of Friday, has hit many record highs during the last 9 months, many. And it will again. This is just the beginning, because when these plants that are being built right now start opening up, we've never had anything like this as a boom. There's a construction boom right now, but that's going to be bigger than that. That's going to be an economic boom as soon as they open up, and it's going to be something special. We have car companies coming in. When I was in Japan, Toyota, Mr. Toyota, I said, "What's your name?" "Toyota." I said, "Oh, you're rich." I said, "How much of the company do you own?" 92.1%. I said, "I'm glad you said the one. He wants to be there." I said, "You're a rich guy." And he said, "I'm investing $10 billion in the U.S. And you know who I'm talking about, right? You introduced me, Mr. Senator. You introduced me originally when you were the ambassador to Japan. He's still
The
good.
President of the United States hosting a breakfast at the White House this morning alongside Republican senators to reflect on the events of the last night and, of course, to discuss a record-long government shutdown. I want to check in on the bond market. Bond market looks like this morning across 2s, 10s and 30s as we get some headlines on Treasury refunding. Bond yields so far higher just a little bit, 3.58 on 2s, on 10s 4.09%. With the latest, let's cross back over to Bloomberg's Mike McKee for more. Good morning, Mike.
Good morning, John. We're out with the Treasury quarterly refunding numbers. Treasury is going to auction a total of $125 billion. That is in line with estimates, and the breakdown is as follows: $25 billion in 30s, $42 billion in 10-year notes, and $58 billion in 3-year notes. Those auctions go off next week, and we shall see whether they have to increase bill sizes over the course of the quarter, because the question is, will they be borrowing enough given the fiscal trajectory of the United States? We did see on Monday's borrowing needs announcement that they lowered the amount they thought they would have to borrow this quarter and in the first quarter of next year. But $125 billion is the total, and that is pretty much as expected.
Mike McKee with the latest. Michael, thank you. As expected, Bram, over your take on this one.
Honestly, I think this is going to be interesting. When do they actually start to make the transition that everybody is expecting, which is more heavy issuance on the front end of the yield curve? We're not seeing it yet. People keep saying, we're going to see it, we're going to see it. Right now, it's pretty much in line, and you are not seeing that doubling down in the maturity profile of the United States debt just yet. At what point do they have to, though? I think that is what a lot of people are wondering.
And we get some bill buying next year from the Federal Reserve, right? In the next few months?
Don't call it quantitative easing.
It's not QE.
It's not QE.
Just looks kind of like QE.
It just is
not QE.
Not QE. Well, it's the idea. If you haven't caught up, it's the mortgage-related debt, the issuance that the Treasury, that the Federal Reserve is holding. They're going to let that roll off, and then they're going to buy T-bills instead. So it's a supportive aspect for the T-bill market, and maybe not so much.
A change in the composition of the balance sheet.
Exactly.
Are we calling it that? Okay.
That's
Matt Hornbeck and Mike Gapin are going to break this down for us in just a moment. Yes. As we stick with the data, as traders look for clarity on the path ahead for rate cuts, the team at Morgan Stanley write the following: we maintain our call for an additional 25 basis point cut in December. But the key question is what the data the Fed will actually have before December. A prolonged shutdown is a risk to our view of more consecutive cuts. Mike Gapin of Matt Hornbeck of Morgan Stanley join us now for more. Gents, good to see you both. Thanks for being here.
Good morning.
Mike, I'm going to come to you first. The data, we don't have much right now.
No.
This government shutdown, it makes it less likely we get rate cuts in December, is that right?
Well, I think we're just reflecting what Powell said, that if you're driving a car in the fog, you should slow down. So he was saying there is a case to be made where if you don't have the data, maybe you can't act. My view would be that if we're still in December and the shutdown's in play and we don't have the data, I'd be really surprised if the Fed doesn't cut. I think the drag from a government shutdown at that point could mean growth is essentially zero in the quarter. And I would be surprised if there weren't some spillovers in the limited data that we see. So I think if we don't have data, it's because the government shut down, and I think that probably still justifies a cut.
We'll get to Matt in just one second, but Michael, from the economic perspective, do you get the sense that this is an economy that needs rate cuts, especially given the fact that the slow growth, slow hire, low fire kind of churn has been going on for quite a while and may have a lot to do with other factors outside of just the trajectory of the U.S. economy?
Well, so we came into the year thinking, no, you probably don't need to cut rates this year, that you would want to ensure that any inflation rise from tariffs is transitory, and then we thought the rate cuts would come in 2026. So, my view is maybe we don't need it. There's certainly a discrepancy between the data and a tension between the activity and the labor market data, but I'm not on the committee. I don't get to make the choice. The view is the balance of risk shifted and policy needs to be recalibrated. So they've made that decision. They want to move closer to neutral. And I'm just thinking the data will justify another step in that direction in December.
Matt, are you already seeing that with respect to how the bond market is responding to recent weakness and this idea that it seems as though everyone's buying the transitory story again? They're just not saying the T word.
Well, it feels to me as if the market had to adjust its pricing for the December meeting based on what we got out of the meeting last week. But the market is also at the same time hesitant of completely taking the December meeting off of the table, because I think investors are starting to look at the bigger picture. They're saying, hey, 2026 might be a better year, but we have to get through the end of 2025 first. And the government shutdown is starting to slowly creep into the mindset of investors. And they're thinking, gosh, if the data do come in on the weaker side going into the December meeting, then the Fed should very well continue its gradual move back to a neutral stance.
Day 36, longest in history. The president is now talking to Senate Republicans, saying they should just blow up the filibuster in order to do this. Is there a line in the sand where the government shutdown would need to end for you to really think that December's back on the table because all that data will start flowing through again?
Well, I think to the point that Mike made, they're going to get some data. Even if the government does stay shut down for the next couple of weeks, we might not get as much official government data as we would like to get, but we will still get a set of economic data like the data that we got this morning. We'll get another round there, and we're going to get, of course, the state unemployment claims data as well. So they're going to have something to work with. And so, to us, it's ultimately going to be the totality of whatever they have in hand that will lead them to decide what to do in December.
Mike Apin, we've got the earnings. That's what we can go on, and we can talk to corporate executives. And we've spoken to a few already this morning. One bank executive came on the program and said things are okay, better than okay. There's no real damage in our loan book, and we expect reacceleration into the new year. This runs counter to the view that you have on the labour market. Can you just flesh out what you do expect to see in the labour market in the months to come?
Yeah, so there's certainly a tension in the data. The activity data is solid, AI-related spending, off the charts, upper income households doing well. You were emphasizing that in the previous segment. But the labor market data looks different. So our view is we're maybe a third of the way through the process of firms passing tariffs onto the consumer. So that's going to extend at least into the first quarter of next year. While that's happening, I think there'll be great reluctance to hire. We've seen that. The low hire, low fire labor market, the ADP report's very consistent with that. So while that's going on, we think the unemployment rate creeps higher. And we have the federal workers who took the early retirement package will be rolling off payrolls in October to the tune of about 150,000. So we think the unemployment rate could finish this year, around 4.5, 4.6. And if that's, it's not a meaningfully higher move, that's still a very low unemployment rate, but the direction of that move, I think, is enough for a Fed chair who says he's now a little more data dependent to say, let's take another step. So modest deterioration, modest continued cooling is what we think that message will be out of the labor market.
Forgive me for referencing your old colleagues. I want to talk about Bank of America just a little bit. I want to talk about what Brian Moynihan's going to be discussing later on this morning. He's talking about less labor-intensive revenue growth. And I wonder if we need to focus on less labor-intensive GDP growth. And I just wonder what that means for the Federal Reserve. And I'm going to get to what it means for the bond market too, because I don't know if fixed income should trade on the jobs numbers or GDP. What's it going to mean for the Federal Reserve in the quarters to come?
Well, this is also part of the fog story. This rolling in is a difficult thing to understand and manage in real time. I'm not sure in the short run it changes their thinking all that much. It'll have an implication on the labor market. If it's a supply-side productivity-driven story, it'll also be something that brings inflation down, right? So that it would reinforce I'll use the T word, the transitory inflation story. It would reinforce that. I think it would give you more confidence that inflation should be coming back down. And if anything, it would leave this kind of low dynamic labor market in place. I think both of those would say the Fed will have a gradual easing bias.
This has market consequences, of course.
Yes.
If you look at payrolls, there should be some kind of loose relationship between what happens with jobs and what happens with earnings. But this year, at least, we've managed to have a massive step down in jobs growth, and earnings growth has been absolutely fantastic. So equity land can ignore what happens with jobs. Can the bond market? What should the bond market trade on, jobs or GDP?
Well, the bond market typically trades on the Fed. So if the Fed is going to continue to lower its policy rate, then you would expect the bond market to trade in kind. Now, we all know that the bond market is priced for a very gradual easing of policy. The issue, though, is if the Fed delivers on what the market forwards are telling you today about the path of Fed policy, it's not as if the market forwards are just going to sit there and shrug their shoulders. They're going to move. And that's the typical behavior in the bond market. When the Fed follows the forwards don't just sit there. They keep moving in that same direction. So from our vantage point, if the Fed delivers an easing cycle in line with what Mike believes and in line with close to what the market forwards are pricing, the forwards are going to keep moving. And that's going to continue to weigh on bond yields. Already we have a 10-year yield right around 4%. We're the only house on the street that thought that would happen this year. So as the Fed continues to deliver, we do think that bond yields will continue to fall.
At what point are you starting to get more concerned about longer-term inflation and a longer-term pushback in U.S. Treasuries? I'm looking right now, Mike pointed out, Michael McKee, parsing through the auction refunding announcement, pointing out that they do plan to increase their T-bills and their low duration instruments. And there's this feeling that the Fed's going to monetize that. The Fed's going to increasingly buy that debt, call it whatever you will, in order to keep rates low while also pegging rates to a fairly low level. At what point does that pose a risk to longer-term treasuries and the potential for this to backfire in terms of some investor appetite?
Yeah, I think you're talking about the bond vigilantes that show up every now and again and typically lose money at the end of the day. You know, from my vantage point, we're going to have to see it in the data. Okay, if the Fed is lowering interest rates and inflation is moving higher, that would be the type of environment that I think would get bond investors very, very nervous. We're not really seeing that, right? We're seeing a committee that is divided on what to do in this inflationary environment. But if the inflationary environment turns out as we're forecasting, people should be very relaxed about owning high-quality duration in the bond market. And by the way, just on the Treasury refunding that happened this morning, that's very much in line with our projections, not just for this refunding, but for the next several refundings. We don't believe that the U.S. Treasury is going to increase their coupon issuance until February of 2027. I mean, for all intents and purposes, that's a lifetime away, and a lot of things will happen between now and then. So we don't really see an issuance problem for the investor base and for the bond market.
Mike, I'm just wondering, what's the Fed's mandate right now? Because if the mandate is low unemployment, then right now you could make an argument that maybe it is a positive thing for them to ease. But if it's for financial stability and the idea of inflation, asset price inflation will at some point trickle into the real economy, especially in AI and energy costs and some of these other kinds of issues. How do you square whether they're potentially adding fuel to the fire?
Well, and they're risking that, right? They are taking out insurance right now against what they see as downside risk to employment. And insurance comes at a cost. And that cost is what you just mentioned, the risk of higher inflation over time, that you're a more inflation-tolerant Fed, or you fuel animal spirits in asset markets. But Powell has said many times, we do not have good choices right now. Right, so they think risks are higher to the unemployment rate, to the upside in inflation, and there are concerns about animal spirits in financial markets. So they're taking out insurance against the labor market. They're betting that the cost of that won't materialize, but that's what markets and investors are concerned about.
Matt, can we finish on the FX market? Bit of dollar strength's come back in the last 5 days. How does your medium-term view stack up with your short-term view on the US dollar?
Indeed, yeah. So we came into this year very bearish on the dollar. We held that view until last week. So given what we're seeing from the committee at this moment in time, in the absence of a full set of economic data, we decided to peel back on that view temporarily. It's a tactical adjustment in what we think will be a trend that extends into 2026. It doesn't have to play out that way. One of the things that we're debating as a House today alongside my colleagues in economics is, what does 2026 and 2027 look like? That can be a game changer for the US dollar. We're still debating that. But in the meantime, if the Fed continues to cut rates, the dollar should have a little bit more room to move lower before possibly swinging higher in the second half of next year.
Good timing to back out. I'm giving you a victory lap. It's good to see you. Thanks for dropping by. Thank you, sir. Matt Horn back there alongside Michael Gapin. Just getting two headlines from McDonald's that I want to bring to you. And it's slightly disturbing about the condition of the economy right now. McDonald's saying lower income traffic fell nearly double digits. I'll read that again. Lower income traffic fell nearly double digits, and they see the consumer pressure continuing into 2026.
This is what we continue to see from a lot of these fast casual restaurants. We saw a similar dynamic, although less severe possibly, at Cava, Chipotle. The fact that McDonald's is seeing such a bifurcation with lower income consumers speaks to this K-shaped economy that everyone keeps talking about. How do you address that? We keep going back to that. Will a Fed rate cut really help that, or will it eventually just make it that much bigger?
The arc of earnings season is going to put additional focus on this story. We've moved on from big tech. We've moved on from big finance. The focus now is on this story. In 2 weeks' time, Target reports. 2 weeks tomorrow, Walmart. And that's where another spotlight's going to drop on the condition of the US consumer. Let's get you an update on stories elsewhere this morning. For your Bloomberg Brief and your News Worldwide, here's Yahara. Hey, Yahara.
Hi, John. ADP's monthly employment data shows U.S. companies added 42,000 jobs in October, coming in above the median estimate of 30,000. Of those, 33,000 were in the services sector, and the remaining 9,000 were goods-producing jobs. While the figures are tempering some concerns of a deterioration in the labor market, the modest increase still points to a general softening. Meanwhile, shares of AMD are falling nearly 2% in the pre-market. The main competitor to NVIDIA in the AI chip market failed to impress investors with its revenue forecast. The bar was high after AMD's shares had more than doubled this year heading into the report. And Amazon has sent a cease and desist letter to Perplexity demanding that the search startup stop allowing its AI browser agents Comet to make purchases online for users. Amazon accuses Perplexity of committing computer fraud by failing to disclose when its AI agent is shopping on a user's behalf. Perplexity says Amazon is bullying a smaller competitor. That's your Bloomberg Brief. John?
Yahara, thank you. We'll see you in just a moment. Up next on the program, we'll set you up for the day ahead. Plus, we'll get you some morning movers. Humana down as the company keeps its full-year guidance unchanged. That stock is down by 4%.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
This was a big turnout, and I think it reflects the frustration of the New York City voters, which Zoran Mamdani spoke very effectively to. He has said, I have my goals, I want to achieve them, but I'm wide open on how to do that. And that's an opening, I think, for business expertise to help him figure this out.
That was Catherine Wilde of the Partnership for New York City, following Zoran Mamdani's tremendous victory in the last 24 hours, becoming the mayor of New York, mayor-elect, I should say. Equity futures on the S&P 500 look like this morning. Equity futures positive by 0.1%. Likewise on the Nasdaq. The opening about 40 minutes away. So let's get you some morning movers. Let's cross back over to Yahira for more. Hey, Yahira.
Hi, John. Humana earnings just out, and shares are falling more than 4% now in the pre-market after it issued a disappointing earnings outlook. After the insurer beat profit estimates, but did not boost guidance, a move Bloomberg Intelligence called perplexing. It is also warning about rising medical costs, rising more than analysts had anticipating. So that is also hitting shares this morning. Meanwhile, we move on to the AI server maker Supermicro Computers, now down more than 7% after issuing a disappointing earnings forecast. The CEO saying that competition remains intense, so they are cutting prices and investing more in order to win more new business. But that is hitting margins and hitting the stock this morning. And we end on Pinterest. Those shares are plunging more than 18% now in the pre-market after offering a disappointing holiday outlook. The company, which makes most of its money from ads and is leaning heavily into AI, just isn't seeing the ad dollars coming in as quickly as investors had hoped. John?
Yahira, thank you. Thanks for this morning. As we count you down to that opening bell, here's the week ahead and the day ahead at 10 a.m. Eastern Time. More data, ISM services, and the big event, a Supreme Court hearing on President Trump's tariff agenda. 1 p.m. later on this afternoon, the president delivering remarks in Miami. After the closing bell, earnings from Qualcomm. Thursday, a Bank of England rate decision and a slew of Fed speak. On Friday, heading into the weekend, you, Mitch, consumer sentiment. This morning, as I say, the main event, the Supreme Court hearing arguments over President Donald Trump's tariff agenda. Bloomberg's Tyler Kendall is standing by with more. Tyler, just hearing that Ambassador Greer will be there.
Right. Economic agenda. The court today is hearing arguments aimed at answering 2 questions. 1, does President Trump have the legal authority to impose tariffs through IEEPA, the International Emergency Economic Powers Act? And 2, if he does, can he do so without congressional approval? Because as the emergency powers stand, the president can take action against foreign nations in times of national emergencies, but the administration has never used tariffs in this way before. But this administration has. In fact, 60% of the tariffs imposed so far this term are are done so through IEPA. And our analysts at Bloomberg Economics say there are going to be big economic impacts either way. If there is a sweeping judgment against the administration, the average U.S. effective tariff rate could fall from 14.5% to 6.5%, and the White House could be on the hook for more than $140 billion in tariff refunds. Now, John, it is very clear that both sides are gearing up just in case this plays out against the administration. Take, for example, how we're seeing the White House impose other tariff authorities, such as Section 232, for those more broad-sweeping sector-specific tariffs on the basis of national security concerns.
Tyler, as the administration prepares potentially to have to go other avenues to enact their tariff policy, what do we expect them to do in the meantime? When will we get this final judgment? Can they enact those tariff policies before the Supreme Court rules?
Well, Anne-Marie, the fact that the Supreme Court is hearing this on an unusually aggressive schedule does signal to us that we are likely to see this issue resolved quickly, perhaps by the end of the year. Though we should note at this point, the Supreme Court has weighed in before on issues when it's an emergency basis related to the administration, but this is the first time that they're actually weighing in on the legality of one of President Trump's policies. While we wait for this to play out, we know that the administration has already pursued other tariff actions. Section 232 still waiting for some of those sector-specific tariffs to be enacted, such as those against the chip industry, but then other investigations that have been launched, including Section 301 that looks into unfair trade practices. We saw this under the first Trump administration against China around allegations of violating IP protections, for example. And the administration just launched an investigation over China's failed purchases of U.S. agricultural products under the Phase 1 trade agreement. Now, President Trump says that investigation is off, but that doesn't mean the administration isn't going to start to put forward other investigations to bolster their tariff position.
Tyler Kendall with the latest. Tyler, thank you. Tyler, we're tracking that story down in Washington, D.C. throughout this morning. In the banking world, we talk about too big to fail. In the policy world, is this too big to strike down?
Well, that's going to be a question for the Supreme Court. Are they going to be able to take that into consideration? Because ultimately, they're going to be testing the presidential authority and autonomy over the tariff structure and national security of the United States. It's a pretty big issue and sets a pretty big precedent.
This is the argument the Treasury Secretary and others have made. We're in the middle of these negotiations. We've already brought in money. You cannot strike this down. Supreme Court may then just take more of a nuanced approach. Some can stay, some have to go.
We'll be tracking that story later on today, of course. Coming up tomorrow, Seema Shah of Principal Asset Management, Bob Dole of Crossmark Global Investments. We'll speak to the former Kansas City Fed President, Esther George, and Brad Rogoff of Barclays. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Day 4 at the WTA Finals in Riyadh. Aryna Sabalenka had to dig deep to get past Jessica Pegula in 3 sets. The US Open champ fought back from a breakdown before closing it out 6-3 in the decider. Earlier, Coco Gauff kept her hopes of making the Final Four alive as she took out Jasmine Paolini. The American will have to beat Aryna Sabalenka on Thursday to reach the Final Four.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
In such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
That was the correction? 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
The sell-off in big tech easing this morning as investors pulled back from the biggest winners of the AI boom.
Meanwhile, Wall Street bonuses are set to jump for the second year. Market volatility fueling trading demand, and deal-making makes a comeback.
Plus, fresh momentum. Democrats score big wins in key races across the country with Zoran Mamdani making history right here in New York City.
I love that. The big sell-off that didn't happen was 1% and a little bit of change.
Okay.
Some of the tech giants, though, still in pain this morning. Yesterday was Palantir that had earnings that were fine, but the stock sell-off. Today was AMD, though not as violent as we saw for Palantir. Shares down 2.2% in the pre-market. It was a mixed report. It disappointed investors. Shares had soared 58% in October. The CEO reiterated that the market for AI processors would generate more than $500 billion a year, Matt, but that wasn't enough for a rally.
Yeah, no, they beat expectations. Even the outlook beat what analysts were looking for, and yet investors were disappointed. McDonald's is bucking the trend we've seen from fast food earnings. It reported faster than expected sales growth as diners spend more money in each visit. However, lower income traffic fell by nearly double digits. You can see McDonald's right now up 1.4% in the pre-market.
Back to the big tech earnings with AMD disappointing, even though some of its figures were strong. Bloomberg's Ryan Vasletica joins from and covers the sector and joins us from Chicago. Ryan, great to see you this morning. AMD, is this just another example of expectations very high for reporting?
Good morning. Thank you for having me. So yeah, I would just note that going into this report over the month of October was the best month for these stocks since early 2001. So obviously that's a huge run up in the shares, and it's hard to imagine what kind of results they could have delivered that would have extended gains from there. Like you said, the report was pretty strong, the outlook was pretty strong, but following a move like that, people want to call this some kind of basic buy the rumor, sell the news sort of thing. I think that would apply here. These were pretty strong results, but like you said, the stock just moved up so dramatically that maybe just a little bit of profit taking.
Yeah, I mean, I was reading the results yesterday on the close and the outlook. They expect $9.3 to $9.5 billion in revenue. The estimate was only for 9.2. So it's not like analysts had been predicting more growth. However, they're growing more slowly than their much bigger rival, NVIDIA, and that seems to be the concern, right?
Yeah, that is a big concern. NVIDIA still has a huge percent of the market share here. I think it's over 90%, so they are by far the dominant player. They continue to announce all kinds of major deals. Their technology is widely seen as better. I mean, AMD is catching up in some critical ways, and I know a lot of the big chip customers are hoping to have multiple options to choose from, but right now it is still NVIDIA's market for the most part. AMD is catching up a little bit. You know, the results are getting stronger. They are pointing to some pretty good growth prospects ahead. I think if you're looking at the stock and wondering, is this the end of the AI trade, that is absolutely not the case. But certainly, you know, people are pulling back a little bit here. People continue to see better prospects in NVIDIA. I believe NVIDIA's multiple is lower. So there's a lot that you would probably put into that column over AMD's.
All right, Ryan, thanks so much for joining us. Ryan Vlastelica there, talking tech. Turning to consumer earnings. It's a name that you have to say over and over again.
Thank you,
Vlastelica. And when you do get it right,
sticks.
You'll never forget it. McDonald's reporting faster than expected sales growth in the third quarter at the same time as Cava cuts its full-year sales targets. Let's get a read on two restaurants with Bloomberg's market correspondent Nora Melinda. And Nora, it's not just Cava. Like, a bunch of these fast casual chains have really disappointed, while the OG McDonald's seems to be beating.
I liked that fast casual thing you did there. We are seeing a bifurcation between the fast casual and the fast food restaurants, because there clearly is a difference here. You're seeing the likes of Chipotle, of course, Cava, as you're mentioning here, they're struggling here. I mean, of course, you're seeing a lot of consumers that are being very tight with their wallets, and they're really picky about where they want to spend their money right now. So you are seeing companies like McDonald's being a beneficiary here, but it is important to note that even though McDonald's is reporting earnings that people are happy about, they also did have to use a lot of deals and discounts to entice buyers. So you are seeing a lot of people running toward the lower end, what's affordable right now, and trying not to spend too much time on the fast casual restaurants that tend to be a little bit pricier.
I say there was a headline coming out from McDonald's earnings call saying lower income traffic fell nearly double digits. So what's good for McDonald's isn't necessarily a good sign for the consumer.
Absolutely. I mean, we're seeing a time period where, of course, we are seeing a lack of economic data. So people are really parsing earnings to get a read of what the U.S. consumer is doing right now and how they're holding up in this environment. But if you take a look at the earnings that we've seen from a lot of these consumers, these consumer companies, we are seeing a consumer that is very stretched right now. They're grappling with high costs that, of course, tariffs are also filtering into the equation here. So you're seeing people running toward whatever restaurant makes sense for them. And of course, I'm sure some people cooking at home.
It is just fascinating to watch what's going on in the restaurant space, and to see McDonald's doing this well as there's a boom in these GLP-1 drugs, right? Because, you know, if it's not lower income that's eating there, people with higher incomes are avoiding that kind of food. Like, who is going to McDonald's?
Right. Well, I mean, people are clearly going there for the deals and discounts, and that's what they're pointing out here. So you can get a burger and then, add one for $1. So they're finding ways to make it cheap, enticing, more affordable for all ranges right now. And as you mentioned, you know, the lower income consumer is what we typically think of when we think about a company like McDonald's.
Yeah.
All right, Nora, thank you very much. Maybe some people are migrating down to McDonald's and it's not just lower consumer anymore. Maybe someone who would have gone to Cava is now going.
I just feel like if you eat McDonald's in my car, you're never getting a ride with me again, right? And then I have to dry clean everything. Yeah, it just stays forever.
How about like a nice tuna fish sandwich
there
in the back of your car?
You're
cool
with
with that?
instead. Okay.
Nora, thank you so much. Nora Melinda from our markets team. Now, from Main Street to Wall Street, bonuses are expected to jump for the second year in a row. Compensation consultant Johnson Associates says market volatility and M&A are fueling the bumps. Here with us now is Bloomberg Finance editor Sally Bakewell. Sally, I guess not a surprise, right? Just given how strong the earnings were for especially the investment banks of these banking giants.
Right. We had a sense that some good news was coming because most of the banks, the investment banks, they actually posted third quarter results for stock trading that were their best for the third quarter ever. And most of them topped analyst expectations, notching about 15 billion of revenue in that quarter. The clear winner here is stock traders. They have benefited, of course, from the volatility set off by Trump's tariff war, but also by the more than 30% rise of the S&P 500, helped by the sort of optimism surrounding technology and surrounding AI. But across the board, bonuses were generally up for debt underwriting, for wealth management, and for M&A, as you know, Trump's sort of more relaxed regulatory approach has led to a lot of expectations that the deal boom is coming back.
Yeah, so this is a lot of it down to lower regulations. People have the courage to go into this market and make acquisitions. Who's doing poorly? Is anybody missing out?
Well, the retail and the commercial banking, the bankers there, they're expected to see bonuses flat or to 5% or 5% up. So I think obviously there is some, it's not completely optimistic and rosy across the board, but it is still a little bit of a jump. And, at Johnson Associates, they say that next year, enjoy the good times while you can, because next year, if the economy slows, this momentum might not be so good.
This report from Johnson Associates also touched on AI. It does feel like a time, Sally, when companies are maybe just using it as an excuse to trim down their workforce, saying it's not because we want to preserve margins and that's why you're losing your job. Oh, it's just technological changes. What did it talk about how these banks are thinking about implementing the technology and what that means to their workforce?
Well, most of the banks have said that, AI is going to revolutionize how they do business, from coding to their workforces. But there are, considerations here of what it does mean for jobs. A lot of banks have said that actually they still need the human element and the human component, and in fact a lot of them haven't slowed down hiring because they are trying to expand technology and make sure they have the AI experts there in the field to able to help them.
Sally, thank you so much for joining us on this story. That is Bloomberg's Sally Bakewell. And for more on the pay report, Chris Connors of Johnson Associates will be joining us in the next hour. All right, check on futures this morning. They started out negative after the worst day for the S&P 500 in nearly a month yesterday. Now we are basically unchanged. We are unchanged, flat completely on the NASDAQ 100, slightly higher on S&P 500 futures. The Russell 2000, that has a much better day, up 0.3%. After everybody was warning about valuations, I guess valuations don't matter today, Matt.
Yeah, no, maybe less. Right? You got to buy the dip.
Maybe like 1% was good enough to buy the dip. What a huge dip it was.
Let's take a look at some of the movers on our radar this morning. Bank America laid out new financial targets, forecasting that earnings per share will rise at least 12% over the next several years. And Bank America is now moved into the bottom slot of all the big U.S. banks over the last 5 years. If you run your comp function, you'll see B of A has done the worst.
Speaking of companies that are struggling compared to their peers, Novo Nordisk again cut its forecast. This was the fourth time this year they've seen lagging sales of Wegovy and Ozempic, which speaks to why they are fighting over Metsera versus Pfizer.
I just don't understand. There's so many people who need this.
I know. Well,
there's 100 million people who are obese in this country alone.
Well, remember also when Novo Nordisk had kind of a monopoly. They were supporting the Danish economy. They were doing so well. It's been such a change in fortune with the competition.
And yet, and it costs multiples more than signing up for ChatGPT, right? And yet OpenAI has a much bigger valuation. Anyway, Lyft riders in the U.S. will be able to earn United Airlines miles starting today. Miles can be used to redeem Lyft rides starting next year, and as a result, or maybe just coincidentally, we see both of these shares rise.
Good luck, though, getting on an airplane that isn't horribly delayed with those Lyft points. All right, coming up, a historic victory for Zohran Mamdani here in New York City. We're live from City Hall. That's coming up next. You're watching Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Getting out of high interest, look at what's making headlines around the world. Democrats notched their biggest wins since President Trump's return. Of course, it was the first election day since then. But they had a decisive victory in Virginia, where Abigail Spanberger reclaimed the governor's mansion on a promise to steady the economy and end the longest government shutdown in history. Not sure how she can pitch in there, but her win, rooted in Virginia's federal worker belt, delivered the clearest rebuke yet to Trump's agenda. Democrats also won competitive down-ballot races in Pennsylvania and Georgia. In New Jersey, Democrat Mikey Sherrill becomes the 57th New Jersey governor, defeating Jack Ciattarelli, a former state lawmaker, making his third bid for governor. The Navy veteran and former prosecutor replaces term-limited Phil Murphy after a campaign focused on affordability and infrastructure, while Ciattarelli leaned on Trump's support and promises of tax cuts. Zohran Mamdani, a 34-year-old Democratic socialist from Queens, was elected New York's 111th mayor. He is the city's first Muslim and first South Asian leader. He defeated Andrew Cuomo with 50.4% of the vote. So we got more than half of what was the biggest turnout in half a century, vowing to tackle affordability with rent freezes, free buses, and higher taxes on the rich.
New York, tonight you have delivered a mandate for change, a mandate for a new kind of politics, a mandate for a city we can afford, and a mandate for a government that delivers exactly that.
For more on the New York City mayoral election, we are now joined by Bloomberg's Miles Miller, who is with us from City Hall in New York. Miles, was this the mandate that Zohran Mamdani was looking for? And if so, how does that change how he governs as mayor?
Yeah, when I spoke with him yesterday, he told me that any win, any victory would be a mandate, but this was pretty decisive, right? It was a 9-point edge on Andrew Cuomo, and this was a race that was really defined by two different visions. One, a vision about affordability for New Yorkers, and another one which was just basically running against Zohran Mamdani. That was Andrew Cuomo's vision. What we know is that he believes he has this mandate for change. How will he get it done? Well, he's already said this morning he is looking at working with Albany to get taxes raised on the wealthiest New Yorkers, and in addition to that, raising the corporate tax rate. Right now at 7.25%. He's saying raise that to 11.5%. It'll give $9 billion to his biggest proposals: free buses, universal child care, and a freeze on the rent.
So is anyone moving out of New York, Miles? I mean, so many on the right, even in the center, were so angry that Zohran Mamdani was getting so much attention, and they were saying he was going to ruin New York City. Is everything going to grind to a halt here?
You know, it is a different day in New York when you've got Bill Ackman congratulating Mamdani on his win and saying he wants to do anything he can to help make him successful in New York. You've got Jane Fraser and Jamie Dimon saying that they want to work with him on transit and on affordable housing. He's got to build a broad-based coalition to come here to City Hall with him. He'll occupy that office just down the hall in about 2 months' time. And he's got to get a transition team together that reflects New York City. Yes, his labor base. Yes, his DSA, Democratic Socialist base, but also Wall Street and business. Bring them to the fold and figure out how they can work together, because these proposals have to be funded some way.
In Mamdani's victory speech, he spoke directly to the president. He said, "President Trump, as I know you are listening." And President Trump likely was listening. In the middle of that speech, he put out on Truth Social in all caps, "And so it begins." What does this set up for a tension between the President of the United States and the incoming mayor of New York City?
Yeah, you know, it's actually interesting. Let me take you back to when Joe Biden was president, right? He did not have a good relationship with Eric Adams. And so what happened? There was the issue with the migrant crisis happening here. Fast forward to this mayoral race. Andrew Cuomo was making the case that he was the only one who could fight Donald Trump. Mamdani and Donald Trump are going to go head-to-head, surely, because Donald Trump is saying he's not going to give federal funds to the city. That likely won't happen. There'll be lawsuits and all of that. But you got to think about what Mamdani has also said. Trump, in 2024, you ran on an affordability message. Can we work together on this? Can we work together on grocery stores or groceries being cheaper? Can we work together on, getting the costs down? He's going to try to figure out ways to work with Trump, but of course it's going to be a big fight when you talk about National Guard and, immigration rates here in the city, something he won't stand for because that is his broad-based coalition that propelled him to be mayor-elect today.
All right, Miles, great coverage. As usual, Miles Miller there down at City Hall. Catch Bloomberg's special election coverage today, kicking off at 12 p.m. New York time on Bloomberg Radio and TV. Coming up, Nancy Tangler trimmed Google and added Palantir to her portfolio. We'll discuss the AI trade with her next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on.
Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Record valuations, a weakening labor market, dysfunction in Washington, D.C., they were all blamed for weighing on investor sentiment, at least for one day. This week's sell-off, which again is now at 1%, comes as 3/4 of the S&P 500 have reported earnings with a positive surprise ratio of 82%, on track for the best quarter since 2021. Let's bring in Lafleur Tangler, CEO and CIO, Nancy Tangler. Nancy, was there anything to yesterday, a 1% sell-off? Because the narrative was we're finally worried about valuations again.
Yeah. No, I mean, valuations are high, so I don't want to dismiss that. But this isn't a strong earnings season. We've seen really strong guidance raises from the companies that we own. So I think that's where investors should be focused. But remember, you've got the algorithms reading the headlines, and so you get these sharp moves. I wouldn't mind a modest correction, but I don't think the AI trade is over, and I don't think that valuations are as wacky as they were in the 1990s when I was not only alive, but managing money.
I was there too, Nancy. Yeah. Working at Tucker Anthony as an intern on the Bloomberg terminal. So where do you see the most value now? I mean, you have piled into the best performers already, and I imagine you're not going to continue allocating to these mega cap tech stocks. So if you have fresh money, if you have new money now in November of 2025, where are you putting it?
Yeah, well, we've broadened out. So you teased that we trimmed back Google, which we did, and we added to Palantir, which we actually own at much lower levels. But we also added a position in Ulta. We exited CMG or Chipotle a while ago, thank goodness. And we've added to names in the infrastructure space like Quanta Services, Eaton. We own a little bit of Emerson, which isn't quite as sexy as those names, but we've done that over time as we have in financials, broadening out just from the major financial banks like Goldman Sachs and JP Morgan to names over the last couple of years like American Express and BAM. So we do like a number of names, but our real focus, as you know, has been the old economy companies that are embracing new technology. So Walmart's been our poster child. Raytheon is a close second, embracing AI and other cloud and digital solutions. But then the suppliers of the picks and shovels. And while they've run, we do think there's still a trade there for the next 2 to 3 years.
Hey, Nancy, only about a minute here, but I'm just curious on the Palantir trade. Did you do that before the sell-off? And if not, did you add on during the sell-off that we saw yesterday?
We have a full position. We added to it. I mean, our original position is somewhere in the 70 range. We added to it at 175. So even with the sell-off, we're okay. I mean, I think that's one of the things that you have to do as an investor is use volatility as your friend if you're looking at companies you want to own for the long term, and Palantir is certainly one of those.
All right, Nancy, we're going to keep you with us. Nancy Tangler staying with us through the open. It looks like we're going to recover a bit today after the massive 80-point sell-off on the S&P 500 yesterday. Futures right now unchanged at 67.99. NASDAQ futures down a little bit more, a drop of 0.1%. And you can see that the small caps are coming back. So take a look at the SMID trade today. The opening bell right here on Bloomberg next.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are doing very little, although not falling by a lot. So S&P futures down 0.03%. NASDAQ futures down 0.1%. Of course, yesterday we saw investors trimming stocks that had high valuations. Those are the big mega cap tech stocks that really move the indexes, and the question was, like, how far could this go? And I guess the answer today is not very far. You have HP ringing the bell down at the New York Stock Exchange, which has really underperformed the benchmark index. It's up only 35% over the past 5 years, but at least you haven't lost money there. Henry Schein, also a big underperformer. Solutions for healthcare professionals. They make like dental stuff, but yesterday the stock was up 10% because they had a good third quarter and they made a deal with KKR that the private equity company could take up to a 19.9% stake in Henry Schein. So that's pretty exciting.
Yeah, it's very exciting. It's like my favorite part of private equity when they do super boring stuff like
boring is
dental
better.
care. Boring is beautiful, exactly. Here's something a little less boring this morning.
I think bald. Bald is beautiful, is what they
yes,
say.
They do indeed say that, Matt. Anyway, away from that, AMD shares falling only just over 1.5%. It had a mixed earnings report that disappointed investors, but the narrative for this one, much like Palantir, was just that the bar was high. They soared 58% in October, so realistically, how could they succeed that level of rally? But again, only down 2%. It's certainly not doom and gloom, Matt.
No, there is some if you look for it in this market, but McDonald's is not one place where you're finding it today. Bucking the trend we've seen from fast casual earnings. You've seen stocks like Chipotle and Cava get crushed. But McDonald's is up. Okay, it's only 2%, but faster than expected sales growth as diners there spend more per visit. They do say that lower income traffic is down sharply. I wonder who else is going to McDonald's, I guess.
Well, they're not going to Shake Shack, so maybe those people
yeah,
are
they're
McDonald's
not going
now,
to Shake Shack. They're not going to Cava. They're not going to Chipotle, at least not in the way that investors want to see.
Yeah.
So I guess they're getting fries and a Big Mac. We're back with Laffer Tangler, CEO and CIO, Nancy Tangler. Nancy, what do you think about the consumer? I mean, we hear so much about this K-shaped economy. I know that the top 10% are spending like all the money. But in a country with 42 million people on food stamps, is the U.S. consumer in trouble?
Yeah, that is a big number, isn't it, Matt? And I was sort of surprised when that was announced. I should know that, but I didn't. No, the consumer is still working. The low-end consumer in all of these environments, like inflation and a government shutdown and poor monetary and fiscal policy, they get hammered the hardest. I grew up in a single-income home, during the 70s, and it was brutal. And that is unfortunate because that's the group we should be helping. But in terms of overall consumer, no, I think it actually looks decent. Balance sheets are very strong. The baby boomers are the wealthiest generation, I think, ever in the history of the country. So there is a lot to hate, but there's also a lot to like. And let's not forget that the OB3, let's call it, bill will have an effect on the consumer of about $150 billion in increased tax returns, or tax refunds. So if you look at, it was retroactive back to January, but payroll taxes didn't change. So as people are filing, no tax on tips, child tax credit, no tax on overtime, seniors in some cases are going to get an adjustment. That will drive consumer spending in the first quarter of next year. So I think if we can hang on, that will be a tailwind.
Nancy, it hasn't just been low-income consumers, though, that have been flagged by some of these consumer companies. Your Chipotle talk about this, Shake Shack, and yesterday Kava, that it's younger consumers, that it's Gen Z with an unemployment rate that's twice the national average and facing headwinds. Is there some degree where that's a leading indicator that it begins with youth because they're the last to be hired and the first to be hired, and it could kind of trickle on from there, that you could see some other impacts for the consumer if at the moment the younger cohort isn't spending?
Yeah, no, I do think that's a concern, Danny. And if you look at the effects of AI, we heard yesterday a number of stories that AI was costing jobs, and I was surprised that anyone was surprised by that. It's the entry level jobs. It's the folks that are just getting out of school, and that's how it was when I got out of college as well. I went and applied at a major construction firm and engineering firm in San Francisco, and they gave me a typing test. I went back 20 years later and I was managing all the wealth for the Bechtel Corporation and the Bechtel family. But the point was that you had to get creative, and that is a concern. But the younger cohort, I think, also eats out significantly more than the average family. And so McDonald's, which we own, is an example of a management team that has made the pivot, which Chipotle did not, much as Walmart did when Target didn't. And so you saw higher income customers going to Walmart while Target was floundering around with strategy and a CEO who was definitely not up to the job.
Nancy, can I ask about the Fed? Last week, Jerome Powell sounded more hawkish, said you can't guarantee a December cut. And I noticed that the Treasury Secretary this morning, Scott Bessent, posted jobs are booming. Inflation is falling. Why on earth would the Fed cut into an economy where jobs are booming and inflation is falling? That doesn't make any sense, does it?
No, Matt. And I think, listen, I've been critical of the Fed. I just don't. I feel like they have been wrong at every turning point. I could have made a case that you didn't need to cut again this last time. I could also make a case you did. But the fact is that if what Scott Bessent is saying is in fact true, then of course you don't need to cut. We had 3% inflation and a 5% Fed funds rate in the 1990s. And what drove economic growth was productivity. And as you know, I've drawn the analogy for the last 3 years to the 90s, and I think we are there. We will continue to see productivity improve. And because the job numbers were overstated by 1.7 million or so over the last 2 years, productivity was actually better than reported. So I think, I think that's kind of a war of words, and I don't even know what to say about that.
Maybe jobs aren't booming.
Maybe they aren't.
I mean, he's the Treasury Secretary, so he should have a pretty darn good view of the U.S. economy, right? If the Treasury Secretary says jobs are booming, what are we all freaked out about?
Well, Trump also says that the stock market's going to continue to hit record high after record high, so maybe there is no reason to freak out. Nancy, we won't have you respond to that. You are diplomatic, as always. Loeffler Tangler, CEO and CIO. Nancy Tangler, thank you for joining us this morning. All right, let's get a check on your equity market right now, just about 8 minutes into your trading session. breath has been very bad for this market, but we are looking at a Bank of America stock that is falling this morning. It gave some corporate updates today, and Brian Moynihan has been speaking at a Banker Investor Day saying that consumers continue to spend, that it is up 5% year to date, and also sees AI efficiencies keeping headcount steady. It feels like that same thing of blaming AI for why you're not hiring people or maybe firing more people.
Right. Well, why wouldn't the consumer be spending with booming jobs and falling inflation? Coming up, Mountain launches its AI platform to instantly generate complete ads. We speak to Mark Douglas, the company's CEO, exclusively next. This is Bloomberg Open Interest.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Struggling to hold on to any sort of gain this morning, but it's better than, I guess, the losses and the 10 to 20% correction that the Wall Street CEOs called for yesterday. We are unchanged on both the S&P and NASDAQ 100 as the Russell 2000 outperforms. Let's get you some top calls this morning, some of the analyst action that we are focusing in on. First up, analysts are calling Pinterest quarter disappointing, to say the least. New tariffs, weaker ad spending, all of that weighing on its outlook. Rosenblatt cut the stock on fears that AI chatbots could invade Pinterest space, calling it a, quote, existential risk. Shares are off by almost 20%, a huge drop. Next up, Wall Street is weighing in on Trek's results. Analysts say that its forecast signals a costly reset for the decking company. Overhead costs climb back to pre-COVID levels. William Blair cut the stock on concerns of a marketing war, and Barclays warned of cracks in fundamentals. Also a huge drop for that company, down 28%. Finally, Arista Networks' softer margin forecast is drawing a sharp market reaction. That down 5.5%. Analysts though largely read it as a typical caution rather than weakness. Morgan Stanley called the results robust, yet noted that they may look muted next to faster AI hardware peers. Barclays pointed to broad-based strength and a typical conservative guide. Matt.
All right, interesting stuff. Can't believe Trex is getting hit so hard.
Very hard.
All right, Mountain is seeing price cuts this morning from Needham and Citizens JMP after its third quarter earnings report. The stock is down 7% since the IPO, but they posted record results. Joining us to help explain what's going on with the stock market is Mark Douglas, CEO of Mountain, and obviously your focus, your strengths are technology and coding, AI. So not an analyst, but what are investors not understanding about your growth?
Well, as you said, we've grown an average of 39% year over year for the last 6 quarters. We had record EBITDA, adjusted EBITDA margins, our first quarter in 4 years of GAAP profitability, and gross margins approaching 80%. So I think the company is growing quickly. It's very healthy. When you look at kind of price targets, one thing to keep in mind, there have been some adjustments to price targets. They've been adjusted to, I think, in a range of the stock growing 80% to 120%. So the average consensus is stock price is going to double over the next couple of quarters. I think macro kind of valuations have adjusted a little bit, so the price targets have adjusted, but basically analysts are saying this is an incredible buy, and I think when you look at our growth, you know, we feel very, very confident.
Where are you squeezing the incremental dollar from in that record revenue growth? Is it getting more market share, or are the customers just willing to spend more with bigger budgets?
Well, both. So Mountain created the space we're in. So we created this concept of performance television, allowing any size business, small and medium-sized business, to come to TV and use it, streaming TV specifically, and use it like they do performance marketing on Meta or they do it on Google. And to really give you
basically aiming the ads at the people to whom they're most relevant.
Yeah, I mean, it's really simple. When you think of advertising as brand advertising, as performance advertising. Brand means you want awareness. Performance advertising means you want money. It's that simple. And so the biggest market for advertising is performance advertising. As search, social, now performance TV. We created the space. We're the fastest growing company in connected television, expanding margins. So I think the market will catch up. The stock right now is an incredible buy. And I think people, I'm hearing that from people actually.
Well, I wonder if people think maybe the company is a buy. I mean, you have this really cool new product, QuickFrame AI, which we're going to talk about.
Yeah.
But, what I hear is that, you know, the Mag 7, these guys have so much money. We hear they're doing deals without even having bankers and lawyers involved because they want to get it out there.
Yeah.
Are people calling you and saying, like, why don't we just take your company over?
Well, I have a lot of partnership discussions. I'm not in any M&A discussions, I can tell you that. But we are partnering across the industry, both with our performance TV platform and especially now with our AI, our creative AI platform.
QuickFrame.
That we just made. Yeah, QuickFrame. We just...
Explain it to us.
It's really simple. If you want to create a full professional quality 30-second commercial, you actually can't use a single AI model. You have to orchestrate multiple models together. So our generation times are not like 40 seconds. They're 10 minutes to orchestrate, often like 10 to 20 steps. But you get incredible quality video. Why that's so important, 97% of our customers have never advertised on TV before. So they need commercials. They need them to cost an order of magnitude less to create than it used to before AI. And we've introduced tools that allow them to do that. And the quality is actually incredible. We're partnered with Google, 11 Labs, and other companies on it. When we show them what we're doing with their own generative models, I think even they are kind of blown away.
What's the moat then? What's stopping Google, Adobe, Meta, any of these companies from just replicating the same thing you are with their in-house AI power?
Well, actually, I have no problem with them doing that. Our goal is to make sure our customers have access to inexpensive, very high quality, full 30-second quality videos, and that's why we're partnered with them. But again, if one of them can do everything we're doing to orchestrate models across, like we're using Sora and VO and 11 Labs in a single video, plus many other models that are not as well known. If any one of them can do that, great, as long as our customers get, the 97% of our customers get the solution they want. But we decided to take a leadership role in creating our own environment. We've traditionally always taken on the creative challenge because it's such a big part of our business.
Let me get your take on this, the AI promise, and will it deliver in terms of ROI, right?
Yeah.
You've been around, you've started a number of companies, you worked for Oracle, and Larry Ellison's done pretty well with this.
Yeah.
Is it worth the trillions that we're talking about investing? Are we going to get the return soon, or is it going to be like a 1999-2000 thing where it takes years and years for us to make this money?
I mean, it's probably somewhere in the middle. I think every investor in the world does invest trillions, and everyone gets a return. There's ultimately winners and losers, but obviously AI is having a vast impact on everyone's life already. Even on my earnings call yesterday, I have to assume some investors are going to read the AI summary of the transcript of the voice call. So you have to take all this into account. It's having a vast impact on our life. But I think
what about for you? I mean, you're a coder.
Yeah.
Are you using it?
Yeah, we are. We're using it across the company. So it turns one out of every two people in Mountain is a software engineer. So half the company's headcount. So it makes it like actually the whole company is software engineers because it more than doubles their productivity. It's really critical. We're using it also in our products. So we talked about the creative AI. Also, the key thing we do is we match consumers with brands they're going to love. And they see these brands they're going to love on the big screen in their home, on their television. And so we're using AI for the targeting, all the models to figure out who's the right consumer to see the ad, and which is really hard for smaller businesses. We're using it in the creative. We're using it in deciding where the ad should be placed. So across our entire business, as well as our own use in sales, marketing. So it's just kind of across everything. We're creative technology, and we're adopting technology.
I just want to know if any actors or film directors have called you upset that you're taking their jobs.
You know that Ryan Reynolds is their creative director.
Why is he not upset? He'd be like, it's literally taking his people's jobs.
Well, I think actually the AI is creating more actors because you don't have to be a good actor. We can take an image of you and turn you into a great actor.
Got it. So you just need to look the part now.
Yeah, but the way more to look at it is that when you lower the cost of creative, you actually create more demands. And so we have a network of creators that use QuickFrame. We call it QuickFrame Marketplace, and we're actually creating more demand for their services because they are often involved. When you want to create, you decide today you want a TV commercial, you still have a busy schedule all day. You'd rather still pay someone, can you do this for me? But rather than spending, thousands of dollars, now you can spend hundreds to get that creative using a platform like QuickFrame and using Mountain.
Well, I can't wait to see the QuickFrame Bloomberg Open Interest ad on its way. Mark, it's so wonderful to speak with you. Thanks for joining us. Mark Douglas of Mountain. Coming up on the show, the AI-fueled sell-off has Wall Street wondering if it's a blip or a bubble. The market action today would say blip. That's coming up next. You're watching Bloomberg Open Interest.
each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
A check on equities about 20 minutes into your trading day, and we have moved higher, up 0.25% for the NASDAQ. It outperforms up 1/3% after dropping more than the rest of the index yesterday. All the warnings that Palantir showed momentum can't continue and sustain itself. Well, it surely has this morning as the Russell 2000 outperforms. For more on the very short-lived tech wreck, let's bring in Bloomberg Tech co-host Ed Ludlow. Ed, I guess one corner where it's still asserting itself is post-AMD earnings, where AMD shares fall. Is this still a case of just very high expectations, but not necessarily a correction for AI-related stocks?
Yeah, I mean, it's just ticked into positive territory in the last 60 seconds. I don't know what you did, but we're up now 0.7%. I mean, that's exactly right. You go to their outlook for the current period, above consensus, not as high as the most bullish estimates. And a lot of people look at AMD and said, wow, from a news flow perspective or a deal flow perspective, you had an incredible quarter with these eye-wateringly large deals with OpenAI and Oracle and the Department of Energy. But that's not really showing up in the near-term growth outlook. And if you go back to the third quarter, where they also beat pretty handsomely, just as with Intel, they didn't necessarily beat or find that upside in AI chips that go into data centers. It was in their legacy businesses, processors for PC, CPU for servers, exactly the same story that Intel had. So everyone wants just to see a bit more immediately about what AMD is doing to take on NVIDIA.
And it's interesting that I get that AMD, as a smaller competitor, investors want to see it growing faster than the big kid on the block. But they still beat by so much. I mean, their outlook for revenue from 9.3 to 9.9 billion, I should say, is far higher than the estimate on the street for 9.2. So are you seeing this really across the tech universe that you cover, that investors just want to see more, even more than analysts are able to put out in terms of their estimates?
Yeah, I think in AMD's case in particular, not just the year-to-date gain, but even in the last 2 months, the stock has been on a terrific run. And so now we're up 0.5 percentage point, and it was slow to get there in reaction to last night's print. But these deals take time. When you talk about compute at the hundreds of megawatt or gigawatt scale, it's years of implementation, and the customer needs to stump up the money for it. That's not showing up in the earnings right now. And there is certainly this recognition, at least on BTech, we get it from the market's voices saying we're at risk of a two-speed economy now, where the technology sector is beating quite handsomely, but it's not enough to pave over the cracks elsewhere in the economy that is giving investors generally more worries. And you're showing Palantir down 4%. That valuation concern is particularly prevalent in software names, not necessarily in the hardware names.
Yeah, K-shaped economy for firms was Torsten Slok's note today. Bloomberg Tech's Ed Ludlow talking to us about AMD. We're seeing a comeback now for those shares after they fell in the after hours. Coming up next, Wilbur Ross discusses trade as the Supreme Court takes on the legality of Trump's IEEPA inaction for tariffs. Plus, BlackRock's quant unit enters its 4th decade. This is Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We are streaming live on YouTube, and I'm told if you go to YouTube and search Bloomberg Podcast, that's the easiest way to find us, so check that out. All right, coming up, we're going to check in with Steve Miller. He's the chair of ISM Services PMI. We're getting some services PMI data crossing the tape as we speak, so we'll break that down. June Grasso, Bloomberg Law host, on the start of the Supreme Court as it considers arguments on President Trump's tariffs. This is an important one, folks. We need to get smart on that. Miles Miller, Bloomberg News senior reporter on yesterday's elections. He'll tie it all up. We had New York City, we had Virginia, we had New Jersey, plus some others. So we'll get the latest there. Adam Coons, CIO at Winthrop Capital Markets, will give us thoughts on the markets. And then Kat Doherty, Bloomberg News finance reporter. She's live at the Bank of America Investors Day in Boston. Bank of America doesn't hold Investor Days very often. In fact, it's 15 years since they last had an Investor Day. So they've got some things to say about the future of that company. So a lot coming up in this Bloomberg Intelligence program. Scarlett Fu and Paul Sweeney with you. Right now, let's go to Lisa Mateo. Get a Bloomberg Business Flash. Lisa.
You got it. This Bloomberg Business Flash brought to you by Van Eck, celebrating 70 years of helping investors stay ahead in a world that never stands still. Visit vaneck.com. Well, the government shutdown dragging into a 36th day, becoming the longest in history. It's actually placed a pause on economic data, but we still have private data. So let's get to it. ADP employment change for October. Expectation was for 30,000. Came in higher at 42,000. The prior revised lower to a drop of 29,000. Want to go to S&P Global. U.S. Services PMI for October, 55.2. That was the expectation. Came in a bit higher, 54.8. Global U.S. Composite PMI, 54.9. That was a forecast. Came in a bit lower, 54.6. And finally, ISM Services for October, 50.8. That was the expectation. That came in at a little bit higher at 52.4. I know you guys are going to break that down with our next guest in just a bit. Right now, let's get to the markets. We have the NASDAQ up about 0.4%, 94 points. We have the Dow up 0.2%, 90 points. The S&P 500 up 0.2% or 17 points. Over to the yield space, the 2-year 3.62%. That's up 4 basis points. The yield on the 10-year 4.14%, and that's up 5 basis points. The Bloomberg Dollar Spot Index is little changed. To earnings we go. We'll start with Advanced Micro Devices. They're the main rival to NVIDIA in the market for AI chips. Their shares were lower. Now they're starting to tick a bit higher, up about 0.2%. That's after its guidance failed to impress investors. And finally, server maker Super Microcomputer also disclosed a disappointing outlook. Its shares are down about 7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa, thank you so much. We appreciate that. Lisa Mateo with the Bloomberg Business Flash. Scarlett Fu and Paul Sweeting, we're with you here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Lisa was just reporting, ISM Services Index came in at 70. The consensus was 68. Seems pretty good to me. Let's check in with Steve Miller. He's the chairman of ISM, joining us via Zoom from Aledo, Texas. Think oil patch, and that's where Aledo is. Think Landman, which, by the way, second season starts in like a week. So that's
I know, you're all over that.
Huge. Steve, talk to us about this ISM data here. What stands out to you?
Well, one of the things that was great news is we saw new orders come back and we saw business activity increase. So a little bit of a surprise to me, given the government shutdown. We saw public administration go into contraction from expansion month over month, but the rest of the economy seemed to hold up. Real estate, rental and leasing, and retail trade returned from contraction to expansion. So those were some of the leaders.
At the same time, though, it seems like inflationary pressures remain, because you look at prices paid, and prior month in September it was at 69.4, and economists had anticipated it to decline to 68, but instead we got an increase to 70. Talk a little bit about that.
Sure. The index is the first time it's been at 70 since October of 2022. So we're definitely seeing in the commentary as well tariff impacts starting to flow through for some commodities. We see chemicals, electronic components, some other things are showing in increases to prices paid. I think the positive side on the inflationary aspect is employment is still a little bit weak. And we're seeing that the supplier and supply chain performance is still strong. So in that environment where it looks like there's available capacity in all of the industries, except for utilities, I believe that's a very positive sign for competition in the market and keeping inflationary pressures from hitting the consumer.
Steve, thanks so much for joining us. Really appreciate getting a couple minutes of your time. Steve Miller, he's the chair of ISM Services PMI. We'll get some data here. Looked pretty good to me. And one of the things that jumped out at me, Scarlett, is just the new orders, 56.2. The consensus was 51. Last period was 50.4. So nice jump in new orders there.
And of course, the services part of the economy is much bigger than the manufacturing side of the economy. And earlier this week, we heard from ISM that manufacturing remains in this slump. I believe an 8th month of shrinkage in manufacturing.
Absolutely. All right, let's go to the Supreme Court. They're working hard today. In a high-stakes legal showdown, the Supreme Court will consider arguments that President Trump exceeded his constitutional authority with many of the sweeping tariffs he has imposed on goods from around the world. Our expert joins us here, June Grosso. She's a legal analyst and host of the Bloomberg Law Show for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. June, this seems like a big one to me. Talk to us about what the Supreme Court is ruling on and what the ramifications could be.
This is probably the biggest case of the term, and some people have said this is the biggest case in decades.
Wow.
Because it's going to determine the president's authority. So this is about the International Emergency Economic Powers Act, or IEPA for short. And no president has used this to impose tariffs. It doesn't mention tariffs or duties in the language, but President Trump is saying that he can exert emergency powers. So what the statute does say is that in unusual and extraordinary circumstances, a president can declare an emergency. Still not a question of whether it can be about tariffs, because that's supposed to be something that Congress does. So President Trump said that on one hand, the fentanyl crisis and then the the deficit, the trade deficit, are extraordinary emergencies. And so the question is whether the Supreme Court will agree with that. 3 lower courts, including the International Court of Trade, which is known to know about trade, said, no, this is not, the president can't do this. And, you know, there are briefs that groups submit called amicus briefs. And in this case...
Well, I've been mispronouncing it my whole life.
I know, me too. People also say amicus.
Okay.
So, you know,
you're the expert.
No, well, I'm not a Latin expert. I haven't taken Latin since high school. And that was a long time ago. So, but there were 40 briefs against the tariffs and 10 for. And among the 40 were like the Chamber of Commerce, small businesses, law professors, former judges. So, I mean, if you look at the text, the Supreme Court should probably rule against the tariffs, but as we know, they often rule the way they want to rule.
And he did appoint a number of the Supreme Court justices, so there's that to consider as well. Exactly.
Yes.
So who exactly are the plaintiffs? Because it feels like this got rolled up into one big case.
Yeah. So the plaintiffs right now are small businesses. There is a wine exporter. There is a toy goods company. And, you know, they're basically, and I believe that they had a sort of a draw for which lawyer was going to argue, and Neil Katyal, who was the acting Solicitor General. By the way, I think his hourly rate is up to $3,000 an hour.
Nice.
Yes, nice.
Yes.
If you're him, I believe he's going to argue for the plaintiffs, and the Solicitor General is on the other side, and he's won many a case for Donald Trump before the Supreme Court, even before he was president.
So the Supreme Court will hear arguments today. When will they issue a ruling, do you think?
That's the $1 million, or maybe the $1 trillion question in this case.
Right.
So it's expected that because they put this on an expedited schedule, this was on the emergency docket, and they switched it over to this docket. They have a, you know, it called a special day for this. So it's expected that they'll rule quickly, but you never know. So the worst comes to worst, it would be the end of the term in June. It probably won't be that late, but you know, if there are conflicting, if there are like dissenting opinions and concurring opinions, it can take a while.
So what happens today is that the Supreme Court begins hearing arguments on this. How long is that part of the process going to take?
It's probably going to be 2 hours. It used to be that Supreme Court arguments were an hour and they had a clock and a light, and when
That's what I remember from TV and movies.
You were out, right? Now they can go on. It could go on longer than 2 hours. So you know, it'll be interesting to see what the justices, you know, ask questions about, and you know, the responses. And President Trump had said he was going to attend the hearings, and every lawyer I talked to said, "Bad idea, bad idea." And now I think it's just Scott Bessent who's at the hearings.
Now, we know President Trump doesn't give up a fight easily, and he is a very litigious person, always has been through his business career. If he loses at the Supreme Court, is that it for tariffs?
Well, it's not it for tariffs. It's it for tariffs under IEEPA, because the Supreme Court is as high as you can go, as you all know. So, but there are other ways that he can implement tariffs, and he has implemented tariffs in other ways. And apparently the administration is looking for other things. So it's not the end. The question is whether they'll have to reimburse businesses for some of the tariffs that they've paid.
How do you do that?
That will not be fast or easy. That's going to be a process.
It would be a process. I mean, it's been done before in smaller amounts, but well, that'll not be another question. And that's sort of hanging over the Supreme Court's head, because Donald Trump has been saying that it's the life and death of the country. I mean, he's been saying some extraordinary things about the importance of this case, and that's going to be weighing on the justice's mind somewhere in the back, I think.
Yeah, Paul, according to Bloomberg Economics, the U.S. is collecting $556 million daily in IEEPA tariffs.
Ooh, okay.
And by the end of 2025, it'll top $140 billion. Can you imagine trying to refund that?
Yes.
And another thing is, you know, remember when Joe Biden was president and he tried to do something like, you know, pay off student loans or the eviction moratorium, and the Supreme Court didn't let him do any of that because they said that was a major question, and major economic questions, it has to be Congress that gives explicit authority to the president. So we'll see how they treat Donald Trump compared to how they treated
I'm paying attention to this stuff. I'm telling you. I mean, it's not just June. I'm paying attention
to
this
stuff. Will you listen with me later on when you get off?
Absolutely.
Thank you.
This is good stuff. June Grosso, she's a legal analyst and host of Bloomberg Law for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. Market Drivers is brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. Treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Boy, yesterday was a busy day if you're like a political junkie. You had a lot of stuff to kind of pay attention to. New Jersey, Virginia, New York City, California. Had some stuff too.
And if you're a Democrat, then you're feeling pretty good this morning, given the sweep of the results.
I would think so. And, you know, in my state, New Jersey, Mikey Sherrill, she won by double digits. And it was
pretty handily.
Forecast to be really, really tight going into it. So I don't know what to read a bit about that. But we're going to check in with Miles Miller. He's Bloomberg's senior reporter, and he's been following this stuff really closely. Let's start with New York City, Miles. What do you think Mr. Mamdani does now that he's won when, boy, he's a neophyte. What does he do? How does he get going here?
Yeah, I think the first task for him is going to be to set up this transition team so he can figure out who he's going to bring with him to City Hall. He's got just about 52 days or so, 52 to 57 days or so, 2 months. And so he's got to figure out who he's bringing from his coalition, and then where will he find his policy people? Where will he find his communications people? And how does he build out that deputy mayor staff? First deputy mayor, does he keep the deputy mayor for public safety? Does he get rid of that position? All of that goes into what is in his planning. What we also know is what he said this morning, speaking to a reporter this morning, saying that the way that he feels like he'll be able to pay for freezes on the rent or free buses or universal child care is a tax on the wealthiest New Yorkers, number one, and then number two, raising the corporate tax rate. Right now at 7.25%, raising it to 11.5%. He says that'll give them about $9 billion to fund this. But he's got to do that with Albany, and the governor is going to be running for re-election in just 2 months' time. I don't know that she has the appetite to raise taxes when she's asking New Yorkers to vote for her against, say, Elise Stefanik.
Yeah, and that's where reality comes in. We know that the wealthiest New Yorkers, who are also often business leaders, were very, very opposed to Zohran Mamdani. And of course, we're campaigning against him. We're raising money to oppose him. How have they been responding to his election?
Well, we heard from Bill Ackman last night saying, he gave it a congratulations to Mamdani and then saying he'd be willing to work with him. And then you've also got Jane Fraser and Jamie Dimon, both saying that they are willing to work with him on transit and work with him on housing. You've got to think about it. Yes, a big bank. Yes, you've got managing directors and the higher titles at these banks, but you've also got the associates who work there and the support staff. They have to live in this city too. And if it is expensive for them to get to work, if it's expensive for them to get to Greenwich Street or to get, up to the new JP Morgan building, it's going to be something that they have to think about, right? And so they're saying that they're willing to work with him. He has made some positive inroads as it relates to the business community. Met with a group that was set up by the Partnership for New York and has been able to get his message across about what he's trying to do. The one thing I talked to Bill de Blasio about 2 months ago about Mamdani, and what he said is that he has an ability to be in a room with wealthy New Yorkers and feel comfortable and stick to his convictions, but also say, I hear you, I hear what you're trying to do. Is there a way we can meet in the middle? He said he didn't know how to do that, so it is a breath of fresh air that Mamdani has that ability to do that.
Miles, is there, I've heard a lot of folks saying, hey, don't worry about this guy. It's not going to be as bad as your fear, because in reality, he can't get a lot of this stuff even done. Is that, I don't know, now it's real. I mean, he is mayor-elect now. How are some of the counter-arguments going today?
Yeah, I mean, what you have to look at is the way that governing works in the city, heavily dependent on Albany to get things done. He does have a good coalition in Albany, was an assemblyman, knows exactly how things get done, how bills get passed in Albany. And so he believes he has that great support to get some of these things done. But to your point about fears that people may have, I mean, I think people can run one way, but then, when people get into office here, they almost always move somewhat to the center. You could think about some of the things that Bill de Blasio did as liberal, but then he brought in Bill Bratton, who was a real enforcer in the police department, a really, brass tacks kind of guy that gives that kind of more moderate support. This is what Mamdani's trying to do with Jessica Tisch, right, a friend of the business community and the current police commissioner. And so that seems to be the way he's going to move to make people happy. But I think he also will wind up probably disappointing his base because there's some things that his base wants to do that he's going to realize he can't get done.
Miles, thanks so much. Appreciate your reporting over the last several days on this busy time in New York City politics. Miles Miller, Bloomberg senior reporter. He's down there at City Hall in Lower Manhattan. Again, Mr. Mamdani wins the mayoral race in New York City. A lot of uncertainty for a lot of people, but I guess a lot of expectations also for a lot of folks as well. S&P 500 up 19 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, you've got stocks advancing. This is after yesterday's sell-offs. Right now, the NASDAQ up 0.3%, 70 points. The Dow up about 0.1%, 45 points. The S&P 500 rising 0.2% or 13 points. What I want to do is take a closer look under the hood. We'll go to the IMAP feature of your terminal. Of the 11 major industry groups, the biggest boost, that is coming from communication services. You click through, it's media and entertainment, then on to interactive media services, and at the top is Alphabet. Yeah, shares up more than 2%. It's leading the Mag 7 right now. We did have this news, though. Alphabet's Google cybersecurity company Wiz, they cleared this hurdle to closing their $32 billion deal. The U.S. government saying it's going to wrap up its investigation of the acquisition. To the yield space, the 2-year, 3.61%. That's up 3 basis points. The yield on the 10-year, 4.13%, and that's up 4 basis points. To the Bloomberg Dollar Spot Index, that is little change. Bitcoin up nearly 3% at just above 103,000. To earnings we go. We'll start with search platform Pinterest, sinking down 20%. Projected revenue for the current quarter fell short, and that's really a sign that the company's advertising business may not be growing as quickly as expected. McDonald's shares, they're up 3%, faster than expected sales growth in the U.S. in the last quarter. Diners actually spent more per visit. And from fast food to fast casual, Cava, it's cut its sales growth targets for customer traffic is slowing in the restaurants. And we also heard a similar story from Chipotle and Shake Shack last month. Its shares were lower. Now they're starting to rebound. They're up about 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. So head over to youtube.com. That's the internet, I'm told, and search Bloomberg Podcast, and that's where you'll find us here. Let's talk a little advertising here, a little digital advertising. For that, we turn to Mark Douglas. He's the president and CEO of Mountain, is the name of the company. MNTN is the ticker. They went public recently, and he joins us here in our Bloomberg Interactive Broker Studio. Mark, first, remind our audience what you guys do at Mountain, and then I'd love for you to, I know you guys just reported earnings, give us a sense of how your business is going.
Awesome. So in terms of what we do is we enable any size company to do direct response, performance marketing on streaming TV. So TV used to be the domain of like 200 global brands, and kind of smaller businesses, mid-sized businesses would cut off and they couldn't get the measurement they needed and know it's really working for them. We've changed all that when we introduced Mountain Performance TV. And we've seen a ton of growth since then. Over this quarter, we grew 32% year over year. With record revenue, record gross margins just under 80%, record adjusted EBITDA margins, and our first quarter in 4 years of GAAP profitability. So we had a really strong quarter. We've averaged 39% growth over the last 6 quarters, and we provided guidance for 34% year-over-year growth for Q4.
Wow.
So we're feeling really good about the business. We're seeing, basically the market really respond to our value proposition, our technology, and we introduced creative AI tools just last week, and so we see that as an additional growth vector for the company.
Okay, so you lay out some pretty big numbers there, and we should mention as well that you've launched this quick frame creator marketplace that enables these smaller companies to also develop their own TV commercials that you can then measure with the precision that you can currently get on social media and search.
Exactly.
Okay, so you IPO'd in May, and the price was, I'm looking at it, $16, right? And currently you're at about $15.
Yeah.
You look at the analyst ratings for your company, 8 buys, 1 hold. They have an average price target of $27. That's sizable compared to where you're trading now. What do investors not get about your story?
Well, I think the when we went public, we had divested the company, Maximum Effort, not divested. We have a long-term partnership with Ryan Reynolds, is his agency, but I think the divestiture happened right as we were going public, and it provided a bit of confusion in terms of what the growth rate is. So what we did in the earnings release is we separated out the performance TV business, and we said, if you look at this is the core of the company, it's a vast majority of revenue. Here's the true organic growth rate of the company. I think investors really appreciated that yesterday on our earnings call. The consensus price targets, you're right. I mean, they're averaging, I think, something like 80% growth in the share price is what they're forecasting. At the highest price target, I think it's like 130% growth, more than of stock price that more than doubles. And I think investors, also in ad tech, they tend to need a little time to really understand who are the winners and losers. I can tell you who the winners are. They're the companies with a ton of technology and a ton of engineering. 1 in 2 people at Mountain are software engineers, and that includes me. So I don't get quite as much time as I used to actually code, but I spend more than 70% of my time on product, and that's why we're prolific creators of new technology with Quick Frame AI, with the Mountain Performance TV product, and I guarantee you there's more to come. And so that's really the key to seeing the company grow, and I think it's going to be the key for investors to basically see this as like a really attractive investment.
We saw Meta in the most recent earnings really ramp up their CapEx. Yeah. And they're talking about AI and how it's going to be a real positive for their business. How is AI in the digital marketing space amongst the streamers? How does that impact your business?
Yeah, it's a very important aspect of it. So the hardest thing we do, we talk about TV, and it sounds like, oh, Mountain streams TV commercials. Yes, we do. But what we really do for a small business trying to find its next 1,000 customers, that is like a needle in a haystack proposition. So it takes a tremendous amount of data and technology to do that effectively. So we call that Mountain Match. That's our AI targeting engine, which leverages AI to figure out who is your customer and how we find them, what network are they watching, when should we show them the ad. The 97% of Mountain customers have never advertised on TV before, so they don't have TV commercials when we meet them. That's why we introduced Quick Frame AI. So it's AI across the board for the business, and we've been really early adopters. AI targeting via Mountain Match, we introduced almost 2 years ago. So so we were on it really early. We were like, this is fantastic. You know, the advent of learning models, this is kind of going to be a boom to our business, and it has been, and that's why we posted 39% year-over-year growth for the last 6 quarters. That's since the introduction of Mountain Match.
Got it. You said something that really got my attention. 97% of your customers have never advertised on TV before.
Yeah.
Give us a breakdown of what they look like, who they are. These family-run businesses, we know they're small to medium size.
Yeah.
What were they relying on before?
Yeah, so they're basically direct-to-consumer brands, usually online. So like e-commerce companies, the travel, subscription services. And what they were doing before is they were heavily invested in paid search and paid social. And so they reach a point where, so one interesting thing, I think most people don't realize more people watch TV a day than do just anything else. Like 5.5 billion people worldwide for 3.5 hours on average. It's more people than watch social media. That's more people than drive cars a day. And so you have all these consumers, you know, kind of consuming this medium, but these businesses didn't have the tools to reach them, and that's what we provided them.
All right, Mark Douglas, really a pleasure speaking with you. We, of course, talk to you often, but it's great to get you in on your earnings day. Mark Douglas is the CEO of Mountain and joining us here in our Bloomberg Interactive Brokers studio. All right, Paul had mentioned that it is Bank of America's Investor Day, and this is the first Investor Day the bank has held in about 15 years, and it comes as the stock of Bank of America has trailed its big bank peers, not just this year, but as Catherine Doherty of Bloomberg News points out, last year and for the past 5 years as well. Catherine joins us now from Boston, right outside the Bank of America Investors Day taking place. Catherine, Bank of America has come out with some new targets that it's talking about at least 12% earnings per share growth annually over the next several years. What is the unifying narrative that the bank is offering up right now to explain these new targets?
So we have a new narrative today, and it expands from the old narrative of responsible growth. That is a phrase that CEO Brian Moynihan has used, talking about building the bank coming out of the financial crisis. He's talked about using responsible choices and being explicit about the risks that the bank is taking on in order to grow revenue. Well, today we heard a new phrase. He's been repeating this phrase where he says that the growth is one that they want to stick to the ribs. I know it sounds like a funny phrase, or at least it's one that has stood out to me, and it also makes me think of, I don't know, barbecue or some sort of food. But he's repeated it time and time again this morning, and on media now he's saying we want to have growth that sticks to the ribs. So put it on the T-shirt. This is the new phrase of Bank of America.
So, Catherine, is there a sense here that Bank of America is comfortable with the assets they own? Do they feel like they need to acquire something or maybe divest something? What are they saying about kind of the way they're constructed right now?
So there hasn't been a lot of talk about acquisitions or add-ons. It has been a large emphasis on existing either infrastructure, technology, and the deposit growth that they say they expect in the future, but also they're giving a lot of detailed information about where they've come from really since 2019. Some of the stats even go back to 2010. So it's not just the emphasis on where they hope to go in the next 3 to 5 years, but an emphasis on where they've come from.
In terms of what it's doing well, we know that the markets unit has posted 14 straight quarters of year-over-year growth. And of course, most of the big banks had incredible performances for their markets businesses in the last quarter. What do we hear about how they're going to double down on the things that are working?
So another business line just sat through the presentation this morning is consumer. B of A is the second largest bank given its deposit franchise, and Holly O'Neill, the head of consumer and retail, talked about how they are seeing really 90% plus of their customers have a core checking or savings account, and they are pointing to that as a particular strength because once you have the core checking or saving, you can then add on and introduce customers to other parts of the business. Maybe they can even grow to be a banking partner if they are a CEO or owner of a company. So that is one particular emphasis that the bank executives have made today. The other, wealth management, they're really emphasizing just the brand recognition that comes with if you are an advisor out and looking to take on new clients and bring in more assets to the bank. Having B of A's larger franchise is something that they're speaking to as a core strength. So these are just some of the, beyond the numbers, the details that they're going through this morning in Boston.
All right, Catherine, really appreciate your stepping out from the Bank of America Investors Day event taking place in Boston right now. Catherine Doherty is a Bloomberg News finance reporter. And for all the new targets that Bank of America has reported or has set out here, Paul, worth noting that the stock is down 2.8% right now on a day in which the overall market is recovering from yesterday's decline.
Yeah, interesting. The return on tangible equity is the big one. 16 to 18% is our target. They're at 15% now.
Yep.
I can say I used to work with the Bank of America because I worked at Merrill Lynch. And Bank of America bought Merrill Lynch.
BAML, yep.
Bam, so there you go.
All right, we have a lot more coming up on Bloomberg Intelligence, including a conversation with Romain Bostic on the New Jersey elections. He was out in the field yesterday. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Traders keeping an eye on the latest economic reports with U.S. services activity expanding in October to the fastest pace in 8 months. Meantime, employment at U.S. companies, will that increase, signaling some stabilization in the job market. The S&P right now at 6,800. It's up about 0.4%, 29 points. The Dow up 0.1%, 80 points at 47,166. And the NASDAQ rising 0.6%, 146 points at 23,496. The two-year yield, 3.62%. That's up 4 basis points. The yield on the 10-year, 4.14%, and that's up 5 basis points. To commodities, COMEX gold up 0.8% at $3,992 an ounce. We have Brent crude down 0.2%, $64 a barrel. The Bloomberg Dollar Spot Index is little changed. Health insurer Humana, it reaffirmed its forecast for medical costs for the full year with the outlook below estimates, and the company also reported higher medical costs for the third quarter. That was higher than expected. Humana shares are down about 7.5%. Novo Nordisk, they trimmed their forecast for a fourth time this year. They're pointing to a lower than expected sales for its obesity drugs Wegovy and Ozempic. Its ADR's down more than 3%. And Toyota stock, it dropped the most since April after the carmaker's forecast fell short of estimates. Its shares down more than 3% in Japan. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. We had a guest on earlier today on the Bloomberg Surveillance Program who said the AI data center, that's a boom, and it's going to bust.
And it's going to bust.
And it's going to bust. And
we don't know when, though.
Yeah, and that kind of made me just kind of rethink the whole AI theme in general for this market, because it's not just the tech theme. It seems like every company out there is talking about how AI is going to impact their business for the good. It's going to help margins. I don't know. But that's been one of the drivers, arguably, for this market to move higher. Adam Coons joins us, Chief Portfolio Manager at Winthrop Capital Management out there in Indy. Adam, how do you guys think about AI as a driver of this broader market, and are you comfortable with that?
I mean, right now, yeah, it's not something that we're chasing, but it's obviously helping push earnings higher. We were just in our investment committee going through this. While a lot of people want to talk about the fact that the S&P just keeps going up and valuations they're on the high side, but the fact remains that earnings keep growing, revenue keeps growing, margins keep growing. So until that changes, valuation's not a reason for stocks to go down. It's a thing that kind of depletes the margin of safety. But for now, this AI story, like I said, it is generating earnings. Now, there's the argument of the circular nature of this kind of AI economy that you may label it. We do think that's sustainable in the short term. The long term, as your previous guest is kind of getting at, is what's in question.
So valuations don't unravel the bull market at the moment, but they can cause pullbacks. And we've heard from Ted Pick of Morgan Stanley, David Solomon of Goldman Sachs saying 10 to 15% pullbacks are definitely something that would not be a surprise here. If that were to happen, Adam, what would you be doing? How would you deploy your cash? Would you be going into the market? Would you be, taking up new positions in tech?
We would, yeah. I think, look, the U.S. economy, with all of its faults, is still, on an aggregate basis, is very strong. I think that there are definitely pockets. I think the K-shaped economy, the K-shaped recovery is a real thing. But the other side effect of that is that upper class has continued to kind of prop up the economy, prop up, the aggregate consumption. And it's hard to see really anything that's going to get in the way of that. And I think really I'll reference back Mike Wilson at Morgan Stanley is kind of pushing on the narrative, which I agree with, is that, we see that we've come out of kind of pockets of recessions, and we see more upside here, generally speaking. Now, because valuations are higher, we're still cautious. We do think there's probably, maybe a healthy pullback in store for the markets within the next 6 months. But because of all the reasons I said before that we would absolutely be reallocating the equity at that point.
About international there, Adam, we had I would say kind of a rotation out of U.S. stocks into European stocks in the beginning of the year, but I guess surrounding some of the turmoil of the initial discussion about tariffs. Was that a short-term trade? Is that something you should be held longer? How do you think about international?
Yeah, for us, that's one of the higher conviction trades is the rotation out of international and back into U.S. stocks. We started doing that back around June, and just for the listeners that may not follow at all, that just kind of focus on the S&P 500, back in March and April, when stocks in the U.S. in particular were in the decline, and really every asset that was U.S. dollar denominated was down, there was a point where the delta between the outperformance of international equities and the S&P 500 was 17%, which I can say in the last 10 years that I've never experienced anything even close to that. So for us, that divide, that premium really gave us a lot of conviction to underweight developed international, move back into U.S. equities when they were on their back. And now we've seen that divide between the two, the delta, has declined to about 11% right now. So we have seen U.S. stocks since then, this back half of the year, outperform, and we think that's going to continue, at least in the near term.
Beyond international equities, what about other asset classes like fixed income? The U.S. Treasury today says it plans to keep auction sizes of treasuries unchanged for notes and bonds for at least the next several quarters. There had been a lot of concerns that, about the amount of money that the government is spending to service all the interest payments. How are you thinking about where you want to be in fixed income?
Yeah, a lot of our thesis on declining interest rates has been put on pause because of what you just mentioned. And so we do kind of see this period where we're just going to be range bound in overall kind of long-term rates. But we're okay with that. That gives us even more reason to just, find areas where we can, pick up incremental yield. So we are light on treasuries overall, but still a bit longer on duration, in particular spread duration. So even though spreads on corporates have tightened quite a bit, we remain overweight credit. We think there's more tightening as investors are just trying to, like I said, pick up that incremental yield. And then conversely, we do like in the structured space, mortgage-backed securities, and even some pockets of CMBS. But on the MBS side, I think, the thing that we're watching for is the Fed right now is letting all of their MBS securities run off. They're not reinvesting them. And that did lead to spread widening in MBS, over the last couple of years. And so we're overweight MBS right now, thinking that, eventually, as a way to stimulate the economy, as a way to stimulate the housing market, they'll move back into that market and we'll see some spread contraction there. So in the fixed income, we like general spread product, but in particular, we do like MBS.
Really appreciate it. Adam Kuntz, he's the Chief Portfolio Manager, Winthrop Capital Management out there in Indy, sticking with tech and big cap tech, and why not? That's what's been working. And,
yeah.
And I think a lot of folks feel like the AI trade still got a lot of room to go.
Even if you think that it's about to unravel, does it make sense to get out now, or do you wait until you actually start to see evidence that it's unraveling? Because if you get out now, you could miss out on the next 20% leg.
Exactly. And again, we just saw, I'm just thinking about the Meta, the Googles of the world, some of the other tech companies that already have reported, and they're still talking about big investments in AI, and they're saying, in Google in particular, is identifying revenue that they're generating off of their AI investments, and that's what I think the market rewards. Whereas
Or
Meta,
names like Amazon can strike $38 billion deals with OpenAI and get $7 billion a year, right?
yeah, but the one thing that still keeps me makes me a little nervous is kind of the circular nature of some of these deals. I'm trying to figure that out, and to what extent is that a risk here? If one major player falters, does that impact a number of them?
It has a multiplier effect on the way up, but then does it have just as quick of a multiplier effect on the way down?
Yeah, we've seen that in the past. Right now, the market today looking pretty positive here. The S&P is up 26 points, about 0.4%. NASDAQ, not surprisingly, doing a little bit better, up about 150 points. That's 0.6%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on that YouTube thing, so check that out. Boy, we've been talking politics a lot over the past several days because we've had a lot of politics here in New York and New Jersey.
And it's not even a midterm election year either.
No. But I'll tell you, living in the greater New York metro area, television has been unbearable with the political ads. So I'm so glad that's
So now you know
over.
how Ohio felt, or
Yes.
Virginia felt, or any of the swing states
And I'm a
last
guy
year.
who used to follow the television stocks, and I know what a huge revenue boom that is every 2 years when they have elections, but it's just brutal. Romain Bostic, he's been helping us out a lot over the last several days. He's a co-host of The Close on Bloomberg Television, following all these races here. I tell you this, New York race, Romain, I mean, this is going to be really interesting to see how it plays out because the people got what they wanted here.
Yeah,
and let's see how it plays out and how Mr. Mamdani works with the governor, works with city council. What are the expectations for this
mayor-elect?
Well, the idea, I think you kind of pointed out two key words there. You said the governor and the city council, despite all of the hand-wringing about what the policies that Mamdani has proposed, there's a lot that he really cannot get done unless he has the full-throated support, not only of the city council, but to a certain extent of the folks in Albany, meaning the state legislature and the governor. They have a lot of sway over what goes on here, so that might blunt some of the impact. And when we spoke with business leaders in the weeks leading up to this election, when it started to become apparent that Mamdani probably would become mayor, they seemed to sort of rest on that idea that some of the more extreme proposals probably wouldn't see the light of day or at least get significantly watered down. On the flip side, some of his proposals, particularly on the rent side, as well as on taxation, those actually do probably have a chance of coming through. And business leaders, at least right now, say they just want to make sure they have a seat at the table in those negotiations when that process starts.
Yeah, they're being pragmatic and making sure that they're a part of the conversation as opposed to being on the outside looking in. Romaine, you were in New Jersey yesterday on election day.
I made it back safely.
You made it back safely. Congratulations. The context here, of course, was this gubernatorial race between a centrist Democrat and a Republican who very much embraced President Trump's MAGA, approach. What do you think the takeaway is from Mickey Sherrill's victory?
This is a hard one because we should also point out that Ciattarelli is somewhat of a centrist himself. Remember, he ran for governor twice before this and pretty much kept Trump at a distance. In fact, he had some pretty harsh words for Trump back in 2016, calling him a charlatan. When he ran in 2021, he basically didn't want any part of the Trump administration as far as endorsements. This time around, he was willing to embrace Trump a little bit more. Trump was willing to give him his endorsement, and it did seem to help him with the Republican voters. What it did not help him with were a lot of Democrat voters who are very disaffected right now by what's going on in Washington. Anyone either named Trump or affiliated with Trump, they didn't want any part of, and that appeared to help Mikey Sherrill at the polls, at the voting booth just last night.
So I'm a proud resident and homeboy of the state of New Jersey.
Yeah.
She won pretty handily, much better than the polls indicated. In Virginia, a similar type of outcome for the Democrats. Are the Democrats or the Republicans reading anything into these two races as it relates to 2026?
Oh, yeah, they're reading a lot into it. I'm not sure it's smart to read into it. I mean, we've seen this playbook before where you have either a midterm election or an off-cycle election, and everybody tries to sort of extrapolate, okay, well, must be how things are going to play out in the next major presidential cycle, and that's typically not always the case. I mean, we tend to find these voting patterns are very much in the moment. It's about how people feel right now, and a lot can change over the next year between the midterms and the next 3 years for the next presidential cycle.
I think President Trump made a really important comment this morning when he was speaking to the senators, Republican senators down in D.C. If Trump's not on the ballot, I think the Republicans, it appears, based on yesterday's results, that if Trump's not on the ballot, it's going to be tough for the Republicans to keep control here. And that's kind of maybe one of the takeaways I guess you could draw.
Well, this is a double-edged sword with Trump. We know that his presence, it can actually be a very galvanizing for the right-wing base. But as we saw in states like New Jersey, which is basically a blue state, light blue, we'll call it here.
Although I did vote a lot more Republican last election year.
Absolutely, but you look at some of the counties that Trump flipped from blue to red, like Passaic, that flipped back to blue last night. Mercer County, Somerset, a lot of those counties that had started to maybe embrace, at least in the last election cycle, the Republican Party and Trump, at least last night, they were firmly back on the Democratic side, and we'll see if that carries through to a year from now when we have some consequential congressional elections.
So it goes back to what Paul was saying. Without Trump running, without Trump's name on the ticket, was there perhaps just not enough turnout of Republicans in this cycle?
Well, I mean, we were basically, I haven't seen the final tally, but we were basically near a record turnout as of last night. It'll be interesting to see what the final numbers are. Unfortunately, the biggest increase in voters, at least in the state, was on the Democratic side, and that worked to this favor. You saw that something similar play out in New York City with the mayoral election. But it gets to this idea, too, of, what was Trump's presence? I mean, there's been a lot made of the fact that he physically did not come to New Jersey to campaign with Ciattarelli. He did teleport in.
He kind of did it at a distance, right?
He did it in, and there were some people also saying that his endorsement was maybe just a little half-hearted. It wasn't kind of that full-throated, Trump is 100% behind you. It was like, okay, yeah, sure, I'll support you. And that might have played a factor into it as well.
And he's got a great golf course, though, in Bedminster, I'll tell you that.
Have you been
awesome. there? Oh, yeah, awesome. Great course. Lost a lot of golf balls there. So, but anyway, he did not show up, in presence to support Mr. Ciattarelli. But it was a stronger than expected performance by Mikey Sherrill. So again, good news for the
and the
Democrats
campaign for 2026 begins right now.
Right now,
gosh,
exactly.
Are we talking about 2026 already?
I think we are. I think we are. All right, Romaine, thanks so much. Romaine Bostic, television anchor, co-host of The Close for Bloomberg News, and doing some yeoman's work over the last several days in Jersey City. So if you're in Jersey City, you got to go to Raza Pizza. Arguably the best pizza in the state.
So for any pizza recommendation in the state of New Jersey, we go to you because you gave me a recommendation for a place in Princeton.
Conti's.
Conti's, okay.
Absolutely. Star Tavern in Orange.
We went there last night after
we
had our wrap party
there you
at
go.
Raza last night.
Boom.
It was excellent.
There you go. That's how they do it in TV. They go first class. Good stuff. Romaine Bostic, we appreciate that. S&P 500 up 27 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio here in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We've got a lot coming up in the second hour of Bloomberg Intelligence. We are waiting for the New York City mayoral-elect Zohran Mamdani. He will begin speaking following his election victory yesterday. We'll bring you there when that begins. But we're also going to check in with Tyler Kendall, Bloomberg's Washington correspondent, who is live at the Supreme Court as they begin hearing arguments on President Trump's tariffs, the legality of these emergency tariffs. Mike McGlone will be talking to us about Bitcoin. There seems to be a sea change here in some of the weakness that we've seen in Bitcoin. The price is higher today, but it did dip below $100,000 yesterday. Woo Jin Ho, Bloomberg Intelligence senior tech analyst, will talk to us about super micro earnings, the stock tanking this morning. But first, let's go to Charlie Pellet for our Bloomberg Business Flash. Charlie.
Thank you very much. And here's what's going on. We got those dip buyers stepping in. Yes, for crypto as well. Bitcoin right now up 3.5%, 103,822. Equities higher across the board. Right now we got the S&P trading very close to session highs, looking at a gain of 6,800 even on the S&P, up now by about 0.4%. The Dow up 54. Dow Industrials up 0.1%. Nasdaq Composite Index up 171 now, up 0.7%. Our Bloomberg Mag 7 Index pushing higher by 0.7%, with a 10-year that's currently yielding 4.14%, the 2-year 3.62%. Gold up $48 the ounce, $39.80. Right now the precious metal higher by 1.2%. West Texas Intermediate crude up 0.4%, $60.83 a barrel. And again, Bitcoin bears repeating, up now by 3.5%, 103,775. So lots of moving parts to the market. We got dip buyers stepping in. Also, Wall Street's looking ahead to next month's Fed meeting. Leslie Falconio is head of taxable fixed income at UBS, and on surveillance this morning, she told us she's definitely looking for a cut.
Our view is that, they still go in December. We don't have a lot of data, but the data that we do have, when you look at things like Atlanta Fed GDP now or some of the ADP numbers, yes, the economy's cooling, but it's not collapsing. But we do believe that they have room to cut in December, just given the fact that the Fed funds rate, in our opinion, is still fairly restrictive.
Leslie Falconio of UBS interviewed this morning on surveillance. Advanced Micro Devices after earnings up now by 0.7%. And coming up after the close of trading today, we will be hearing from Qualcomm. Right now, Pinterest after earnings, that stock plunging 21.2%. Recapping, S&P higher by 26, up 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. As Charlie's just reporting, we got some green on the screen. Let's see where some these individual stock movers are performing today. For that, we go to Nora Melinda, markets correspondent for Bloomberg Television.
Nora, what are you looking at?
Well, there's a few stocks in focus today, quite a bit to sift through, but I'm looking at what's going on right now with the consumer. Let's take a look at Kava shares. Of course, this is ticker CAVA. We are seeing shares sliding down about 2% right now, but earlier falling for their lowest level since February of last year, falling as much as 4%. This is after the company slashed its full year sales growth targets. They're saying that foot traffic stalled in the third quarter. Of course, we do know that we are seeing a consumer that still continues to feel very squeezed, and we are seeing a bit of a bifurcation here between fast casual restaurants, seeing consumers not really as much interested in the fast casual restaurants. I mean, of course, we did hear from Chipotle, Wingstop, a few of these other companies that are in the fast casual space really saying that they are seeing tightened wallets during this time period. But we also are looking at shares of McDonald's on the other hand. That's ticker MCD. We are seeing shares of McDonald's up more than 2% right now. And as we really are seeing some customers going toward some of the lower end brand names right now. Of course, you are seeing McDonald's benefiting from a lot of the deals and discounts that they did have. They were slashing prices, trying to get, you buy a burger, you get another one for just $1 more. So they really were able to attract a lot of customers. So you are seeing a bit of a bifurcation here if you look at the performance between Kava and McDonald's in this time period.
Yeah, well, coming back from D.C., Washington, D.C. train station, Lisa Mateo and me, she went to Kava. I went to Shake Shack, and then we met up at our table. So there you go. Norma Linda, thank you so much. We appreciate that. Norma Linda with Stock Movers. So you can check out the Stock Movers podcast going forward. Right now, let's go out to Queens, New York City. Mayor-elect Zoran Mamdani is speaking, and we're going to go to Queens right now. Let's take a listen.
Morning.
He's at the podium.
Last night,
there we go.
We made history. I'm so proud to be standing here today as the mayor-elect of the greatest city in the world. Over 2 million New Yorkers cast their ballots. Whether they were the more than million who supported this campaign or the others who supported someone else, or whether they felt too disappointed by the political process to participate at all, I will work every day to honor the trust that I now hold. The poetry of campaigning may have come to a close last night at 9, but the beautiful prose of governing has only just begun. The hard work of improving New Yorkers' lives starts now. That process begins with transition. In the coming months, I and my team will build a city hall capable of delivering on the promises of this campaign. We will form an administration that is in equal parts capable and compassionate, driven by integrity, and willing to work just as hard as the millions of New Yorkers who call this city home. And central to that effort is a transition team that is defined by the excellence New Yorkers will soon come to expect from government. Our team will be directed by Ilana Leopold, whose roots in this city extend back to her grandmother running the trams on Roosevelt Island. She has extensive experience in city government and has been a key part of our campaign to become the next mayor of this city. And it will be led by our formidable co-chairs, former Federal Trade Commissioner Chair Lena Khan, former First Deputy Mayor Maria Torres Springer, United Way President and CEO Grace Bonilla, and former Deputy Mayor for Health and Human Services Melanie Hartzog. Over the coming days, we'll start announcing the leaders who will implement our agenda. People like deputy mayors who oversee entire areas of government, and the commissioners who carry out the critical work of city agencies. Some of these people will have familiar names, others will not. What will unite them will be a commitment to solving old problems with new solutions. We will cast a wide net. We will speak to the organizers on the front lines of the fight to improve our city, government veterans with proven track records, policy experts from around the country and the world, and working people who know better than anyone what their neighborhoods need. Throughout this campaign, I have worked hard to be accessible and transparent with New Yorkers. That same spirit will animate this transition and the city hall we build, because New Yorkers deserve a government that they can trust. And on January 1st, when our city celebrates the inauguration of a new administration, let us also celebrate a new era for our city, one that we all feel invested in and whose success we all work to achieve. Now, it is my pleasure to invite Ilana Leopold to deliver a few words. Thank you.
Thank you. Good morning.
My name is Ilana Leopold, and I'm very honored to serve as the Executive Director of Mayor-elect Mamdani's leadership team. I want to thank Zoran for his faith in me, both on the campaign trail and in this next exciting chapter of this movement. As a third-generation New Yorker raised in Mitchell-Lama housing and educated at CUNY, I bring to this work a deep appreciation for the city's promise and a commitment to expanding it for others. I love this city deeply, and I'm so grateful for the opportunity to help shape its future. I'm also expecting a child soon, and so I want the future that she inherits to be one of possibility and opportunity, and I want my new family, like so many others, to be able to rely on the universal child care that Zoran campaigned on. I know from firsthand experience that no one will fight harder for New Yorkers than Zoran. He has the vision and ambition necessary to drive down the cost of living so that families like mine can afford to live in the city we've built. I cannot wait to help our next mayor build a government for and by all New Yorkers. Thank you.
Good morning. My name is Grace Bonilla, and I am excited to be with all of you today. I want to congratulate Mayor-elect Mamdani on his historic victory in a campaign that captured the imagination of so many and centered the needs of working New Yorkers as a North Star. I'm honored to be part of a transition team and eager to work with you to build an administration that will work tirelessly to ensure working New Yorkers can finally afford to live and raise their families in the city that they love. As a native of Queens and a daughter of Ecuadorian immigrants, who has dedicated my career to fighting for vulnerable New Yorkers, this appointment means a lot to me, particularly at a time when our immigrant communities and the people I serve are under attack. As we stand here today, 1.8 million New York City residents are without benefits to feed themselves and their families because of the inactions from the federal government. I am confident that Mayor-elect will always stand by New Yorkers and fight against any federal encroachment and that target the programs our neighbors need to survive. I look forward to helping him to build working to build an effective government that keeps every New Yorker safe, healthy, housed, and builds on the promise of our city and the brilliance of our people. Ahora en español. Ante todo, quiero felicitar al alcalde electo Mamdani por su victoria histórica y por una campaña que cautivó a tantos.
All right, we are listening to a news conference by the mayoral-elect of New York City, Zoran Mamdani. The executive leader of his transition team spoke as well. And of course, he's talking about what he envisions for his first term.
Yep, and so this is the mayor-elect, and he'll take office in several weeks, and then we'll see.
He's got a lot of work to do because he's made a lot of promises. Yes. Obviously, a lot of enthusiasm for this new leader of New York City. All right, should we continue listening? Oh, no, okay, we're going to move on because we do have a lot of company news to get through this morning, including earnings. The earnings parade continues, Paul, and of course, we're talking about blue chip companies, McDonald's being the latest one.
Yep, absolutely. McDonald's, which, by the way, it's #2 with a Coke. That's been my order since I'm at 14. Nothing's changed. They had, I think, pretty good numbers coming out. The stock's up a couple of percent here today. So Red Brown joins us, earnings reporter for Bloomberg News. This is a busy time for the folks in our stock desk because earnings are coming out fast and furious, and they stay on top of it. Red, what'd you make of the McDonald's results?
I think in the context of the other results that we've gotten in the last week or so from a couple other restaurants, I think it's really interesting. During the call, the McDonald's CEO, CFO really talked about this bifurcation that they've been observing for the last few years between higher income diners and lower income people, and it seems like that trend is continuing, persisting, potentially accelerating. It seems like, and specifically what I'm talking about is the higher income consumers seem to be coming down into McDonald's and shopping a bit more, drawn in by the value that McDonald's has been pushing over the last couple of quarters. And we're seeing that across all of the fast food chains. That's Yum as well, and also Burger King, things like that. And then on the other side of that, companies like Chipotle and Cava, these kind of like middle tier that, $20 bowls of food are struggling a little bit more as like people lose interest in that value proposition that they're offering. So I think McDonald's, obviously the biggest name in the space, really kind of hammers that point home for this earnings season. And I think that's kind of the thing, like the main takeaway for me at the moment.
And of course, McDonald's is leaning into this idea that it offers value at a difficult time for a lot of consumers. It's got a lot of deals and promotions to maintain that reputation. Does that cost it in any way, or do the same-store sales kind of back that up, that this works?
I think it's a little early before they've seen that like benefit from it quite yet. Like they all have seen a little bit of pressure on the profitability because the company is so committed to this, like getting restoring the value reputation is kind of the language that they use with their customers, that they're actually supporting the franchisees. They're giving them marketing. They're helping them make up some of that losses that they will make. They will have from offering these discounts on the menu. So McDonald's is committed to this. It sounds like they're committed to this in the long term because they do want to get people back in the stores. It's kind of remains to be seen whether or not the foot traffic is actually benefiting such that it is driving the bottom line as well. But they see it as so important to kind of refreshing or kind of reintroducing the brand proposition to people that they're willing to commit to this, take a little bit of that short-term pain for the long-term benefits.
What are they saying about their cost structure here? I see beef prices much higher over the last year or two. What are they saying about some of their cost of goods sold here?
Well, so the one thing to call on the cost of goods sold before we get into the beef issue is the marketing. So they are kind of bumping up the marketing. They saw around a 20% jump in their SG&A expense because of that. But on the beef thing, McDonald's is the largest buyer of beef. Yep. So that scale kind of allows them to take it. They can take advantage of the scale and negotiate strong contracts when it comes to beef. Obviously, beef inflation has been hitting all of these companies, but not in a way that the companies are like outsizedly negatively impacted thus far. But definitely something to watch as the beef prices continue to go higher.
And the improvement here, especially for its U.S. comparable sales, really comes at a timely point because for a while the company had been a laggard when it came to comparable sales, at least domestically.
Yeah, definitely. And it does speak to the kind of strategic changes that they've made. Like they did act maybe a little bit late in the game. Burger King has been rolling out their value offerings for a little over a year, but McDonald's has acted swiftly. Like, it's a big deal, I think, to get the buy-in from the franchisees of McDonald's. Like they had almost a consensus. It's very rare that you see almost like a high 90% of franchisees willing to take the price hits because they're the ones that are dealing with this at the end of the day. But I think McDonald's acting fast, acting boldly to kind of get back into the green.
I've noticed really in the last several years, so much more technology in the stores. Like a lot of them don't even have people practically taking your order. It's all done electronically. What are they saying about their investments in technology, maybe even AI? How's that impacting that business?
Yeah, for McDonald's, there's quite a bit of talk about their digital offerings for this quarter. All of these companies, so between McDonald's, Yum, which has KFC, Taco Bell, and a couple other brands under that umbrella, are all really pushing the digital for that exact reason, to get the costs down. Yep. McDonald's just rolled out their Monopoly program, and when I was a kid, Monopoly was the peel off on the cups. It was very exciting. Now it's completely digital, right? So that's another way of they're trying to drive people into the app to get people to shop through theirs. It's where a lot of promotions are. That'll help also drive foot traffic. So it's helping in two ways. It's helping people get in, shop more, and also helping on the cost front.
Maybe I'll try that today.
McDonald's?
I'll have to download the app and see if I can order, then go pick up on the one on 3rd Avenue.
I've done that, and it's much faster. It's much easier. It's streamlined. Yeah.
Okay.
But it took me a while to do the whole app thing because I didn't know how much information I wanted to share, and I didn't want to be bombarded by a lot of text messages.
Exactly.
I think we think alike on this.
Exactly. Okay.
And maybe you'll win big, and we won't see you tomorrow.
Yeah, exactly. All right, Red, thanks so much for joining us. Red Brow, he's an earnings reporter. Talk to us about the fast food biz, McDonald's, putting out some pretty good same-store numbers, and stock's up a couple of % on the news here. Looking at let's go back to Queens. Mayor-elect Mondami's taking some Q&A. Let's go back.
I look forward to being the mayor for every person that calls this city home. That includes the Jewish New Yorkers that voted for our campaign and those that didn't. My responsibility is to all 8.5 million New Yorkers, and we chose this location as a reflection of the borough that I serve and the fact that we are proud to be known as the world's borough. And for far too long, that embrace of so much of what makes New York City special, so much of what makes it the place that we are proud to call it our home, It has been missing in our leaders. Excited more, frankly, to deliver on an agenda of affordability alongside these incredible co-chairs for New Yorkers across the 5 boroughs.
Right here, sorry, we're going to go to Josie right here.
Hey, this is Q&A for Mayor-elect Mamdani, so I think somebody's taking a long time to ask a question. But they're located in Queens here, right at the site of the World's Fair, the 1964 World's Fair.
And he did say this is the borough that he serves, which is why he's chosen to hold the news conference here. His first public remarks since being elected in yesterday's election, a resounding victory.
Yeah, and I think
for the 34-year-old.
Absolutely, and it's striking the tone that he's representing all New Yorkers, which is a message I think that will resonate with his supporters and maybe some of the supporters that questioned him.
Incredible co-chairs of our transition team, and what I see are those who have had their careers defined by an excellence that we want to characterize the very city hall that we are looking to build. These will be the leaders of our transition, and also this transition will expand and extend beyond any one specific set of issue areas. So the topics of education and public safety continue to be of immense importance. We continue to prepare for the delivery on those very issues alongside the others that concern New Yorkers, and that will be the work of the next 57 days. And just to your second question, I am willing to consider anyone to work in my city hall so long as they are committed to working for my administration and to delivering on an agenda to lower costs for New Yorkers in the most expensive city of the United States.
All right, we'll go to Sam over here.
Mayor-elect Mamdani, Sam Alcott from Democracy Now! I have 2 questions. One, what should New Yorkers know that you are asking from Mayor Adams during the transition for the next 2 months? And second, you are not going to be the mayor for the next 2 months, but for months now, ICE agents have been abducting immigrants at 46 Federal Plaza. What is your message to the ICE agents who abduct their immigrants?
My message to ICE agents and to everyone across this city is that everyone will be held to the same standard of the law. If you violate the law, you must be held accountable. And there is sadly a sense that is growing across this country that certain people are allowed to violate that law, whether they be the president or whether they be the agents themselves. And what New Yorkers are looking for is an era of consistency, an era of clarity, an era of conviction. And that is what we will deliver to them. And I am looking forward to having conversations with Mayor Adams and his administration about the work of the transition to ensure that the handover is a seamless one and that it is one that benefits the shared work we all have to deliver for the people who call the city home.
Thank you, Andrew.
Congratulations on your victory.
Thank you.
One is,
everybody's asking too.
how quickly do you think you can clarify for everyone that you not only intend to keep Jessica Fish, but that she actually will stay as police commissioner? When will you be able to close the loop? And my second question is, before speaking last night, were you waiting for a concession phone call from Andrew Cuomo, and are you disappointed that you didn't get it?
I've made my intention clear to retain Commissioner Tisch, and I look forward to having conversations with her on that very subject. Last night, I spent time with my wife, with close members of my team, as we watched the results come in. I spoke briefly with Curtis Sliwa, and then I headed to address the thousands of New Yorkers that were there, waiting to hear of what this new era of government will look like. And that is always my focus. Not on the candidates of this past election, but rather on the people that are so often left behind by our politics, and I look forward to serving.
And Morgan.
Doing well. How are you, Morgan?
We're listening to comments from Mayor-elect Mamdani. He's holding a press conference in Queens at the site of the World's Fair from 1964. Iconic scene or location in Queens, taking questions from the press corps.
And he's made it clear that he chose this location specifically because he represented past tense the borough of Queens as a city assemblyman, and of course a resounding victory for the 34-year-old New York City mayor-elect who had promised free childcare and buses along with 200,000 new units of affordable housing. Let's listen in.
Mayor is seemingly unsatisfied with a record of raising rents by more than 12% on more than 2 million New Yorkers. and has gone so far as to consider appointing someone to the Rent Guidelines Board who is known for being a star, I think, on a show called Selling New York. And in many ways, that's the description of what he wants to do over these next few months. I continue to believe in the importance of delivering relief for the 8.5 million people who love this city, who live in this city, but cannot afford to continue to be here. And last night I spoke of Wesley, an 1199 organizer that I met outside of Elmhurst Hospital less than a week ago. And as I asked him how long it took him to get to work, he told me 2 hours. I asked him, where were you coming from? He told me Pennsylvania. That, for many New Yorkers, is now the reality, where they have to live elsewhere because they can't afford to live in the place that they love. And that has to be our compass in guiding the work that we do to ensure that we can make this a city that is livable and make this a city that finally turns the page on an era of big money and small ideas.
Yeah, I'll go to Holly right here.
Again, we're listening to comments from...
I am looking forward to having every member of my coalition being a part of our transition. The transition will be guided by the work that we need to do, and the coalition that brought me to this point has done an immense amount of work and has also been leading in the fight for dignity for working class New Yorkers. First, I just have to say I've spent many days in my youth watching the transfer window close, final hours on Sky News, so it's a pleasure to have you here. Yeah, I'm an Arsenal fan. I have to be honest, when you said you were from Sky News, I just got very excited. Could you repeat the question one more time? I think the lesson for the president is that it's not enough to diagnose the crisis in working class Americans' lives. You have to deliver on addressing that crisis. This is a president who ran a campaign on the promise of cheaper groceries, and now, as was said by one of our co-chairs, has gone so far as to cut SNAP benefits for close to 2 million New Yorkers. Someone who is literally making it harder to afford those same groceries whose price he was decrying not that long ago. And what scares Republicans across the country is the fact that we will actually deliver on this agenda. And the contrast is something that they cannot bear to witness. And I try to keep my focus similar to that cover on the New Yorker where the world ends in New Jersey, and thinking about what this means for our city instead of for our nation. And I will tell you that for our city, what left me with such great hope last night were the stories from so many New Yorkers who had never voted before, who had lost hope in politics years ago. And to stand here before you, having received over 1 million votes in an election that saw turnout the likes of which we haven't seen since 1969, it shows that politics, once again, is offering more than just a settling for the crumbs that are not able to meet the needs of so many families across the city. We are finally offering a vision that can meet the scale of the crisis in working class New Yorkers' lives. Thank you. Thank you very much. Please. Look forward, I'll first answer your first question, then I'll go to your second. I look forward to meeting with Jamie Dimon and meeting with anyone who is concerned about the future of our city and is invested in the vitality of that same city. And these are not very different from the conversations I had over the course of this campaign with many business leaders who, while we may have disagreements on fiscal policy, we also found many areas of agreement as to what the city actually needed. And I think it is critically important that we start to embody a style of leadership that does not demand agreement across every single issue in order to even have a conversation. We need to be able to deliver for New Yorkers, and that means to meet New Yorkers, even those with whom we have any disagreements. So I look forward to having those kinds of meetings, be it with Jamie Dimon or be it with other business leaders, and continuing to show that our affordability agenda is an agenda that would also benefit businesses across the city. Because what I've heard from many of those same business leaders is that the inability for city government and state government to provide universal childcare has led to businesses sometimes having to provide stipends to their own employees given the expense of that childcare. Makes sense because childcare in this city costs an average of $22,500 a year, which is a burden that many families cannot bear. And I also look forward to streamlining the regulations within city government. I'm someone who believes deeply in the public sector, believes deeply in public regulation, and I also believe if I cannot give you an answer as to why a regulation exists, then it likely doesn't have a good reason to exist any longer. And that extends to when a restaurant owner told me of the $25 a year he has to pay the city for the right to sell a frozen dessert. And it also extends to the way in which we fine and fee small businesses across the city, which is why we've committed to cutting that in half. And I have not spoken to Jonathan Greenblatt. I take the issue of anti-Semitism incredibly seriously. And last night in my speech, I spoke about how my city hall will stand steadfast with Jewish New Yorkers in fighting the scourge of anti-Semitism across the city and making that clear in the actions that we deliver on from January 1st. And I look forward to working with Jewish leaders across this city, whether they be elected officials, whether they be rabbis, whether they be community leaders, to deliver on the promise of not just protecting Jewish New Yorkers, but celebrating and cherishing them in this same city.
Yes, go ahead, Henry.
I think that anyone is free to catalog the actions of our administration. I have some doubts in Jonathan's ability to do so honestly, given that he previously said I had not visited any synagogues, only to have to correct himself.
Hi, Mayor-elect. Obviously, I have two questions as well.
Yes, yes.
Yes.
It's a 2-for-1 day.
Oh, yeah, a little more interesting. So, on President Trump and on delivering real, tangible results, as you alluded to last night with your new era, as Maria Torres Springer just said, how do you balance, or do you give it thoughts of balancing combating President Trump and not getting lost in that fight where you are not delivering those campaign promises? And second, I'm just curious, in the quiet hours of last night, you got off stage, you went home, maybe you were sitting by yourself, maybe it was just you and your wife. I'm wondering what those sort of thoughts in your head were in those quiet moments after this sort of enormous accomplishment and the weight of what's about to come your way.
It's very funny. Everyone is asking two very different questions. I'm trying to strike the right tone between all of them. New Yorkers are facing twin crises in this moment: an authoritarian administration and an affordability crisis. And it'll be my job to deliver on both. It'll be my job to stand up for the city and also to ensure that we do not look at Washington, D.C. as if it is the reason for all of the problems right here in New York City. Many of the issues we are speaking about, they predate President Trump. They are issues that for too long we have turned a blind eye to, or we have sought to rationalize or normalize. And what I'm so excited by in looking at these incredible women who will be leading our transition is a track record of being able to handle multiple crises at the same time. Crises which so often for others might be the only focus. For so many of the people on this stage, they were one of many. And these are the crises of cost, these are the crises of conviction, these are the crises that have come to describe much of our politics. And I find immense confidence in the fact that we are already building a team that has shown its ability to deliver and that will continue to show that over the next 57 days and beyond. I cannot tell you that I had many quiet moments between last night and this morning, but some things that I have been left with, whether it was in sitting with my wife or with close members of my team without whom none of this would have been possible, is the sense of hope that New Yorkers have. When I left the venue yesterday evening, there were hundreds of New Yorkers waiting outside. And so many of them were young New Yorkers. So many of them, it may have been their first vote they were ever eligible to cast. And in their eyes and in their shouts and in their screams, I heard the potential for what our politics could be. And it's a potential for New Yorkers to not only be able to see themselves in those that lead them, but more importantly, to see their struggles. And just before this, I heard from an immigrant rights advocate who said that the moment that made her whole in the speech that I shared was when I spoke about this city as being one that was built by immigrants, that was powered by immigrants, and now that will be led by an immigrant. I think for too long, many New Yorkers have been told that there are only places in the shadows. And it is incredibly exciting to stand here alongside these leaders to embrace the light that the future will hold for all of us in this city. Yes. Thank you very much. Gracias.
All right, we're listening to Mayor-elect Mr. Mamdani. He is speaking to reporters in Queens, in a district that he served as in prior. And right now he's taking questions, talking about, I think, Scarlett, trying to be as inclusive as he can at this point, trying to invite everyone under the tent.
Absolutely. He definitely has a message here, and it is to repeat the commitments that he has made to New Yorkers and to make sure that he delivers for those voters and those who didn't vote for him, frankly, talking about how he intends to be mayor for all New Yorkers.
The White House hasn't reached out to congratulate me. I continue to be interested in having a conversation with President Trump on the ways in which we could work together to serve New Yorkers, whether that be delivering on his campaign promises around cost of living or the many issues that New Yorkers have been sharing with me about the drastic impacts that the legislation that President Trump has ushered through Washington will mean for them and their lives. Too often we understand these impacts solely at an individual level, but if we just speak a little bit more about SNAP benefits, these are not just affecting the close to 2 million New Yorkers who are on SNAP, these also affect the grocery stores across our city. There were a number of mom and pop owned grocery stores that spoke to me about the fact that in the Bronx, SNAP revenues make up more than a quarter of all of their revenue. And this has the impact of decimating their ability to keep their doors open. And so I look forward to having those conversations and to making clear that if there is ever anything to be spoken about that could benefit the people of the city, I am ready and willing to speak to anyone about it. But if it is a conversation to come at the expense of those people, then I will fight that idea tooth and nail because my job is to serve this city.
Howdy, right here. Mayor-elect, you have showcased the willingness to speak directly to Trump and the pros and everything like that. And my first question is, are you concerned that doing so kind of incites even more of his focus and anger on the city? As a quick follow-up, you talked about Trump-proofing the city. Can you describe what that would look like in the role we've seen the deputy mayors, members of your administration?
When I speak about Trump-proofing this city, I speak about protecting those with the least from the consequences of a man with the most power in this country. It is in part a reference to the need to ensure that any fight for additional revenue is one that also looks to try and protect those same New Yorkers from these kinds of cuts to the greatest extent that we can. And it's also a commitment to ensure that so many of the storied parts of city government return back to the moments where they were on the front lines of fighting for dignity and civil rights, and I think specifically of our city's law department. This is a law department that, when you think of the seminal civil rights cases of this country, they were there. And yet today it has 200 fewer lawyers than it did before COVID. This is an example of a lack of interest from an administration in ensuring that we are investing in the tools that have been proven to protect those same New Yorkers. And I will not mince my words when it comes to President Trump. I will continue to describe his actions as they are, and I will also always do so while leaving a door open to have that conversation, because it cannot be understood as if it is an argument between two individuals. I am looking to lead this entire city, and everything that I do must be to the benefit of this city, and I look forward to delivering for that same city.
Yeah, hi.
Hey, how's it going on, Chris? First, I'd say we've come a long way since that conversation in Astoria Park, and it's lovely to see you here. You know, I think there were many who said similar things when we launched our campaign on October 23rd. Talk to the campaign in 6 months, talk to the campaign in a year, see where they are. And what we've shown is that the hunger, the dedication, the commitment to excellence and delivering in the ways in which we have been told are impossible. This is what will typify our efforts. It has thus far. This is what will describe them moving forward. And the passion, as Maria had said, of an undimmed potential for government to meet the needs of working people across this city, that is something that we fully intend to deliver on. These were not words that were shared as a means by which to inspire people for the purpose of an election. These were commitments that were made that we intend to deliver on to ensure that New Yorkers can live in the city they call home.
Congratulations, Mr. Mayor-elect. How do you respond?
I'm sorry, could you come a little closer or speak a little louder?
How do you respond to the reports that hundreds of thousands of New Yorkers could leave the city now that you've been elected? And secondly, I'm just curious, when you got the news and called the race for you last night, how did you celebrate? What did you do? What was the first thing you ate? How did you celebrate at home?
I think the first thing I did was drink some water, and it took a moment for it to settle in. And when it did, oftentimes this job is described with the language of burden, responsibility, pressure. And those things are true, but what is lost is opportunity. And that is really what I felt in that moment when this race was called, the opportunity we have to deliver for people who have come to expect so little from the politics of their city. And that is an opportunity that is at the heart of what motivates me each and every day. And I look forward to fulfilling the trust that was put in me by the more than 1 million New Yorkers who voted for our campaign, and also by New Yorkers who've had concerns or skepticism. I don't begrudge them, because they were subject to tens of millions of dollars in attack ads that told them the thing that should keep them up at night was me, when in fact what I've heard from New Yorkers, that the thing that keeps them up at night is the cost of rent, of groceries, of childcare. And so I look forward to earning their trust as well, because my vision of success is not that those who are skeptical leave this city, it's that those who are skeptical stay here in this city, and that we build a city that has room for even more to join us. Because this is a city that has to grow, this is a city that has to thrive, and the way that we will do so is by bringing an excellence back into City Hall, where it becomes the expectation, not the exception.
Congratulations. I'm so happy to report I have one question.
Oh, incredible.
Talks about the fact that you want to just meet expectations, you want to exceed them. Folks think that might happen tonight. Your first step in office being day one.
My first day in City Hall will look like my last day. It will be focused on the cost of living crisis. It will be focused on delivering for the New Yorkers who have been priced out of this city. 1 in 4 New Yorkers currently living in poverty across the 5 boroughs. And what excites me so much about being on the stage alongside these incredible leaders is that this is not a job that can be done alone. This is not a job that can be done by one person with one vision. It is a job that must be done by a team that is united in purpose in fulfilling the agenda that we ran on, an agenda of affordability. And for too long, we have heard from politicians who have told us what they can't do, when in reality what they mean to say is what they won't do. And I'm excited to prove that making people's lives better is not simply an ideal, it is something that we can fulfill in the day-to-day work of our administration. Thank you very much, Ethan.
Governor Hochul has had a good working relationship with Trump and been very time, I guess, at some time. Do you think there's anything to learn from her style of talking to her about?
I think the governor has set a very good example for what it can look like to both keep a door open to speak with anyone about anything that could serve the interests of the people of this state, while also refusing to sacrifice those same people for the purpose of maintaining a relationship. And that is exactly the approach that I will take, is when President Trump wants to do something that will benefit this city, I will be there to say as much. But if he is looking to persecute or prosecute or punish the people of this city by virtue of who they are or where they live or where they came from, then I will fight him on that. I think too often we have had a style of leadership that seeks to put oneself before the people that you're looking to serve, and my City Hall will do the opposite. Oh, thank you.
So, knowing that there was some
You know, this is a group that exemplifies the excellence I've long spoken about. It is an excellence that New Yorkers have seen across multiple mayoral administrations. It is an excellence that they have seen at the federal level, and it's an excellence that has been displayed amidst a conviction of what government can and should and must do for New Yorkers. And I'm excited by the prospect of them leading this transition to deliver for those same New Yorkers. And I also am clear with the more than 100,000 volunteers who brought me to this point, with the more than 1 million New Yorkers who voted for our campaign, that the work does not end with an election. In fact, it continues until we deliver this agenda. And that delivery will be something that we do over weeks and months and years. And it'll be something that we will take immensely seriously, because it is a delivery that will fulfill the hope that so many have put in us. Could we do the first one? I'll answer, then we go to the
You're
second.
listening to Zohran Mamdani. He is, of course, the newly elected mayor of New York City, due to take office on January 1st. He is holding his first press conference in Queens, New York, taking questions from reporters.
2025.com. And, you know, there were a few months ago where I told supporters across the city to stop donating. And today I am asking them to start once again. And I am asking them to do so because of the fact that a transition that can meet the moment of preparing for January 1st is one that will require staff, it will require research, it will require infrastructure. And those are things that we will have to provide. And I'm excited for the fact that it will be funded by the very people who brought us to this point, the working people who have been left behind by the politics of the city. I did get a text from my super late this night. Look, I have been told time and time again, and I've embraced it, to not measure the drapes. And here I am the day after being asked to use a ruler. And I will tell you that my focus right now is on the transition team. I will speak with my wife. I will think about this further, but when I have something to share, it will be done so publicly. Andrew Cuomo did it.
Okay. Two questions again. The first one, has the mayor or anyone invited you to City Hall? Do you have plans to go to City Hall to meet with you?
The mayor has not invited me as yet to go to City Hall, but I look forward to having those conversations about the transition.
In the last 4 years, we've heard a lot about Brooklyn. They've got the leaders in the House and Senate, the mayor, all sorts of power. Is Queens having its moment? We spoke about this a little bit standing here. Like, is this borough on top?
You know, I don't see it as a question of which borough is on top. I am looking to serve every single one of the 5 boroughs. And in each of these boroughs, I find so much of the inspiration of the work that we have to do in City Hall. And I'm also proud to represent Queens in the state legislature. I'm proud to be a resident and a assembly member for Astoria and for Long Island City. And I'm proud that we are standing here today in the world's borough to embrace what gives so much meaning as to what it means to be a New Yorker here in this moment today. This guy's trying to get me to go against other boroughs. Where's the suit? Good to see you. I appreciated Bill Ackman's tweet and the sentiment of it, and I will continue to have conversations with anyone who is committed to the welfare of this city, the vitality of this city, and those are the conversations I will have over the next 57 days and beyond. I can tell you what it means in this city. It means that the idea of a politics built around the delivery of dignity to each and every person who calls the city home, that politics is alive and well. And for too long, we have spent our time debating who deserves that dignity, as opposed to delivering it to each and every person who calls the city home.
David.
What specifically do you want to continue from the Eric Adams administration in terms of progress or initiatives? Do you anticipate getting involved in the speaker's race?
Can you just, I didn't hear the
Do you
second.
anticipate getting involved in the speaker's race?
You know, even amidst my many critiques that I have of the Adams administration, we have to have a sober analysis of the work that is done in any single administration. And I think that City of Yes is something that is a significant and good step forward. I think that trash containerization is another example of something that we should continue to pursue. And these are examples to me of some of the issues which have been long recognized by New Yorkers as ones that need to be contended with by government and ones that have simply been ignored. And I look forward to continuing on those issues and then correcting the course in many and other areas of city government. And I look forward to working with the council and with the next speaker on delivering on an agenda of affordability for each and every person that calls the city home.
Thank you guys so much.
Thank you all. Thank you.
All right, that was Mayor-elect Zoran Mondani with his, I guess, first press conference as mayor-elect.
Yeah, and he has pointed out that he has a lot of work to do before he takes office on January 1st. He says he has not been contacted by the current mayor, Eric Adams, but he looks forward to that conversation happening, reiterating how he plans to govern for all New Yorkers, including those, of course, who did not vote for him.
Will he live in Gracie Mansion?
I guess so.
Yeah.
Yeah,
Why
we
wouldn't
haven't
you?
heard otherwise.
Yeah. Very good. Why wouldn't you? It's a good gig, I guess. Good place to be. But again, yeah,
A lot of work for him to do.
Yeah, it'll be interesting to see. He admitted he's got a lot of work to do over these next 57 days on getting his transition team up and running, so that on day one he'll be able to hit the ground running.
Absolutely.
So we'll see how that plays out. We'll have full coverage of that coming up. Looking at the market, S&P's up 45 points here. Let's get a reset here. We'll go do that with Charlie Pellet.
Hey, thank you very much. And here's what's going on, Paul and Scarlett. We've got the Dow, the S&P, NASDAQ all higher. Best level of the morning right now, day after the election. S&P 500 index advancing by 45, back above 6,800. 68.17 where we stand now, up by about 0.7%. The Dow up 170, up 0.4. NASDAQ up 0.9%. And our Mag 7 index higher now by 1%. 10-year, 4.15%, with a 2-year, 3.62%. Gold is up $56 the ounce, still below 4,039.88, up 1.5%. A retreat for crude, down 1.1%. Look at that, below $60 a barrel, 59.62 right now, 59.93 on WTI. And Bitcoin right now, after yesterday's rout, we do have Bitcoin up by 3.7%, 103,974. You heard Mayor-elect Zoran Mondani live here on Bloomberg Radio moments ago, taking questions from reporters, where he also reached out to the chairman and CEO of JP Morgan Chase.
I look forward to meeting with Jamie Dimon and meeting with anyone who is concerned about the future of our city and is invested in the vitality of that same city. And these are not very different from the conversations I had over the course of this campaign with many business leaders who, while we may have disagreements on fiscal policy, we also found many areas of agreement as to what the city actually needed.
And speaking of business leaders, billionaire investor Bill Ackman has already reached out with a post on X saying, quote, "Congrats on the win. Now you have a big responsibility. If I can help NYC, just let me know what I can do." Recapping stocks higher, S&P up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Bitcoin, it is rallying today, up 3.6% to just about 104,000, but it was below 100,000, well off of its recent high of 125,000. And what I'm reading about today, and some of the Bloomberg News reporting, long-term holders are dumping the token. So let's go to Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. So again, Mike, just reading some of the Bloomberg News reporting here, and I guess what's a little bit different than maybe some other selling periods for Bitcoin, and maybe long-term holders may be selling here. What do you make of that?
Yeah, it makes a lot of sense, Paul. It's what's happening, and it's a fundamental shift in the space. In the past, when you bought Bitcoin and cryptos, you're kind of doing something away from and kind of countering the authorities, U.S. government thing. Now, one of the biggest beneficiaries, if you're buying cryptos and cryptocurrencies and Bitcoin, is not only the Trump family, Trump administration officials, but you're also dependent on the Trump administration for these things to continue to appreciate. And a lot of them are just, tokens that track nothing. And to me, that's the risk now, is the big insiders are getting out. 100,000 is a very key support. Now we reached that level. That's great. It's supposed to bounce from that level. But what it does from here is very significant. If the market continues to tickle down below 100,000, those are dominoes potentially falling, because it's very highly correlated to the stock market. Now it's almost the same trade, because a lot of that money has been coming from ETFs. That pile-on is coming from people who traditionally have been more involved in the NASDAQ and S&P 500.
Right. It's a risky asset that trades in tandem with equities rather than treasuries, even though a lot of people talk about it as this safe haven. So what's interesting, of course, is that on October 10th, there was this crypto liquidation event. A lot of people in the industry talk about that as a turning point. What happened on October 10th, Mike, from where you sit, that kind of helps us understand the struggles that Bitcoin and the rest of the altcoins are going through right now?
The bond gods started to kick in to remind crypto persons about the lessons of tempting the market gods. So not so much the bond gods, the market gods. So on that day, the S&P 500 dropped 3%. Not a big deal. Stuff that used to happen. Then the crypto market plunged that weekend. And since then, Bitcoin has dropped down to almost 10% in the year. It was up around 20% in the year. The Bloomberg Galaxy Crypto Index was up 30% for a while. Now it's down 7% in the year. So I think what's happening is all that speculative hubris and excessive bullishness is just now ticking down. And it's towards the end of the year. This is not really a time to buy dips when S&P 500 volatility is running at very complacent levels, the most complacent in 5 years. So I think what's happening is we're finally hitting those sell stops in the exuberant buyers of cryptocurrencies. And my fear is it's going to be more of them to the end of the year. The bottom line for crypto people, I think they're understanding now, is they're not buying treasuries. They're not buying something uncorrelated. They absolutely need the stock market to go up just for buoyancy. And what I see is divergent weakness in cryptos. Like I mentioned, S&P 500 is up almost 17% in the year. Bloomberg Galaxy Crypto Index is down almost 10% in the year, despite trading 4 to 5 times the volatility. That's a real bad sign for cryptos. And if we start having just a little more weakness below 100,000 Bitcoin by the end of the year, I think we can test some potential deflationary dominoes. I'm quite frightened.
I'm looking at CRYP Go on the Bloomberg, and it allows you to look at all the cryptocurrencies. Of course, there's the OG Bitcoin, and then you've got everything else, all the way down to the smallest ones like Polygon, which I've never heard of, but I think that's par for the course here for a lot of these coins. Does it follow that every time Bitcoin does something, the rest of the digital coin sector follows suit? I mean, are people making the distinction between how Bitcoin trades and how Ethereum trades or Tether? Do you look into that?
Absolutely, Scott. I'm glad you went there because they're all correlated. Bitcoin's beta in the space. So if Bitcoin drops 10%, all these other cryptocurrencies typically drop 20 to 30%. One good example is Dogecoin. It has $25 billion market cap, and it's number 9. It was launched as a joke. It is a joke. It tracks nothing. This is the kind of stuff that, to me, reminds me of kind of things I read about in 1929, and I remember in 1999 and 2007 in the U.S. It's just silliness of an excessive bull market. So the key thing to remember is crypto people tell you Bitcoin's different. Now I could point out, yeah, sure it is. In 2009, there was one crypto, it was Bitcoin. Now there's about 25 million listed on CoinMarketCap.com. So there's unlimited supply of these things. And I, as a strategist, I look at this as, the best days are over. I'm more worried about going down than any more continued rally. And one thing that really happened is when Mr. Trump flipped, that clicked it in a little bit of speculative excesses. And now we have this pile on ETFs. It's classic peak bull market kind of trading.
Wow. Does technical analysis apply to crypto, Mike?
Absolutely. It has to, Paul, because most of them track nothing. There's no basis. Like if I trade crude oil, gold futures, or look at gold futures, it tracks a gold contract. If I could trade a T-bond futures, it tracks a treasury bond. And cryptos, only 300 billion track anything. Those are stable coins, crypto dollars. So I'm worried about this whole space. People are going to realize, okay, it tracks nothing. We'll just flush out 90% of it, and then we'll get back to building a decent market that's going to go up. And that's what I'm worried about. If we break below 100,000 in Bitcoin, the whole space is going to just cascade, is what I'm worried about. And it's getting towards the end of the year. We had a few profits. They're gone now. What do you want to do with the rest of them?
So what happens in a true crypto liquidation event sell-off? Do people in the industry, in the market, look for someone to come out and give a vote of confidence? And who would that person even be at this point?
Exactly. So that's the key thing. It was the biggest thing ever to have Mr. Trump flip. It helped him get elected. And now we all know there's a vested interest and they need to support the market. And here, Scarlett, it's just a bunch of bots trading and they're all, they trade it in and out. It's a great casino, but the house usually wins. And I think we're finding out the crypto gods are teaching us, and the market gods are teaching us the house is winning. I'm actually very concerned. So one key thing that's really happened this year, the chart on Bitcoin looks almost exactly the opposite of what the gold chart looked like a few months ago. It was hanging out, and then broke out higher. Now that crypto chart's breaking down. It's on like a monthly candle chart, so I'm really worried about it. Now, and also kind of leading indicators. MicroStrategy. Now, strategy was a leading indicator of Bitcoin. It's below its 200-day moving average, and it rolled over in August.
Mike, great stuff as always. Always delivered, no question. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. We'll do pork bellies next time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Pretty decent day for the stock market here.
After yesterday's sell-off, a bit of a recovery here with the Russell actually leading the way up 1.5%. Mike McGlone was just talking about MicroStrategy, or strategy as it's known now. Slightly higher today, but yesterday trading at the low since April 8th.
Very good. All right, Balance of Power. Joe Matthew starts right now.
This is Balance of Power, live from Washington, D.C.
Thanks for being with us on Balance of Power on Bloomberg TV and radio. I'm Joe Matthew at World Headquarters in New York. We've got a lot in store here after an election night in Washington that coincides with a government shutdown that has now reached its longest in American history at 36 days. President Trump blaming the election on the shutdown. And we're going to have much more as Democrats sweep elections across the country. All this as the Supreme Court hears arguments coming up here on a pivotal day in American politics. We're hearing arguments on the president's tariff regime, and we'll have much more on this as we go forward with the best of Bloomberg, starting right now at the Supreme Court. And all this comes after a pivotal night on the campaign trail.
Tonight you have delivered a mandate for change, a mandate for a new kind of politics, a mandate for a city we can afford.
In 2025, Virginia chose pragmatism over partisanship. So New Jersey, the future is now. Roll up your sleeves, let your passion flow.
All right, as mentioned, joining us now from outside the Supreme Court is Bloomberg Washington correspondent Tyler Kendall. We'll have a lot more on the election results coming up right here. Tyler, give us a sense of the stakes as the arguments are delivered.
Yeah, hey, Joe. So we're just about a little over 2 hours into the oral arguments today, and it does appear that the justices may be casting doubt on the Trump administration's argument. There are two central questions at the center of today's hearing. One, does President Trump have the legal authority to impose tariffs under IEPA, the International Emergency Economic Powers Act, because it's never been used in this way before? And two, if he does have the authority, can he do so without congressional approval? And it is that latter question that appears to really be at the forefront of the justices' questions today. Many of them are asking the Solicitor General just this. In fact, we're hearing the Solicitor General, who is representing the administration, try to distance the administration's argument away from the fact that tariffs can be used as a revenue raiser. We're going to keep hearing this come up because revenue raising sounds a lot like the power of the purse, which sounds like it would fall under Congress's purview. Instead, the White House is trying to make this all about foreign actors and national emergencies. The other part of this is that in order to invoke IEPA tariffs, the president had to declare a national emergency, and we're hearing some of the justices question whether or not those so-called reciprocal tariffs enacted over this national emergency, according to the administration of persistent trade imbalances, meets that legal standard for an unusual and extraordinary circumstance in order for there to be a national emergency. There's a lot still to follow here in this case, but Joe, we heard the plaintiffs argue that the administration could have used other tariff powers and that might become even more pertinent depending on how this court case goes. We know the administration is preparing these other authorities like Section 232, those national security tariffs, and we're not expecting the levies to go away. But Joe, I'll leave you with this. About 60% of the tariffs so far implemented this term are tied to IEEPA, so this could have some pretty sweeping impacts.
Boy, it sure sounds like it. Tyler, can you give us a sense of what we're hearing? We're obviously on TV and radio here, but it's a pretty noisy situation behind you. How many folks have turned out at the court for these arguments?
So there is a crowd here against President Trump's tariffs. We know that this court in particular has some weighted circumstances when it comes to presidential authority, because while the Supreme Court has ruled on an emergency basis around President Trump's policies before, this is the first time the court is hearing a case related to his actual policy that would have long-standing impacts. This is a longer-term case, not just an emergency ruling. So that's really significant here as we look at the broader circumstances, but definitely loud out here in front of the Supreme Court today.
Well, it sure sounds like it, Tyler. Thanks for being on duty in an active atmosphere once again in the nation's capital. We'll be back with Tyler a little bit later on in the program as we turn our attention to the elections from last evening as promised, including right here in New York City, the mayoral election that brought the self-described Democratic Socialist Zohran Mamdani to the podium in a victory rally last evening.
The conventional wisdom would tell you that I am far from the perfect candidate. I am young, despite my best efforts to grow older. I am Muslim. I am a democratic socialist. And most damning of all, I refuse to apologize for any of this.
A speech that's still resonating today for Democrats and Republicans here in New York and around the country. And joining us now from New York City Hall, Bloomberg News senior reporter Miles Miller. What's the mood there today, Miles?
Oh, yeah, it's a mood of transition, right? We know that Zohran Mamdani has to move quickly within the next 2 months to get his team in order. And what we're hearing is that this team will look a lot like 2 city halls ago, the city halls of former Mayor Bill de Blasio, trying to bring in some of the firepower and some of the strong management and government experience that his opponents throughout the race said he did not have. What we saw just moments ago was Zohran Mamdani naming his transition team, among them a name very familiar to viewers of this program, listeners of this program, Lina Khan. She is one of the co-chairs of his transition, the former head of the FTC, and it shows you where he is thinking about for his affordability pitch. He said that he needed to bring up Donald Trump in his speech because he was going to fight against him, use the city's law department, the city's lawyers, in an effort to fight against cuts to city funding, to fight against ICE being in the city, and all of that. He also mentioned Jamie Dimon by name, saying he's willing to sit down and meet with him to figure all of this out about his affordability push. He said companies spend on average about $22,000 per employee in order to figure out how to do childcare for those employees, whether it be Bright Horizons or whatever provider they use. And so he said that that is keen to the finance community in the city. He's also talked about raising the corporate tax and taxes on wealthy New Yorkers. But this was a whirlwind night and really a mandate for him for change, a mandate for affordability in New York City.
Miles, we've heard a lot from President Trump, of course, on this campaign, calling Zohran Mamdani a communist, promising or at least threatening to pull federal funding from the city. Does New York expect that to happen?
I think that they're going to have to get ready for that. So the transition has a lawyer right now, someone who is very close to Mamdani, and he will have to work with Mamdani on how to come up with the messaging around any pullbacks of funding. And then when he takes office on January 1st, I think one of the first things he has to do, besides his first deputy mayor, is get that corporation counsel, get a tough lawyer in office to figure out how they're going to fight back against Trump, because that's going to be what the city does. We saw just a few months ago when the federal government under Elon Musk and Doge literally pulled back money from the city's account because of the handling of the migrant crisis here in the city. And they expect stuff like that to happen again with Trump. Trump has said he's not sending money to New York City under a so-called socialist. We'll see if that actually happens.
All right, Miles, great to have you live from City Hall. Miles Miller, Bloomberg News senior reporter this day after the election. As we try to widen our scope here with someone who has a bit more involved when it comes to this campaign. Don Levy, director of the Research Institute at Siena University, is with us. I think we might have that wrong on the camera there, guys, as we try to broaden our scope here. Don, it's great to see you, and I'd like to get granular with you, if we could, here on the New York mayoral election. We've talked a lot about the personalities involved here. Talk to me now about the neighborhoods and how Zoran Mamdani pulled this off.
Well, it certainly is a mandate. We saw turnout in New York City greater than we've seen in 30 years. Mamdani himself garnered over 1 million votes, most especially dramatic vote totals amongst young people, college-educated voters. He did extremely well in areas of Brooklyn, Manhattan. The only borough that Andrew Cuomo was victorious in was Staten Island. Obviously a historic Republican stronghold. And at this point, it does appear that relative to polling, there was some movement. Curtis Sliwa's vote relative to polling ended up migrating a little bit towards Andrew Cuomo. But with Mamdani crossing that 50% mark, that's a sweeping victory, over 1 million votes cast for him. And it really comes down to affordability, affordability, affordability. I mean, that's where he kept his laser focus. That polls extremely well in New York City, New York State in general, the entire country. And if you compare Mamdani's support on that issue to the current low polling that President Trump is receiving in terms of how well he's doing on addressing affordability, those battle lines are clearly drawn. Right now in New York City, there is this sweeping groundswell of support for Mamdani. Now we're going to see what takes place as he moves to take office. How well can he deliver? Can he hold this enthusiasm that he garnered in the election?
Got it. So in this case, when you consider these results and you look across the country at some of the other races that we were tracking in New Jersey, for instance, right across the river, down in Virginia, the Democrats who resonated with voters were quite different than Zoran Mamdani, and there's a difficult conversation, I guess. Maybe it's not difficult, but a family conversation among Democrats to figure out what the playbook is for the midterm elections. Is there going to be a jackknife approach where Democrats offer a menu of selections, or do they need to find a unifying message?
Well, sure. I mean, there's a lot of talk about who's the face of the Democratic Party. Clearly, and we've seen already, Lee Stefanik, who more than likely is going to oppose Kathy Hochul for governor here in New York, is very out front describing Mamdani now as the face of the entire Democratic Party. It appears, when you look across the river at Mikey Sherrill's victory, if you look in the D.C. area, of course, in Virginia, Abigail Spanberger, there are multiple faces of the Democratic Party right now. In New York City, it's Mamdani, but if you look at Sherrill, if you look at Spanberger used the word pragmatist. That's a different sort of Democrat. So right now, I think Democrats, what they share in common is that the issue of affordability, the issue of how well has President Trump done in nearly a year in office of addressing what he said was going to be a new era of prosperity. Voters last night, in effect, said, I don't feel that way. And so they're looking for these Democrats who really are quite different. Sherrill, Spanberger, Mamdani, very different Democrats, but in their specific areas, whether it's New York City or New Jersey, they were turned to by voters to say, please do a better job of helping me with affordability, my job, my child care, my cost of housing. Those are issues that voters, in effect, said President Trump has not sufficiently addressed, and now they're looking for quite different Democrats in these different areas to address those issues.
Donald Trump says Trump wasn't on the ballot and shutdown were the two reasons Republicans lost elections. Is there anything to that?
Well, sure. I mean, there's certainly a history of Trump overperforming when he is on the ballot. What's interesting last night is these Democrats overperform. Mamdani crossed that 50% mark. That was one of the question marks. Could he? Cheryl overperformed relative to how Harris had done in New Jersey, how Murphy had done in New Jersey. And so at this point, is it a question of Trump not being on the ballot, or is it a referendum, at least in these elections here in 2025, in these states, as to whether Trump's policies have been sufficiently effective for these electorates? The answer last night, and if you widen the lens to California, some elections in Pennsylvania, even local elections in places like North Carolina, the Democrats had a very good night, and it seems to be more than just whether or not Donald Trump was on the ballot. It seems to be how people feel about the country. We continue to see on the right track, wrong direction question, Americans are unsatisfied with the direction of the country. They're unsatisfied with just how much it costs to be an American today. They called for change last night.
All right, let's pull out the lens even further and go all the way to the West Coast with California, Don, because guys like you are going to have a pretty interesting job in the months ahead, resetting your map to go along with a number of congressional maps that are actively being redrawn, not just California, not just Texas. How far do you think this goes, and how different will the country look by the time it's done?
Boy, it's anybody's guess at this point. You know, when we're talking about 5 seats potentially in California, at least that many in Texas, maybe being redrawn, gerrymandered, action taking place in states like North Carolina, Illinois, potentially Ohio, you know, here again in New York. The maps are as yet not known. It still comes down to, no matter how well the various parties in power in these states end up drawing these maps, voters are still going to make a decision. They're still going to show up and vote, and they're going to vote on how they feel when it comes to the 2026 congressionals. But that season, obviously, and I think you're opening up that can of worms. Yesterday's election is over. Now we are into the 2026 campaign, and it will be waged in many, many congressional districts around the country. Sometimes we say there's as many as 65 swing districts that could go either way. We'll wait for the dust to settle. It could take quite a while to know exactly what these districts look like, but I anticipate we could have that many. We could have 65 districts when we get to next November, who will decide who's in control of the House of Representatives.
Wow, pretty wild. I mean, we've got a long time, of course, between now and the midterms. Well, in fact, it's a year from 2 days ago. Does that mean that the midterm campaign starts now?
The midterm campaign starts right now. Certainly, you're already seeing statements from various congressional office holders. They're taking positions, you know, whether they are celebrating last night's victory or calling attention to what they see on the Republican side of the foibles of the Democratic Party. We've got to fight through this shutdown, issues relative to health care, to SNAP. But the campaign is certainly going on, and every single issue that the country faces will be seen now through that lens of how is it going to affect the election a year from now.
Really interesting, Don. It's fascinating to compare notes with you on this, and I wonder if there's anything comparable at this point when you look at turnout in our remaining moment to see presidential level turnout in an early vote in a state like Virginia in an off election year. Is this a new age of politics we're in?
You know, hesitant to say it's a new age, but I think that what we're seeing is tremendous enthusiasm, interest. The turnout in California is staggering in an election where all there was is one single referendum on the ballot. The turnout in New York City, we saw young people turn out, and we've been talking about young people turning out in droves for as long as I've been doing this job. But last night we saw it. So it is a time, I think, in America where many people on across the entire continuum are starting to roll up their sleeves and say, I've got to get involved. And cynicism that we were worried about in some of the last couple cycles seems to be drifting away. Yeah. And both sides are saying, roll up your sleeves and get the vote out.
All right, Don, great to have you. Don Levy with us on Bloomberg TV and radio. This is Bloomberg.
to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
In case you missed it, on Bloomberg Brief.
This is a big difference from April. Remember when there was no place to hide? And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral.
Don't miss Bloomberg Brief, live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Is Wall Street worried about the fact that government is shut down?
I think we all should be concerned about the fact that the government shut down.
Who do you think is responsible for the shutdown?
The government.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it, on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew at Bloomberg's world headquarters in New York this day after the elections. As we pick through the results, it's a day of reckoning, you could argue, for both Democrats and Republicans. Democrats are trying to resolve a great evening when it comes to election results, but competing messages between the victory that we saw in New York City in the mayoral race to the moderate Democrats who won in states like Virginia and New Jersey. It's a very different conversation for Republicans this morning. As the president posted on Truth Social, Trump wasn't on the ballot and shutdown were the two reasons that Republicans lost elections tonight. We heard from the president earlier today as he summoned Senate Republicans to the White House for a meeting on all of this, picking up the pieces from the elections and dealing with a government shutdown that is now historic, 36 days, the longest of all time. Here's what we heard from President Trump this morning.
I thought we'd have a discussion after the press leaves about what last night represented and what we should do about it, and also about the shutdown and how that relates to last night. I think if you read the pollsters, the shutdown was a big factor, negative for the Republicans, and that was a big factor. And they say that I wasn't on the ballot was the biggest factor.
Let's play it to the panel now. With us, Jeannie Shanzano, Bloomberg Politics contributor and visiting democracy fellow at Harvard Kennedy School's Ash Center. We're also joined by Republican strategist Maura Gillespie, founder of Blue Stack Strategies. Great to see both of you on this day after. And Jeannie, I hope you got some rest because you were up with us late last evening. I'm wondering your thoughts on the way the president is positioning this, which, by the way, is different than congressional leaders. We heard earlier today from the Speaker of the House, this wasn't even a Republican story last night. The president says shutdown had a big part of it. Is he right?
I think shutdown does play a big role in this, but I also think he is wrong about the fact that he wasn't on the ballot. I read this very much as he was on the ballot. He was lording over this election, and Americans were speaking. 1 year ago today, millions of Americans elected him to address the cost of living, to address affordability, to address the economic woes that they are feeling. And he has, particularly in the last month or two, been completely out of touch on that issue. He's allowed this government shutdown to go on. When asked on 60 Minutes about it, he said, we'll just keep voting and then we'll use the filibuster. So I think the president is out of touch. And don't even get me started on the Great Gatsby themed party again, the ballroom in the White House.
I've learned my lesson there.
Yes. He's out of touch, and he was on the ballot. And this is a wake-up call for him and Republicans that the American voter is going to hold them accountable. He won by millions a year ago. He's got to be focused like a laser beam on the economy. He wasn't in Washington for much of the last month.
Maura, I'm curious to hear your take on this here in the conversation that the president must have been having with senators in the room today, urging them to kill the filibuster. It's noteworthy that none of those senators came out to the sticks, as they call it, the stakeout position in the driveway of the White House. Usually they'll come out and talk to reporters to frame what happened and maybe get some good publicity out of it. They all went out the back door from what we understand, and I wonder what you think took place in that room.
I'm thinking there's probably discussions being had on the way back to the Capitol, because senators and truly Republicans at large need to think about the role that Donald Trump has played in the past and what currently is happening. To Jeannie's point, he was very much on the ballot last night in terms of, especially New Jersey. You saw the exit polls that said people were voting for Cheryl not because they liked her as a candidate, because they were voting against Donald Trump. That is a massive thing to be looking at, especially in terms of how polarizing he as a candidate is and how he is as a president, but it's the policies and it's the lack of focus on the issues that he promised to address. This golden age of America that he promised to bring forth has not happened, and I think Republicans and leadership are thinking, okay, 2026, we need to figure out a new strategy, because Trump being attached to us may actually be a problem. If we don't turn things around, if we don't start really pumping into the economy like we promised, they're going to be the ones who have to answer for it, because Donald Trump's not going to answer for it. He does not on the ballot again, and he quite frankly doesn't seem to really care what happens in terms of no one's really seeming to stop him, right? So I think that the Republicans in Congress are having separate conversations from the president himself.
Really interesting. So we step across the Potomac to Virginia to consider the impact that the shutdown may have had on some of these elections last evening, as well as, if we remember something called the Doge, the impact on the federal workforce, not just furloughs, but layoffs, going back to the start of this administration. Abigail Spanberger winning in double digits last evening as a moderate Democrat in a state teeming with federal workers. Let's go back to her rally last night.
Right now, our federal workforce is under attack, and the chaos coming out of Washington is killing Virginia jobs and creating economic uncertainty for tens of thousands of families. Government employees, government contractors, small business owners who are impacted by the chaos coming out of Washington. Virginia's economy doesn't work when Washington treats our Virginia workers as expendable. To those who have been impacted by the mass layoffs, by furloughs, by the hardships that you are experiencing, please know that I will direct the full power of the governor's office to support you. And tonight, as the governor-elect, I call on Congress, Republicans and Democrats, and our president to make real progress on bringing this shutdown to an end.
She won by more than 15 percentage points. Jeannie, that's more than Ralph Northam's blowout in 2017. So I guess the question is this a DMV story? District, Maryland, Virginia? Is this something that has to do with Virginia's proximity to the Capitol, or are we going to see this around the country?
I think it has to do with that, but I also think it's bigger because as you look down ballot, the fact that the Attorney General candidate on the Democratic side, who was incredibly flawed, he also won, I think was a remarkable statement to how angry people are at the Republican Party. And we saw that in down ballot races in red states, in blue states, in purple states, whether it was Georgia, whether it was Maine, whether it was Virginia. So I think it is both of those things. And I think when we look at what Abigail Spanberger is talking about, the governor-elect, the reality is that Donald Trump fell into a trap that many elected officials do, and this is a warning to Mayor-elect Mamdani and all the governor-elects and everybody else. Don't overread your mandate. He overread the mandate. People certainly want to make government smaller, but you don't just carelessly and recklessly go in and fire hundreds of thousands of people and then try to hire them back. You don't start putting tariffs on Canada because somebody put up an advertisement. You don't sort of take tariffs and yank them up to 50% on Brazil because you don't like what they're doing to the former president, right? This is an overreading of a mandate. It's very common in American and other politics. Trump has fallen into this trap, and Republicans will pay the price. So I think that's what we're seeing in places like Virginia and, quite frankly, across the country.
Do you feel as strongly about this as Jeannie does, Maura, and keep New Jersey in mind? We heard this was too close to call. It was a one-point race. Mikey Sherrill had a double-digit result here and flipped at least 5 of the Trump-supporting counties back to blue last night. What was behind it?
You know, when you looked at the breakdown of different counties and how they voted in the past elections, there was also this, truly, it comes down to Trump, right? I mean, I do think that people who were voting against Trump, they weren't necessarily voting for Mikey Sherrill. They were voting against Donald Trump. And in similar situation with Jay Jones in Virginia, you're looking at people who weren't voting for him and as an endorsement of him as a candidate, because quite frankly, I think a lot of people had problems with him as a candidate, but they're voting against Donald Trump to say this is not okay what's currently happening, and they wanted to use their vote to do that. And Republicans, the ones who voted for Trump in large swaths, those MAGA diehards, either they didn't show up or weren't inspired by Winsome Earls and others. And so I think that's what you're seeing. I just don't think that Republicans are ready for what's coming in 2026 if they fail to address the issues that are concerning their voters, which is affordability. And it's not, you know, rounding up children at their schools and deporting them. That is what you heard from many people who were giving exit poll interviews and their concerns. And they may have been Trump voters before, but that's not what they wanted, right? You're hearing this a lot, is that this isn't what I voted for. This isn't what I voted for. And so you heard a lot of that last night. You heard a lot of that today. People felt either compelled to switch their votes or not show up at all.
Jeannie and Maura, thank you so much. We'll have a lot more with our political panel in hour 2, as always, of Balance of Power here on Bloomberg TV and radio. We've got a lot more to talk about, including Prop 50 in California and the redistricting effort that's now spreading across the country. But we want to update Wall Street for you here. Let's take a look at the Wednesday trade now with power moves on Balance of Power. Bloomberg Markets correspondent Nora Melinda. Looking pretty good today, Nora. Stocks up, yields up, crypto's up, VIX is down. What else do you want?
Well, Joe, we are seeing stocks bouncing back from what we know to be yesterday's declines. You are seeing dip buyers starting to emerge in the market, really trying to capitalize on yesterday's lows here. Of course, you are seeing the S&P 500 up about 0.8%. NASDAQ also popping up higher, almost at 1% right now as we speak. Bitcoin also in focus. Of course, we know this is a cryptocurrency asset that we like to keep an eye on, especially as we think about people taking on more speculative bets. Of course, we do know that Bitcoin did pull back just yesterday. A lot of people looking at that $100,000 level. We are seeing Bitcoin up about at 103,000 right now. But of course, in focus still remains the government shutdown. This and the fact that we are seeing a lack of data right now in the market for a lot of investors to make decisions here. Of course, we did get ADP, private payrolls data, and we are really parsing through a lot of earnings that are coming through. So let's take a look at what's going on here with bonds. Of course, we are seeing bonds sliding here, but we are seeing yields, ticking up just a tad higher here. So just keeping an eye on the 10-year yield at about 4.2% right now as we speak. But back to those earnings that we were discussing. So we are seeing a lot coming through in terms of the read on the U.S. consumer right now. Let's take a look at shares of Kava, down about 0.5% right now. Of course, we do know we are seeing a bifurcation right now in the market. U.S. consumers really just stepping away from fast casual restaurants and more going toward fast food restaurants like the likes of McDonald's. We've also got McDonald's in focus. You are seeing McDonald's up higher, more than 3% right now, and that is just because we're seeing them having to really rely on deals and discounts to really entice and appetize customers right now in this environment. It still clearly is a tough environment here on a macro basis for the U.S. consumer, Joe.
It sure is. I'm looking at some of the chips getting a bid back today here. Nora, AMD, we thought was a disappointment last evening. It was lower in after-hours trading. It was a bit lower this morning, but it seems like AI is back on the menu.
It seems like people cannot leave artificial intelligence alone. Of course, we know that has been the bid so far this year and last year. A lot of people really betting on this AI boom. So you were seeing some weakness in shares of AMD. And we were thinking about this, of course, when we were really dissecting Palantir Technologies, which reported earlier this week. We are seeing people being a bit more critical of the AI boom, but you are still seeing people really seeing this as a good bet for them.
Really interesting stuff here. Great to have you with us, Nora, as always. Bloomberg Markets correspondent Nora Melinda will be with us over the course of our 2 hours of broadcasting, a special edition here as we welcome our global television audience to the party we normally throw on the radio every day here on Bloomberg. I'm Joe Matthew at World Headquarters in New York. We're going to keep tabs on the markets here and also the state of politics in America. We'll spend some time with Michael McKee coming up next as the Supreme Court hears arguments in a case that challenged the president's tariff regime. We'll have much more on that. Live from Washington in a conversation with Greta Peisch, partner at Wiley Ryan, as we connect the dots on both ends of Pennsylvania Avenue on the Wednesday edition of Balance of Power on Bloomberg TV and radio.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Now, what would you say when you look at your career that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. And because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, no, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%.
but he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. In case you missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supplies. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech. Live every weekday. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew at World Headquarters in New York. We've got our eyes on Washington and specifically the Supreme Court back in play today, hearing arguments in a case that challenges President Trump's tariff regime, which is, of course, based on a declaration of emergency. Those arguments being held now. It won't be decided today, but we're trying to read tea leaves, as always, with an ear on what is happening inside the Supreme Court. Coming up, our conversation with Greta Peisch from Wiley Reiner. We're going to dig through some of this in a moment with Michael McKee. Let's put an ear on some of these arguments so far. This is straight from the court a short time ago. Justice Sonia Sotomayor in conversation with the Solicitor General John Sauer. Let's listen.
I don't understand this argument that it's equivalent or that foreign powers or even an emergency can do away with the major questions doctrine. Didn't we in the Biden case recently say an emergency can't make clear what's ambiguous?
As to that point, I believe the court has never applied the major questions doctrine in the foreign policy context.
But we have,
emergency context, not foreign policy
counsel,
context.
We have never applied it to foreign affairs, but this is a tariff. This is a tax.
Joining us now, as mentioned, Michael McKee, Bloomberg International Economics and Policy Correspondent. You've actually been listening to this, and I will thank you for it. Mike's watching, so you don't have to. Are we getting any sense beyond the partisan break on the court how this might land?
We do have a sort of sense that it's not looking good for the administration. There are two ways the court can decide this. One would be, well, three ways. One would be to say there's not an emergency here, but the justices have avoided getting into that argument for the most part, leaving some deference to the president in that case. But the other would be to rule on what you would call the merits. In other words, does the president have the power that's in the law? Is it in the law, the IEEPA law, that enables him to impose tariffs? And the government is arguing that, yes, there's a broad exception in there because he can regulate, and regulate could mean taxes. And the other side is arguing, the plaintiffs are arguing, in this case, It doesn't say taxes, and the argument turns on whether or not you could put a fee on something, but that's to cover the cost of it, as opposed to a tax, which is a revenue raiser. And the argument is that this is a revenue raiser, and the justices seem somewhat sympathetic to that. And the other is, as you heard from Justice Sotomayor, the major questions doctrine, which is something that's come up, especially with the conservatives on the court in recent years, that suggests that you cannot assume that a president, or in most cases an agency, cannot assume a power that Congress has given them to overturn a major policy of the United States. And so the question is this a case of president overturning a major power of the Congress that would be allowed? And there seems to be, and this is the part that may be bad for the administration, Justice Gorsuch, who's very big on this, suggested that he thinks there's a major powers question involved here. So it looks, as you say, there is a breakdown. The three conservatives do seem to be siding with the administration, and the three liberals seem to be deciding the other way. But right now, it looks a bit like Justice Gorsuch might find himself in the major powers question, and that you would see the chief maybe go along, and then Amy Coney Barrett seems to be leaning in the direction of the plaintiffs, but it isn't completely clear.
Well, if you talk to the administration, they would tell you that this is just the first of many options they have to base tariffs on. The president on Truth Social, literally life or death for our country. The ability to apply tariffs, in his case, under IEEPA, they'll come back through many different venues to keep these tariffs alive, won't they? Yeah,
the Justices asked the lead attorney for the plaintiffs, Neil Katyal, about that. And he basically said, well, then we have a different case. And it goes through the courts and it comes back in a different way. But if they did something that was legal under the statutes, then you wouldn't have this kind of dispute to settle.
In that case, then, do the tariffs stay in place, or are they stayed for the rest of this term?
Well, they're stayed until we get a decision, basically. And the decision is likely to come, most analysts say, sometime around the end of the year, Christmas, New Year's, that time period, because they did put this on an emergency track. There has been only a little bit of discussion about what happens if they void this and how you would get paid back. The Justice is not focusing on that, but Amy Coney Barrett making the case that this would be a real, as she put it, a real mess. And the attorney for the plaintiffs, Mr. Katyal, saying, yes, it would, but there are ways to deal with it.
Well, what would be, does the Treasury just write a huge Ed McMahon-sized check and hand it back to all the countries who paid?
It isn't clear, but the
American consumer.
The understanding is that those who have paid the tariffs would have to file a complaint in each case and go through the process, probably through the Court of Claims, which is a separate court, to get their money back. And the idea would be that if you're a small importer and you've paid, you would join a class action.
Got it.
And so that all has to be decided if the justices strike this down.
If consumers pay tariffs, though, you'd be part of that class action, right?
That's not clear. Okay. How all that would work, whether you get that $1.50 check or not that you get with class actions that we've seen in the past.
Well, we'll stay tuned on that. Really interesting. Bloomberg's Michael McKee giving us a peek behind the curtain today in the court as we add the voice of Greta Peisch, partner at Wiley Ryan and former general counsel for the Office of the United States Trade Representative. Greta, great to see you. Welcome back. What's got your attention in these arguments today?
Well, I think I would agree, I think, with most commentators so far that it does feel like the justices as a whole are leaning toward the plaintiffs away from the government and really challenging the government on their interpretation of the statute, on the delegation issues. Did Congress give this power, which is a congressional power, to impose tariffs to the president? We had Justice Barrett asking a lot of really pointed questions about the words in the statute, their meaning, and whether they encompass this authority.
It's obviously not over yet, and I'm wondering when you expect to hear a decision and if that will simply lead to another batch of tariffs based on a different emergency.
So the court is considering this case on an expedited basis at the request of the government and the plaintiffs. So we do expect, consistent with that, to have an opinion in a couple of months. It's not a hard and fast rule, but that's the expectation. And so that will be the moment of truth of whether these actions can continue. I do expect the administration to be already considering a plan B. We even have heard administration officials talk about other authorities that they may employ to put in place a similar tariff policy. The president is clearly very committed to this policy, to the negotiations that have been undertaken, and they'll find a way to pursue it. It may not be as flexible or as fast or have the advantages of this authority, but I do believe that they will find other means to essentially recreate the tariffs that they have today.
President Trump, as I mentioned earlier, on Truth Social last evening, said the case is literally life or death for our country. If this is overturned and there needs to be some sort of refund program, Greta, how would it work?
Well, it's a bit to be determined, right? And it will depend in part exactly what the opinion will look like. It will depend on what stance the government takes, whether they will be amenable to providing refunds with limited process. But in any event, the normal course is that each individual importer has to request the change in their entry, their customs entry, and the refund. And it's on a case-by-case individual basis. And I think as a threshold matter, one question will be, does the outcome of this case apply to everybody? Or does it just apply to the plaintiffs in this case, right? And so do other importers need to join a class action, bring another case in order to have the same right to a refund as the plaintiffs here?
If the tariffs were struck down again, what would be the formal investigation timeline? Because there is a process here, right?
Investigation to impose new tariffs.
Yeah.
It would depend on what authority the administration uses. They could quickly put some tariffs in place under this Section 122 authority that was mentioned in the arguments today, which relates to balance of payments, but it's a pretty low cap, it's temporary, but you could put it on quickly. Other tariff authorities, Section 301, these are the China tariffs that were put in place in the first Trump administration. Those take some time. It's an investigation, but the tariffs can stay on a long time. You can go up as high as you want potentially. So there's pluses and minuses to different authorities. Do they want to act fast? Do they want to act with the tariffs that ultimately will have the longest term and the greatest impact? Those are decisions that they would need to make.
They've been seizing on some of the president's moves here that are considered a bit more erratic, like the recent extra tariff on Canada that was over a TV ad, what we saw in Brazil because of the way they were treating someone he considered a political ally. Will these moves and the rhetoric that surrounded them impact the outcome of this case?
Well, it's certainly part of the atmospherics, right? As a technical matter, it shouldn't be part of the analysis of the key question, which is whether this statute confers the ability of the president to impose tariffs at all, right? Because once you get to that threshold, there is quite a lot of deference in the statute to the executive branch. This is an emergency power around foreign affairs. And in that sphere, there's just a lot of leeway given to the president to determine what is an emergency and what is the use of the powers that he has been given to address that emergency. And the question is one of those powers tariffs? Because if it is, I think there is a lot of discretion that can be used by the executive, and that's something that's forming the backdrop of the justice's consideration of this case. But really, and what their focus was today is on the words and what those words do or do not do as far as giving that power over from Congress to the president.
Are you watching Justice Gorsuch, as Michael McKee suggested, Greta?
Yes, I mean, he really pushed the government quite hard in the initial round of questionings. The government went first. He really seemed to go out there and say, you know, I do see a major questions doctrine problem for you, government, representatives. And, he did have tough questions for the other side as well. But, I think he did put that out there as a hurdle that the government is going to have to overcome.
Well, you step back and look at this, and I don't know what the conversations are like when you're off the air and talking to your colleagues at the law firm, but whether it's this case, whether it's the court cases around the use of National Guard troops in American cities, the court cases around mass deportation raids, Greta, is this the golden age for lawyers in Washington?
Well, I can only speak for trade lawyers, and I would say we are very busy, in fact, and we are watching this case very closely because it could have incredible implications, in the near term for companies, but also, going forward. Is this just setting a new standard and new parameters for what trade actions are going to look like going forward?
Yeah, I just got a note from Matt on the terminal, and it's important to our conversation we were just having about refunds. If we get to that point, would it not be a world in which the importer received the refunds and then would have to distribute money at some point there? Could it be an importer class action suit?
Theoretically, yes. Small importers in particular, right? We're going to have thousands and thousands of individual companies. It would likely not make sense for each company to bring their own case, right? They're going to have varying tariff burdens that they have paid, and so class action is, one possible avenue to get that relief. But it is the importer. It is the importer of record who paid the tariff, who brought the product in, made the filing with Customs and Border Protection, and that's who will be requesting the refund in this case.
Interesting. So how many more levers in our remaining moment, Greta, does the administration have to pull here if the court says no?
It has several. It has, as I mentioned, 122. This is a balance of payments authority. It has Section 301, which is country by country, has some delay, more limited. It has the Section 232 tariffs. These are the sectoral tariffs where investigations have been started on a broad swath of sectors and products, which can at least partially replace the tariffs here. And it has even older, more obscure statutes that haven't been used. Section 338 with Justice Alito mentioned today that could be exercised. Yeah. And so it really has a menu of options, pluses and minuses across them. And so we'll just have to see what happens.
Always great to tap your expertise. Greta Peisch, partner Wiley Ryan, thank you so much for being with us on Balance of Power on Bloomberg TV and radio. We're going to bring you to the Supreme Court coming up in just a couple of moments at the top of our second hour. Bloomberg's Tyler Kendall is standing by with a crowd right now in front of the court. We'll also be talking with Republican Congressman Nick Lilota of New York. It's all ahead on Balance of Power, the day after the election on Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
NYK sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide.
compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency, and also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the purging fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Is Wall Street worried about the fact that government is shut down?
I think we all should be concerned about the fact that the government shut down.
Who do you think is responsible for the shutdown?
The government.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
This is Balance of Power, live from Washington, D.C.
President Trump blames the election on the shutdown, now the longest in history. Welcome to the Wednesday edition of Balance of Power on Bloomberg TV and radio. This day after Democrats sweep elections across the country and the shutdown hits 36 days. All this as the Supreme Court hears arguments in a challenge to President Trump's tariff regime. It's a pivotal day in American politics, and we'll get the latest on all these developments from the best of Bloomberg following a big night on the campaign trail.
New York, tonight you have delivered a mandate for change, a mandate for a new kind of politics, a mandate for a city we can afford.
In 2025, Virginia chose pragmatism over partisanship. So New Jersey, the future is now. Roll up your sleeves, let your passion flow.
We'll have a lot more on the results straight ahead from last night's elections with Miles Miller in New York and with our political panel. But we start at the Supreme Court this hour. And Bloomberg Washington correspondent Tyler Kendall. It's been a pretty active environment there, Tyler, as the court hears arguments against Donald Trump's tariff regime. What's happening in that building behind you?
Hey, Joe. Well, the case just wrapped up moments ago, and we did see the justices draw some perhaps skepticism when it comes to the administration's legal arguments here. Now, there are two big questions that were in front of the court today. One, does President Trump have the legal authority to impose tariffs through IEPA, the International Emergency Economic Powers Act? Because this is an authority that has never been used to impose tariffs before. The second question is, if he does have the legal authority to impose tariffs through IEPA, can he do so without congressional approval? And that really was the point that we saw justices drill in on when it came to their questioning of the Solicitor General. It was interesting to hear, and this is going to come up a lot as we follow this case. The Solicitor General tried to pull the administration's argument back from the fact that tariffs are a revenue raiser. Because when you think about revenue raising, that sounds like power of the purse, which would be a power given to Congress. Instead, the administration is trying to make this all about about navigating foreign affairs and being able to give the president broad authority when it comes to national emergencies. Now, we did hear some of the justices raise questions about whether or not the national emergencies that have been declared, just to jog your memory, fentanyl and the border for those tariffs against China, Mexico, and Canada, and then the so-called reciprocal tariffs, that national emergency is tied to persistent trade imbalances. We did hear the justices raise some questions here about whether or not that meets that legal standard known as an unusual and extraordinary threat. At the same time, of course, the justices also pressed the plaintiffs in this case. Many of the justices, including the conservative justices in particular, raising questions about how this could potentially curb a president's authority to deal with foreign affairs. Now, no matter what happens here, this is going to have some broad impacts. Just for context, about 60% of the tariffs implemented so far this term are tied directly to IEEPA. And Joe, our analysts at Bloomberg Economics say if there is a sweeping decision against the administration, that could drop the average effective U.S. tariff rate from 14.5% to 6.5% and could amount in more than $140 billion in tariff refunds.
Well, pretty remarkable to consider the scale of a refund program if we get to that point, Tyler. I'm just curious who we're hearing in the background there. It's not uncommon to see large masses of humanity around the Supreme Court when they're dealing with social issues, but who's coming out to the court to yell about tariffs?
Well, right now it appears that there is a smaller group of protesters now that the argument has ended. But keep in mind, the Supreme Court agreed to hear this case on an unusually aggressive schedule, which means and indicates to us that they're likely going to decide this quickly. So perhaps people felt that they needed to get out their voice now. It's also important context here that while the Supreme Court has weighed in on this administration before, it's always been on an emergency basis. They've always weighed in that the administration's policies can persist while the broader question of the legality of the policies plays out in court. This is the first time the court is going to deal with that specific matter of the legality around the policy. I will say, beyond protesters, we saw other notable people in Washington here. We know that some key members of President Trump's cabinet, including the Commerce Secretary Howard Lutnick, Treasury Secretary Scott Bessent, USTR Jamieson Greer, were all in the room there, as well as some key Democratic senators. I had the chance to catch up with Senator Maria Cantwell, a Democrat from Washington, who sponsored a bill on a bipartisan basis in Congress that would curb the president's power when it comes to tariffs. She was there in the room today telling me today's an important day for her particular bill. So really bringing both sides of the aisle, both sides of the issue to the Supreme Court here in Washington.
It sure sounds like it. Active day in the Capitol. Bloomberg's Tyler Kendall at the Supreme Court. We thank you, Tyler, as we consider what's happening on this day after the elections and picking up the pieces from results in races across the country. We talked about gubernatorial races in New York, or rather New Jersey and Virginia, and the mayoral race in New York, not to mention Prop 50 in California, all as the government shutdown reaches an historic milestone here, 36 days, the longest we have ever known. And the president blaming the shutdown in part for the results last evening, taking to Truth Social to say as much. Trump wasn't on the ballot and shutdown were the two reasons that Republicans lost elections tonight. That may or may not have been the case in New York City, of course, where self-described Democratic Socialist Zohran Mamdani cruised to an easy win to become the next mayor of New York. He addressed his supporters in a late rally here in New York City.
The conventional wisdom would tell you that I am far from the perfect candidate. I am young, despite my best efforts to grow older. I am Muslim. I am a democratic socialist. And most damning of all, I refuse to apologize for any of this.
Joining us now from New York City Hall is Bloomberg News senior reporter Miles Miller. What's the vibe there today, Miles?
Yeah, in 2 months' time, Zohran Mamdani will occupy the office on the other side of City Hall from where I'm standing right now. What we know is that affordability is the mandate. That's what he said today when he spoke before reporters, listing the members of his transition team, which includes former FTC chair Lina Khan joining that transition team. So you know it will be set up as really a bulwark against the Trump administration. He spoke about Trump-proofing New York City. Let's see how he can get that done.
Well, he's not sworn in until the 1st of January, Miles. How will he spend his time assembling an administration and trying to appeal to the New Yorkers who did not vote for him?
He is surrounding himself now with people who understand city government, which to folks who were on the fence about him, who worried about how a 34-year-old with no true government running experience could run City Hall, should give them some pause, right? They are going to have on the transition folks who worked in city government, folks who worked at big nonprofits as well, all of it in an effort to bring the best people into city government, what we call the Bloomberg method, what Mike Bloomberg did when he was here at City Hall. Talking about the corporate leadership in this city, he said he would speak with Jamie Dimon at a later date. He said he was happy to hear from Bill Ackman saying that he wants him to succeed. But he talked about a pro-worker and pro-growth agenda. He said that he wanted to do much more to cut small business fines by 50% and said he wanted to eliminate regulations in the city that are no longer needed. But what he really said was he wanted to Trump-proof city agencies, so he wants to act quickly to figure out who his city lawyer, corporation counsel will be so that he can be on the front lines of suing the Trump administration when he feels they overstep on, say, taking away federal funds.
Miles, thank you. Miles Miller at City Hall, Bloomberg News senior reporter. We should note Michael Bloomberg is the founder, majority owner of Bloomberg LP, the parent company of Bloomberg Television and Radio. We've got a great panel for you here as we try to delve a bit deeper into these results and draw some insights with the help of Mark Short, former chief of staff to Vice President Mike Pence, a Republican strategist in our studios in Washington, D.C. as well, Ophira Yeheskel, director of external affairs at the Democratic Governors Association. Great to see both of you, and thanks for spending some time with us today on Bloomberg. Mark, you have a very good sense of the mindset of Donald Trump, having spent time in the first administration. What is New York in for? When we talk about Trump-proofing New York City, do you think he sends troops in? Does he cut funding? What's the next lever he pulls?
No, I don't think. I think that's more Mamdani play into his base. I don't think there needs to be Trump-proof. I think Trump has invested in New York because he has so much personal investments here and personal properties that he wanted, that's why he was weighing in for Cuomo. But, I think that there is a danger for Republicans to kind of dismiss this and say this is about the shutdown, or to say that because Democrats elect a socialist mayor of New York City, or even somebody in Virginia who called for assassination of a political opponent in his family, that this is just a foil for us moving forward. I think that is true. Some of these more radical candidates are a foil, but I think the common thread throughout this was the issue of affordability. And I think a lot of people elected Donald Trump because they were concerned about the inflation they experienced under Biden, and they wanted it solved. And I think that, to your first segment here, this trade policy has continued to make life unaffordable. And I think there has to be a change in policy from the administration on that.
Well, it is pretty remarkable that the same issue involving costs and inflation of FIRA, the same issue that brought Donald Trump back into the White House, in fact, the same issue that put Zoran Mamdani into City Hall here in New York. Is that a statement on the way President Trump has handled tariffs and the economy? Because the polling shows that he's underwater with the American people on that issue.
I think that lane was totally open to both Abigail and Mikey Sherrill last night in their landslide victories that are going to be a lot of momentum for Democrats, because Trump has created this opening on the economy and affordability. He simply has not lived up to his day one promise to lower costs for the American people. And I think last night the American people in Virginia and New Jersey sent a really big message about how they feel about that and who they pin the blame on. And I think it's pretty clear that they feel that Republicans own the pain on this.
Well, there were a lot of questions today, this day after Ophira, as to what would be the unifying message for Democrats. And maybe it's just as simple as that: bring costs lower, the same issue that dogged Democrats in the last administration. But when you have a Zoran Mamdani, who in many cases has an approach that's being rejected by moderate Democrats who won last night, how do you rationalize this landscape for your party?
Well, I think costs carried the day, and even before Donald Trump was reelected, Abigail Spanberger launched her campaign for governor and was talking about costs and the economy and affordability, and I think that's a roadmap for Democrats in the midterms in 2026, and clearly there's a lot of momentum here. We at the DGA certainly are going to ride this wave into really putting our campaigns on offense, and I think that'll mean that we're able to run competitively in places that maybe we weren't thinking about before, expanding the map in places like Georgia, like Iowa, maybe even Alaska. I think because we did see last night that the American people are hungry for leaders who are going to take action to deliver for them on the economy. And Democratic governors in particular, I'm biased, as you know, Joe, I think have a real record of delivering for that on the economy. And I think the American people recognized that last night resoundingly.
It's been said, even on this program since we came to air, Mark, that the midterm campaign cycle starts now. So what is the Republican answer to what happened last night?
Well, look, I think Americans looking to say Republicans have the White House, the House, and the Senate.
Yeah.
And so it's less the message on the Democrats. It's more of saying, if you're not fixing this affordability issue, then we're going to make a change. I mean, you know, to the Democrats' campaign message, these same governors were in Congress supporting Biden's massive spending that causes inflation. So it's not like they're really pure on helping to control costs here. But I think that naturally the American people are going to say, well, which party's in control? And they're going to be an expectation that they lower costs. And I think as long as Republicans in Congress are abdicating their responsibility of who is in charge of tariff policy, then they're going to naturally be blamed for this. So I think over the course of the next year, you may see Republicans begin to break more with the administration on this trade policy and begin to assert some of that control back in their hands.
Well, President Trump says it was the shutdown, the fact that he was not on the ballot and the shutdown that caused Republicans to lose last evening. Is there any truth to that?
I think the American people were very clear. It was cost. It really was cost, and that they wanted to see leaders who had plans on affordability. Mikey Sherrill had a day one state of emergency plan to do something about utility prices, which, talking to voters in New Jersey, that's really on their minds. I talked to somebody who had a utility bill last month of over $1,000. Abigail had plans on healthcare, lowering healthcare costs, energy costs, housing costs. I know that's on the minds of people every single day, and these kitchen table issues have really been a roadmap for success for folks running statewide, and I think that's something replicable for folks in our party who are looking ahead to the midterms next year and are looking for a message. I think that will really be salient. And I'll just point out, yesterday we saw Democratic shifts in almost every county in New Jersey and Virginia. Yeah. I think that sends a really big message about how powerful the message that both Abigail and Mikey ran on was. And we also overcame historical precedent in New Jersey. I don't want to let that point go unmet. We had Republicans who invested big in those states. They were supposed to be competitive races, and we had landslide victories in both of those states. I think that sends a really big message about how people feel and what kind of leaders they're looking for. And I think Democratic governors in particular have been really able to meet the moment on that.
Well, if the shutdown had an impact anywhere, it had to be Virginia, with the thousands of federal workers who live there and have been furloughed or laid off, depending on the case. But there was also a candidate quality issue, if you ask people. And you live in the Washington area, Mark. You know Virginia politics resident, pretty well. You get that, and so am I. Look no further than the president's former political advisor, Chris LaCivita. A bad candidate and a bad campaign have consequences. The Virginia governor's race is example number one. Is that true?
Well, look, Chris was formerly the executive director of the Republican Party of Virginia. He knows Virginia well. But I think this is more of a caste blaming that the administration doesn't want to have responsibilities. They want to push the blame down on
Winsome Earl Sears really never connected, though, did she?
No, I don't think she did. But I think that there were other candidates in the ballot. Like, to me, the more shocking one is to see Jay Jones overcome, I think, a great candidate in Jason Miyares, despite his text change about, killing a political
remarkable result.
So I think that this was less about, how far left or how moderate were you. This was, again, about an issue of people still feeling like there's an affordability issue. And that, I think, was driving the message. I think Republicans need to address that.
Yeah. I'm really glad that Mark mentioned Jay Jones of FIRA. What do you make of this? Does it say more about the strength of Abigail Spanberger that everybody rode the coattails to victory? Or was that the check on Trump, as his ads promised, that Virginia wanted?
Well, I think Abigail Spanberger sent a really big message last night and clearly had coattails up and down the ballot. Last night, we saw huge gains in the House of Delegates. I think that's going to mean a lot of progress for folks in Virginia. But I would be remiss if I did not point out, to Mark's point on Winsome Sears, the RGA spent just as much money on electing her as they did Glenn Youngkin. And I think that really does go to show that they thought she was a candidate who could maybe make the difference. And so I think it really is a question of what her focus was. It was not the economy. Time and time again, Abigail was filling that lane, talking about how she was going to lower costs for Virginians, and I think that's why she carried the day pretty resoundingly last night.
Wow. We haven't talked about California yet and Prop 50. You were the Legislative Affairs Director in the first Trump administration. You know what it's like to deal with this season that just opened in Congress. When you start rewriting maps all over the country, how difficult will it be for Republicans to get their arms around new districts and know where to invest?
I've always been a skeptic on this strategy because they're basing it on the 24 map and what happened in 24. And when the Democrats put forward an incredibly weak candidate after 4 bad years, there was a lot of people who crossed over and supported Trump, wanting to secure the border and wanting to restore the economy that he had in the first administration. That doesn't mean they're reliable Republican voters. So when you're drawing a map like in Texas, because many Hispanics, I think, were really concerned about what was happening at the border, they then are not necessarily going to say, hey, I'm a reliable Republican voter necessarily in 26. And if you're drawing maps based on that, I think there's a lot of concern. And I think you have the other irritation that for other Americans look and say, hey, wait, this is supposed to be done every 10 years. And so I think that maybe you'll see some backing off of the redistricting in other states.
Interesting. Afira, we've got less than a minute left, 30 seconds. It was said on this program more than once that if Gavin Newsom got Prop 50 across the finish line, he'd be the Democratic nominee for president in 28. What do you think?
I think the elections I'm focused on, Joe, are the ones coming up in 2023. But we're obviously really proud of the leadership of Governor Newsom in California. And I would zoom out and say that I think Republicans brought us on this path of redistricting because they know that they've taken on a really deeply unpopular, toxic agenda. And the American people last night sent a really big message about what they think about it. So
there you have it from both sides of the aisle this day after. Well done, Mark and Afira. Great to see you both, as always, here on Balance of Power on Bloomberg. Coming up, New York City Mayor-elect Zoran Mamdani continuing his victory lap after last evening's results. We'll have more from our political panel next on Balance of Power on Bloomberg TV and radio.
Bringing you up-to-the-minute news,
geopolitical news,
economic news,
up-to-the-minute global news,
Whenever,
and wherever it happens.
In Washington,
Buenos Aires, Argentina,
Sintra, Portugal,
Ottawa, Canada,
Bangkok,
Tehran,
Jackson Hole, Wyoming,
Windsor Castle, England,
the Circuit de la Sarthe in Le Mans.
and this.
and this.
and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
In case you missed it, on Bloomberg Brief. This is a big difference from April. Remember when there was no place to hide? And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline because then the Fed's cutting into accommodative territory, not just getting to neutral. Don't miss Bloomberg Brief, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Worried about the fact that government is shut down?
I think we all should be concerned about the fact that the government shut down.
Who do you think is responsible for the shutdown?
The government.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew at World Headquarters in New York as we sift through results from election night. Thank you for being part of our conversation here on Bloomberg TV and radio. New York is where we start with our political panel, and by New York, I mean Manhattan, the mayoral race that brought Zohran Mamdani, the Democratic socialist, to a resounding victory last evening, calling into question what will be the unifying message for Democrats as we now begin the race to the midterms today. Is it the Democratic socialist approach here in New York City that won the day? Clearly, Mamdani promising lower costs, as did Mikey Sherrill, the moderate Democrat who won the governor's race last evening in New Jersey, but with a very different approach to handling prices. Let's go back to last evening in both races.
For as long as we can remember, the working people of New York have been told by the wealthy and the well-connected that power does not belong in their hands.
Here in New Jersey, we know that this nation has not ever been, nor will it ever be, ruled by kings. We take oaths to a constitution, not a king.
Joining us now, our political panel, Bloomberg Politics contributor Jeannie Shanzano, visiting democracy fellow at Harvard Kennedy School's Ash Center, our Democratic analyst, alongside Republican strategist Maura Gillespie, the founder of BlueStack Strategies. Great to see you both here, Jeannie. We could have gone on and continued to play Abigail Spanberger from last evening as well, and I would ask you, which of these messages wins the midterms for Democrats nationally?
I think we're going to have to wait and see, because the reality is now is they have to deliver. And so if Mamdani can deliver on these promises, that may be a pathway forward for some Democrats. But I think his message is a very specific message to New York City. And I think the contrast between the two women, Sherrill and Spanberger, their sort of centrist national security approach, that is probably the pathway where the Democratic Party will go. But again, we're going to have to wait and see. I think the beauty of this is they have these divergent pathways. It is a big tent party, and they are all focused on the same thing, which is costs, affordability, cost of living. You know, one of the shocking statistics I heard recently, Joe, was if you are a young person, you will on average not buy your first house until you are 40 years old. And that, for many young people, sounds like you're not buying it until you're middle-aged. I'm very sorry to say. But I think it speaks to why, particularly in a very expensive area, Mamdani is resonating. But they're all focused on these issues of making life more affordable. And so I think whoever can get there will be a pathway forward.
The fact of the matter is, though, Zohran Mamdani did not have a significant Republican challenger in New York. Do you think that would have changed the outcome of this race or meant a more narrow gap? Because what we saw in Virginia and New Jersey, certainly New Jersey, with a significant Republican challenger, it was the moderate Democratic message that worked.
Yeah, you know, we don't know what would have happened had they had a stronger Republican candidate or had the establishment wing of the Democratic Party put up a stronger candidate. But the reality is the margins, as you mentioned, in New Jersey and in Virginia suggest that people are frustrated with the status quo and the Republicans. And this was a very strong message to Donald Trump and what has happened in the last 10 months, particularly as it pertains to the economy. But again, now Mamdani is going to have to put up. He is going to have to show up, and he is going to have to show that he can deliver. This is all about delivery. And also, I think in all areas, they can't do what Donald Trump has done, overread a mandate. They won by big margins, but they've got to focus narrowly on what they promised to do for their constituents.
So, Maura, let's bring you in here with the Republican answer. What would you rather run against? A socialist who has great energy and momentum, or a moderate who can appeal to independents?
Easily Mamdani. I mean, I think that when you look at his campaign, it's also going to be, something to watch out for is which version of him will we get as mayor of New York City? The person who has been running tried to tone down his rhetoric and tried to, almost caveat some of the things that he has said in the past to make sure he could get through. People voted for Andrew Cuomo not because they liked Andrew Cuomo. They voted for him because they were scared of Mamdani. And that's really what happened last night. And I think, Curtis Lewa, I won't even go there, but that's the reflection that Democrats have to look at is what does that say for them as a party? Yes, Jeannie's right in that they are trying to appeal as a big tent because there's this opportunity to take dissatisfied Republicans and bring them into the fold if they can, but they can't do that with Mamdani as like their center point. So I do think you're going to see campaigns on the Republican side really hoping to be able to capitalize on the New York City's newest mayor.
What did you make of Mamdani's speech talking about the fact that Andrew Cuomo's public life is over? He went so far as to say that that'll be the last time he ever says his name again. People in the room loved it. How did that echo across Manhattan?
It's one of the things that is concerning to me. I described it as bold, audacious. Anybody who thought he was going to moderate that speech, starting with Eugene V. Debs, the socialist, twice quoting Mario Cuomo. He spoke directly to Donald Trump. Turn up the volume, he said. I know you're watching. I mean, it was bold. I think he is responding to this push from Democrats, his constituents, who have been wanting for the last 10 to 12 months somebody to take on Donald Trump. But I think as you talk about appealing to Democrats more broadly across the country, which obviously he doesn't have to do right now, but the question is, can you deliver? But I don't think we should at all cast aside what is an absolutely meteoric rise on behalf of Zoran Mamdani. A year ago, nobody knew who he was, and he organized and he put together a coalition and he delivered. Now, in fact, people are talking about the Donald Trump Zoran Mamdani voter, Joe.
Wow.
That tells you how far we have come in the last 12 months.
He did pick up a couple of them.
He did.
This is a real thing. Was it a missed opportunity, though, in that speech, Maura, to not reach across the aisle?
I don't think that's his focus, right? He's not necessarily focused on that. It also shows that his inexperience and the fact that the emotions clearly got to him last night, and he felt compelled to be, which we saw a little bit in the debate, where his presence on stage was pretty smug at times. I'd say most of the time, but my opinion. But I think that was what came through in his speech last night. And so, no, I don't think he's seeking out a way to be part of the Democratic Party. I think he has his own agenda, and Democrats, and that's why you saw people really hesitant to give him endorsements. They really were apprehensive at best. I mean, even Hakeem Jeffries, the minority leader, he gave a tepid endorsement. Chuck Schumer refused to. Barack Obama also struggled in that department. So I think that the Democrats are still feeling it out, but they have a bigger issue looking ahead to the 2026 midterms and how to galvanize people the way that he did. And I think it starts by going and meeting people where they are, talking to them, doing the grassroots approach, and really getting into the weeds of the issues, but with people directly. And that's what they need to be focused on. And so do Republicans. I mean, again, I'm a Republican, and I think that our messaging has struggled to focus on the affordability, and it's where I'm hoping that Democrats like Senator John Thune will direct his colleagues to say, let's talk to our constituents and maybe distance ourselves a little bit from what the president's agenda has been.
Well, it's interesting what Jeannie just said. What is the Trump Mamdani voter? We saw him pick up, realizing it in the single digits, pick up Trump voters here in New York. Does that have to do with a certain style, not being a typical politician out of central casting, or does it actually involve issues?
I think it involves the fact that you're reaching someone, you're being polarizing. Again, they have so much similarities. They've been able to tap into what people's fears are. They've been able to tap into their concerns. And when you talked about, when Jeannie mentioned that people aren't going to be able to buy a home until they're 40, millennials there's been polls that show that they are the highest educated population, but yet the lowest paid. That's just a problem. And so a lot of the people who voted for Mamdani also probably voted for Trump in the sense that they're looking for somebody who's promising them affordability, promising them a brighter future that they currently have as far as the financial stability that they're seeking to get and currently can't find it attainable. So really that's what's been tapped into. Unfortunately, I think that we're being misled by both Trump and Mamdani because they had big promises that sound great, but when it comes down to how will this actually happen, it's not there.
Well, it sounds like maybe they have a lot in common then, Jeannie.
They do. And another thing that struck me, and I don't know if this struck you and Maura last night, when you looked at that party they were having, there was a DJ on stage. We're hearing a lot of talk today about the 100,000 volunteers for the campaign, which is astonishing. That was a campaign in which people, Gen Zers in particular, it was an antidote to their loneliness. That's how it's being described. And we hear similar things on the other side with Donald Trump and with formerly Charlie Kirk, and the ability to reach people and really speak to them, as Maura was just talking about. So I think that that is something that truly does get out people who otherwise tend to stay home. I mean, we had over 2 million people turn out in New York City. That goes back to the 1960s. 1 million of them voted for Zoran Mamdani, who becomes this first Muslim, youngest in a century leader, but really appealing to people where they sit and including those young male, Latino, and people of color who have been disenfranchised from a world that they think doesn't speak to them and that they don't recognize.
Boy, we're learning a lot and raising new questions just 24 hours later. And I appreciate both of you, Jeannie Shanzano, Maura Gillespie, for a great conversation. We appreciate your insights here on Balance of Power this day after the election. I'm Joe Matthew in New York, and thanks for being with us. On Balance of Power, we do want to update Wall Street ahead of our conversation with Congressman Nick Lilloda. The Republican from New York will be with us. But the volatility continues on Wall Street as we swing higher. And joining us now for Power Moves, Bloomberg Markets correspondent Nora Melinda. How's it going, Nora?
Well, we are seeing a rebound in markets, Joe. If you're taking a look at major indexes, let's look at the S&P 500, up 0.8%, NASDAQ up more than 1%, and the Dow Jones Industrial Average also rising here. Of course, we know this is a difference from what we saw from yesterday's declines. You are seeing dip buyers out here emerging in the markets. But let's look at our friends up north. We've also got some activity happening in Canada. Let's take a look at the loonie. Of course, we do know we did get news that the Bank of Canada cut 10% of staff. Of course, we know Mark Carney really hunting for savings right now. We know the loonie has been the second worst performer in the G10 against the dollar for so far this year. So we really are seeing some weakness in the loonie, comparing a little bit of the declines that we did see here. But of course, the focus really still remains on the Canadian economy and what the effects here look like for the loonie. But let's move back to the U.S. There were some earnings to dig into that we've really been receiving. A great read on the U.S. consumer. Let's take a look at shares of Cava, down about 1.4%. Of course, we know this company slashing its outlook in terms of sales growth. A lot of consumers really gravitating toward fast food restaurants and steering away from fast casual restaurants like Cava. Of course, McDonald's being a beneficiary from a lot of the consumers running toward fast food. We are seeing shares of McDonald's up about 2.7% here. And this is, of course, the company using deals and discounts to really entice the U.S. buyer right now in this environment. But Live Nation not doing too well. Of course, it's really just underscoring what the health of the U.S. consumer looks like, as we are seeing a sales miss here for the company. Maybe not as many concert goers as you would think right now. We are seeing shares of Live Nation plunging almost 8% right now in the trade. This, of course, also talking about income tax pressure that we are seeing from the Trump administration's tax and spending bill. This really pressuring shares of Live Nation here, Joe.
Fantastic. Bloomberg Markets correspondent Nora Melinda covering the waterfront for us here on Balance of Power. The update on Wall Street, we thank you as always. And coming up, we get back to the economy and tariffs with Liz Pencotti and Congressman Nick Lilloda, only here on Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from
the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn at the United Nations Climate Change Conference in Sao Paulo, Brazil, and this is Bloomberg.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a, how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to so many of the bilateral engagements that we've had is really, how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors, that is still directionally where we're going.
In case you missed it, on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall, covering President Trump in Tokyo, and this is Bloomberg.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. On the Wednesday edition, we're standing by here from Donald Trump, the president, due to speak shortly in Miami. He's addressing the American Business Forum on what is the first anniversary of his White House win. It was indeed 1 year ago today. America voted Donald Trump back into office, and so we're curious to hear what he has in mind, having already weighed in on the elections from last evening, saying Trump wasn't on the ballot and the shutdown were the two reasons that Republicans lost elections tonight. Back in Washington, D.C., the Supreme Court is the focus today, hearing arguments in a case that challenges the legality of Donald Trump's tariff regime and the emergency status that it's based on. If the court votes this down, rules this down, I should say, we could be talking next about a massive refund program to the tune of billions of dollars. Joining us now for more on this and the state of the economy that drove voters last evening is Liz Pancotti, Managing Director of Policy and Advocacy at the Groundwork Collaborative. Liz, it's always a pleasure to have you, and I wonder if you've had a chance to hear some of the arguments today, because this court does not seem to be inclined necessarily to agree with the administration.
That's right, yes. I was able to listen to most of the oral arguments this morning, and justices seemed pretty skeptical about the president's authority under IEPA, an International Emergency Powers Act, to inflict his, so-called reciprocal tariffs on businesses and consumers around the world. I think the big question is, even if the court does hold that IEPA gives Trump this authority, he will, even if the court does not hold that Trump has this authority, the real question is how these refunds will go into effect. The federal government has collected $195 billion in tariff revenue during the fiscal year ending in September, and Treasury Secretary Bessent has suggested that the numbers are even higher since then, and they expect to collect $500 billion this fiscal year. Companies are already waging class action lawsuits to line up for those refunds, and it's not clear if they'll pass them on to consumers, which have really paid about 55% of those higher costs, according to Goldman Sachs.
Yeah, we were talking about that earlier, Liz. Presumably these refunds would go to importers, right? Would there be any protections that consumers have in a world like that?
Not to my knowledge. I think it'll be really chaos even for those businesses to collect them. And this came up in the court discussions earlier today. The Trump administration had argued in court over the summer, saying that courts did not need to intervene for an injunction pausing these tariffs, because if the Supreme Court later ruled they were legal, they could just simply ruled they were illegal, they could just simply refund businesses. Whereas today in court, the Trump administration argued that it would be really quite a colossal, chaotic process to get those refunds to businesses. But I do not see us seeing a lot of consumer refunds in store here in the future. And the question is, a lot of businesses have hiked their prices to cover those increased tariff costs. Even if they don't pass on the refunds consumers have already paid, I think it's an open question as to if businesses will lower their prices as those tariffs come off.
Well, boy, these are great questions that are being raised along with these arguments. But when you consider the law that the president, the emergency framework the president is basing this on, it's one of many options that the administration could use to justify tariffs, right, Liz? So if the Supreme Court says no in this case, would we be talking refunds or the next round of lawsuits for the next round of tariffs?
That's right. There are a myriad of backup options the president can cobble together to inflict new trade barriers, implementation of which will really only create more confusion for American businesses and consumers. He has already launched about a dozen of investigations under Section 232, which is kind of one of those options on things like copper, critical minerals, pharmaceuticals, and semiconductors. There are a number of other options he could pursue, some of which do not involve investigations that have to happen beforehand, but maybe their rates are capped at 10 or 15%. I expect that, and we have heard from the Trump administration, that they will pursue other options based on the arguments today, depending on where they go. The other thing he could pursue, this came up in arguments a lot, is there was a big distinction drawn in arguments this morning around tariffs versus full embargoes. And so what we could see is the administration pursuing full embargoes of imports from different countries, which would have even greater effects than high tariff rates have had so far.
Great. Liz, thank you. It's always good to see you. Liz Pancotti of the Groundwork Collaborative. We've been talking about Donald Trump and, of course, watching him here on Bloomberg TV. Let's bring you in the room. In Miami, the American Business Forum is underway. The president just took to the podium this 1 year after being elected back to the White House. This is live on Bloomberg.
We did the garbage truck shot, and actually the McDonald's one was the biggest hit in the history of Google. Can you believe that? Number one, the garbage truck did well, but not as well. I guess there's something about McDonald's, right? But it worked, and we won a tremendous election. We won all 7 swing states. We won the great state of Florida, by the way, by 1.4 million votes, which is unprecedented. Biggest victory ever in Florida, including an 11-point victory right here in a place called Miami-Dade County. We won the popular vote for the first time of any Republican in many decades. We won the Electoral College 312 to 226. And we won 86% of the counties in America. That's a big one. 2,700 to 525. I'd say that's called a landslide, right? We got more votes from African Americans than any Republican candidate in history. We also won a record share of votes from the incredible Hispanic American community. There might be a couple of us. Biggest vote in history. And above all, we won a resounding mandate to make America great again, which is what we're doing. And every day since, I've been fighting to turn the promise made into the ultimate promise kept. We're going to do our job. We have a big job to do. We've done really well. I think it's the best 9 months, they say, of any president, and I really believe that if we can have a few more 9 months like this, you'd be very happy, you'd be very satisfied. But it's been pretty incredible, with trillions and trillions of dollars being poured back into our country by other countries and other places and people. 1 year ago, we were a dead country. Now we're a country that's considered the hottest country anywhere in the world. It's the hottest country. We are now in the hottest country anywhere in the world. And I'm pleased to report that today the United States has the strongest economy, the strongest borders, the strongest military, the strongest friendships, and the strongest spirit of any nation anywhere. We have the greatest economy right now. A lot of people don't see that. But if you look at what's happening with all the factories, AI, auto plants all over the country being built, that if you would have thought about that 2 or 3 years ago, you would have said it was the opposite. They were all leaving. Now they're all coming in. They're all coming back and then some. And I think that we can honestly say, and I think you're going to see it even more so over the next 12 months, that this is the golden age of America. This is the golden age.
President Trump speaking live in Miami at the American Business Forum. You can hear more on Live Go on your terminal if you want to follow along with the speech here. And if he starts making news on the elections last evening, we'll keep tabs on that for you. Picking up the pieces here from quite an election night, and we've been talking a lot about what happened here in New York last evening, the mayoral race, as well as the gubernatorial contests in New Jersey and Virginia, Prop 50 in California. We put them all together now in a conversation we've been looking forward to with Republican Congressman Nick LaLota of New York. He's with us live on Bloomberg. And Congressman, we welcome you back. I know that you're probably questioning what took place last evening in Manhattan. Have you made plans to move out of the state yet?
Now, hunker down here on Long Island, my constituents and I are quite anxious as to what socialist Zoran Mondani will do in New York City. Of course, he campaigned on a lot of wacky ideas. He's an anti-Semite. He wants to raise taxes by $9 billion. He called the NYPD a racist institution. He has this idea that's failed everywhere else about government-run grocery stores. We here on Long Island and elsewhere in New York State are anxious about what will be caused by those policy initiatives. We fear that too many people will leave New York City, especially wealthy folks will flee to red or low tax states like Florida, like the Carolinas, like Texas now. And when they leave and the government doesn't stop spending, the rest of us are going to be held holding the bag. And that's an unfortunate occurrence that I hope that Kathy Hochul, despite endorsing Zoran Mondani, puts a stop to. She has the ability to stop a lot of these crazy ideas at the state level. A lot of them require state-enabling legislation. I hope that Kathy Hochul, who endorsed Zoran Mondani, comes to her senses and puts a stop to the socialism.
Well, you're clearly not a fan, and I know that Zoran Mondani, I don't want to get too far into this, has said repeatedly that he's not an anti-Semite. He has been very critical of the Israeli government. I'm just wondering what you think the response from President Trump will be. He's promised to pull federal funding from Manhattan, and as a New Yorker, I'm guessing that's going to be a problem for you. Was that a threat or something you're worried about?
Well, I want to fight for every dollar to come to New York State. We were pleased to help increase the state and local tax deduction by fourfold, increasing it to $40,000. It's going to help a lot of hardworking middle-class families, especially here on Long Island. I want to fight for more investments to come to New York, but there has to be accountability on the dollars that we send to the 5 boroughs. Their policies in the past about shielding illegal immigrants with their sanctuary city policies is problematic. We need a fix to that. I hope that we can live in some sort of equilibrium where folks who run New York City can have good policies and the federal government can send money to New York City and New York State. But I hope that we can live in a better equilibrium and not send good dollars after bad policies.
I'd like to ask you about the shutdown, Congressman, and I'll take this opportunity to tell our listeners and viewers about a headline that just crossed the terminal. The FAA has issued a ground stop notice at LaGuardia Airport, and of course that's something we've been hearing a lot about. Took quite a few hours to get into LaGuardia from Washington, D.C. a couple of days ago, and this has become par for the course. We're on day 36 of the shutdown, which means it's record length, and the president today brought Senate Republicans into the White House for a meeting, having already said on Truth Social that the shutdown was partly due to blame for Republican losses last evening. I don't know if you agree with him on that, but there does seem to be a sense that this could end now that we're through the elections, maybe even within days, by the end of this week. What's your thought?
Yeah, for decades, clean CRs were the resolution that Republicans and Democrats agreed on when they couldn't agree on policies elsewhere. And you have to look at Senate Democrats to why they won't adopt that philosophy that's been adopted in Washington. Like I said, for decades, they're the ones who shut the government down. They're the ones that are causing these ground stops in places like LaGuardia, long lines elsewhere throughout the country, not having federal employees paid. I have the Brookhaven National Lab here in my district, 3,000 scientists and engineers. Some are getting furloughed, many aren't being paid. Our national security is at risk. Other things are just grinded to a halt. This shutdown needs to end. Others will profess the political implications of it, but there's a real human implication of federal employees not getting paid. There's a national security implication of us not being able to deploy our troops in the right manner, gather intelligence in the right manner. And then programs like SNAP. And let's be clear, 99% of House Republicans, 99% of Senate Republicans voted yes every time to fund those programs and to pay those troops and pay those employees. It's the Senate Democrats that are holding up, and I'm pleased that the president is meeting with Senate Republicans. But it's time for Chuck Schumer to have some courage and meet with Senate Democrats and release his stranglehold that he has on the American people.
Well, we understand that was a pretty chippy meeting at the White House. The president was on Truth Social saying Republicans terminate the filibuster, get back to passing legislation and voter reform. Does it make you nervous, the idea of a Democratic leader in the Senate pursuing an agenda with no filibuster?
Well, here's the ultimate question. The president is right to test this issue. The ultimate question is, if and when Democrats have the trifecta, the White House, the Senate, and the House, will they too honor this tradition of 60 votes to do policy and budgets in the Senate? If they will, then we probably shouldn't get rid of this filibuster. But the president's point is that they'll get rid of it the moment they have the trifecta. I think that is a pending question that needs to be probed by constituents, by the press. These senators need to be on record that either they like the filibuster or they don't, because we Republicans, we want to get our good policies through. We got the big bill through that lowered taxes, that strengthened our border, strengthened our national security. We were able to do that with just 51 votes in the Senate. A lot of other things that are good for the nation we can't do if we hold ourselves to the 60-vote standard. The president is right to be questioning whether or not Democrats, if they had the trifecta, would hold that same standard. And I hope that we come to a good answer here in the next couple of days or weeks.
Well, they had the trifecta just in 2020, right? And they didn't do it. Is the lack of trust that bad on Capitol Hill that you still don't know?
Yes, right now it is because of this CR issue. The lack of trust exists right now because Senate Democrats won't do the mere minimum and agree to a status quo, clean, no cuts, no gimmicks, no tricks, clean CR, which is, by the way, mostly Biden's policies. So the trust level is at a new all-time low, and that lack of trust is now making this 60-vote standard a little skeptical about, can we actually rely on this 60-vote standard in contemplation of Senate Democrats breaking tradition with
says a lot about where we are. Republican Congressman Nick LaLota, great to see you from New York. Thank you. Let's meet. We're back in D.C. This is Bloomberg.
industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
In case you missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supply. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech, live every weekday.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg TV Radio, streaming on YouTube and Bloomberg Originals. I'm Emily Grafeo, here with none other than Katie Greifeld.
Emily Grafeo, how are you doing?
I'm doing well. I'm going to have to resist the urge to just talk about ETFs and crypto the whole time.
I thought that's what we were doing.
Yeah, apparently we're not allowed to do that, but it's great to be here with you. Tim Stenivek and Carol Masser are out today. Markets are up, rebounding after a little bit of a pullback yesterday. We are seeing bonds selling off, though, Katie, right now.
Yeah, really interesting dynamic here. You actually have pretty decent breadth in the market right now. We haven't seen that in a minute, it feels like. Interesting sell-off, as you mentioned, in the bond market. Some economic data, actually, that we got to dig into. Not from the government, Emily, don't get too excited, but that ADP print, we'll be talking about it.
Exactly. We're going to go to Mike McKee very soon to talk about economic data. We're also going to speak with Patrick McHenry, former North Carolina Republican congressman and chairman of the House Financial Services Committee. We'll be talking about the government shutdown. And of course, the big news yesterday, we did have an election.
We did, certainly, both not just in New York City, but we had a gubernatorial race in Virginia and in New Jersey, a Democratic sweep across the aisle there. So we're going to check in what this means for the future of the Democratic Party and also the Republican Party.
And first up, let's take a check on the day's trade and top business news. Here's Charlie Pellet.
I thank you very much indeed. We all like decent breadth. We have got the Dow, the S&P, NASDAQ, all advancing. S&P right now just about the best level of the Wednesday session, up 53, 68.25 where we stand. That is a gain of about 0.8%. Dow Industrial is up right now by about 0.6%. We're up 289. 259. NASDAQ up 269 now, gain there of 1.1%. The Mag 7 index pushing higher by 1.3%, with a 10-year currently yielding 4.15%, the 2-year 3.62%. Gold rebounding up 1.3%, up $51 the ounce now, still below 4,000 at 39.83. West Texas Intermediate crude with a 59 handle. It is down 1.2%, 59.81 on West Texas Intermediate crude. But a rebound for Bitcoin. Yesterday, recall, we had it trading below $100,000. Right now, 104,309 on Bitcoin, up today by about 4%. Qualcomm reports after the close of trading, but among companies reporting last night, Advanced Micro Devices up now by 3.1%. Shares of Super Micro Computer, they're plunging 9.7%, and Pinterest after earnings down 21.9%. Airline news. The FAA has issued a ground stop notice at LaGuardia. The FAA also issuing a ground stop delay for flights heading into Newark Liberty International Airport due to air traffic control staffing constraints. And moments ago, President Trump praised Walmart for grocery prices. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, well, thank you, Charlie. That's right, looking at markets, S&P 500 higher, bonds selling off on the back of some better than expected economic data. But let's start first with not the economic data, what's going on at the Supreme Court. Today, the U.S. Supreme Court appeared skeptical of President Donald Trump's sweeping global tariffs. We're going to talk right now with Mike McKee, international economics and policy correspondent for Bloomberg TV, here with us right now in the Bloomberg Business Week studio. So bring us up to just the latest updates on the Supreme Court, because we're not going to know how the argument has been decided for quite a while.
Yeah, it's a little bit like listening to football coaches on the sideline of a game and trying to predict who's going to win from what they're saying. But that's what you got right now, because you don't get a decision for a couple more weeks, probably sometime into December. And that's because they're on a relatively fast track, the court agreeing to hear this case and decide it fairly quickly. Today, what you end up with after the almost 3 hours of arguments is a general consensus that we'll see something like a 6-3 decision against the administration, striking down the president's ability to raise tariffs, to impose tariffs under the International Emergency Economic Law that they're using. The question that it all revolves around is whether or not the law gives the president to impose tariffs. And one of the arguments that the administration makes is this is not really a revenue-raising issue. This is a question of regulating commerce, which the president has the authority to do. The 12 states that argued against it and the small businesses arguing against it said, no, this is a revenue-raising effort by the administration. And they point to the many times the president has bragged about how much money it's bringing in.
Well, Mike, that's where I wanted to go because, as you mentioned, the administration has pointed to basically the revenue that they're going to get from tariffs as one of their key pillars to their economic agenda. So let's say that it does go that way, that we get a 6-3 vote against Donald Trump, really limiting the use of that IEEPA law. What does that mean in terms of where we stand when it comes to the deficits and how big of a hole that would leave?
Well, it would, in theory, leave a pretty big hole, but the hole is so much bigger than the loss of tariff revenue that I don't think it's going to make a huge difference, at least not in the short run. The question is, do they have to give back the money, which is probably not something that the Supreme Court will rule on, because it's kind of a it's a sort of a bear trap you don't want to get into. But if there's a feeling that they need to give back the money, then the importers who paid these would have to go before the Court of Claims, which is a separate court, and put in a complaint saying that this was illegally done and we need our money back. It's probably not going to mean that you would get anything as an average citizen, but some companies might be able to get it. But as Justice Amy Coney Barrett put it today, it would be a real mess, isn't it? And lawyers on both sides agreed.
That's what I wanted to ask. Like, what happens? Do all the countries that have paid the tariffs, do they get a refund?
Well, see, there's a mistake. the other countries don't pay. The importer pays.
Right.
So it's the American taxpayer, or if it's a company paying and absorbing the tariffs, then it's the stockholders in that company who are losing money on this. The other countries, the only way that they would in a way pay is if their currency depreciated against the US dollar. And so the actual cost to them is a little bit lower, but it's not like there's any money coming out of their pockets. So it would be American companies who would go before the Court of Claims and say, give us our money back, but it would be a long, involved process.
Well, it's going to be fascinating to see how this actually shakes out. It looks like we'll get a decision maybe next month, probably before the end of the year. But Mike McKee, you're in studio. We got ADP data this morning at 8:30 a.m. Typically, I would ask you how this extrapolates to Friday's non-farm payrolls print. I can't do that at the moment. So talk to me about ADP at least.
Well, you can't, although there are 7 economists who have actually submitted estimates for Friday.
That's sweet.
Even if we're
They're
not going to get
holding
it.
out hope.
And they're saying 38,000 is their consensus among the 7. So I guess the ADP number comes in pretty close to that. It's a rebound in a sense because ADP found negative 29,000 last month. And so, there's a little bit of a gain, but really it shows that there's almost no hiring going on right now. The alternative data we've gotten suggests that we are not seeing a lot of people being fired. That hasn't shown up in claims or things like that. Although what we are seeing is in these earnings reports coming out, we're seeing a lot of companies announcing that they're going to be cutting workers. We saw Amazon just do that. American Airlines came out yesterday, said they're going to be getting rid of a lot of people. So we may be just at the beginning of the negative impact to the labor market. And that's what the Fed is trying to figure out. Is it going to be bad enough that slows the economy down tremendously, or is this just going to be kind of a one-off thing where companies right size and then start hiring again?
When you look at the price action in the Treasury market today, we do have yields higher. Further, there's more movement on the longer end of the curve, but the 2-year is up 5 basis points. How do you square that with the labor market data that we got today? Is this traders saying maybe we don't need as many more cuts as we once thought?
I think there's a lot of things that are going into it right now. Part of it may be that the labor market, people don't see the labor market necessarily as bad, but you also have the tariff situation and the court ruling today. We saw in the prediction markets a rapid change there from thinking about a 50-50 chance that the president's tariffs would be upheld to about an 80% chance they're going to be struck down. And that has implications for the deficit, which has the, to the extent there are bond vigilantes, has them, pushing up interest rates. So there's a lot of factors at work at this point that I don't think you can necessarily point to any one thing, and it's very hard to do anything in the absence of the data. And I think that traders, except for those who just keep buying the tech stocks.
Right.
Everybody else is thinking what's going to happen down the road.
Yeah, that has been a winning formula for quite a while here. Mike McKee, before we let you go, just going back to the labor market here, you mentioned that this is still a low fire environment, but it's interesting to look at some of the anecdotes coming out of corporate America. You mentioned, of course, some firms have started to lay people off. Amazon, to your point about tech stocks, comes to mind, but haven't necessarily seen that flow through to ADP, for example, the private payrolls. But you are starting to see those announcements pick up.
Well, ADP did have a negative number last month, but it's kind of hard to know with their methodology whether it's an actual negative number or if it's the adjustments, sort of the seasonal adjustments they do. What we'll watch is the claims numbers, but again, the claims numbers are going to take a while to filter into the data, because you look at Amazon and they gave people 90 days notice.
Right.
And while you're getting your severance, you can't file for unemployment. So this would be after the first of the year you would start to see this happen. What the Fed worries about is that when you get this sort of rock rolling down the hill of layoffs at a lot of companies, it can go very fast. It can pick up speed, and we could see the unemployment rate jump. And I think the Fed's keeping their fingers crossed that we will have an unemployment rate by the time there's any significant change, so they'll know what's going on.
Yeah, just yesterday, here's a headline on the terminal. IBM to cut thousands of roles in a focus on software growth. Those job cuts expected this quarter. We'll see how long it takes for it to flow through to the official data. Great conversation with Mike McKee. He, of course, is our global international economics and policy correspondent. Meanwhile, let's check on the consumer through the lens of McDonald's. Shares of McDonald's higher by about 2.6% at the moment, reporting earnings this morning, and a really interesting read when it comes to the low-income cohort of this economy. Let's bring in now Abby Roach. She is a senior portfolio analyst for the Empiric LT equity team over at Allspring Global Investments, joining us on Zoom from McLean, Virginia. Abby, great to have you with us. So you take a look at these numbers. We know that McDonald's has been trying to position themselves as one of the value choices in this economy as things get a little bit harder for people trying to buy lunch, honestly. What did you make of these reports? Because it seems like the street welcoming them with open arms.
Yeah, thank you so much for having me on today. I think we were pleased by the print this morning. Honestly, it's been a really difficult environment for consumer companies reporting earnings, and in restaurants in particular. And relatively speaking, it was a pretty happy meal that McDonald's delivered. I think they were able to, talk about several different initiatives that they have done around marketing and their value offering, and then menu innovation. And we think they're delivering value for those consumers who are seeking out value, but also changing up the menu and delivering solid marketing execution. So kind of delivering on three key metrics for them, which is helping drive both higher income consumer traffic and also sort of take share from a lower income consumer standpoint.
Well, let's talk about that breakdown a little bit more, because something that jumped out to me was you take a look at lower income customers. The McDonald's, the chief executive said that they actually saw traffic among that group drop nearly double digits in the latest quarter. So this pickup that we're seeing, it seems more like perhaps a trade down than it is, those lower income consumers coming in and spending more.
It does. I think we were encouraged to see from a higher income consumer, they talked about the industry data being up almost double digits, but conversely almost down double digits for the lower income consumer. But I think the commentary that they made around the value offering for that lower income consumer, they talked especially about the extra value meal. They called it the EVM that has been rolled out. And they've seen good success with that, particularly with sort of low income consumer from a share standpoint. But also they said about 30% of the transactions were those EVM offerings. So we think the lower income consumer is obviously quite challenged, but we think McDonald's is offering the right value offerings for those consumers to continue to be able to drive traffic when that consumer is wanting and willing to eat out.
Abby, what did you learn in the earnings just about how McDonald's is competing with all of the other fast food, fast casual options out there for, like Katie said, people that are just looking for an affordable way to eat lunch?
Yeah, we think, they're really firing on really three different cylinders. I mean, certainly the value offering. I mean, they talked about the McValue rollout last summer. They're continuing to do well. That extra value meal, the EVM, they're doing well offering those for, $5 or $8 for the consumer looking for a specific price point. But also, I think they're doing a good job of rolling out newness. They talked about snack wraps, which rolled out over the summer, and the first 4 weeks of that launch, 1 in 5 consumers ordered that. So I think they're offering enough from a value standpoint, enough to get consumers interested. And then just kind of the last thing is on the marketing side of things, they relaunched Monopoly for the first time in almost 10 years in October. And they specifically said that has helped in terms of driving momentum for the business in October. So keeping things a little bit fun for the consumer, but also delivering sort of the value where that's needed for consumers, whose wallets are a bit pressed.
Well, I'd love to bring this conversation more towards the portfolio because, as I mentioned, you're a senior portfolio analyst over at Allspring Global Investments. You cover consumer staples and consumer discretionary sectors in particular. That is your area of expertise. So, I mean, what does the competitive landscape that McDonald's sits in actually look like right now, and where exactly does McDonald's fall in that?
Yes, certainly. From a consumer standpoint, one of the things that we like about McDonald's is it's a bit more defensive, and you've seen that here of consumers are a bit stressed and strapped, and McDonald's is synonymous with value. For us, we see it as a way to obviously play from a discretionary standpoint, but an offering their offering is a bit more defensive in nature. So we see it as a bit more of a defensive staple, and I think being able to play in an environment that They tend to do well when we see more difficult economic times. So that's kind of how we're playing the name in this space. We like it for the long term, and we're long-term investors, and we think they're great operators longer term, and there's a lot that we like about them being able to grow the top line and then also margins. But we think here in the short term, it definitely has a nice defensive benefit as well.
What other consumer-focused names do you like right now if we're in this environment where consumers are a little bit more stretched?
You know, we think one of the most important things here is companies with healthy balance sheets, and particularly as we head into the holiday season, just those companies who are able to, have solid balance sheets, have solid inventory levels, and, depending on how the consumer is going to react heading into holiday, if markdowns need to occur, that we want to make sure that those companies have healthy inventory positions. And then just also from a free cash flow standpoint, those companies who can generate free cash flow in excess of their peers, so that if economic times get more challenging and the consumer outside of the lower income consumer starts to change more materially, that those companies can control their own destiny.
All right, Abby, great to get some time with you. Really interesting read on the consumer. And of course, coming up later, we have Home Depot and Walmart earnings later this month, too. So I'm sure we'll be speaking with you again soon. That is Abby Roach. She is a senior portfolio analyst over at Allspring Global Investments. You take a look at McDonald's shares right now, higher on the day, bringing its year-to-date gain, this company, to just about 8%. Emily, which is, all right, it's underperforming the S&P 500, but we know it's been pretty brutal out there.
Yeah, it's actually the best jump for the stock since August 6th of this year. And it's in an environment where people are getting nervous about the consumer. And of course, that lower income story is going to be relevant as we head into the rest of earnings.
Absolutely. We're going to continue to follow that and all much more. We're just getting started. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got just under 2 hours to go ahead of the closing bell. With the Dow, the S&P, NASDAQ, they're all pushing higher. S&P right now very close to session highs. The S&P at 68.25. That is a gain of just about 0.8%, higher now by 53 on the S&P. The Dow up 301, up 0.6%. NASDAQ up 1.1%. The Russell 2000 index of small cap shares up 1.6%, and the Bloomberg Mag 7 index up 1.3%. The 10-year now at 4.15%, with the 2-year currently yielding 3.63%. Gold is up 1.3%, $39.83 the ounce, up by $51 the ounce. West Texas Intermediate crude back with a $59 handle, below 60, down 1.5%. And Bitcoin surging now by 4%. We've got Bitcoin at 104,230. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thank you for that update, Charlie Pellet. Well, it is Wednesday, I believe, which means that yesterday was election night. Really interesting to see 3 major local elections in the United States go in favor of the Democratic Party. Let's keep this conversation going with Patrick McHenry. He is former North Carolina Republican congressman and chairman of the House Financial Services Committee, also now a Bloomberg contributor. Patrick, great to have you with us. So, local elections, to be sure, but still, we're about a year out from the midterms, and we saw these Democrats win by wider than expected margins. And I wonder where that leaves the Republican Party a year to go until we get that next major temperature check.
Well, look, there's no thought that Republicans are going to win the governorship of New Jersey or Virginia. That was not in the cards. The question was the margin. And I think the margin was commensurate with President Trump's approval rating in those states. And I think that has some impact on where we see the midterms 1 year from now. That is a traditional measure of election outcomes for the party in power, is closely aligned with the president's approval rating. And I think that approval rating is soft because the economy is not markedly different than where it was a year ago. A year ago, President Trump rode to the White House on the back of relief for working families and for the American people on this rising cost of goods and inflation. And we've yet to see a real improvement heretofore over the last year in time. We see Mayor-elect Mandami, an avowed socialist, used the same set of talking points that President Trump rode the White House on, a vastly different set of solutions, obviously, but used the affordability question to major electoral success in New York. So I think what we see is the economy does have a real impact on elections, and the American people are not happy with that economic result yet.
How do you see the Republican strategy then, just going into the midterm elections? Is the fact that Mamdani was elected, is that going to be something that the Republicans try to use to their advantage? Is it going to further divide the party? Talk just about kind of the outlook here for the Republicans.
Well, look, I look at my Democratic friends and recognize that they wanted the line coming out of yesterday to be that we have 2 moderate governors, female governors in New Jersey and Virginia. That is the face of the Democratic Party. But the reality was the American people saw the face of the Democratic Party as a divided one. The divide on the left is among a balanced view towards Israel versus an anti-Semitic left. Mandami is more of the camp of the anti-Semitic progressives than the traditional view of liberals in the Democratic Party. That highlights the divide on economic policy and regulatory policy within the Democratic Party. So that's a challenge for them. But the opportunity for Republicans is to use Mandami as the poster boy across the country to express what Democratic policies really are for the next election. I think Mandami will be a great fundraiser for Republicans, and I think they're going to do the best to highlight him like they did with Speaker Pelosi for nearly a generation, and try to make him the poster boy for the left.
Well, let's talk about Mamdani and his place in the Democratic Party, because a really interesting referendum on where the Democratic Party is going to go happened last night. And New York City is a unique beast in many ways, of course, Patrick, but still, you think about the juxtaposition of Mamdani, 34 years old, very progressive, more to the left than maybe Andrew Cuomo, who had been positioning himself as someone who's done this before, as someone with experience. And it's been sort of floated around that when it comes to the future of the Democratic Party, perhaps they need to think about more of that center voter and trying to draw them in. It seems like last night maybe put a dent in that narrative.
Oh, I think it certainly did. And it really highlights what I've seen here in Washington over the last couple of election cycles, is that there's a divide between moderates, liberals, and now progressives. And the progressives have a very different view on economic policy. We see this in the highlight of Mamdani appointing one of the most polarizing characters of the Biden administration, Lena Khan, as she was the chair of the FTC, as our viewers well know. And so he's highlighting the national reputation that he is trying to garner among progressives, especially in the crowd best represented by Ocasio-Cortez, Representative Ocasio-Cortez. They have the energy of the Democratic Party, not the moderates, and I think that proved out in the mayor's election. That is proven out here in Washington of the key voices within the Democratic Party. And so I think we're going to see that highlighted in primaries at the beginning of next year, going into the midterms. But we'll have to see. You have to see economic performance improve for the American people, for Republicans to have a better stake in the midterms than they did yesterday, and that's for sure.
And I do want to just talk a little bit more about the Republican Party. You made the point at the start that a Republican wasn't expected to win Virginia or New Jersey. I have to say in New Jersey, it felt a little bit closer than maybe that would suggest. But still, you take a look at, some of the exit polls conducted by the Associated Press saying that about 6 in 10 voters in Virginia and New Jersey, they describe themselves as angry or dissatisfied with the current state of the country. You also have national polls that are showing that the majority of voters now disapprove of President Trump's handling of the economy. Again, former Congressman, we are about a year out from those midterm elections, and a lot of people at this point are voting with their wallets. And I just wonder, how you think these results might be received within the Republican Party and how it might inform their tact over the next year or so.
Well, you can also see the margin in Virginia is a little more generous for the Democratic Party. The government shutdown helped with that narrative for the Democrats, for sure. What I think what I hear as a Republican is that the president's policies need to affect the lives of everyday Americans, and absent them having a positive impact on the American people, there'll be a bad electoral outcome for Republicans. It is 1 year into the president being elected. He has 10 months of policy he's been able to put in place. So I think the real relief comes in the coming months and years of this administration. And they've got to go prove themselves that they're strong on the economy, strong leaders on the economy. That was President Trump's key strength in regaining the presidency. It's been his key strength in driving his economic policy through the Congress. And now we have to see results, bringing inflation down, bringing down the cost of goods, and enhancing America's standing in the world. That safety piece is in the background of all of this. And I think that's going to be what propels Republicans to a better outcome in the midterm than they had yesterday.
Patrick, we can't let you go without asking just a quick question here on digital asset regulation, because you did steer a lot of what was passed in the Genius Act, but just bring us up to speed on your current assessment of just how much more crypto regulation is needed, how likely it is that we will get more passed, assuming once the government ends its shutdown.
Well, I think we're close to the end of the government shutdown, but on crypto, Without sound law, we cannot have permanent building here in the United States for the next generation of technology. Without digital asset law, like a 1933-34 Act for securities, we need to bring that type of a regulatory oversight into crypto for us to have the flourishing it really needs. Right now, the Senate is working through, the Senate Banking Committee is working through with the Agriculture Committee in the Senate, the market structure bill that the House passed earlier this year. I think they'll get that done. I think they'll get that done this calendar year. I think it's going to look messy because the Senate's only been working on this policy this calendar year.
Yeah.
The House, we started working on that 6 years ago. So they've got a lot of catching up to do. And they're building in public, and that makes it really tough to build policy in public, and it looks messy, and it will be messy. But I think by the end of the first quarter next year, you'll see a market structure bill signed by President Trump with wide bipartisan support in the House and the Senate before going into a really fractious election year where crypto voters will have a big say.
All right.
I think it's coming. I think it's going to be messy, but I think it'll be good with solid law.
We will be waiting for that. Maybe we'll have you back on then. Patrick McHenry, former North Carolina Republican congressman, thank you for being with us. We go now to Bloomberg News senior reporter Miles Miller to talk on this election. Mamdani was elected last night. Miles, just bring us up to speed with the challenges up ahead for this new politician to actually get through some of this policy he has promised.
Yeah, the mayor-elect has to get a transition in place. He's going to be doing that over the next 2 months. He's picked his transition team and his executive director and the co-chairs, among them Lena Khan, the former head of the FTC. We know that he believes that the affordability message is his mandate after winning a significant portion of the vote yesterday. What he said today is that tackling the cost of living, rent, groceries, and childcare are going to be the most important things to his campaign and to his mayoralty. And he said that New York is the most expensive city in the United States. How's he planning on doing that? Well, he wants to do higher taxes on wealthy New Yorkers. He wants to raise the corporate tax, but he also wants to do some cuts, cutting small business fines and streamlining some regulations to make sure that if there's not a good reason to have a regulation, that they get rid of that. But he said he's pro-worker and pro-growth, but he's also willing to work with the business community, saying he wants to meet with corporate leaders like Jamie Dimon as soon as possible to try to fund some of these proposals.
All right, great reporting, Miles. I know you've been at it for more than 24 hours at this point. That is Bloomberg News senior reporter Miles Miller joining us on site. Interesting, of course, to see sort of the next steps now that the election is won, what the mayor-elect plans to do when it comes to his transition team. Also, who he plans to work with in the city. We did hear from New York Police Commissioner Jessica Tisch saying or telling her confidants reportedly that she would work for Mamdani. It's a story that we are going to continue to follow. But up next, I'm pleased to say we'll be joined by the CEO of Teva Pharmaceutical, a stock which is higher by about 22% at the moment after reporting earnings. That conversation next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got U.S. stocks staging a rebound as dip buyers come back into the market. The Dow, the S&P, NASDAQ are all advancing right now, right to the numbers. S&P up 53 at 68.25. That is a gain of 0.8%. The Dow now higher by 285 points, up 0.6%. NASDAQ is up 274. That's an advance of 1.2%. The Russell 2000 index of small cap shares is climbing by 1.7%. Our Mag 7 index up now by 1.3%. The 10-year at 4.15%. The 2-year 3.62%. Gold up $53 the ounce, $39.85. That's a gain of 1.3%. A retreat for crude, $59.59 a barrel, down 1.6%. And a surge for Bitcoin up 4.1% at 104,420 on a Bitcoin. Apple nearing a deal to pay Google $1 billion a year for Siri AI. Apple shares up just about 0.2%. And unionized Starbucks baristas are preparing to go on strike to secure a contract after years of unsuccessful talks. Strikes planned in more than 25 cities on November 13th. That is the company's Red Cup Day. Recapping, stocks higher. S&P up 53, up 0.8%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, thank you for that update, Charlie Pellett. Let's turn our attention to healthcare and specifically to Teva Pharmaceuticals. Shares on a tear right now after reporting earnings, up about 21.5% on the day, hitting their highest level since 2018. And who better to discuss these results than with Teva Pharmaceuticals President and CEO Richard Francis joining us right now. Richard, great to speak to you again. So it seems like Wall Street particularly psyched about total revenue last quarter coming in at $4.48 billion. That was a beat when it comes to the consensus figure. Unpack that a little bit for us. Where exactly is the growth coming from and how sustainable is it?
Well, hi, Katie, and thanks for having me on. Yeah, we had a good quarter three. And as you say, 4.5 billion, up 3%. But I think the detail is where I think the excitement is. Our innovative portfolio, which is something that's relatively new to Teva. You know, when I came on board 3 years ago, it was a generics company, and now we're transitioning it to a world-class biopharma company. And to do that, we need to have an innovative branded portfolio. And that was up 33%, and it grew, and it's now total over 800 million for Q3. And that was led by Austedo, up 38%, a treatment for tardive dyskinesia, and Uzedy up 24%, a treatment for schizophrenia, and then Ajovy up 19%. So good growth across the portfolio. And I think that's what excited people now. They really see this transition of the company. And although our generics business was up 2%, what they're seeing now is this change in portfolio is changing our gross margin dynamics, which of course feeds down to the EBITDA and to the EPS. And so, you know, the opportunity to grow value for shareholders at Teva, I think, is becoming clearer for investors. So I think that's one of the significant things. The other thing that is worth noting is we did announce that we have concluded our negotiations with IRA and CMS with regard to Austedo. And that was in line with our modeling that we set out in 2023 when we gave guidance of a $2.5 billion revenue for 27. And we now committed with confidence to the fact that we can hit that $2.5 billion and we can hit peak sales of over $3 billion. So I think that removed an uncertainty from the stock, as well as with all those tailwinds that I just spoke about. I think that's probably why we are where we are today.
Right. Yeah, I'm glad you brought up Austedo. And certainly when it comes to those price negotiations, I know that was a hot topic on the call. You talk about this transition that you've been navigating the company through. When you think of being primarily known as a generics company into what you're describing, of course, when it comes to biosimilars and biopharmaceuticals and branded medications there. I take a look at some of the details of your report. I know that sales of generics, which is still your core business, missed estimates there. I mean, is that a ship that you are focused on righting, having those sales come back for the generics business maybe in line with expectations? Or are you really focused more on the growth areas, such as branded medications?
Well, you know, we're doing both, but what I think we try to make them think about a generics business. It's a big business. And we don't look at it on a quarterly basis or even a yearly basis. We look at it on a 2-year CAGR. And the reason why we ask people to look at it over 2 years is because some years we have more launches than others, because obviously drugs lose their patent and we can't predict exactly equally when that's going to happen. And so we get some launches in 1 year and less launches in the other. And so because of that, we say look at over a 2-year CAGR. If you look at how our generics business has performed the last 3 years, it's actually outperformed expectations considerably. What we've said going forward is that our generics business will probably do a 2% CAGR going forward, because it's a very big business. But that is a good return on that business being to such a size it is. But as our innovative business continues to grow at the speed it is, as a company, we are changing our profitability, we're changing our sustainability and the ability to keep these results going forward. So I think that transition, our generics business is helping fuel it, because obviously we use the revenue and the cash that throws off to fuel our pipeline. Now, our pipeline also created quite a bit of excitement on our Q3 earnings, because we have a late-stage innovative pipeline. So as much as our portfolio has grown at 33% currently that's on the market, we're going to be adding a long-acting treatment for schizophrenia next year. We'll be adding a treatment for asthma the year after that. And then we'll be adding a treatment for a rare disease drug, SMA, the year after that. And then the year after that, we'll be adding a treatment for UC and CD. So we have a lot coming through. And I think that's the way to think of the company in its totality. And so I think when it comes to generics, it has a job to do. And I think growing at 2% over those multiple year period will be a good way of modeling the company.
Well, Richard, I did want to ask about one of those generic drugs. You launched the first U.S. generic GLP-1 indicated for weight loss. How much weight are you guys putting behind that effort? Because it is a very competitive space here, GLP-1s.
It is indeed. And, we do see significant opportunity. At the same time, when this sort of discussion started 3 years ago with regard to the GLP-1s, firstly, we did launch Victoza, and we have launched Saxenda this year. So we're in that first genericized market. But obviously, people are talking about the big GLP-1s, which will be coming off patent in the next few years. And what we've decided to do is we've partnered with people on those to make sure we can commercialize those products. But we did invest in manufacturing capability to do that. We let other people do that. So as much as we see it as a significant opportunity, we also understood the uncertainty around that area, around pricing, around volume, and things like that. So it will be something that helps drive our growth, but it won't be a significant growth driver, because we have a broad range of generic products coming to the market. And we have over 10 biosimilars coming to the market in the short, medium term. So we have a lot of other things that are going to drive our generic growth outside of the GLP-1s, although we will participate in that market.
Yeah, I appreciate the context there when it comes to GLP-1s, a hot topic of conversation. Something else I did want to get your thoughts on, Richard, and this is something you and I have spoken about before, is the sale of your raw ingredients business. You announced today that that sale process, it actually fell through. You were in talks with an unnamed buyer. Originally, I know that you had said that this would go through by the end of the year. So bring us up to speed there. I mean, are you trying to re-engage with any other potential buyers? Is the active ingredients business still for sale at this point?
So yeah, there's a few questions within that question. So let me unpick them and hopefully I can do it justice. But so firstly, we are still wanting to divest the business. We think it's a very good business. It's the number 2 API business in the world, and it's not based in China or India. So that creates a real differentiation, particularly with the geopolitical situation that I think has been discussed the last 6 to 12 months. So we see it as real value. That said, as we divest this business, it's not just about divesting it and actually getting an amount of money for that. This is a partner we're going to have to work with for the next 10, 15 years, because it will supply us with API. And so we need to make sure that the service agreements we have with that partner are the ones that benefit Teva over the short, medium, and long term. And so because of that, we want to make sure this deal is right. This deal is right for us. This deal is right for our shareholders. And we're in a position to say that we don't think we've got there right now. We do think the market's changed. We do think where we are as a company, we strengthened ourselves as a company. So our need to do a sale in a certain time period has diminished. And so we can be more thoughtful about this and make sure we get the deal that's right for Teva and right for our shareholders. But it's still an attractive business. But strategically, it's not one we're going to keep long term, because as we transform into this biopharma company, it's not something that will be strategically aligned to that.
All right, Richard, great to get an update with you. I know it's a busy day. That is Richard Francis. He is the CEO of Teva Pharmaceuticals, a company that is higher by more than 20% after reporting earnings and third quarter revenue that beat expectations. Coming up next, we'll get you a check on the stocks moving today. This is Business Week.